US will be revoking visa of Colombian government officials. US will also impose banking financial sanctions on Colombia. US to enact tariffs on Colombia in the deportation dispute. Now, there's already a response from the Colombian side. The head of state there has said that we will not back down, we will not listen to white slavers, etc. So, Gustavo Petro is not backing down anytime soon. The important thing over here perhaps is geopolitically, China has been wooing Colombia and it is a large South American state, a NATO ally. We'll have to wait and see where this goes. But let's start that conversation off with Koon Go, Head of Asia Research at ANZ Research. Koon, very good morning to you from where we are and thank you so much for joining us today. Let's just start with your view on, let's start with US equities actually and the cues that they follow. Is it going to be on a day-to-day basis for some time at least tracking what President Trump says?
Good morning to you. There's no doubt that the Trump-induced volatility is back 1 week into the hot seat, so to speak. And we've already seen the markets move in tandem with either his social media posts, comments or his executive orders. But for this week in particular, I think part of the reason why we've seen such weakness in US equities futures and also in Japan as well, and I think that's also spilling over slightly into the Indian market, is market concerns about the new AI tool from China, DeepSeek, which some has saying is that it's cheaper and almost as good as the current AI products out there by US companies. So I think that's partly what's weighing on the US equity. So yes, Trump is definitely inducing volatility, but what's happening in the tech and AI world is also having quite a lot of implications for markets as well.
Okay, let's talk about the Fed meet. Considering that the consensus seems to be that there will be a pause in interest rate movements right now, no cuts in sight, how crucial does this meet and the commentary become in view of what President Trump has said, that he wants interest rates to come down?
Well, there's no doubt that President Trump favors lower interest rates. During his first term, he pretty much tried to bully the Fed into cutting rates. And I'm sure this time around, he will try and persuade the Fed to lower interest rates. Now, we're not expecting the Fed to move on rates this week, and market certainly is not pricing any change to interest rates. I think the Fed, after having cut by 100 basis points since September last year, is going to take a pause and assess what the 100 basis points of cuts has done to the US economy so far. Now, the US economy is still in root health. Inflation has been a bit sticky, so I think that's the primary concern for the Fed. But I think importantly as well, the Fed will want to assess what the cumulative impact of the Trump administration's policies will have on the inflation outlook. I think at this stage it's still early days, but the tariff action that he has threatened against Colombia, could be the start of what will be a pretty volatile trading environment. So I think that's something the Fed wants to take pause and assess before deciding on their next rate move.
Koon, good morning. Is it too early to call a top on the dollar? We've seen it come off quite substantially towards the end of last week. And you saw the dollar index, I think, drop by more than it did in over a year last week. But then do you call an end to that? Do you say that from this point it'll be a little softer, or is it too early to do that?
In my view, I think it's still premature to call a top for the dollar. Yes, we did see a bit of pullback last week, but remember that pullback was partly because the markets were a bit relieved that the various executive orders that Trump signed did not include an actual formal increase in tariffs against China or Mexico or Canada. So part of that relief resulted in the dollar backing off. But as we know, the events recently with regards to Colombia shows that, look, the tariff threat is still very much real. And we might start to see the market reprice that, particularly, and this is important for this week, Trump has said he plans to impose 25% tariffs against Mexico and Canada by 1st of February. Well, that's coming up real soon. And if he makes good on that threat, then I think we're going to definitely see the dollar rally back. So as I said, a lot of uncertainty, too soon to really call a top to the dollar at this stage.
Koon, how are you looking at emerging markets, especially India? Big event this week for us at the end of the week, actually, on a Saturday. 1st Feb will be the presentation of the union budget, and a lot of expectations this time round that capex will be pushed. How are you looking at that bucket of emerging markets with the focus on India?
Well, for emerging markets generally, particularly in Asia, the focus very much is on Trump's trade policies. Now, a bit of relief so far, which is why we've seen markets like China and Hong Kong and other parts of Southeast Asia rally on the back of that. Now, for India, it's under a bit of pressure, partly because India is going through a cyclical slowdown. Growth has been weaker than expected, and after being a huge recipient of large FPI flows the last couple of years, we're starting to see some of that unwind. So for the union budget, I think the focus will be on whether or not there'll be a renewed push on infrastructure and various other policies that will help to stimulate and drive a recovery in the Indian economic growth. I think that's going to be quite important for markets. I think beyond that, what's happening to earnings and things like that. And importantly, I think whether or not the Trump administration might impose any form of tariffs against India also will be quite crucial to watch in coming weeks and months.
That yet, Koon, but there's also, among the countries that you mentioned that have higher tariffs imminent, China did not make that list. In fact, comments that were made by Donald Trump recently seem to suggest that he's a little softer than was anticipated on China, and he's looking for a deal. That's the latest that we've heard, at least. What is the implication of such a deal going through? Is this something that the market is not anticipating?
Well, the market was pleasantly surprised when he mentioned in his interview last week that he'll rather not impose additional tariffs against China. But, again, it all depends on, whether or not both sides can reach some kind of agreement. Both sides haven't really started talking on any deals yet. I think the most pressing one at the moment is regarding TikTok, obviously. But the fact that he's basically toned down his rhetoric towards China, I think has been taken positively by markets. But this can change at any moment, and I think that's part of the difficulty that any investor will face in the current environment. That Trump might say have some soothing words one day, and then he might backtrack and use more forceful language further down the track. So it's very hard to decipher and be absolutely sure where he's trying to get with in terms of US and China. So we'll just have to watch and hope for the best.
Right. Makes life difficult for you as an analyst, certainly, and for us as well. It's exciting nonetheless. Thanks so much, Koon, for joining us this morning and for giving the perspective that you did. All right, let's talk about Indian equity markets. We've given you a fair sense of what's happening globally. And by the way, Chinese equity market's going to be shut for quite a bit of this week on account of the Lunar New Year holidays. Let's talk about flows, though, and let's start the recap for last week and the end on Friday. You had domestic institutions that net bought once again, foreign institutions selling for a 16th day in a row, 16th session in a row, to the extent of 2,760 crore rupees. The broader market slump continued on Friday, and there was quite a bit of pain in a few individual names. In fact, even the benchmark Nifty 50 continued to see the gyrations that it saw through the second half of last week. It ended about 0.5% lower, but the intraday low on Friday was at 23,050. It's still defending that 23,000 level. The range was near 300 points, which is slightly elevated. The mid-cap index was down about 1.7%, and the small-cap 250 was down about 2.1%. For the whole week, in fact, the drop for the small-cap was more than 4%. Stocks continue to get punished on the back of weak earnings, or in fact, outlook. But earnings beats have been very handsomely rewarded, and that is possibly something to take into trade today. Goldman Sachs has spoken about the earnings so far. 40 MSCI India stocks have so far reported their earnings, and half of those stocks have surprised negatively. Only 24% have actually beaten their estimates. The pockets where you've seen a little bit of pressure, you've had industrials, utilities, and consumer discretionary, which have had a soft start according to them. Now, we had an interesting session on Saturday, and we were speaking to Gautam Shah of Goldilocks, and he shared some interesting data. You have the Nifty 500, which has fallen about 13.2% from 52-week highs, but the kind of pain that you've seen in individual names, 41% of those 500 stocks have fallen over 30%, and 34% of that basket have fallen over 20%. So 75% of the Nifty 500 has actually fallen more than 20%. Only 7% of those 500 stocks have fallen less than 10% at this juncture, Tamanna. So, and quite a few of those reacting to earnings and earnings downgrades.
So earnings is going to be key. I think you'll also have to look from the point of view that you have a very rough start to the day. And the anticipation is that Q3 is going to continue to be weak. The kind of confidence that H2, because if you remember last quarter, everyone was saying second half will be better. Yes. Quarter 3 is not showing those signs. To expect quarter 4 to show some miracle now is something that the street is clearly not buying, which is why you're seeing the GIFT Nifty down nearly 200 points today. What are the levels to watch this morning? A resistance between 23,250 to 23,500. If we get a support at 22,800 is what we need to watch. Meanwhile, key earnings just today and this week also is a big one. Remember, Coal India, Tata Steel, ACC, Adani Total, Adani Wilmar, Bajaj Housing Finance, IGL, Piramal Enterprises, Petronet LNG are some of the ones that will report this week. It's also an important week. The union budget announcement and monthly expiry will be this week, as will the outcome of the Fed meeting, which will be seen on 30th morning, perhaps, India time. So there's going to be a big bunch up of events right ahead of the budget. A lot of speculation that you will see driving volatility this entire week because of the budget, which sectors will get allocation, etc. Corporate earnings become key, global developments, and of course, FII selling pressure remains completely unabated. Look at some of the big results as well. Bajaj Finance, Maruti, ONGC, amongst others, will report this week. And you were talking about that Goldman Sachs report a short while ago, Alex. They also say that 53 MSCI India companies and 25% index cap will be reporting this week.
Yes.
Of the 40 MSCI India stocks reported so far, misses have outpaced beats. Half of the stocks have surprised negatively, while only 24% have been beats. Industrials, utilities, and consumer discretionary have had a soft start. In fact, Goldman Sachs has cut its calendar year 24 earning per share estimate because of those softer earnings. I think the other thing is that, and which has been plaguing us, is the fact that there is so much liquidity being sucked out by IPOs, and that continues this week. You have one main board which opens for subscription, Dr. Agarwal's Healthcare, on the 29th of Jan. Malpani Pipes on the SME segment opens on the 29th of Jan. There are 5 SMEs and one main board listing this week as well. So it's all about the primary markets continuing on a parallel trip right now, as far as
it's not slowing down, which is quite interesting, and quite a few of those promoters looking to exit. It's not all primary issuances, right? It's not fresh issuance.
Yes, some OFSs as well. No, of course.
Which is interesting.
Of course. I mean, I would say at least there's appetite somewhere. Money is coming in. So I suppose that's important. Some stocks to look at today, and a lot of banking numbers and banking finance numbers reported over the weekend. So I'm going to take one of them to start off with, which is ICICI Bank. This might give some reprieve. It's a thumbs up as far as the numbers are concerned, but looking at how bearish the market mood is, I'm not sure if ICICI Bank will get what it deserves in terms of market action today. Their Q3 FY25 numbers were in line with our estimates. Marginal beat across each metric actually, and you could see maybe a positive reaction. What worked? Yet more strength despite a tough quarter. Margin is a marginal beat though. Operating profits were strong and there was no spike in provisions. That's a positive. In fact, the profit after tax was also a marginal beat. The ROA, return on assets, held up, which was quite impressive. and the gross NPA improved. Growth has slowed slightly year on year, but better than peers. The core numbers, I'll just run that through for you very quickly. Net interest income at 23,371 crores. That's up 9% year on year, 2% Q on Q. Net interest income at 23,771 versus 2,500 as per our estimates. Operating profit at 16,887 crores, which was 15% up year on year and 1% Q on Q. So flat there. Operating profit is as per NDTV poll was pretty decent. Provisions at 1,227 crores, so not bumped up too high, which has been a relief. Gross NPA ratio is also pretty much flat. Just one note, and there's several notes today, but one note I'll pick out for you, which is what Bernstein is saying. They're saying they've maintained market perform with a target of 1,440 on an ICICI bank. Yet another strong quarter with ROA remaining at 2.4%. Stellar ROA, return on assets, run aided by cost control and pristine asset quality. I mean, that's the golden word right now as far as the banking space is concerned. The asset quality. Growth was lower than their consensus estimate, but higher CASA growth paints a good picture on the growth front. The second stock is Indigo, and a thumbs up here, again with a bit of a fly in the ointment. So I must make that disclaimer because the operating numbers are strong. This company, which has a lion's share in the domestic aviation market, has had a strong quarter. Revenues were up 13.7% at 22,111 crores. EBITDA was up 10.7% at 6,059. Margins have gone down from 28.1% to 27.4%, and net profit is down 18.3%. But why are we saying it's a thumbs up? Because look at the reason for the profitability getting cut is Forex. A stronger dollar has eaten into their profits. In fact, they have a Forex hit of close to 1,500 crores. And this is something we spoke with the management as well about. And it's reflected in what UBS is saying on Indigo. They've maintained a buy with a target price of 5,400. They say it's a strong show marred by Forex, but the outlook is robust. There's better demand in Q3, inline costs offset by sharp USD appreciation. They have a strong aircraft addition and are taking steps to mitigate Forex. In fact, Goldman Sachs is also maintaining a buy with a target price of 4,650, saying it's an operational beat, positive near-term demand outlook, and they believe Indigo's competitive positioning is strengthening. Listen in to what Peter Elbers told me in a conversation on Friday evening when I asked him about what he's going to do on the Forex issue.
We've seen this in the past and we see it today. Actually, throughout this financial year, the first two quarters were rather flattish when it came to FX impact, but really in the last quarter and more precisely, actually the last part of the last quarter, we had that. And for the accounting reasons, we have to take the sort of year-end market-to-market rate. We have a couple of strategies in place. One of them clearly is the hedging of dollars. The other one, importantly, and that links to one of the strategic priorities, is to further increase our international footprint. And by more international footprint, obviously, we'll have more foreign currencies as part of our revenue basis. And I must say, we're glad that in this quarter, we have reached a 28% of all our available seat kilometers has moved into international operations. So that really is towards the 30%, which we put out as a sort of objective or target earlier.
Okay, so that was Peter Elbers for you. The third stock I'm taking is also a thumbs up. So, I'm literally looking for the shining light in this market, DLF, because net profit is up 61.2%, 1,059 crores versus 657 crores. Revenues are up about 0.5% at 1,529 crores. EBITDA is down 21% and margins are also down sharply. But this is because of a one-time loss of 302 crores in Q3 due to an IT liability. You have a note here from Morgan Stanley on DLF. They've maintained an overweight with a target price of 2,150. This is because of pre-sales. Remember, with real estate companies, it's all about pre-sales. And they've seen a record $1.4 billion pre-sale number from the Dahlias. In fact, the pre-sale number of 12,100 crore in Q3 is highest ever in India in the industry. It's also higher than the company's target, in fact beats the target by 13%, and the residential collections have resulted in a net cash position of 4,500 crores. What Morgan Stanley says is that DLF is trading at 20 times PE, which is cheaper than peers. CLSA is also quite excited about DLF. They've maintained an outperform with a target price of 975 because of that 12,000 crore pre-sale number in the quarter, highest ever in India, says CLSA. Cash flows were also strong, and their pre-sales from newly launched uber luxury projects, the Dahlias, which has really worked. So I suppose, Alex, while we keep talking about what's happening in the economy, the fact is that uber luxury projects are selling like hotcakes. Any company that is in that premier experience or premier service or product space still has huge growth.
Which is why the commentary on consumption is so interesting to track, right? On the one hand, people are saying there is a slowdown in certain urban pockets. In fact, one of the stocks that I'm talking about that I have chosen has that commentary. Let me pull up first, before we get to that though, and that's the third stock that I have for you. The commentary in the microfinance space continues to be a bit of an issue to track in the financial space. And so the stock that I'm taking, the first stock that I'm taking is a big thumbs down, and you can expect there to be pressure on it at the start. That's Credit Access Grameen. Now, of course, if you look at the headline numbers, there is a 6.7% decline in the total income. There's a net loss of 99.5 crore rupees compared with a profit of 353 crore rupees. That's on account of higher provisioning. But look at the commentary going forward as well. The portfolio at risk, which is their definition in a banking sphere, you would look at SMA2 or special mention accounts, which is nearly non-performing but not yet. That remains elevated for this company. It's seeing some moderation apart from Tamil Nadu, where pressure continues to remain. But here's the deal. Because of the pressure in the microfinance space, you're seeing that loan growth has moderated and will continue to do so. The gross non-performing assets have come in at 3.99%, nearly 4%, compared with 2.44% in the previous quarter and 1.46% at the start of the year in the first quarter. Now here's the kicker. The FY25 projections have been slashed very dramatically, particularly if you compare it with the first quarter of the year. The loan growth projection is at 7 to 8% compared with 8 to 12% that was made in October, and 23 to 24% that was made in May. The credit cost expectation is at 6.7 to 6.9%, which has been increased from 4.5 to 5% in the previous quarter, that is in October, and 2.2 to 2.4% that was made all the way back in May. So quite a bit has changed since that point. IDFC First Bank, the other bank that has reported numbers over the weekend, it's a thumbs down here as well, because the numbers bore the brunt of, once again, stress in the microfinance space. The margin and the return on assets have missed expectations. The asset quality has seen a drag on account of microfinance, and that has had a bearing on profitability as well. Provisions were lower on a sequential basis, but they were higher on a year-on-year basis. That has had a bearing on the PAT number, which has declined. The credit growth has moderated on account of the microfinance book. They seem to be going a little slow there, and that likely will head into the fourth quarter as well. The net interest income came in 14% higher. The operating profit came in at 1,756 crore rupees. That's up about 12% on a year-on-year basis. Provisioning, as I was saying, is at 1,338 crore rupees versus 1,732 crore rupees year-on-year. Profit after tax is coming at 339 crore rupees, and that is down as much as 53% on a year-on-year basis. Gross NPAs more or less in line with expectations to a certain extent, and not too much of a spike versus the previous quarter, 1.94%, and the net NPA ratio stands at 0.52%. Godrej Consumer, the stock that I was talking about at the start, which has to do with the outlook on volumes, it's a thumbs down once again, because that pain in the consumption space continues. The revenue is up about 3%, but the EBITDA is down about 10%. There has been a margin contraction. It's come in at 20.1% compared with 23%, and the PAT number is down about 14%. In terms of categories, the home care segment has grown about 4%, and the personal care segment has grown about 2%. But there were a few takeaways that you can take from the con call, and the volumes were flat on a year-on-year basis. There was a surge in palm oil costs, which has negatively impacted the EBITDA margin. There was, as I pointed out earlier, a contraction there. The modern trade is gaining share and the general trade is losing shares, what the management is saying. And the premium products for Godrej Consumer are not growing at the expected pace. The urban slowdown is a cause of concern for them, and they're saying that volumes in the second half of the financial year are projected to remain lower than the first half. The volume recovery, in fact, is only anticipated to come in 2 quarters from now. Now, 1 or 2 more rounds of price hikes are expected in the coming months, and therefore the pricing growth in Q4 is expected to outpace Q3. Watch out for this in trade today. It's not a very good picture for Godrej Consumer.
So, just completely highlighting the point that we were talking about, Alex, that the staple FMCG bread and butter, or in this case, insect repellent and mosquito coil and soap is seeing pain points, but a Dahlia, kind
Uber
of a
luxury.
project, Uber luxury sees highest ever pre-sales value. Well, more earnings that we want to track for you this morning. We want to get you set up completely for the day. NTPC and NTPC Green Energy also reported their numbers over the weekend. Mehika brings in more details. Mehika, strong numbers for NTPC.
It's a good number. Even though you have revenues pick up 5%, you've seen EBITDA expand 20.3% to 13,667 crores, and margins stood at 30.3% versus 26.5%. However, net profit was down 1.8%. In terms of your EBITDA and margins, they were aided by a 21% annual drop in other expenses, and the consolidated profits were flat on a higher base. It's key to note that Q3 FY24 included an interest on income tax refund, and the standalone profits, when you look at them, they're up 6% year-on-year on a similar rise in regulated equity, as well as a 14% uptick in other income. In terms of capacity, installed capacity of NTPC Group now stands at 76,598 megawatts, with 17.6 gigawatts of thermal and 10.3 gigawatts of renewable energy under construction. And this implies a 7 to 9 gigawatt addition of capacity every year for FY25 to FY27. For NTPC Green, revenues were up 13%, EBITDA is up 7.2%. Margins have contracted to 83.9%, but net profit is up 18%. The margin contraction was due to the employee benefit expenses more than doubling on a year-on-year basis and a 48% increase in other expenses, whereas the first time the company has reported its earnings since its listing.
Okay, all right. Thanks, Mehika, for getting us those details. We have to slip into a very quick break. There's more on the other side before start of trade, so do stay tuned.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead.
Welcome back. Quick check on the implied open. Remember, biggest story right now, biggest focus, biggest factor for markets is earnings, earnings, earnings. Yes, a lot of stuff happening the world over. But remember, no markets, no global markets are reacting the way India is. And this problem seems to be currently with the kind of earnings that we're seeing, which is why 165 points down, at least on the Nifty as we open, is what you can expect. But more earnings in focus. Torrent Pharma, Sharda Corp and Supriya Life. Some of those that have reported over the last couple of days, Varsha, over the weekend.
Yes, Tamanna. So actually, let me start with Torrent Pharma, wherein the net profit numbers did meet estimates. But if you see, the revenue growth has been led by a healthy India business, but US and Germany were stable, while the net profit EBITDA margin was intact. This was aided by lower selling and general and administrative expenses, but lower depreciation and lower interest costs has resulted in improved profitability. Then on my list, I have Sharda Cropchem, wherein good set of numbers. If you see, revenue increased 47%, which was driven by higher volumes, while EBITDA margin improvement was led by raw material price stabilizing and cost optimization strategies, which was done by the company. So if you see, the margins were 17% versus 7.4% last year. So good uptick when it comes to margins, and net profit was at 31 crore versus 4.6 crore last year because of all the pricing pressure that we have seen. But this was the reason that last year the numbers were not that good, but this year in Q3 the numbers were really good for the company. Last on my list is Supriya Life Sciences, wherein again good set of numbers. Revenue was up 32%, while EBITDA was up almost 60% at 66 crore. Margins, good uptick in margins, which was actually concern for investors for Supriya Life Sciences. So margins were at 36% versus 30% last year. And net profit was up 57%. If I were to talk about the key highlight for the company, which is the margins, where EBITDA margin improvement was led by decrease in cost materials and lower employee cost. This has led to increase in margins, and overall, if you see, for Supriya, CDMO is the next leg of growth that the company has.
Okay, thanks Varsha for getting us those details. Certainly a stock to watch out for in trade today. But there's so much more in the way of earnings, and a couple stand out to me at this juncture, and we've already talked about quite a few. DAM Capital Advisors, this is a listing that was very closely tracked because of the space that it plays in, and the earnings, the first earnings post-listing have come through. The revenue has increased as much as 64% to 104 crore rupees, so that growth looks very good. The net profit has increased as much as 230%. And come in at 52 crore rupees compared with 22 crore rupees. And the investment banking revenue is the one that is proven to be the big beneficiary or the contributor here. 210% increase, and that is coming at 80 crore rupees, accounting for a lion's share of the revenue and the top line at this juncture. Broking revenue, however, has declined to a certain extent by 11%. That is understandable based on the kind of trends we've seen in the space. 20 crore rupees is the broking revenue, but that stock is going to be something to watch in trade today, certainly. The other stock in the banking space that I was looking at was Bank of India, because when I looked at the numbers initially and you look at the gross non-performing assets as a percentage of advances, it's come in at 3.69%, and that's a sharp improvement on a sequential basis versus 4.41%, as a result of which the credit cost has come off quite substantially. But look a little closer at the numbers, and I've actually penciled in the write-offs during the quarter. They were elevated and they came in at 3,141 crore rupees. So while on the face of it, it's positive in that provisions were significantly lower. The gross non-performing assets as a percentage of advances is improved quite substantially. The NII increase of 11%, PAT increase of 35%, largely on account of lower provisions. All of that is good, but it's on account of write-offs. So that's certainly something to watch out for in trade today. Yeah, damn.
No, I was saying that Shriram Finance is the other one, the big one. So they posted results in Friday. It was the close of trade, but look at what brokerages have said over the last couple of days, which is why this is going to be a stock which will be in focus. Somit is joining in to give more details.
Brokerages are quite positive when it comes to Shriram Finance. Most of them have largely maintained their rating on the stock. There have been some cuts in target price that we have seen, but that is largely to factor in the sharp down move that also we have seen in the share prices of Shriram Finance of late. Now, if you look at Citi, they have maintained their buy rating with a target price of 720. They are saying that broader concerns over asset quality weakness has been mitigated as of now, and they are saying that NIMs have contracted on a sequential basis. But that is on the back of the excess liquidity that there was there in the company. Apart from that, they're expecting the AUM to grow at around 15 to 18% over FY25 to FY27. HSBC has maintained their buy rating with a target price of 745. They are saying that it was a solid quarter, and this quarter reiterates their constructive outlook on Shriram Finance over FY25 to FY27. They're expecting an EPS CAGR of around 18% from the company. Morgan Stanley has maintained the outperform rating, but have cut the target price to 750 from 840 rupees. They are saying that this stock is a good for cautiously optimistic investors. They are expecting Shriram Finance to contain their stress and the increase in stressed loans that we have seen that has been well contained by Shriram Finance, and this should be taken positively by the street. They are also saying that the recent sharp correction in the stock prices also augurs a good entry point for Shriram Finance, and they are expecting fourth quarter to also be on the stronger side for the company. CLSA has maintained the outperform rating, but they have also cut the target price to 670 from 720. They are saying it was an inline quarter from Shriram Finance. They're expecting healthy growth momentum to continue even going forward. They're saying that excess liquidity could be a drag on the margin, similar to what we had seen in the third quarter, but they're expecting credit cost to remain on the higher side for Shriram Finance. They have cut their estimates by around 3 to 4% over FY25 to FY27 to factor in the higher operational cost and higher credit cost.
All right, thanks so much, Samit, for getting us those details. In earnings, continuing to talk about some of them, and we've got JSW Steel, which has come through. Tough operating environment for them in the third quarter, but the numbers were actually better than expectations. And we've also got JK Cement. To talk about those two, Mika is joining in. Mika, better than expected for JSW Steel, certainly?
Yes, it was. The annual drop was expected. The environment was tough, like you said. Revenue is down 1.4%. EBITDA has seen a 22% downtick and margins have contracted. And net profit is down 70%. In terms of what impacted the earnings altogether, well, EBITDA was impacted by inventory changes, increase in fuel costs, and the net profit was hurt by a 1,391 crore other comprehensive loss and an exceptional item of 103 crores, as well as higher deferred taxes. But what worked for the earnings to meet the estimates, we have, the EBITDA beating estimates and profits coming in line, was the 10% year-on-year rise in the India operation volumes despite the muted demand and the lower than expected fall in steel prices and costs. In terms of one key negative, management has cut their FY25 sales volumes guidance by to 26.5 MT, but this is only a 2% cut and still stands 98% of the earlier guidance. And they've given some strong commentary for Q4, which stands out. Q4 is set to benefit from seasonal growth in demand, as well as the softer iron ore and coking coal prices, which may help margins. And the company has also stated that they do expect safeguard duties on steel imports in the first half of February 2025, which will not only help the domestic industry, but also help increase domestic steel prices, which is positive for the company. Then we have JK Cement, a fall on fallen key metrics on an annual basis. However, EBITDA and profits have beaten estimates. We have EBITDA down 21%, margins have contracted to 16.8%, and net profit is down 33.2%. Capacity is up 9.6% on a year-on-year basis to 24.34 million tons per annum. In terms of what impacted the Q3 earnings, well, the top line was impacted by low cement pricing and only a 5% uptick in volumes. But it's key to know that realizations have grown on a quarter-on-quarter basis to around 1,300 rupees per ton. EBITDA was hurt by the muted top line and higher employee and freight costs, and an inventory reversal of 41.15 crores versus 138.44 crores a year ago. But JK Cement has announced an acquisition. They're going to enter a purchase agreement with Safco. Cements requires 60% of the stake in the company from existing shareholders as well as a fresh issue. The acquisition is to be done for a total of 174 crores, and this is a $49 per ton EV cost, which is much lower than what we've seen in the industry lately. And this acquisition will help the company expand its presence in the Jammu and Kashmir region.
Got it. Okay. All right. Thanks for getting us those details. JSW Steel, you got to keep that on your radar as well. A lot of stocks to track this morning. But let's see what our experts are focused on at the start today. Avinash Gorakshakar, Director of Research at Profit Mart Securities, joining in. And we've also got Kush Bora, the founder of kushbora.com, joining in. Gentlemen, thanks as always for joining in, and good morning to you. Happy Monday. Avinash, out of all of the numbers that have come through, I want to start with you. ICICI Bank certainly looked at as a breath of fresh air, and certainly something that will likely see a positive start. But what are you focused on most at the start today?
No, I think clearly, Alex, first of all, good morning. I think, my sense is that with the kind of, headwinds in the global markets, what we have seen, I think the Fed meeting this time is going to be very critical. I think what comes out from the Fed commentary, clearly, that would be the center point action for today. As far as ICICI Bank numbers are concerned, definitely it's a breath of fresh air, because I think numbers were slightly better than what the street expected. And I think numbers were much better if you compare it with other larger banks like Axis, IndusInd. And definitely the bank has put up a very strong show. So my sense is, in this kind of volatile market, we could see a little bit of weakness, but I think the bank has reported very strong numbers, and I think that would actually aid a little bit of value buying even at the current level. The stock has corrected, from higher levels. So definitely it's a good addition to the portfolio at the current level if one takes the next 12 to 15 months. Although the banking sector is definitely facing key challenges in terms of deposit mobilization, pressure on yields and margins. But I think overall the net performance is pretty good. I think all businesses have done well. I would say that, the sectors which would be keenly watched would be clearly the export-oriented sector. What happens to metals, what happens to pharma, IT. These would be sectors which would be in focus, because these are clearly aligned to what the US market does. And I think the way, tariffs have been announced, I think very clearly markets are now on a kind of a volatile mode, as everyone is aware. Mr. Donald Trump, announces new, policy announcements on a daily basis. And during his previous regime, the markets were used to behave in a very volatile fashion. So I think we'll have to accept the fact that volatility in the markets is going to increase significantly. And at least for the next 3 to 6 months, this is going to be something which all traders and investors will have to keep in mind.
The name of the game. Avinash, thanks for that. Kush, the way that things are looking right now, we're likely to break that 23,000 mark at the start today. And if that is done, where do we go from there? People penciling in 22,800 as the key level to watch after this?
Hi, Alex. Hi, Avinash. You started by saying a happy Monday. Doesn't seem to be starting like one. Let's hope that it ends like, a happy Monday. That's what I'm gunning for, actually. We've been talking about how this market is actually shaped up and ripe for, a short covering rally, perhaps even an extended one. I think what we saw on Friday in markets was actually capitulation on the side of the SMEs, the small and the mid-cap stock. What's happening today, if we do get that 170, 180, about 200 points kind of cap down, I think that will be capitulation in the, in the broader, in the Nifty as well. We'll hit that 22,800, 23,000 support zone. And that is perhaps where that bulk of the short covering will come from. Also, just a couple of data points. 23,000 still holds the highest put base for this monthly expiry. The short positions of FIIs is nearing the June 2024 short positions that they had, and we saw what kind of a sharp short covering rally came after that. We're already starting to see some short covering action by FIIs. Perhaps this fall will aid that short covering rally a little more. So I am gunning for a short covering bounce intraday and positionally as well. I just don't want to preempt it because the price action is not suggesting that. So I obviously won't go short, after such a gap down opening and with the kind of fall that the markets have seen. I will look for a short covering bounce.
Okay. And do you have any picks heading into trade today? Anything standing out?
As I have been doing for a while, it's still a mix of a long and a short. I was listening to you and Tamanna talk about how battered down the FMCG play is, but my long call comes from that space itself, which is Britannia. If you see, the stock has actually done rather well over the last month and a half, in fact. And on Friday, with the kind of fall that the market saw, this stock in fact broke above it broke above the resistance level of 5,000, which is also the rounding bottom formation resistance breakout. So Britannia is on the long side for targets of 50 to 50, 5400, 4950 being the stop loss. And on the short side, I've got Piramal Enterprises. Again, this stock flirting very dangerously with the 200-day moving average, but it's seen a very sharp fall already. There could be some more downward pressure on the stock. Support zones comes in fairly low, around 940 mark. So up until then, for targets of 980, 970, PEL, Piramal Enterprises, can be considered as a short trade for the targets given, and the stop loss here is 1000.
Okay, I'm wondering, Kush, and good morning to you. I'm sure it will become a better morning at some point, maybe not right at the start, is looking a little tough. I'm just wondering how you're looking at a DLF and a macro tech. The reason I'm asking is both set of numbers good. Fundamentally, there should be some up move today. I'm wondering if the chart support.
Not really, Tamanna, at least not for DLF. Perhaps a macro tech. And I've not really favored the real estate space, at least the developer space, for some time now. And the price action just confirms that. If you see both these stocks, DLF has had a long consolidation period, but with a negative bias. A macro tech had its share of volatility. Did see some sort of a rebound, but hasn't really been able to hold on. So I'm a little skeptical on some of these names. With the kind of numbers that came out for DLF, there's a possibility that you might see some sort of an upside, perhaps to the levels of 720, or higher as well. But I think that will be taken as an opportunity to exit, at the moment. Macrotech slightly more constructive, ever so slightly, because it's made a double bottom formation near the 1050 mark. So if that is held, you could see a short-term trade on the upside on this one. But again, we've got a couple of other better trades going, right? So why dabble with a sector which is actually not done so well, and perhaps even not expected to do well, at least technically?
What are the better trades that you have going, since you mentioned that?
Britannia, Anantraj. Britannia we spoke of has done well. Anantraj in this space we continue to like. So any dip, something like a DLF or a macro tech, any rise is a shorting opportunity at the moment. But on the other hand, a setup for Anantraj is so beautiful. Any dip here should be taken as an opportunity to buy. So if I were looking for something in this space, I would actually look for Anantraj. Every 3 to 5% dip should be taken as an opportunity to accumulate further.
Avinash, very good morning to you. I'm wondering what you've made of the BFSI pack that has reported Friday onwards. Shriram Finance came in on Friday, but brokerages later, and IDFC, Yes Bank, ICSCI. Among them, what do you think would be your top pick?
No, I think clearly, Tamanna, I think ICICI Bank definitely in the large cap deserves definitely a good kind of re-rating. We have been telling our clients to accumulate the stock on every decline. As far as IDFC First Bank is concerned, I think there's clearly some concern on the slippages, on the asset quality, and I think numbers have been far below expectations. The stock could see a little bit of correction. I mean, the only positive fact is that the CASA is still pretty healthy at around 47-48%. But I think clearly over the next couple of quarters, IDFC First Bank could possibly face a little bit of problem, because a lot of unsecured book, is the point of concern, especially, from the SME, MSME, and obviously whatever microfinance funding they do. So I think this is some area where we believe that the correction could take a little more than 3 to 6 months. So I think, IDFC First Bank could see further selling pressure, and ICICI Bank, according to me, I think very good numbers in a very challenging environment. So ICICI Bank would definitely, obviously perk up in this market, despite the fact that today we may have a gap down opening.
I'll circle back to you on a couple of these microfinance lenders, Avinash, in just a bit. But there's an interesting note coming through from Nomura on AU Small Finance Bank. There's a significant downgrade in the price target for this company. It's also changed its rating on the stock. We've got Harsh joining in to tell you why and what they're seeing in this report. Harsh?
Well, they've downgraded AU Small from a neutral to a reduced the target price from 580 odd to 500 rupees. 16% downside is what they see on the back of numbers, and that's what's really standing out. One is your asset quality has deteriorated, and the margin moderation has really led to the softer performance, according to Nomura. Credit card will likely see credit costs peak at this point, is what management suggested. They're also saying that MFI will take 2 to 3 quarters to improve in terms of its credit quality. So MFI will continue to create pressure on credit costs. So what Nomura has done is they've hiked the credit cost expectation over the next 2 years by around 0.3%. They're now building for credit costs of 1.85% for FY26 and 1.7% for FY27, which is what is leading to an earnings cut. You're seeing that earnings cut also build into valuations as well as ROA. So what's happening on the ROA front? ROA expected to be around 1.4 to 1.5%, ROE of around 13 to 14%, and they're now valuing the company at 1.8 times December 2026 price to book versus the September 26 price to book at 2.1 times. So you're seeing a cut even on the multiple, which is why you're seeing that target price being cut quite sharply from 580 to 500.
Important to note there. Thanks, Harsh, for getting us those details. In fact, Nomura is sending out one more note, and this is on a stock that was in my list, Credit Access, on the downside, certainly. It has, in fact, tagged the stock as reduced, and it's cut its target price by 13%. It now stands at 800 rupees. The stock is currently trading at 916, so that's certainly a big downside for the stock even at this point. Incidentally, I didn't mention, it is currently trading at over 2 times price to book even at these levels. What are they saying though? They're saying that the reported loss is the first quarterly loss ever. And this is on account of credit costs. The performance is reflecting a challenging condition in the MFI or the microfinance space. It is difficult to reverse the delinquency trends that they have been witnessing, what I was pointed out in terms of the portfolio at risk stats. And the key challenge is accelerated write-offs as well as the stress in the Karnataka and Tamil Nadu books. In the quarter gone by, the write-offs were more than 300 crore rupees. The guidance has been revised further across metrics. They're building in a lower return on equity of 14 to 17% over the course of FY26, that's the next financial year, to FY27. And they've also cut their EPS for FY26 by 16%. FY27 has been cut by 13%. So it's not going to look like a very good morning for Credit Access, Tamanna.
Credit Access in focus, banks in focus. You know, I'm just wondering, Avinash, what is the sort of budget momentum that you are seeing? We know that some capex announcements are expected, at least that's what the street is penciling in. Is this the day when you're looking at a weak open to build your positions in your typical budget plays, in your defense, railways, etc.?
I think, Tamanna, clearly, this time market expectations from the budget are very low. And I think my sense is the markets would be keenly waiting for finally what comes out on the 1st of February. I think today, I would not be surprised that, most investors or traders would like to keep their positions on hold. Because clearly, the way global, headwinds are shaping up, anything negative on the global market front could completely negate any upside kind of possibility. So I think, yes, within the sectors which really look interesting are definitely, infrastructure, cement. Typically, my sense is, the hard sectors like typically, the capital goods sector. So these are sectors where I think the government could do a little bit of, policy announcements to encourage capital investments. At the end of the day, housing continues to be a very strong kind of mass kind of demand driver. So I think, I think real estate also could be a possibility where I think some positive announcements could come in. But I think overall the markets are not looking at anything extraordinary. I think the only thing the market is expecting is that no negative news or no negative announcement comes in, because last year capital gains tax was increased. That became a big disappointment, and I think this time markets are expecting that at least on the middle class front, some relief is given. Consumption, measures to boost consumption is increased, because clearly the economy is in a downturn. Consumption has got affected very badly, and I think the government definitely will do something, but whether it will be completely positive for the markets is something we'll come to know only on the 1st of February. So I think it's better to wait and watch now rather than trying to buy it now. It's better maybe another week or so. I think everything will be very clear.
Avinash, I will certainly thank the finance minister as well for any tax breaks that she can give me. But let's talk about the impact on the Nifty Bank. Kush, what are the numbers you're looking at? The reason I ask is because we've spoken about ICICI Bank, we've spoken about the good set of numbers. 25% of the Nifty Bank is the weightage that it has, right? And so if one ICICI Bank stands tall today, are you looking at potential upside, or do you see the pressure continuing on the downside?
So, Alex, I think the rebound that we spoke of, in the markets actually could be sharper on the bank Nifty. While, along with the markets, there could be a gap down opening for the bank Nifty as well. The number that I'm looking for on the downside is 47,700. There and thereabouts is a good support zone. The PCR that we've been tracking has actually come to 0.66. So any kind of further slip could actually push the PCR to oversold territories. And time again over the last few months, we've seen the bank Nifty adhere to the PCR rather well, more than any other technical indicators. So once it does touch the oversold territories, there could be a sharper rebound on the bank Nifty, perhaps to levels of 50,000 as well, in the coming week. So I'm a little more constructive on Nifty and bank Nifty both. It's just that I'm not preempting any action. Now, as far as ICICI goes, it's actually knocking at the doors of the 200-day moving average, which is close to 210 levels, thereabouts where it closed. If it is able to sustain above those levels, on the backing of on the back of results that have come out, I think you could see the other banks also participate and take heart from that, and that could actually lead the short covering rally that we've been anticipating, or at least I've been anticipating on Bank Nifty as well.
Okay, so Bank Nifty, keep an eye out on. A whole host of results we need to keep an eye out on, which have seen quite a bit of weakness. CDSL, Credit Access Grameen, Alex spoke about in detail. Parsha covered Supriya and Sharda crop. So all of these need to be looked at on the upside. And let me come to you with the real estate question, Avinash. A DLF, a macro tech. Is this something that you would see in any kind of positive fashion?
No, I think macro tech would be a better choice. I think clearly my sense is that numbers have been very strong. DLF has also posted very strong numbers, but we have been more positive on macro tech, considering the fact that it operates in a very premium market. The order book visibility is also pretty strong, and I think clearly, I think over the next say 6 to 12 months, the kind of projects and the kind of inventory which they are building, I would not be surprised that there is unlikely to be any big margin pressure, and this is despite the fact that interest rates have not come off. Hopefully, in the next 6 months, if interest rates are cut, then I think that would be a further trigger point. But I think clearly Lodha has got obviously better earning triggers compared to DLF. So FY26 should also be significantly better as compared to last year.
Okay, focus on banks this morning. We have seen a whole host of numbers coming in across the board of the BFSI space. Pranav Gundapale, Senior Research Analyst, Bernstein, joining us this morning. And, so ICICI Bank, Shriram Finance, IDFC, Yes Bank. If we narrow focus on this and then widen it a little, Pranav, let's go with that. And a very good morning. Thank you for joining us. Let's start with what you made of ICICI Bank.
Good morning. So ICICI, I think, was another stellar set of numbers with the big positive being no deterioration in asset quality. I think that was the big positive. And again, the bank managed to keep its ROA at 2.4%, helped by the low credit costs and OPEX, also OPEX growth staying low as well. So I think overall a positive set of numbers. A slight disappointment on the growth front, maybe slightly lower than what was expected. But if you look at the CASA growth that they've reported, not just this quarter, the last 3 quarters, I think that more than offsets the disappointment from the headline number being slightly lower than expectations.
Okay, I'll circle back on ICICI, but I want to know what you make of IDFC First Bank and the commentary surrounding that microfinance space, because really that is the talking point for IDFC First Bank as well. I've heard murmurs of maybe the worst is over. Do you believe that's the case for IDFC First?
I think across the MFI space, I think we are close to the bottom. Given that these are 1-year products, in terms of duration, and the tightening started sometime in June of last year. So we are more than halfway through the life of the product, usual MFI product, and therefore we should be close to the bottom. Now, does it mean we'll see a clean quarter next in March? Unlikely, but I do think we are at the bottom in terms of the asset quality issues.
IDFC First, Pranav, just one follow-up there. Yes, provisioning increased substantially, but then there were some views that maybe lesser than what the street expected. So bad numbers, but not as bad as was thought.
Yes, I think I think the MFI space across the board, we have seen bad numbers, and I think that was largely priced in. And if you see the moves for most of the MFI lenders, they've taken a big hit from expectations of asset quality issues. So I think, yes, I agree with what you said, it being bad, but slightly better than the worst that was feared. And I think the commentary also suggests that we have seen that it is about as bad as it gets. So I think that would be taken as a positive.
There were a couple more banks that reported numbers, the likes of Yes Bank. I saw Bank of India as well. Pranav, Bank of India in particular, I think on the face of it, the asset quality looked good, but then I saw that was an account of write-offs to the extent of over 3,000 crore rupees. So what do you make of the other numbers, Yes Bank as well?
See, overall, on the asset quality front, I would say not just the couple you mentioned, but also if I look at the other larger banks that have reported, I think it's safe to say that the asset quality issues are rather confined to MFI and a few pockets of consumer lending. If you look at S Bank's limited exposure to consumer, they've not seen a broad-based deterioration in consumer asset quality. I think going into the quarter, the big concern was, will the asset quality issues spread from pockets of PL and credit cards into the broader consumer lending segments? That has not played out, and I think that's an overall positive. And for the banks with exposures to MFI and pockets of consumer, yes, we have seen deterioration, but that was largely expected. So I would say so far, the trends at an overall level aren't as bad as what was feared. And I think that's a positive for the overall sector itself.
What's the play there? What would be the strategy with that information? And Pranav, is this the time to look at asset quality as the lodestar? With ICICI Bank, it's the asset quality which gives, some succor there and some support. I want to see what ICICI is also doing in the pre-open session. We're 3 minutes into it. But do you think that asset quality becomes key? And with that filter, what would be the top 2 or 3 plays that you would look at?
See, for the safest bets remain the large 2 private sector banks, HDFC and ICICI. I think in a couple of quarters, we should, or maybe even within a quarter, we should be looking at opportunities to bottom fish, because a lot of the lenders have taken a big hit in anticipation of asset quality woes. For example, IndusInd is almost trading at 1x price to book due to the fears on how bad the asset quality in the MFI segment will play out. I think with the MFI troubles seeming to come to an end, that might be time to go bottom fish at some of these names. Like IndusInd is something that we like as a 12-month trade idea. And of course, in terms of staying safe and staying on the good side of the asset quality issues, I think it remains the large 2 banks, HDFC and ICICI.
Talk to you quickly about Yes Bank, because those numbers optically looking good. Pranav, is that a tide which you need to catch now, or is it too late? The stock up about 4% in the pre-open session, so we'll keep that to one side. I'm just wondering what you thought when you saw the Yes Bank numbers. Was it a positive surprise for you at all?
Yes. See, I think the direction of movement is definitely positive, right? So I think on a year-on-year basis, Q-on-Q basis, it looks great. I think the question for Yes and also some of the smaller banks is that when you look at the absolute ROA and growth and then compare with where some of these are trading, then I think it doesn't look terribly cheap, right? So I think that's the issue. So it's more taking a step back and looking at the valuations and where the numbers are. Then it probably isn't as positive as what a year-on-year or a Q-on-Q numbers would suggest.
Just zooming out a little bit, Pranav, and talking about lending growth, right? Because you're looking at, and your comment on ICICI Bank also stands out, because that, according to you, was the one negative in that the growth did not come through maybe as much as you had anticipated. HDFC Bank, in any case, going a little slow. And for the system as a whole, we're talking about a slowdown in credit growth. So therefore, heading into, we're nearing now, we're talking about Q1, but rather Q4, but we're nearing the start of the new financial year, heading into that new financial year. Is that something that is having a bearing on your outlook for which stocks that you're preferring?
See, at this stage, yes, it does have a bearing. Our assumption is at a system level, we get back to about 12 to 13% growth without any major rebound in consumption lending. Now, that's been the factor that is driving down growth or driving growth below expectation for some of the private sector banks, because growth is probably available in other segments like corporate credit, etc., where the margins might not necessarily be as high as it is for the other segments. So, barring a big relief in the budget, let's say there's a massive tax cut or other forms of consumption boosting, we don't expect a big jump in consumer credit, and hence prefer the larger lenders who have more diversified loan book versus pure consumer lenders. Now, if the budget throws up some surprise, then that might benefit the consumer lenders more. But otherwise, in our base case, we prefer the larger diversified lenders.
I've been spending quite a bit of time on Credit Access Grameen this morning, and I know that we've spoken about the MFI space, but some of these pure MFI plays that are likely to get beaten down, at what point do you say is an opportunity, or will you wait till the dust settles completely, Pranav?
We would wait until dust settles for two reasons. One, we haven't seen the bottom of growth, right? So in other words, typically in an asset quality cycle, the worst is when we start seeing disbursals pick up, right? So that's usually the best sign that the worst is behind us in terms of asset quality. And I wouldn't claim that has happened yet, even in the MFI segment. And second is, we haven't, again, heard anything from RBI yet in terms of regulation. All we've heard is MFIN come up with a few changes, which again have been pushed out to a later date. So I think a regulatory clearing event or a pickup in disbursal growth would be the catalyst that I would look for before jumping in and trying to bottom fish for pure MFI lenders.
Thank you so much, Pranav. Always a pleasure to speak with you. Large private banks, always the safe bet. But just look at the pre-open session, to quickly speaking about it before we get to our top brokerage call of the day. Nifty ending about 152 points down at the end of that pre-open session. ICICI Bank also losing its steam. Bank Nifty is what's catching my eye. In a world of pain, IT also not spared. Both these indices look like they're set to open fairly weak. A Yes Bank stands out for me. A Bank of India stands out for me. So those are some outliers in the banking space which could do relatively okay. But on the other hand, just look at what's happening this morning to a Credit Access and AU Small Finance, IDFC First, all in a world of pain. Even a New Gen Soft. Bad numbers means you are going to get hammered in this market. But we have a take on Vishal Mega Mart, and Harsh joining us with those details. Morgan Stanley has initiated an overweight rating. Why is that, Harsh?
A 52% upside along with that overweight rating. It's very, very formidable in terms of what MS sees on this one. They're saying that on the larger picture that Vishal Mega Mart fulfills the consumer's aspirations at affordable prices. Now, what stands out with regard to Vishal Mega Mart's business? One, large presence in tier 2 and below is what they're saying. Second one, the higher share of own brands in the portfolio, and third one is the pricing is well below what their competitors are doing in terms of pricing, and therefore it's a defendable growth strategy is what Morgan Stanley calls this. The FMCG business garners significant footfall, around 13 crore odd customers, and then the apparel business really drives margins for the company. 45% of revenue is now contributed by apparel, and that they believe is a great strategy with regard to the way Vishal Mega Mart goes about. In terms of the competitiveness of the landscape, till the competitiveness normalizes, they prefer Vishal Mega Mart even over D-Mart is what they are saying. In terms of numbers, 20% revenue and 27% PAT growth is what they're expecting all the way up to FY29. They're building in valuations of roughly 21 to 49 times, 21 in the bear case scenario, 42 in the base case, and 49 in the bull case scenario, EV to EBITDA for this company. Risks being change of proposition in terms of competitive landscape, senior management, promoter change, as well as slower growth. All of those could well be risks.
Okay, so those are the downside risks. The stock not moving much this morning, but then frankly nothing is. I want to see what D-Mart is doing, since we're speaking about Vishal Mega Mart and where it has closed in the pre-open session. If we can pull that up, down about 0.5%. So that's the dismal play. Avinash, is this opportunity that we're seeing in the markets today? Is it time to go bottom fishing? And if so, what are you picking? Are you looking at any of those private sector banking plays?
Definitely, I think, clearly one can look at ICICI Bank, one can look at maybe, smaller banks like Federal Bank. Our sense is that, most of the pain is there in the price, but I think clearly for the sentiment to improve, to see better numbers, we may have to wait something beyond the March quarter. ICICI Bank definitely deserves to be, added to the portfolio, because considering the fact that, all parameters except growth have been slightly tepid. But they have done a commendable job in a tough environment. And I think, the next 3 to 4 months, hopefully, if some big announcements come in the budget, that would be like a booster shot for most of the financial services and the banks, specifically the private sector banks. So we continue to be positive on ICICI Bank. Federal Bank is also a very solid play, a very strong network, a very good and a strong balance sheet. So I think, here also one could see maybe some weakness now, but clearly from a slightly medium term kind of time frame, Federal Bank around 170, 175 can be a good accumulation kind of point.
Okay, Kush, anything that you are spotting after the pre-open session?
A lot of red, but I think I'll still go with calls that I gave, at the open, which is Britannia and PEL. Any kind of a recovery, I'll wait and watch for, on the Nifty and the Mac Nifty both. So Britannia on the long side and PEL on the short side continue.
Okay. Based on the kind of start that we've had, I think to just reiterate what we were speaking about, Kush, on the benchmark, right? So we've broken past that 23,000 level. If you are a trader and if you're looking at the index, then what is your strategy at this juncture?
Again, give it 15, maybe 30 minutes for the index to settle. See if the 23,000 foot base, which I said, has remained the strongest, does come into play. Are you seeing further additions to those, or maybe some sort of an unwinding around those? There could be a possibility of a rebound. 23,000, 22,800 remain, a strong support zone for the markets. Possibility of a rebound. Bank Nifty also, at least at the open, seems to be respecting the 47,700 support zone. Here too, again, there's a possibility of rebound. So that's the theme that I'm going with. It's just that I don't want to preempt. I'll give the markets initial 15, maybe 30 minutes to see if that indeed does play out as price action as well.
Okay. What about Yes Bank, Kush? Would you look at a Yes Bank?
No, I won't.
Okay.
It's an avoid.
That was quick enough. Oh, Yes Bank is an avoid. Avinash, your top call after you've seen the pre-open session.
No, I think clearly, from the large cap space, we continue to be positive on engineering and, capital goods company, and L&T seems to be a good kind of, accumulation kind of point. Despite the fact that, there has been some slowdown in projects, I think L&T could be a good bet. And of course, within the banking space, I still would prefer to add ICICI Bank on every decline.
Okay, add an ICICI Bank on every decline. Will you get that opportunity today? You might. The Bank Nifty is looking like it's going to have a very rough start to the day. The question is that do you see flows coming in even as you are set for a weak opening? What's going to be in focus? Private sector banks are going to be in focus. A whole set of numbers have come in. NBFCs are going to be in focus. Big result oriented plays are going to be in focus. All bad numbers are being really punished. We've cracked below the, we are at 22,929 right now. We've cracked well below the 23,000 mark. It's a rough start. The Nifty IT about 1.5% down this morning. The Bank Nifty close to a percent down. The mid-cap stocks also taking a beating. Market breadth would be fairly negative. So is the small cap 250. Not massively weak. 1.5% cut, but remember this comes in the back of a week closing on a Friday as well. So get ready for a bit of pain. Let's pull up the heat map very quickly and just take you through what are the kind of pattern that you're seeing there. Britannia is Kush's stock, safe play. Well, that's one of the few things in the green today. You're seeing an FMCG play today. Britannia about 1% up right now. Kush, I'm sure, preparing to say I told you so. HUL about 0.5% up. ICICI Bank completely flat. Buy on dips on every opportunity is what Avinash Gorakshakar is saying. Maybe that opportunity is coming in today. Dr. Reddy's and Shriram Finance doing okay. Shriram Finance, after its numbers, performing well, but not an ICICI Bank, which was actually a good set of numbers. Hindalco showing weakness. Luckily enough, on the weakest side, you don't have too much of a hit, but overall breadth definitely negative on the Nifty. Infosys hurting this morning. IndusInd Bank ahead of its numbers also looking quite weak. Tech Mahindra, Axis Bank really taking a beating today. So M&M as well. No clear theme that I can point out. I would just say that the standout is Pharma and FMCG. Now, when you see pharma and FMCG doing well, you know you're in a defensive market.
Yeah, no, certainly. And let's also pull up the broader markets, Tamanna, because you pointed that out. Let's see if that has changed at all, because so you have cuts of about 1.5% for the mid-cap index. Let's quickly pull up the small-cap index as well, and sharper cuts there. So that's selling is getting exacerbated even as we speak. Remember, in the first half an hour, you'll see quite a bit of chop and churn. But let's also pull up the sector heat map just to take a look at what was being said. And Realty as a pack is looking reasonably good, but everything else is under quite a considerable amount of pressure. You have the metal pack, which is down about over 1%, in fact, and JSW Steel is one to talk about. Tata Steel reporting results today, certainly, so that pack is going to be watched very closely. JSW Steel, incidentally, was trading with cuts of about 0.6% last I checked. Energy as a pack not doing too well, down about 1% or more than 1% at this point. You have the Nifty Bank, which is one to very closely watch, is down 1% or so, despite a couple of good numbers. But let's look at individual stocks. And we already marked ICICI Bank. It was up about 0.25% or thereabouts, not doing too much. IDFC First is likely going to be under pressure. Let's pull that up and see where it's currently trading, because the numbers were not very good, despite the fact that a lot of people are now starting to say that the worst may be over. Stocks that are reacting to earnings, take a look at that. Lot of pressure on account of the microfinance space. Credit Access Grameen cracking as much as 14% in trade right now, 5% for IDFC First Bank. Bank of India, on the other hand, is looking reasonably good. There is an improvement on asset quality, and several metrics are looking much better for this particular bank. Provisions were lower. Let's pull up Interglobe Aviation, because we spoke about this at the start as well. The stock is doing reasonably well, and in fact, it's gaining about 0.8%. It was a good operational quarter for the company, even though you had that forex loss. DLF, the pre-sales number, we talked about this. Maybe the operational number is not looking as strong as it has in the past, but the pre-sales number is all that the street is focused on, and that is at an all-time high. The stock is up as much as 4%. DAM Capital reacting to numbers yet again, and you have gains of about 6%. The first earnings post-listing, and the investment banking revenue growth looking very, very good at the start. Let's pull up Vishal Megamart. We brought you a brokerage note that talked about the possibilities, but then it's not doing too much in trade today. Torrent Pharma up and about in trade, up about 2.7% on the back of earnings. That's certainly something to track. And lastly, we already spoke about JSW Steel. I just want to see how that is doing. So JSW Steel under a little bit of pressure, Tata Steel also ahead of its results under a tad bit of pressure, and CDSL, by the way, on the back of results also reacting. Quite a few of these stocks reacting to results, of course, down about 6.4%, Tamanna, at this stage.
Absolutely. If you try and look for some, I would say, positive stories, and of course you've mentioned quite a few, Alex, just a little bit more of stock spotting. I would add a Bank of India. Good jam exports 7.5% up. I'm not sure why, because volumes are also all right. Okay. Torrent Pharma on the back of numbers is up this morning. Poly Medicure not doing too badly. Macrotech is another thing we spoke about, but I think I can't take my eyes off Britannia. In an otherwise pretty dull market, Britannia is standing out. Avinash, let me come to you first on a Britannia and the whole FMCG play, even in HUL, bumping up smartly. Is there now a sense that the budget will try and boost consumption?
No, I think, Tamanna, it looks likely because consumption is going to be the growth engine for basically the spending from the consumers to go up. So I think clearly some pre-em buying is happening in most of these FMCG counters. If you talk about Britannia, Lever, Godrej Consumer, Marico, I think clearly this pack has been beaten down very badly. And I think volume growth in the December quarter was completely missing. So I think some announcement in the budget looks likely. And if that happens, then I think you're going to get a breath of fresh air in these counters. Clearly, Britannia, or for that reason, Dabur, Marico, I think all very solid businesses with good franchisee, good branding kind of abilities. So I think one needs to take a conscious call. If one were to allocate a little bit of funds here at these levels, they are still below their 52-week highs. And I think clearly if some big announcement comes in the budget, I think it could possibly further re-rate the stocks once the budget announcement is made.
Spoken about Godrej Consumer, the numbers came through and the outlook on volumes seems to be a little bit muted. And from what I remember, from what I read, they're talking about Q4 or second half being worse than first half for the current financial year, and any uptick in the volumes can only take place, or recovery in volumes can only take place 2 quarters from now. There will be price increases that they will do in the fourth quarter, another 3 if I'm not mistaken, 2 or 3. What did you make of those comments? Because that really is perhaps putting a little bit of a question mark on recovery.
Clearly, Alex, you're right. Quarter 3 was absolutely horrible for Godrej Consumer. And I think the outlook, at least in the very near term, is going to be cloudy. I think clearly, markets are going to build in the narrative first and then look at the numbers. So I think, clearly, despite the fact that fourth quarter may not be great, what the markets would say is that FY26 could start on a better kind of note. I think starting from April onwards, hopefully demand starts moving up and I think volumes start increasing, because most of these FMCG companies are facing a problem of volume. And I think if once volumes grow by about 5, 6 or 7 odd %, then I think you're going to see these companies again bounce back pretty strongly. So I think, it's a clearly contra bet, Godrej Consumer. But I think if one were to look at their inherent strengths and obviously their reach, I would not be surprised that the markets would first give it a thumbs up based on the narrative, which obviously, if possibly, comes in the budget. That would be a key point to watch out. I think markets would not look at the numbers purely in Q4. They are looking at basically what kind of outlook the company could share once the budget is announced, and obviously how the mood changes.
Okay, Kush, Britannia, would you still buy?
Oh yeah, very much. I still have the second target of 5,400 on Britannia, and everything that I wanted to say or start, saying about Britannia, you did. So yeah, I'm not going there, but yes, it's still a buy for a target of 5,400. As I said, technically,
I will not rob you of the opportunity. ऐसा नहीं है. You can say that at 8:40 this morning, and it's a fact, Kush Bora had come and said that buy Britannia.
God and markets have been kind. That's all I'll say. But yes, thank you for acknowledging
Only
that.
Only to you, because please look at the rest of the market.
In fact, I was just getting there. I think, amongst the Britannia positive standout, what we've missed is the second call, which was Piramal Enterprises. I'm only ruining the fact that, I didn't give a deeper, short target on this. The second target on this was 960. The only thing is the stock opened a lot lower and, there wasn't a position to be made at open. But if someone does want to consider, then yes, there are support zones coming in close to 940, 920 odd levels. So there is still some room on the short side. But yeah, I wouldn't initiate a fresh one unless I'm an aggressive trader. So thankfully, as I said, both stocks playing out well. Still bullish on Britannia for targets of 5,400.
Okay, all right. Let's talk about a few other pockets then. And metals is something we haven't spoken to Avinash about. Avinash, earnings for Tata Steel today, JSW Steel, looking at the numbers, certainly a downtick on the operational front, but we were anticipating that this would take place. And if anything, it's come in ahead of a lot of estimates. So the stock is under pressure today, no doubt. Let's pull it up actually. I want to see where the intraday chart is. I might have missed it when you pull it up right now, but JSW Steel was under a tad bit of pressure. It's down about 2%. Let's pull up also Tata Steel, just heading into the day that it posts its numbers, down about 1.3, and the entire metal pack also down about 1% last I checked. I guess that is continuing to be the case. But Avinash, what did you make of JSW Steel? Would you be a buyer at any juncture? And is this an opportune moment to start nibbling into some of these stocks?
Yeah, I think Alex, if you look at the JSW Steel numbers were slightly better than what the street expected. And I think despite the fact that the fourth quarter is unlikely to be very strong, I think we seem to be at the bottom end of the cycle. And hopefully, if global metal prices improve, the government also announces some, measures in the budget and going forward. I think clearly, these levels are possibly levels where further downside looks pretty limited. I think, the benefit of investing in such companies at the bottom end of the cycle is that the downside is limited. And, normally decisions don't go wrong when you actually buy at the lower end of the bottom end of the cycle. So I think clearly JSW, Tata Steel, which releases numbers today, could possibly be a good attractive bet if somebody takes a 6 to 12 month kind of view, because once global metal prices start moving up, China starts buying, and obviously India, you're going to see a lot of infrastructure buying, infrastructure announcements. So that actually is going to drive a lot of steel demand. So I think we are positive on the sector, but yes, I think you need to give a slightly medium to long term kind of time frame when you look at these companies, at these levels.
We've been talking about volatility being elevated in the recent past, but it's important to mark the increase in the VIX today as well. Kush, comments? We're talking about a 6% uptick so far in the VIX.
Oh, absolutely. Good spot, Alex. And I think we spoke of this on Friday as well, where, the VIX is stretching and going higher. But from here on, let me also give a caveat to this. From here on, the VIX will not react only to market moves. It will also start reacting to events. So typically, just before the event, you see VIX spike up. All the spike that you see in the VIX will not entirely be attributed to the market dip. Although right now that seems to be the case. But heading into the event, the rise will also be attributed to the event coming up. Hence, there's a possibility that in the coming sessions we might see the markets actually reviving and VIX also going higher. But that will not be a bit of a worry for me. That will perhaps be a heartening sign. And we did speak of a bit of a recovery in the market. We are starting to see some signs of that, although it's a little too early for me. Above 23,000, on the Nifty, I think perhaps an intraday long, can be considered. But perhaps we'll flag a call, on that on the channel. But yes, we're seeing signs of that on Nifty and Bank Nifty both. So that's happening.
Okay, Kush, before we thank you, one top call that you would like to give us apart from Britannia?
No, I'll continue with that, and the reason is that there are a lot of other names which are witnessing short covering, but I'm just waiting for the markets to hold their ground and then move up. So even if this has a broken record, continue with what is doing well, continue where the strength is, and for now continue with Britannia.
Any one opportunity that you are spotting, Avinash, this morning?
No, I think within the cement pack, we continue to like, smaller cement companies. I think Heidelberg Cement, Tamanna, looks pretty interesting. They've gone in for a expansion. Plus, I think my sense is that at these levels, the risk reward could be quite solid, provided, the Jan to March quarter is pretty good, because cement prices have gone up by 30, 40 rupees a bag. And I think clearly with the expansion, volumes also will be available. And plus, if housing and real estate are given a booster shot in the budget, then I think, within the cement space, this looks an interesting bet. It's consolidated around 200, 215 levels for a long time. So we have been advising, to buy this stock, for a slightly longer time frame. This could be an interesting opportunity for a slightly good investment time frame.
Okay. Heidelberg Cement is what Avinash likes. Thank you so much, Avinash and Kush, for speaking with us today. Yeah, it's a rough start to the morning, but then those opportunities need to be looked at. I'm just looking at Credit Access Grameen getting butchered this morning. And yes, FII flows may have something to do with it. There's some impact there. Very, very negative on the kind of guidance cut which has come in. Brokerages have also come in 15% down on a Credit Access Grameen. CDSL on the back of its numbers in a world of pain as well. But let's look at Granules India, and we're talking to the management on the numbers that have come in. It's been in focus on the back of Q3 numbers. Granules today about 2% down. They missed the profit estimates and reported a 6% fall as well. Before we speak to the executive director of the company, Priyanka Chigurupati, my colleague Varsha is giving us the highlights and setting up that conversation.
Thank you, Tamanna. If you see the numbers, there's been decline in sales, which was due to voluntary pause at Gagilarpur facility. Now, this was due to US FDA giving a OAI, that is official action indication classification to the company, which is the strictest classification that an US FDA can give to a pharma company. Now, please do know that why this is important, because Gagilarpur contributes almost 60 to 65% to the overall revenue for the company. And if I were to talk about the business segments, the growth in finished, there was a growth in finished dosage which was offset by decline in API and intermediates due to lower demand, and EBITDA margin was dipped due to higher employee and other expenses. If I were to talk about that API segment, there was a lower share due to price erosion and lower demand due to high customer inventory, and reduced offtake impacted the overall growth for third quarter FY25. Lastly, if I were to talk about the highlights from the management, they are expecting the production of Gagilarpur in a staggered manner, and near-term growth will be driven by the new launches from GPI.
All right, thank you for that, Varsha, and for all of those details on Granules. I think the focus for the company this entire quarter has been this Gagilarpur facility and the US FDA action and inspection there. And let me begin by asking our next guest about it. Thank you so much for speaking with us, Priyanka. Priyanka Chigurupati is Executive Director at Granules India, and we thank you for your time. Let's start with your recap of the quarter. Revenues down 1.6%. Slightly better than the Bloomberg estimates, though. EBITDA was down 8.1%. Margins also have slid. What has been the key reasons, and does it come down to what we saw at the Gagilarpur facility?
Good morning. Nice to be here. So I think the drop in revenue, if you just look at Q1 and even the quarters before, it's been very marginal. It hasn't been significant. But yes, we did take a voluntary pause in September, October, and even after that, November and December. The focus has been to make sure that the FDA commitments have been met. So yes, there has been a drop in sales. But in terms of EBITDA, if you look at, say, Q1, which is more of a quarter that we should compare with relative to Q2, the EBITDA was down, was flat and not really down. If you just remove the one-time exceptional activities, which includes air freight, some penalties that we had because of lack of supply for a short period, and also because of the consultancy fees that we had to pay. But apart from that, I'd say it's been pretty flat.
Okay, I'll just one follow-up, Agam, before you come in, please. So 4 to 5 product launches, which were now expected in the second half, does that get delayed because of what we saw at Gagilarpur? Does that get shifted to another facility?
In the second half of FY25, you mean?
Yes.
Yes, they will be delayed. But that said, that's only not 4 to 5 products. We still have about 4 to 5 launches from GPI, the US facility, that are still going to happen in Q4. In fact, we've already received approval for about 4 out of the 5, and the 5th one we're expecting very, very shortly. So the GPI products will be launched and will be scaled up as planned, but GIL products, there will be a delay.
Priyanka, again, when it comes to the OAI classification for the Gagilarpur facility, how confident are you that it will not eventually lead to an import alert? What are the remediations that you guys are already taking place at the moment?
So the focus has been completely on this OAI, even prior to receiving the OAI, so the 483 observations that we've received. So ever since, I'm sure even CMD mentioned it in the last call, that we've hired external consultants outside of doing our own internal remediation plans, external consultants for each of the observations. And as we speak, there is not only a retrospective review, but also a prospective review happening on site, where we will have consultants on site helping us remediate a lot of the 483s. But I would say that about 86 to 90% of the CAPAs that we had implemented have been closed, with the last one closing in Q1. So we are fairly confident that this OAI will lead to more of a positive outlook for us going forward. And we're also in the talks with the FDA to request an in-person meeting with them to make sure that a re-inspection is expedited at this point.
Can I just a follow up on the point about the 4 or 5 launches which now get delayed? You mentioned, Priyanka, that they get delayed. Is there a sense of the timeline? And is there a plan B? Are there other launches in the pipeline to cover this up?
Well, I would say that, like I mentioned, the 4 to 5 launches that we have happening from GPI are the big ones. Yeah. We have a few launches that we scheduled for Europe and the rest of the regions, albeit a little bit smaller than the US. But these 4 to 5 launches that are happening from the GGP facility, or were supposed to happen from the GGP facility, those were for the rest of the, let's say, calendar year, not necessarily the fiscal year, right? So they will be maybe moved 2 quarters. That's the estimate right now. And even the GIL products, typically when we launch the products, it takes us about 5 quarters to scale up. So yes, there will of course be a loss of revenue until we get approvals for these couple of products, but it won't be as significant as it would have been otherwise. So we do have the GPI launches and also the rest of the world launches that will make up for it. And right now, to be very honest, we are still working on capacities. So we're expecting a lot of these launches to happen from GGP, but we're also moving them to our GLS side and even some to our GPI side. So hopefully, if something happens to Gagillapur facility, which we don't think would happen, we can continue to launch them from the other side as well.
Well, you said there would be some loss in revenue, which won't be too much. Yes. What have you penciled in for Q4 and for the financial year?
No, Q4, it's not significant at all because we would just have received approval for those products. Okay. And actually, at Q4, the only loss of revenue would be from one product. That's it, nothing more than that. But Q1, Q2 onwards, we're expecting the other approvals, which might be delayed a little bit.
Can you tell us about the current pricing environment in your API business? Are you looking at recovery in prices at the moment?
The prices, I'll just say for our biggest products, they have kind of found a new bottom right now, which is higher than the earlier bottom. So we expect this to go up going further. So as it keeps going further, we'll probably do some API sales I'm talking primarily about the 2 biggest products. The other sales keep happening. But, if you see the increase in our the API, PFI and finished dosages, a lot of our APIs, we use them for captive consumption. So you'll see the finished dosages going up, and a lot of the APIs come from our internal sites as well. So, API, I wouldn't look at it necessarily as its own unit. I would look at it in combination of PFIs and finished dosages.
Okay. And taking all your launches into consideration over, the quarter gone by, the upcoming quarter, what can we expect in terms of your top line growth in FY26?
I don't want to comment on the top line growth, but there certainly will be a growth. But I think the focus is more on bottom line than it is on top line.
Can we at least expect your revenue growth to be better than what we've seen in FY25?
Yes. Yes.
Okay. Also moving on, when we consider granules participating in the GLP-1 market, given its growing significance in the pharmaceutical landscape, can you tell us a little bit more about your moves and your plans here?
I think we should wait for a little bit to potentially announce that. Nothing has been finalized, but we're looking at a few options. but the current growth trajectory that we have has been kind of entrenched into our existing products and oncology, and then the later areas of focus. As we keep going forward, we'll certainly announce it.
Okay, and I believe that about 3/4 of your revenues comes from finished dosages. What's the outlook for this particular segment here on?
Well, if you've seen our last couple of quarters, we've been significantly growing in the finished dosage category, but we also want to grow in other regions, which is a focus. Of course, US will always be a primary area of focus for us, but Europe, which is primarily finished dosage driven, Latin America, which is PFI and finished dosage driven, but primarily PFIs for the immediate future, and then Southeast Asia and MENA, which is again PFI to API driven. So you'll see an increase in absolute numbers from all the regions, but in terms of percentages, you'll see a difference marginally. We'll be focusing a lot more on rest of the regions as well. So PFIs will grow in absolute numbers, and as we keep launching products in Europe, the finished dosages will grow as well. But again, finished dosage will always be the number one growth driver of the company. But if you look at absolute numbers, you'll see a significant growth in PFIs as well.
Okay, Priyanka, we'll leave it at that. Thank you so much for speaking to us here on NDTV Profit. Wish you the best for the future.
Thank you.
But we move on to JSW Steel, which remains in focus after the company's also announced its earnings coming through, where you've seen a drop in about as much as 22% in its EBITDA, and profits stayed largely in line. We spoke to the management of the company, the joint MD and CEO, Jayant Acharya, on the quarter gone by. This is what he had to say. Listen in.
So this quarter has shown very strong operational performance. Our volume, production and sales both have been very strong. On the volume side, we crossed 7 million tons, and that has been a very strong growth, primarily pushed by our new furnace in JVML, which has come on stream. Sales have been very good, aided by specifically India operations. At 6.71 million tons, it grew by about 12% YOY. And domestic sales grew by 14%, again, the ever highest domestic sales. Although the prices did drop because of the China, I would say, dumping and cheaper imports coming in from basically different parts of the world, but we still could offset the lower realizations with a lower cost. And we were able to blend better product mix into our overall volume. So therefore, our value-added and special product sales went up, and that also created some positive realization push. And our efficiencies overall improved. So this basically played into the quarter EBITDA. On a quarterly basis, I think it's important to look at the recency factor. YOY is one part, but I think on a quarterly basis, our EBITDA on a consolidated basis went up by close to 3%, and on a quarter-on-quarter basis, it went up by 78%.
Well, so definitely, lower realizations offset by lower costs, as well as your outlook and what you achieved in this particular quarter with value-added products. So that point taken. The other part, I just wanted to, you referred to the China anti-dumping, any kind of duty that could have come in. Now, there has been a lot of dumping. In your presentation as well as press release, you mentioned that it's declined 10% quarter-on-quarter. But for the 9 months, the cheaper imports have increased 16% on a year-on-year basis. So just wanted your outlook on what's the current situation like, if because there has been, it's a key industry concern. Trade investigations have also, been speculating in terms of what kind of rate should be put on these cheaper imports. Any kind of conversations that you've had, and what is the current situation like?
I think what is important to understand is that there is a surplus steel available in China today, and that steel travels to the world, and we have seen a very high growth in calendar year 24 on exports, which is close to 120 million tons. Steel goes into, a major part goes into Asia, into various countries which have free trade agreement with India, and steel ultimately comes from China directly, and as well as from ASEAN, Japan, Korea into India at zero duty on top of that. So the rest of the world is putting tariffs, protection measures very fast, very quick. And I think the way the world is changing, it's going to increase in pace. India is vulnerable because we do not have any protection measures in place. I think it is important to have a level playing field. We are in touch with the trade investigation authorities. They have initiated measures on safeguard and anti-dumping, and the process is ongoing. We are hopeful that some results should be announced maybe in the first half of February.
Well, first half, definitely. And would a safeguard duty of roughly about 20 to 25% be something that's a minimum? Because that's the number that's been going around. And while there is a lot of speculation, Raif, do you see, as your opinion, as that should be one of the minimum duties to come in?
Well, I would say that the way the rest of the world has used the duties, and we have reference of that in America, we have it in Europe, we have it in some other countries as well. They have all implemented 25%, and I think that's something which we should look at.
Now, I just want to understand about production as well as capacity utilization. You did have one of the blast furnaces down in between October and November. Any kind of update on production? You did mention that it's one of the highest quarters in terms of production capacity as well as going forward the outlook. Any update going into Q4 for the same?
Yeah, so we had a temporary maintenance at one of our blast furnaces in Dolvi, which has now resumed operations in November itself. But we did have an impact of that in our quarterly volume this quarter, in spite of which we did 7 million tons plus. Going into the next quarter, you will see a stable operations from existing facilities and the new facilities in JVML, which is the new 5 million ton furnace, that will ramp up quickly. Operations in Stream 1, that's Converter 1 and Caster 1s have already started. Commissioned, the second caster has just started. And the additional ramp up at BPSL, which has taken place in quarter 3 and will also continue to support in quarter 4. So this will give us better volumes, is in a seasonally good demand quarter, which we usually see in quarter 4.
You also mentioned in your press release that a recovery in kind of government capex is expected in this particular quarter 4 between January and March, and you're expecting approximately 10% growth for this fiscal year. Do you see that happening already in the first roughly about 24 days of January? Do you see the because the capex projects have been something that's been watched out, and we are seeing new rollouts in road contracts as well in the end of December as well as November. Are you expecting that? Have you already started seeing that on the ground?
Yeah, so I can let me put it this way, that even if I see in the last quarter gone by, which is quarter 3, flat products were under pressure because of huge amount of imports coming in, especially in flats, whereas long steel actually held up well, and there the prices are actually improved during the course of the quarter. And that is primarily because of the projects which have now started coming on ground. And I think this activity or this pace will pick up as we go into quarter 4. So even the other thing to consider is that even in a, let's say, weaker month of November and December, even in the month of December, the overall demand in India was about 13 million tons. So even if you go by this rate, even by this lower rate, you will end up the year with almost 150 million tons of demand in India, which incrementally is 14 million ton plus. And that's what we had guided. By and large, that I think we would see growth in the range of 9 to 10%. And I think we are on the higher end of that. So we should be about 10% growth in India for this year.
Well, so that does answer the demand question. So you mentioned new capacities coming on stream, lower cost has been something that we're able to achieve this quarter and will extend to next quarter, of course. Better pricing dynamics compared to this quarter for Q4. So any kind of quantification that you can give us? What kind of margin improvement should we expect in quarter 4?
No, I think margin quantification is difficult to quote, but I think what I would like to say is that seasonally good demand, higher volumes from JSW because of our capacity ramp up, which we discussed. Cost will go down, and raw material cost we are expecting iron ore specifically to correct because there has been a correction in the international market as well. So I think we will see some corrections in the domestic as well. That should play into the cost. Coking coal costs have gone down in quarter 3, and we see a further drop in quarter 4. And we see lower import volumes because of, I would say, anticipated trade measures, which people expect. So that would play and support the margins. So volume growth and will support the absolute EBITDA, and lower imports, I think, and cost will also support margins.
Okay, there you have it. That's the management of GSW Steel telling us about how the quarters were panned out. But we have yet another bank which is in focus, and that's IDFC First Bank as well. And this is on the back of its Q3 numbers. Now, the stock's fallen, well, nearly 6% at the moment, even though it's recovered just a tad bit from its day's lows, as margins and return on asset miss expectations. And, we've had plenty of earnings coming through from a lot of these banks at the size of IDFC First. And it does seem like, at least in terms of the quarter which has gone by, in general, overall, it's mostly with respect to what we've seen so far. But we spoke to the MD and CEO of V. Vaidyanathan on the quarter gone by. This is what he had to say. Listen in.
What has changed is basically the MFI business, which is about 5-point-something% of the bank of the total book, continues to have issues in the industry, as you might have seen, and for us also. So we have taken increased provisions on the microfinance book. And the good news is that the deposits of the bank is coming very strong, because deposits is after the raw material to do business, and that's coming very strong. The other good news is that except MFI, the rest of the book, which is the entire retail, the agri and MSME, what they call the RAM portfolio, that is doing fantastically well. We put out the numbers publicly about our SMA, gross NPA, net NPA, everything. So that portion is looking very good.
Mr. Vaidyanathan, I want to spend maybe a couple of questions on microfinance, and then we'll move on to the rest of the book. But, the guidance that you seem to be giving is that Q4 things are likely to peak on the credit cost from the microfinance front. What's giving you that confidence? How soon do you think that turnaround will happen then, after the peak is hit?
We believe that this year, the quarter that's going through right now, because we analyze flows, there is a certain portfolio, there is a certain collection percentage, and when you multiply that collection percentage with that flow, then you can get a sense of what will be the expected provisions for microfinance in this quarter. We believe it will be higher than what we provided in Q3 also, so it will be higher. But our assessment shows that after Q3, that is after Q4, then Q1 should be less than Q1 of 26 should be less than Q4 of 25.
Yeah,
that's our assessment. This is this has certain assumptions built into it, so we've got to watch it very carefully, and we'll report the numbers as they are to the street.
All right. Lastly, on the microfinance front, the broader industry, as you mentioned, is facing some amount of stress, and that's also visible on your portfolio. Now, you've reduced that portfolio to about 11,000 odd crore. What is the appropriate ratio, according to you, for microfinance in the overall book, so that your margins don't get affected any further, but you're also protected from the excessive stresses in this?
Yeah, there's nothing called appropriate ratio. When we started it, maybe it was 7% about a couple of years ago. Because at that time, we should not forget, we are a domestic financial institution which is recently converted to a bank. Unlike many other banks who've been around for maybe 20, 30 years, 40 years, 100 years, they've always built some sort of a priority sector portfolio or weaker section priority sector portfolio in their book. We start overnight like a 1 lakh crore DFI converting to a bank. So what happens is that this was the way for us to meet the priority sector loan, particularly weaker section priority sector loans. So there's no right or good number, but it was 7%. We will, and as we speak, it's come down to something like about 5% odd. By end of next year, we expect this book to be about 3.5%.
Yeah.
So, and I think at that stage will be quite stable, because by that time, remember, the new norms of the industry also would have come in, and portfolio will be hopefully safer.
Okay. Coming to the broader business now, if you were to look at the way the various segments have grown, now what we are noticing when I look at it, gold loan book about 145%. You've taken your vehicle finance book about 18.5% on in growth terms. Credit card portfolio as well, the loans are seeing an uptick. What is the sector that you want to continue growing in the current environment, and what is probably not looking so exciting right now?
See, what is not looking so exciting is microfinance business. As you can see, we have put out, that's pretty obvious. But apart from that, we have put out for our bank product by product. We don't mask it in overall numbers of retail. Retail, of course, is doing very well. Asset quality is, I'll read out the numbers to you.
Yeah.
Our gross NPA in retail is 1.63%. Our net NPA is 0.59%. And our SMA is only 0.82%.
Yes.
So you can see that this is a really tightly controlled book. Credit cost is also behaving well. So overall, it is doing well. But to your more specific question, our key business lines which we are growing, home loans is growing well. You've seen grown by about 25%. Loan against property is growing well. That's growing about 18%. Business banking group, like working capital financing to small entrepreneurs by taking property as collateral, that is one of our big growth areas. Gold loan is a growth area. Gold loan is, of course, optically looking like 100% plus, but that's because it's coming from a low base. We started the business just 2 years ago. So these are the, commercial vehicle financing is also a priority sector requirement. That's also will grow. We'll also grow our Kisan credit card portfolio because we need the priority sector, and that's also property backed. So we like all these businesses. We are building the bank in a very strategic way, whereby all these businesses are growing, and they're growing well, as you can see.
Right. I want to touch on deposit growth as well. That part of the story is looking fairly strong, on the customer deposit front as well as specifically smaller retail. I just wanted to get a sense from you what the upcoming quarters are going to look like, because the expectation is that come February, there might be a rate cut announcement, and that might then affect margins for most banks.
Well, these are givens, and we should take it as it comes, and we should run our business accordingly. But as far as deposit growth is concerned, frankly, you've seen last 5 years at a stretch, we've been growing deposits very, very well. Our incremental credit deposit ratio is only 75% for a long time now. Deposit is coming strong. We don't worry. We're not troubled by it. Our service levels is a key strategy, and digital technologies where we give customers great experiences is our key strategy. As far as growth for the future is concerned, our own expectation is that that our requirement for deposits itself will come down next year a little, because a lot of the legacy money has been repaid. So therefore we'll have less burden on us in terms of raising deposits.
Right.
And really, that's probably good news for the bank. You can expect about 25% next year.
Okay, because there is a component of OPEX to margin, so I just wanted to get a sense from you. Your expectation is that OPEX will start trending downward. How much can we expect that downward revision to be? Are you also seeing some amount of turnaround on the loan loss provisions as the things around microfinance start improving?
So let's take them separately. Let's take OPEX now.
Sure.
So the OPEX numbers for the bank has been coming down. In fact, we are, the key thing to sort, because we've been heavily in investment mode in the bank for the last 5 years. And frankly, investment just had to be done. There was no way of building a good bank without having all the key business lines, without having branches, ATMs, people, deposit taking capability. All like par for the course. Just had to be done. Now, the good thing is that all good part of investment has been done. Now, it's time for us to start reaping it now. Right. So we feel that our incremental OPEX growth will slow down. I'll read a number out for you that our deposit growth in Q1 of this year was 21%. Q2 was 18%. Q2 YOY. Q3 YOY, the year quarter just went by, was 16% YOY. So therefore, that's good news. Our OPEX growth is slowing down, and we intend to slow it down further next year. Next year, we expect OPEX growth only about maybe 13%. So that's really, really coming down.
Right. Last one question, sir, and a short answer, if I may request that. Credit cost peak. What is the number? When do you expect to hit? And then from there, how does the trajectory look like for you?
If you take everything put together, including microfinance and everything put together, just so that we can keep it simple, we think that this quarter that's currently going on, that should probably be the peak, and then things should come down from there. And excluding microfinance, it's already quite comfortable. You could see the number 1.8%.
Yeah,
which is quite good as compared to the industry, considering the net interest margin is 6%.
Okay, well, it's time to put the budget in the spotlight. And the first sector where we're taking up is the railways budget. As the D-Day for the union budget is around the corner, NDTV Profit brings you the coverage on what specific sectors expect from the budget. Now we have Anushi, who joins us to tell us what the railways can expect from the upcoming union budget. Anushi, over to you.
Here are the key expectations from railway sector in Union Budget 2025. Indian Railways remains a key infrastructure player due to its massive role in economic progress as well as improvement in a citizen's daily life. Higher emphasis on modernization and expansion has remained at the forefront of the sector. Thus, expectations on what the upcoming budget brings in terms of this sector is something we should keep focusing on. Here at NDTV Profit, we will highlight some of the key expectations that can be beneficial for us from now on. The number one expectation is higher capex allocation as compared to last year is a key monitorable for the upcoming budget. If we go back to last year and check the key announcements in the railway sector, the sector hardly found a mention in the budget speech 24. This is starkly different to the picture before 2017 when the railway budget used to be presented separately few days ahead of the union budget. In FY25, total capex for railways in budget estimate 24-25 stood at Rs 2.65 lakh crore, while gross budgetary support stood at Rs 2.52 lakh crore, representing a 5.8% growth versus 24. However, the gross budgetary support reported a 51% and 36% growth in FY24 and FY23 budgets respectively. So far in this fiscal, the government has spent 76% of its budgetary outlay at Rs 1.92 lakh crore by December 24. This includes spending Rs 40,367 crore, which is 79% of the budget allocated for rolling stock. In safety-related works, out of budgetary allocation of Rs 34,412 crore, the amount spent is Rs 28,281 crore, which is 82% of the allocated amount. Media reports indicate a 18% increase in allocation for railways in budget allocation this year. So higher growth coming back versus last year should be definitely on cards this time, with focus now also tilting towards any announcements around long gestation, large value projects such as additional dedicated freight corridors. Second is
all right. So Anushi there with all the details of what is expected from the railway pack, and you know, this is one sector which comes into focus ahead of the budget on the basis of hopes of capex increase. In fact, we're speaking right now with Indrajit Mukherjee, Vice Chairman of Texmaco Rail and Engineering. We'll also be joined shortly by Pratish Chaudhary, Deputy Managing Director of Titagarh Rail Systems. Well, there he is. Welcome to both of you, and thank you so much for speaking with us today on the show. I'm going to start with you, Mr. Mukherjee, and just let's set up the conversation very simply on how crucial that capex figure becomes this budget.
Oh, that's very important because after all, at the end of the day, the capital expenditure, that is what is expected in the rail segment. And as your anchor had said earlier, I tend to agree with her that there should be more growth coming up, at least in the range of 15 to 18% from last year's capex allocation. So answering your question, it's a very vital factor that will decide how the infrastructure development will move in the rail segment.
And let me get a take on that as well from Mr. Chaudhary before we get into the details. Mr. Chaudhary, in terms of outlays compared to what was announced in large budget in capex for rail, there is still some legroom to go. Having said that, how crucial does it become that there is a huge bump up in capex, and do you expect that to actually come in, looking at how robust allocations have been in the last two budgets?
It'll be a huge bump up or not, only time can tell, but we definitely do expect there to be a hike, as Mr. Mukherjee also agreed, as your anchor earlier also mentioned, that we do expect there to be a hike in the capex, total railway capex budget that is announced. And I say this off the basis of the National Rail Plan, which is very clear, which is until 2030, which very clearly highlights the enhancement of infrastructure, enhancement of rolling stock, for both freight and for passengers. So the vision and the plans are very, very clear. And on the basis of those plans, we do expect there to be a little bit of an increase in the railway capex budget.
Mr. Mukherjee, we've spoken a tad bit about the focus on infra a little bit more as compared to railway stock. What do you think that could come through in terms of the upcoming budget? What should be in focus as per you, according to you? What areas of railway infrastructure need a little bit more focus at this point in time?
Let's talk a little globally right now. I think this year budget will have more focus on, I personally feel we have more focus on passenger mobility, because the railways are committed to improve the traveling experiences of the people. So there has been, media has been talking of about 400 new Vande Bharat trains coming in. There would have to be, if that comes in, it just cannot come alone. So it has to come with higher track laying, and I think the target is somewhere about 70,000 kilometers of new track. The moment you load the track with many trains, you have to look at the safety, because I don't think we have a great safety record so far. So there's going to be expenditure on safety related systems like Kavach, the signaling system, the axle counters, etc., the MSDAC. So I think there's going to be a lots of focus onto the passenger mobility. At the same time, I don't think they are going to sort of roll back the plan they have on the national rail plan, which is already, I think we are almost halfway through, where they have been talking of the freight car transportation and the percentage increase of the market share increase on the railway freight car compared to the road freight car. I don't think they're going to stop it, but I don't know whether it is going to move at the same way, because at the end of the day, capital is going to play a very important role. So I think there's going to be a lot for the railway industry. May not be all on the rolling stock the way it was moving, but it's not going to go down. It's going to remain at the level at which we are, if not more. But there are going to be lots of focus on the passenger mobility.
Right. Pratish, one of the key objectives of the National Railway Plan, if 2030, is to increase the modal share of freight as far as railway is concerned. And I do know that you also are into, making wagons. What do you think the government objective could be for the upcoming year with respect to this specific objective?
You want me to answer?
Yes, Pratish, this is for you.
Okay. If it's for me, then I would say that there would be more focus on more efficient wagons. The wagons which can carry higher load, which ultimately will reduce the carbon emissions per ton of load carried. So there would be focus, but there would be expectations that we will also start inching up on our technology and doing the better types of wagons. I don't think that there is going to be any drastic drop. I didn't want to say that there's going to be a drastic drop in the wagon requirements, but I was trying to say that there would be a renewed focus also on the passenger mobility.
Right. Pratish, I want your view on this one as well, if you could come in on this.
Sure. So it's a very good question. I think there was a mega order that was placed by the railways back in 2022, if you recall. And there have, of course, been interim tenders rather, that have been floated, that have been filled out and awarded in the middle. But the end of this calendar year would start seeing the end of that 2022 orders delivery periods for all the vendors of the railways. So I would tend to agree with Mr. Mukherjee on this. We expect there to be a much larger focus on safety related and passenger related items. But we also do expect that the freight tenders or the freight wagon procurement, rolling stock procurement would ramp up a little bit compared to the last fiscal. However, what's to happen, only time can tell.
And Mr. Mukherjee, is it safe to assume that if we do see a considerably higher allocation to the railways budget this time around, it will have a direct impact on your company's order and revenues as well for the upcoming financial year?
We are quite bullish that yes, it's going to have positive impact on us.
I wanted to get a view today on from Mr. Chaudhary on the driverless train set which you launched in Bengaluru earlier. And I thought that was very interesting. It's the first made in India train set for Bangalore's yellow line, the metro yellow line. Can you give us some idea of that project, the kind of revenues you expect from it? What are the other orders that are coming in?
Sure. So that project is actually a very interesting project that is a tripartite collaboration between us, CRRC, and Bangalore Metro, which is the customer. So this was initially awarded to CRRC, and Titagarh is acting as a contract manufacturer or a local manufacturer for these trains. It's a total order is for roughly 204 coaches, which will be delivered at a rate of, let's say, 12 coaches per month, starting very shortly. What you saw was the prototype, which is currently in transit to Bangalore. As far as the revenues are concerned, the revenue will not be very high because our share of the revenue is only of the labor. The materials are all free supply from CRRC. However, this project actually marks a very interesting beginning for us because now our stainless steel line for making metro coaches is fully up and running and is fully established. So the other projects that we have, for example, Ahmedabad Metro and Surat Metro, we'll be rolling out the prototypes within this financial year. I mean, financial year 24-25, not 23-24, not 25-26, my apologies. We also expect there to be a very robust pipeline for the metro tenders. Bombay has a few tenders which were out. Chennai had a couple of tenders which were out. Many more cities are coming out with metro tenders like Patna, like Bhubaneswar. So we are very bullish on the metro market as a whole and on our ability to really be a major player in that market.
So what is the share of the metro market that you see going in to FY26? And this question again from Mr. Chaudhary.
Sure. So there are currently only 3 players in the metro market in India, which is Alstom, BEML, and Titagarh.
Yeah.
So, and the metro market is large enough for everybody's hunger, such to say, to be satiated. So we expect not maybe in this financial year, but in the coming financial years to be the market leader in the metro segment as well.
All right. Thank you so much, Pritesh, for speaking with us today. Thank you so much, Mr. Mukherjee, for joining in on the conversation as we get you a sense of what is expected from the railway sector for the upcoming union budget. We'll take a very short break at this point, but just as we get into that break, markets are looking like they are in a rocky place. Breadth has declined considerably. In fact, let's pull up the advanced decline ratio if we can and give you a sense of how markets are doing. I mean, Nifty very clearly under the 23,000 mark. Not too much of a recovery there at all. Weakness being seen intraday as well. But the advanced decline ratio, if we can pull up, will give us a better idea. Banks, maybe some recovery in the bank Nifty actually. Look at that vast gap. This is a bearish mood in the market right now. Some recovery in banks, not so much in IT. The IT index also looking very weak. But I think the biggest pain is on the broader end of the markets, mid caps, small caps, that entire set of stocks seeing some pain. We'll take a very short break, but on the other side, we are speaking with the management of Shriram Finance. Stay tuned for that.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
It's nearly time for Budget 2024.
Welcome back. We put the spotlight on Shriram Finance now, where we spoke to the management. My colleague Harsh, in fact, spoke to the Executive Vice Chairman Umesh Revankar about the outlook. Here's what he had to say. Listen in.
That is the idea behind it. We wanted excess liquidity because the liquidity situation was looking tight, but things have become much better now. So we are carrying a little higher liquidity. And this quarter being largest quarter, every year you see fourth quarter is largest quarter. The demand would be good and we'll be able to consume that liquidity built up. So we should be able to do it in 2 quarters.
Understood. And what about the 6 basis point shrink on the back of you lending more towards newer vehicles? So the skew with regard to product, is that continuing? Is that trend going to continue in Q4 as well and maybe Q1 FY26 as well? Is that something like a trend which is going to play out over quite a few quarters?
See, this product mix change, we can't be predicting too accurately because there may be higher new vehicle demand in the Q4. In that case, it may get a little postponed. So something which we have to keep around 10% margin left to the market situation, which we cannot predict in advance.
Understood. So I want to talk to you about asset quality because that's held up fairly well. What are the trends you are seeing? Because when we spoke to a couple or when we heard the commentary of a couple of your competitors, it seemed like vehicles will face pressure. But for you, you're not seeing that at all on ground.
No, as far as commercial vehicles are concerned, we don't see any pressure. The what you call the revenue generated on the vehicle is good. Turnaround time is very good, and there is sufficient revenue. So I don't really see. We have not really witnessed any weakness there, and resale also values seems to be strong. So I don't really see any major threat, at least for a time being.
Understood. So sir, with regard to the overall landscape, is there some area or region where you are seeing some bit of pressure from an industry-wide perspective, which you are not seeing on your book, which you have avoided? So what's helping you stand out is what I'm trying to understand, and what's the industry seeing? Because would be unfair to say that a couple of your players are seeing it and the wider industry is not, and therefore trying to understand where do you stand out.
See, basically, asset-backed lending looks to be comfortable and safe. So most of our business is asset-backed, which asset creation or asset-backed. So that's doing well. What has been a little challenging is the unsecured loan, where the loan would have gone to purely consumption or maybe some other activity, not for productive purpose. That is where probably there could be some weakness, where we don't have presence.
Okay. So OPEX this time was elevated. Employee costs, new recruitment. What's the strategy here, and for how long is the unwind on this OPEX going to happen? So is it going to remain flat for 2 quarters, 3 quarters, especially on the staffing costs, because that contributed to a bulk of that increase?
Yeah, see, we will be moderating the staffing now, and we wanted to build certain bench because expecting a quick growth. So the growth is expected in the fourth quarter and then onwards. So the OPEX cost should remain at present level. I don't really see anything further increase here.
Okay. So, sir, sorry, you said for the fourth quarter, you suggested something in terms of guidance.
Yeah, we expect a higher growth in the fourth quarter. Normally, fourth quarter looks busier.
Overall growth will be higher for you. So you've done 4+% on a sequential basis in Q3. You're expecting more than that in Q4.
Yeah, every year it is normally higher, and year on year also, being last year base also is larger. We do expect a bigger business.
Fair. And sir, will gold contribute to that materially because you're going to reboot gold in Q4 is what your commentary suggested. How much will gold contribute in terms of both value on the AUM as well as how will that also have a knock-on effect on margins, if at all?
See, gold is a very small portfolio in our book. It's around 2.5% of the book. So it will not really make big difference in the volume per se now. Even if there is a little higher growth in the gold, it will not make a big difference in 2.5 lakh crore AUM. So that's where I think but yes, margins in the gold is good. So it will, whatever improvement we get in the gold will help us in building more margins.
Yes. So you've also started to do PL in a larger fashion. Any asset quality issues that you're seeing on your personal loan book?
See, PL is nothing but our existing customer wanting some additional loan. So after doing analytics of our existing customer database, we do offer them an additional loan, called personal loan. So we normally don't go after the market customer. That means the customer is curated and the underwriting is done with the knowledge of customers, the requirement, and also his ability to earn and pay. So the growth in PL will be depending upon the overall growth in the our loan book. As more number of customers walk into our normal asset-backed lending, and that will become a PL subsequently. So as we keep growing, there is a scope for growing PL.
Fair point. And sir, should all of these levers, and I'm talking about strong CV growth, gold loans coming back, as well as good opportunities available in PL, given the fact that there are no asset quality issues for you, should all of this warrant a 20% growth even in FY26 on this higher base of FY25?
See, I don't, normally we don't give guidance on higher growth. Our long-term guidance or medium-term guidance remains at 15% only because we cannot predict a long-term. But we are quite confident that growth will sustain for a little longer time.
Fair point. So your ROAs have just dipped just below 3%. Back to 3% in Q4. Would that be the right expectation?
Yeah, that is what we are looking at. We are focusing on ROA of 3% plus.
And with that, we take a look at the markets, and it's at the moment at a very, very critical juncture. And I'm going to talk about the Nifty 50 first because for the last about 10, 11 sessions, the Nifty was taking support at the 23,000 mark. Today, it has moved below that mark. It's in fact testing 22,900. Two things I want to mention here. First, that if we in fact do see the Nifty close below 23,000 today, there could be a little bit more pain coming through. The second thing is the absolute number that we need to watch out for as far as the Nifty is concerned is the 22,800 mark. And the reason why is that a lot of your long-term puts will have been sold with about 150 to 200 point gap. And if we in fact do see the Nifty test 22,850, 22,800 odd, that's when we could see potentially even more selling coming through. So we are at a critical juncture, and these are some of the numbers that you need to bear in mind. But we'll move on and talk about the upcoming budget once again. And NDTV Profit this time brings you the wish list from various sectors. We'll put the spotlight on the fertilizer sector now, which is hoping for policies that will show the seeds of growth for this particular space. We have Varsha giving us more.
The fertilizer subsidy is a crucial component of India's budget, supporting farmers and ensuring agriculture productivity. For FY26, the subsidy is expected to align closely with the current year's spending trends. ICRA estimates a subsidy requirement of Rs 1,70,000 crore for FY26, matching the expected outgo for FY25. This includes the cost of extending the DAP subsidy until December 2025. The government initially allocated Rs 1,64,000 crore for FY25, but later topped it up by Rs 6,594 crore, taking the total to Rs 1,70,000 crore. Till November, the centre's fertilizer subsidy outgo stood at Rs 1,21,000 crore. In the past, geopolitical events like the Ukraine war drove subsidy costs to Rs 2,50,000 crore in FY23, while prices for raw materials and finished fertilizers have risen recently, particularly in the P&K segment. Urea costs have remained stable due to steady gas prices. This balance has helped moderate the subsidy bill in FY24 and FY25, offering some relief to policymakers. The fertilizer subsidy accounts for about 2/5 of central subsidies, projected at Rs 4,28,000 crore for FY25. It remains the second largest subsidy after food, with Rs 2 lakh crore allocated for food and 11,925 crore for cooking gas. To promote sustainable farming, the government is expected to announce a roadmap for balanced fertilizer use, reducing dependency on specific nutrients. However, any sustained increase in the input cost or geopolitical disruption could require adjustments during FY26. In conclusion, the fertilizer subsidy continues to be a significant expenditure, supporting both farmers and the nation's food security. While current trends show moderation, challenges like rising cost and import dependency highlight the need for strategic planning and fiscal discipline.
Okay, and with that, it's a wrap on this edition of India Markets Open. Up next is Ask Profit. Stay tuned in. We'll be back in just a bit.
I present the budget for a historic This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? it shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing, it didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it You're watching Ask Profit. Godrej Consumer is in focus on the back of Q3 earnings, and we are joined by Asif Mulberry, Global CFO and President, Africa, Middle East and International. Mr. Asif, my first question to you is, in your Q3 business update, you did say that you are expecting a subdued demand and that margins will be under pressure. How has the quarter gone by? What's worked and what's not worked?
Sure, great. No, so I think, thanks for asking that question. I think, firstly, what's working? I think at a strategic level, a lot is working. So the structural actions which we're taking, the new products which we've introduced, I see a lot of stuff working on that front. I think when it comes to what's not working, I think there have been a temporary tailwinds which have impacted specifically the quarter, which obviously is kind of reflected in the performance on the top line and on the margin shape in this quarter. So yeah, I think that's the way I would kind of put it at an overall level. And we can talk about a few of those.
Right. You'd already, said that margins will not be in the normative range. But, I want to know as to when do you expect the margins to come back to the normal range, considering the kind of raw material inflation that's taking place and the adverse products mix as well?
So, we did speak about normative range getting breached in this quarter. We typically would want to operate the India business at a normative range between 24 to 27%. We kind of dropped at around 22.5% because of the large cost inflation which we kind of saw. I think it will take a few months for it to kind of come back. But I think as we get into H1 FY26, we should start getting back into the normative margin range from an India perspective. If you look at it in an overall GCPL perspective, our margins have been within normative range because typically at a console level, we have operated between 18 to 22%. This quarter, our margins were upwards of 20%. So we were in the center of those, normative global margins. And hence, there has been an improvement in overseas, which has kind of offsetted the mild decline which we have in India. You just need to keep it in mind that a year back, our margins were on the higher side of that band, and hence from a year-on-year perspective, profit growths have been impacted.
Understood. With respect to the palm oil prices, they've been on the rise since the past few quarters, and we're aware of the kind of trend that the raw material price inflation has seen in terms of palm oil. I just want to understand that, is there a strategy in place in terms of hedging palm oil to keep the margins in check?
So I think overall, if you see in the last couple of weeks, there has been a correction actually in terms of base palm oil. Right. Prices have kind of gone down by close to 10-12% from the peaks which it saw. So there is actually an improvement in terms of that. But the complex of palm oil or the byproducts derivatives which we utilize in the business of producing soaps have not kind of followed that trend. So I'm hoping that firstly, the costs will kind of stabilize, if not kind of go down in the next few weeks. We'll have to see how that plays out. As far as hedging goes, again, these are prices which kind of get passed through the consumers. So Cost can go up, cost can go down. You can have gains, but you can also have losses. So we do kind of have a specific cover policy, and we do kind of change our covers of some of our commodities depending on the view on the market. But yeah, that remains internal to the company.
Got it. One of your competitors said that, there's not enough money in the hands of a common man, and hence discretionary spending is overall going down and people are moving towards smaller pack. Is this a trend that's being observed by you also, because you are more into, good night and stuff, but they're more into food?
So I think I would say that in the last few months, we have seen some bit of a slowdown in urban consumption. And I think various different companies have spoken about it. So there is a bit of a stress in terms of urban consumption. We hope that that's kind of temporary. We hope that with some bit of inputs which come from the budget into the urban consumer, it kind of helps getting consumption back in that segment. So hoping that that's kind of temporary, but when it kind of comes to, I would say, lowering the pack sizes, that's something clearly companies keep doing to kind of increase penetration and reach. We have also kind of put in various products which allows us to kind of reach more consumers and get growth. So as we speak in this quarter, we've launched Air Pocket at 30 rupees. The Air Pocket product has been doing extremely well for us. It has grown extremely well. We are reasonably confident that with a easier access pack at a lower price, it will kind of reach more consumers. So we do definitely look forward to driving products which can be more accessible and hence kind of reach more consumers.
Premium products in the household segment saw a slowdown. Now, is this just the household segment, or is the overall slowdown in premium segment being observed? And is this on account of a higher base?
No, so I think firstly, if I have to speak about household insecticides, I think our specific products which we've launched have done very well. Incense sticks did extremely well. It's been gaining volumes for the last couple of months. We've now actually got high single-digit share of that category, and there is still a large kind of volume to be kind of gained as we go forward. A new product which we've launched has been gaining the share, or there are early green shoots in terms of how it's performing in the entire, I would say, electric space. We are hoping that the new product, which is significantly better than all the products in the market, will again continue to do well. But yeah, I think the overall growths have partly been impacted by seasonality and partly been impacted by a bit of the urban slowdown, which everybody's kind of talked about. I'm hoping that that's shows some sign of improvement as we go through, because I think the larger middle class urban is a large contributor to the overall consumption and GDP of the country, and we should see some kind of improvement in those trends.
Right, and what's the kind of range of price hikes taken this quarter, because volumes were flat? So what's the volume versus value divergence?
So overall, as we said, while our organic volume growth has been flattish, we've delivered an organic sales growth of 6%. So we have seen that level of kind of year-on-year price in the market. We do kind of expect that for the next few quarters, we will see like a mid-single digit pricing benefit in terms of revenue come through.
But then, what's the kind of range of price hikes that has already been taken, and what is the kind of price hike that you expect going forward?
Yeah, I think it's been on an average 4 to 5% kind of price hike for the India business is what we've kind of seen. So.
Okay, and so you expect price hikes going forward as well, considering the raw material inflation?
We will kind of continue to hold at this level of kind of increase, and there will be a few more price hikes which will come on some categories.
All right, Mr. Malmari, one last question. Modern trade is gaining, as per your con call, and this is due to pick up in the e-commerce and quick commerce space. But general trade is kind of losing share, and you did share and mention that you might make changes in your distribution mix. Tell us more as to what's the kind of strategy that you'll be adopting.
No, so I think definitely there is a little bit of channel rebalancing which is happening because of higher growth happening in the larger, modern trade, e-com, quick commerce space.
Right.
As a result of which, we definitely then kind of ensure that we keep in mind overall distributor profitability and kind of bring inventory levels at a level which is kind of efficient for everybody to operate and drive efficiencies. So those are, I would say, smaller tweaks which we do, but nothing radical or nothing drastic, I would say. In any case, the business has been doing well and has been growing well, and that really benefits the GT distributor also because of it. I think we have been growing much faster than the rest of the FMCG players, and that's kind of positive for our GT distributors.
Understood. Well, Mr. Mabali, thank you so much for taking our time and speaking with us at NDTV Profit. Hopefully, 2026 turns out better for the entire FMCG space, because Alex, 2025 still looks bleak. As per his commentary, also Q4 is also going to face similar kind of pressure. So hoping that 2026 both rural and urban recovers, because volumes are flat for both FMCG majors, that is HUL as well as Godrej, and which was at least in single digits in the past few quarters, but volumes growing flat means. Hopefully if rural and urban recover, that's where FMCG will start to recover.
A lot of that is going to depend on what is announced on Saturday. This, remember, is a 6-day trading week. Not very often that you have that take place. And of course, we have a 6-day trading week, as you know, because it's budget day on the 1st of February, that is Saturday. And a lot of these hopes of a recovery in consumption is being pinned on what the finance minister announces in the union budget, whether there's a tax break or not, or whether there's some other way in which the finance minister and indeed the government intends to bolster the economy is yet to be seen. But as things stand at the start of this 6-day trading week, with a lot of factors both globally and domestically to track, you have sharp cracks across the board on the equity markets here in India. You have 23,000 that was broken, of course, but now we're looking at that support at 22,800 that we've been speaking about for some time, and cuts of over 1% at this juncture for the benchmark Nifty 50. The broader markets are seeing even sharper gashes. You have cuts of close to 3% on the mid-cap index and over 4% for the small cap index. The breadth is terrible at this juncture. In fact, let's pull up the advanced decline ratio just to drive home that point. In fact, it's very, very, very wide right now. In fact, the widest that I've seen in quite a while. And this is a lot of pain that is being visible in the broader end of the spectrum, one on the earnings, but also on overvaluation. And you have to note that as of Friday, you had cuts of about 13% for the Nifty 500, but a lot of the smaller counters have actually seen a much sharper correction. You have 75% off that benchmark, the Nifty 500, that had dropped by over 20%, 40% of those constituents dropping as much as 30% or more. And so that pain that you're seeing right now continues. Something like a Loris Labs reacting. You have Credit Access that is reacting to earnings as well. We'll talk about that in just a bit. On the large cap side, and this is where a couple of the experts that we spoke to earlier on in the day have said that they're finding refuge in the larger banks. You have ICICI Bank that is holding strong at the top of the list. It was a decent set of numbers that came through for the bank in the context of weakness overall in certain pockets of the financial space. And we've got Harsh joining in to give you a wrap of what stood out in those numbers and possibly what a couple of brokerages are saying. Harsh, this is the one bright spot in an otherwise very gloomy Monday morning.
Absolutely, Alex. So let's talk about the margin number first. Margins were expected to decline by around 5 basis points. They've declined just about 2 on a sequential basis, which means margins have held up very, very well, which has in fact had a knock-on effect on operating profit as well, largely in line with a slight positive bias across the board is how I would read the numbers. You're looking at provisions also well controlled, not bouncing off a low base in a difficult quarter, and therefore you're seeing that impact on ROA. 2.36% ROA, not bad at all, given the fact that the base in any case was 2.4%, slightly higher base. And secondly, in the environment in which we are, not seeing asset quality issues, not seeing spikes on the NPA ratios is something which really solidifies ICICI's positioning on doing this quarter after quarter after quarter, despite everything that's happening in the macro environment. And that's what really stands out. The possible negative, if any, that I can pick from the numbers is the growth number. Both on advances as well as deposits, growth came slightly on the softer side, but management suggesting that we're growing deposits largely in line with what we need in terms of liquidity, and there's healthy liquidity for us, which is ICICI Bank in the system. And therefore, in that sense, no concerns on the deposit growth front. Advances growth slightly softer, but mind you, that's the nature of the environment as well. And it seems like overall, it's a very, very solid set, and the street rewarding ICICI for that.
Harsh, for getting us those details on ICICI Bank. The stock is up 2%, and a lot of people have this as a pick from the private banking space. The stock is at very close to the high point of the day. A stock that is not doing very well in the BFSI space, and this is also on account of earnings, IDFC First Bank. We spoke with the management, Mr. Vaidyanathan, not too long back. And let's take you through the numbers in case you missed it, because you had a situation where both the margin as well as the return on assets, and these are very key metrics to track, they have missed expectations. The asset quality is a bit of an issue, right? Because you have microfinance, which is proving to be a drag both on asset quality as well as the profitability, and that's on account of the higher provisions that the bank has had to take. They were lower on a sequential basis, but they're still elevated. The credit growth as a result of which has moderated because they're being cautious on the microfinance aspect. Talk about the key numbers here. The net interest income has grown by as much as 14%. The operating profit is up by about 12%, and the provisions have come in at 1,338 crore rupees. The PAT number was down quite considerably, down as much as 53% at 339 crore rupees. I did want to mark this, but we've also been looking very carefully at the real estate back in the real estate space. We had a couple of companies report numbers. Of course, DLF had pretty good growth in pre-sales, and the stock is reacting in trade. It's up over 3% if I'm not mistaken, unless it has given up a little bit of ground. And the other stock, of course, and there you go. So it's still holding up at 3% or so. The other stock, of course, in the real estate pack that reported numbers is Macrotech Developers. And very good pre-sales for this company as well. In fact, we've got the management, Abhishek Lodha, Managing Director of Macrotech Developers, joining us right now. Mr. Lodha, thanks so much for taking the time. There's lots to talk to you about, not least of which is the numbers. Talk to us about how you're reading those pre-sales numbers, because it seems just on the back of what's happened in January, some focus is shifting away from those very good pre-sales numbers to the metrics that have been reported as well. And some stocks are seeing a little bit of a crack on the back of some of those operational metrics. Talk to us about how you saw operations pan out in the third quarter.
Thank you. Pleasure to be with you today. We had our strongest ever quarter in terms of various parameters, including pre-sales, which were over 4,500 crores. In terms of the embedded EBITDA of those pre-sales, which came in at about 35%, well ahead of our year start guidance of about 30%. We had our strongest ever collections, and we have now hit 90% of our full year target for business development. And in spite of that heavy level of investment in land and business development, our debt has come down by over 15% by about 15% this quarter. And now our debt equity is only at 0.22, well below our ceiling of 0.5 times. So overall, as a business, we see very strong momentum in the underlying pre-sales. And on the back of our strong brand and execution, we are seeing those pre-sales translate into earnings and cash flow, which is really how we see the last quarter. The business model that we have of having a large number of operating projects so that we are not overexposed to any one segment or any one project. We now have over 40 operating projects, and no project contributes anything more than 15% of our sales. That gives us a lot of granularity and predictability in our business, which we think is important as one navigates the normal ups and downs of the macroeconomy.
That's very interesting perspective, because some of your peers have witnessed a little bit of chunkiness in their earnings on account of sales slowing down in certain pockets. But a couple of questions, and then we also want to talk about the trademark infringement case. My colleague will join in to speak about that because she's been tracking this very closely, Mr. Lodha. But just to take that point on reduction in debt a little further and the cash flows that are being generated, where do you see that towards the end of this financial year, and also the glide path heading into next year as well?
As a business, we are very conservative when it comes to debt and leverage. Our focus is to deliver growth, a predictable growth of 20%, largely on the back of our own earnings, and therefore our ROE is now approaching 20% on a embedded pro forma basis. And that's really where we see. So, debt might move up in some quarter or down in some quarter, but the general trend on debt is towards reducing debt, because the business is very strong when it comes to financing its own growth through its own earnings.
So, Mr. Lodha, I also wanted to ask you about the family dispute that is currently going on in the Bombay High Court, as we know that the next hearing is slated for today itself at around 11:30 a.m. So, first question I want to ask you is that since there must have been some separation agreements which would have, clearly demarcated which names can or cannot be used, why do you think there is suddenly a requirement for a suit at this stage? What made you decide on taking this to the court?
Hi, I would first like to clarify that this is a trademark dispute, not a family dispute. Our family has separated its ownership and management more than 10 years ago, and all of that is well done, dusted, and implemented. So I want to first clarify that. The second point I want to make is that Abhinandan Lodha is my younger brother. I have always cared and loved for him and always wish him all success, including if he wants to do real estate. Therefore, it's a very, very straightforward matter of the consumer knowing with great clarity that the Lodha that they are dealing with is the well-known, well-established company which over 40 years has established a reputation and a brand for its credibility, its delivery, and its integrity. Anybody else, and it's not got to do with whether it's Abhinandan Lodha or any other third party, cannot in the real estate space, in our opinion and view, use the Lodha name because it creates confusion for the consumer. And in our view, you had a recent dispute between Indigo and Mahindra for using the term 6E in completely different industries. And 6E is probably not even the main brand for Indigo. And yet they went out and protected their brand. So that's what we are doing as a company, making sure that there is no confusion for the consumer and the brand is protected. I wish Abhinandan all the very best. I really am pained with all the mudslinging that has been carried out through the media. I have, and the rest of the family members have maintained silence on this matter because family matters are best dealt with within the family. This is a matter where there is a dispute between two corporates, and I think the media should be seeing it in that light, and the law will take its own course.
That's right, Mr. Lodha. Another follow-up that I wanted to ask you is, did you come across instances of consumer confusion in terms of brand name, and is there some more reason to how you came to, compensation amount that has been stipulated in the suit?
Ma'am, the legal proceedings are fairly comprehensive. The confusion in the minds of the consumer, many other instances, the damage caused to our brand, all of those things are laid out. I would say is that our business is performing very, very strongly. We are focused on delivering our business, growing our business, keeping on reinvesting in our brand, in which we've already invested thousands of crores, and delivering for our consumers, our shareholders, and more importantly, for our society and nation at large. I won't want to get into further discussion on what is an ongoing legal dispute, which is, just one matter. Let's focus on the company's performance.
Certainly. Mr. Lodha, if you'll allow me one last question, and this is not to do with the specifics of the case that will be discussed, but just from the perspective of watchers of what you have built as a family over a period of time. Some people wondering whether or not an agreement or a settlement can be made within closed doors, since this is, of course, within the family.
Again, as I was repeating, the family's agreement arrangements are all very, very comprehensive and concluded almost 10 years ago. In that, it is explicitly stated that all the IPR, copyright, brands, etc. of our business, which includes Lodha Group, etc., belong exclusively to Lodha Developers Private Limited, which has since now been called Macrotech Developers Limited. And specifically, Abhinandan or his new business cannot use that trademark or brand name. And I use these words with great focus and underline them in any manner whatsoever. So this is very, very clearly defined. There isn't any confusion, ambiguity, etc. I wish Abhinandan all the very best. I just wish that he could have respected what has already been discussed, agreed, signed off, etc., and ensured that there is no confusion in the consumer's mind. Again, I'm repeat, this is not a family dispute, it's a trademark dispute, and the law will take its course.
Right. Mr. Lodha, Mahima also joining in, circling back to the kind of performance that Macrotech posted, you've kind of achieved all the guidance that you'd, guided for. 73% pre-sales guidance at 70,500 crore, the operating cash flow of 6,500 crore, and even new project addition was as per what you guided. What next going forward? How many more, new launches in pipeline? And what's the pre-sales guidance going ahead?
The pre-sales guidance for the full year stands at 17,500 crores, which means that we have to deliver a similar number in Q4, which what we delivered in Q3. So it's very much, within the zone of what we are already doing. As a business, we like predictability. We think those who own our equity like the predictability. We've guided that over the medium term. We want to grow in a predictable manner at a 20% pre-sales growth and slightly higher than that growth in profitability. And as a business, we are focused on having the highest standards of ESG and making sure that our success in turn creates value for society. And we'll keep focused on that broader parameter of economic growth, as well as making sure that society benefits from our growth.
Mr. Lodha, pleasure speaking with you this morning. Thanks so much for the outlook and for the clarification that you've given us on the trademark case.
Thank you.
All right, so that's the latest. You heard it here on NDTV Profit. Of course, as Charu pointed out, that case is scheduled to be heard in the Bombay High Court later today, and we'll bring you updates as and when we get them. But very clear statements being made by Mr. Abhishek Lodha about the nature of the case, that it is in fact a trademark infringement case. The agreement between the family stays. It's not a dispute within the family, and that the law will take its course. We'll see soon enough what the law decides. We have to break into a very short commercial break. We'll be back on the other side to take all of your queries, so do stay tuned.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, Budget 2025 is around the corner, and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits, and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they're expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single digit increase in cigarette taxes. Reduction in taxes for low middle class consumers. Welcome back. You're watching Ask Profit, a show where we get all your stock related queries answered, whether they're fundamental or technical. For viewers who are just tuning in, you can ask all your stock related queries on the number that's flashing on your screen. You can either call us or WhatsApp us. With that, let's also welcome in our guest for the day. Saurabh Jain, Equity Head Research at SMC Global Securities, joins us now, and we have Ajit Mishra, SVP Research Religare Broking, joining us now. I'll take the first question. It's from Gul, who's from Kerala. He has a question on Shalby shares, and he's purchased them at 2 to 3 a piece. He has 5 shares with him. He wants to know whether at the current levels, should he add more and average out? Ajit, I'll come to you, since he's asking, whether to add more and average out at the current levels. Do you think that that's the right strategy to adopt?
Yeah, good morning, Mahima. So, see, when it comes to the mid-cap and the broader markets, in total, we all know the kind of pain that most of these stocks are experiencing, and today also the market breadth is, completely on the declining side. Means 200 advancing and 2478 on the declining side. But it's more of like the stock-specific approach that one should continue with, considering that we are in the earnings season now, and Shelby so far has outperformed within this pack, and we are seeing that around 200 190 zone the stock has multiple supports. So if his view is, let's say, long term, and he wish to wait it at least for a year or two, definitely he can add around 200 levels. The bias is going to change once the stock is going to break below 180. So for that reason, since we are seeing the market tone is also negative, we should consider 180 as a stop loss to the position which he is currently adding.
All right, so that's the view on Shalby Hotels. Let's take the next one. We've got a question on Suzlon. Is the current price attractive for a 1 year time frame? This is a question coming in from Shankar, who's writing in from Bengaluru. A pretty popular share, Saurabh, and trading at 50 is down about 5% in trade today as well, and taking a knock. So is, I think, a large part of the broader markets. Would you buy at this point? Is it attractive?
On the valuation front, it is not attractive, but it is, market participants are betting on the change the company has witnessed. I mean, there is a strong operational performance. The company is able to garner more orders. There is a change in the debt position of the company, and that is why the stock got re-rated. I mean, if you have a long-term view, I think it is better to add on a staggered manner when you have a market that is on a decline. So my view is keep on adding.
All right. The next query is on HAL. I mean, this is just before the budget 2025, and defense, of course, will be in focus. We have Siddharth from Gurugram. He's holding. He's not shared as to the number of shares which he's holding, but he's bought it at 4,450, and he's saying that is the delay in Tejas MK1 and MK2 due to GE, I'm not sure what he's talking about, but is it something why HAL is down is what he wants to know, and he wants to know whether he could keep holding it for the next 1 to 2 months. Now, since he's mentioned about because he studied the company fundamentally, I think I'll come to you, Saurabh. 1 to 2 months is his target, but an outlook on HAL overall.
See, if you look at the valuation, even after the correction, the stock is still richly valued. And if you look at the operational numbers, the growth is not commensurating with the kind of the valuation that the stock is trading. Yes, but the long-term outlook is positive. I mean, if you have a holding frame of maybe 2 to 3 years, I think it makes sense to add this stock. And above all, I think in the budget, there will be a focus definitely on the defense side. I think this time around, the capital expenditure will be higher than the current financial year. This time around, the capital expenditure was a little bit lower also. So in terms of more orders, in terms of more execution, I think next year will be great. So I think the valuations, I'm reiterating the same thing, valuations are still high. Keep on adding at every decline.
And indeed, the spend on capex not necessarily going to be meeting target, I think. Let's see how the print comes in during the budget. We've got the next question. It's a caller, actually. We've got our first caller of the day. Lokesh is calling us from Andhra Pradesh. Good morning, Lokesh. You want to know about Zomato?
Hello. Hi, yes, sir.
Hi, Lokesh. Please tell me.
I bought Zomato at 230,000 quantity. Can I hold up still?
Okay. What is the time frame that you had, Lokesh? Lokesh, what is the time frame that you had when you bought Zomato? Did you want to hold for more than a year or less?
1 year holding.
1 year holding. Okay. I'm going to go to Saurabh on this one. Saurabh, Zomato at 230, the stock is at 209 from what I can see, or 210 or thereabouts, so not too far away from the buy price, but it has been under pressure in the recent past. Would you hold for 1 year?
Yeah, I mean, if you have a time horizon, I think one should have more time horizon of more than 1 year. Then it makes sense to hold. But the point is, this time around on the operational front in the quarterly earnings season, the company seriously disappointed. They have said that the Blinkit side they are losing money. There is some kind of a slowdown that they witness in the December quarter, and same thing may continue. So that is the reason I think. For the next 2-3 quarters, I think the same episodes can be seen, and the stock may remain under pressure. So 1 year time frame is not enough for, in my opinion. I think he should have a time frame of 2 to 3 years.
Understood. That's the view coming in on Zomato. Moving on to the next caller, Ricky from Mumbai is calling in. Ricky, a very good morning to you. How can we help you?
Yeah, actually, I'm holding Astral shares to 200 quantities. I have purchased around 1750.
Okay.
So, is it the right time to accumulate more?
Oh, so you want to accumulate more, and what's the kind of time horizon that you're looking for? And did you study the company fundamentally?
At least 5 years. I am thinking to hold it for at least 5 years.
Okay, 5 years is a long period, Ricky. One more question to you, before I move on to our guest. When you bought Astral, what was the kind of thinking? What did you study exactly? Why Astral?
Yeah, because I have a good portfolio. I have around 12 to 15 stocks, but I have query regarding only Astral now because it is falling too much.
Okay, understood.
In the current time.
Understood. Saurabh, Astral is the counter. How are you viewing it?
First of all, again, I think it is a case of higher valuation, lower growth in terms of operations. In the last quarter also, we see, I think, negligible growth in the revenues, and there was a pressure on the margin side. I think this time around with the crude prices cooling off, I think most of the raw material prices will get cooled off, and the worry will on the margins will abate. And moreover, I think the higher spend by the government and the sector is per se is looking good. I mean, the company is into the pipes business, and in my opinion, I think next year should be good for the company. But all in all, I would say I think it is better to wait for the quarterly earnings, one more quarterly earnings, and then decide and keep on holding your stock.
From what I can see, it's still trailing at 74 times, or very, very close to that mark, trailing 12 months PE. And this is much lower than its 3-year average of 94 times. So it's not like the stock is cheap. by any stretch of the imagination. It is perhaps to a certain extent correcting, like several others in the broader markets are correcting. The stock is not small by any stretch of the imagination, market capitalization of over 38,000 crore. Let's talk about GMDC though. This is the next stock, and Deepak Daga from Rajasthan, from Biwar in Rajasthan, is asking this question. 5,000 quantity, 326. Is there any chance of an increase after the budget? Not very sure about that, but the loss is quite considerable at this juncture. He's bought at levels of 326, as I pointed out. The stock is at 291. Just by dint of the quantity though, Ajit, he's losing quite a bit of ground. So what are the near-term levels of support that you see for this particular stock, and what are the targets that you would have?
So Alex, the stock has witnessed, in fact, fresh breakdown from almost 2-year-long consolidation phase, and the breakdown zone was closer to its buying price. So I would recommend him to at least liquidate half of his position at current levels, and for remaining trade, he should maintain a stop at 275. In case of rebound now, I feel that 310 to 320 means his buying price zone is the area basically where the stock is going to face strong resistance. So if his view is short term, means he is waiting just for the budget, definitely he should utilize any rebound towards that area to reduce his position.
Okay. That's a view on GMDC. Dheeraj from Hyderabad has got the next question. He's calling us. In fact, Dheeraj, good morning to you, and how can we help you today?
Good morning, sir. I'm holding 190 shares of Prestige Estates at 1500 level. 15, I guess, one moment.
Okay.
At 1545 levels.
Okay. And?
1545 levels. Should I, at current level, should I add more or sell?
Okay. Dheeraj, do you have a long-term view?
I have a view for around 6 months, sir.
6 months. Okay, so it's a short-term perspective. When did you buy the stock?
Actually, I kept on averaging the stock. I purchased at 1750, 100 shares at 1750, and then I kept on averaging when the price is falling.
Okay. Okay, got it. Ajit, on the charts then, 1545 is the buy price. The stock is under pressure. Like everything else, would you hold on?
So, Alex, last week, we all know that the realty index was hammered badly, and it was down roughly around 9%. And most of these stocks, including Prestige, witnessed a similar trend. The stock is currently trading closer to its previous area of consolidation. So likely we may see some consolidation or a breather, at least for a week or two, before any meaningful move. Since he has bought it, at higher levels and then kept on adding. So please do not add to your loss-making positions further now. And for the entire position, 1160 on the closing basis should be a stop loss, because after this corrective phase, it's likely to witness some respite, and probably closer to around 1400, 1420. Closer to your buying price, we may see a rebound in next 2 to 3 months. So keeping that in mind, with 1160 as a stop loss, you can continue to hold.
January.
Yeah, I mean, the markets are just factoring in whatever is overvalued right now, and those stocks are and beating it down. Moving on to the next caller, Kishore from Andhra Pradesh is calling in. Kishore, a very good morning to you. I believe you have a question on NHPC.
Yeah.
Go ahead. What's your query?
Yeah, actually, I bought around 1,000 NHPC stock, around 1 or 2 6 months back. So now it is 77 rupees. So I just wanted to know about long term.
Okay.
So I can hold for next 5 to 10 years. So I just wanted to view for long term for next 5 to 10 years.
Got it. Saurabh, I'll come to you. NHPC is the counter. What's the long term view?
I think long-term view remains optimistic, quite optimistic. The stock price has fallen considerably, considering the fact that this year earnings will be similar to the earnings reported in the previous financial year. I think this came from the management itself. Some of the losses incurred in one of their projects have been covered by the insurance. Some of the newer projects will come into the fore, will come into operational, and that will push up the revenue and profitability. Next 5 years look good to me. I think 14-15% kind of a CAGR return is one can expect from NHPC.
Okay. All right. Aneet has got a question next, and he's asking about JSW Energy. He's bought 1,500 quantity at levels of 660. I'm seeing a lot of very large quantities being bought, and I hope that you are paying attention to your overall portfolio and you're taking bets or you're buying stocks for your long-term portfolios based on the overarching size. We've had some callers, of course, point out that they've got 13 to 15 stocks, which is a good number to have. But be very mindful, especially in these markets, about concentration risk, because you can have a large amount of drawdowns if you're not careful. Aneet is seeing a loss of about 1.8 lakh in his holding in JSW Energy. Ajit, what is the view on the charts? Would you hold on at this juncture? Would you book?
So Alex, we have seen decent correction in the stock, in line with what we are seeing in the other, related stocks. And the good part is that in the last 3 weeks, the stock has been holding strongly around 100 weekly exponential moving average. And there's a possibility, considering the oversold position and the kind of consolidation that we are broadly experiencing. The stock may make an attempt of recovery towards 575 area first before making any further damage to the overall structure. So with 500 as a closing stop loss, he can continue to stay put. And as you have rightly mentioned that, especially in the market like this, if you get the opportunity and the level close around 575, 580, you should reduce your position, because there's a possibility that in case if it fails to hold or surpass this hurdle decisively, the trading pressure may resume and the stock might again drift lower to 520 area.
So bear in mind those levels. 500 on a closing basis is your support for JSW Energy. We're talking about IDFC First next. It's a stock that is under pressure on the back of earnings. We spoke about this at the start of the program. And Geeta is calling us from Tiruchirappalli. Geeta, good morning, and how can we help you today?
Yeah, good morning. I've been watching your program and I'm happy and thank you for attending my call.
It's our pleasure. Please go ahead.
Yeah, I hold around 500 to 600 shares of IDFC First Bank.
Okay.
My accumulation price is from 35 to 90 and my average price is around 60.
Okay. Did you say 50 or 60?
Pardon?
Did you say 50 or 60?
60.
60. Okay. Go ahead.
My query is, should I hold this? I'm a long-term investor, say of 5 years.
Okay.
So at this juncture, is it right for me to hold this until the stock increases in price, or should I sell it off right now and accumulate it at a lower rate? That is my query.
Okay, all right. It's a good question, and I'm glad that you've been holding from lower levels, and it's not something that you've done as a sudden knee-jerk reaction. Let me go across to Saurabh. Saurabh, on the fundamentals, IDFC First, there were question marks over the past couple of quarters. Some people saying after this particular set of numbers that the worst may just be over. And from that perspective, if you've got a long-term view on the stock, would you hold based on the fundamentals?
See, the fundamentals are on the negative side. First of all, it is the MFI portfolio which is troubling the bank. This time around, the losses got doubled, and that is why the profitability got halved. No doubt the management is quite good, but I think it would be like betting against the odd. I don't think so. Things would improve from here onwards. I think there will be pain for the next 2, 3, 4 quarters. There can be a pain, but since she is holding at a price of 60, she must be ready to see some notional losses. I mean, in terms of stock price decline. But 5 years is a good time frame, and on the valuation side also, it is on the comfortable side. So, in my opinion, she can hold.
All right, so that's the view coming in on IDFC First Bank. Moving on to the next query, which is from Anurag, who's from Lucknow. He is holding around 1,500 odd shares of KSA International, bought at 1180 a piece, and he wants to know as to what should be the next target or stop loss for the next 2 to 3 months. Ajit, I'll come to you. KSA International also got an order on Friday in the transmission and distribution segment, which was around 1,445 crore, but the stock is kind of seeing beating in today's markets. 2 to 3 months, how are you viewing the stock?
So Maima, this month has been, damaging for the overall structure for KEC. Means the stock is down roughly around 34% and almost like 5-6 months of gains has been incurred. And now, but yes, closer to around 770 area is something that I can see as a immediate base or a support. And in case if it fails to hold, then this correction may extend further to 650 levels also. So in my suggestion, he should at least reduce position in case if it breaks this 770 area. And in case of a rebound, I doubt that the stock can witness a sharp recovery. So 850 to 900 is something that the stock might again face resistance. So if his view is short term, he should utilize any recovery in that zone to reduce his position.
Yeah, in fact, KC International lost quite a considerable amount of its value over the. You were looking at the number.
So it's been the top loser in terms of market cap from the small cap segment, and it's lost over 10,908 crore worth of market cap in Jan itself. So 27 days of Jan, and it's already lost around 10,900 crore.
The stock under pressure, despite the fact that it's a sizable order that has been announced today, 1,445 crore order in the transmission and distribution space. So any perception of overvalue is being, as we've pointed out, being very sharply cut down at this stage, and we'll have to see how that tide turns. We've been talking about the fact that sentimentally it's been looking weak, and also we addressed this at the start. Volatility seems to be the name of the game, and you're seeing a very sharp spike in the VIX today as well, and that is really par for the course. Ajit, you want to come in very quickly about how to trade in this kind of a market? Would you be cautious, particularly in a week that's so heavy on not just earnings but global events, and also at the end of the week you have the budget?
Right, Alex. So, in fact, Alex, we have been recommending to our clients to just align your position as per the market trend. And when we saw that the broader market started underperforming the benchmark, earlier the trend was otherwise, it was a clear indication that this profit taking may extend. And especially it's a crucial week because we have earnings, we have FOMC meet, the budget is also around the corner. At least for the index, especially if you're holding long position, in the F&O stocks, and by any chance it's a leverage position, definitely maintain some puts. Means 22,800, 700 put is something that is of 6 means expiry, weekly expiry, something that you should add to your portfolio. Another important thing is please do not add to your loss-making position. That is more important because of late, after seeing 10%, 12% kind of an intraday decline in any stock, people tend to get this tendency that it's now cheaper. You should, let's say, add to this position. So these kind of temptation you should definitely avoid and focus on earnings, especially if you are long-term investors. So please don't get carried away with your short-term price fluctuation. If it is aligned with just market correction and without any reason we are seeing correction in stock, definitely you can go ahead and add. But otherwise, avoid catching the falling knife is something that you should, especially in the mid cap and small cap space.
Yeah, very, very, very important advice being given to you. Please bear this in mind. Vinod is calling us from Chennai. Vinod, you've got a question about Prince Pipes of Finolex. Have you studied these two companies, and what do you want to know?
Hi, Alex. Good morning.
Good morning.
Recently, I have gone through both the stocks. Actually, it has been beaten down very heavily.
Yes.
And I was checking the valuations also, and Prince Pipe is trading a bit more value than Finolex Pipes.
Okay.
When comparing to Supreme Industries, I think both these pipe stocks have the great potential to grow.
Okay.
Since the budget is also around the corner, capex spendings might impact these stocks. So would like to have a view. I mean, like technical as well as fundamental view on both these stocks.
Have to pick one. So what is your time horizon, Vinod?
Like 1 year to 15 months.
Okay, so then from that perspective, let me get you a fundamental check, because that is going to be more important for you at this stage. Which of these two, if at all, Saurabh, would you pick, or would you pick the one that he mentioned, Supreme?
I think he spoke about Prince and Finolex.
So Prince and Finolex, I'm adding one more.
Okay. See, in my opinion, I think all three companies have a great history. and the space is also looking good. Out of the three, I feel one wants to go with the one, and he wants to take a tactical bet because of the budget, in which there will be surely announcements for the agri side and for the infrastructure side. I think Prince makes more sense out of the three.
Okay, Prince makes more stage. Okay, so we've got Geo Financial Services next, which is a question coming from Navneet. He's seeing losses. He's bought at levels of 330. He's wondering what's to be done. And the case for buying it, of course, is the venture with BlackRock, the joint venture, which is yet to actually get moving. But I'll still get a technical check on this. Ajit, on the technicals, would you hold on at this juncture?
So, Alex, I feel that at least in the short term, the damage has already been done. So you should not just try to exit now, because it's extremely oversold. And the last time when the stock started moving post IPO, it was a zone close to around 230 area. So maybe due to multiple reasons that we have multiple supports and oversold position, the stock might witness some recovery. But having said that, since the markets are seeing sharp corrections across the boards, so maintain a stop at 225 for this position. And in case if it rebounds, 255, 260 is the area basically where we have multiple resistances also. So use recovery to reduce your position is something if the view is short term.
Gentlemen, it's time for the rapid fire segment on the show. This is 2 minutes where we throw as many questions as possible at you. Do keep your answers as short and concise as possible. The first question is from Selvadurai, who's writing from Chennai. Shakti Pumps is the name of the counter. He's bought at levels of 1092. He's asking whether he can add more at this juncture. The stock is at lower circuit. Any view on this, Ajit?
Alex, I don't track the stock, so I can't comment.
Saurabh, on the fundamentals, would you buy Shakti Pumps at this point?
High on valuation, avoid.
Okay.
All right, PVR Inox is next counter. Niva has 10 shares bought at 1540 a piece. Can she average at the current levels, Ajit?
Around 950, you may consider averaging.
ONGC is the name of the counter. Bilal from Hyderabad wants to know. Bought at levels of 255. Short-term outlook is being sought. Ajit, on the charts.
Please exit. We have seen fresh breakdown. Stock may retrace to 240.
All right. Ease My Trip is the next counter. Priyanshu wants to know whether he should buy it or not. Saurabh, your view?
Avoid.
NTPC is the name of the counter. Peter's asking this question. Bought at levels of 395.6. 1 year time frame. Saurabh, would you hold or exit?
Buy more, increase your time frame.
Kalyan Jewellers is the next counter. Hitesh has 60 stocks at the value of 765. Should he buy more to average it out, Ajit?
Avoid averaging for a complete position. Maintain stop at 400.
Okay, Debasis wants to know about CDSL. Beaten down heavily in trade today. Would you buy the stock for the long term today? It's down 8.3%. Saurabh?
Still high on valuation, avoid.
Patanjali is the next counter. Subramaniam is holding 100 shares bought at 650. Saurabh, should he hold or sell?
Book profits.
Okay. We've got a question on Adani Ports. Would you buy at this point? Ajit, on the charts?
Accumulate in the range of 975 to 1000.
Okay. Standard disclaimer, it is part of the Adani Group, and NDTV Profit is part of the Adani Group as well, by extension. Gentlemen, thanks so much for joining in, for answering all the questions that you did answer. Always a pleasure having you on the program. I understand that this is a tough market to trade, and hopefully the conversations that we've had today have helped you to a certain extent. We'll be back tomorrow to take more of your questions. Till then, stay safe and tread carefully. That is the message that is coming through from our experts as well. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday taxi. policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which
Hello and welcome to KYC. In this fast-paced world of stock markets, well, investors are bombarded with information about what they often lack is deep, comprehensive understanding of the companies that they invest in. Know Your Company is a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. And today we're talking about DCB Bank. This is a relatively smaller bank that has come into focus on the back of earnings today. So let's take a look at this particular bank. Well, it was incorporated back in 1995, so it's also a relatively younger bank as compared to many others which have been around. It's into the development of cooperative banks to, or rather it has moved from a development cooperative bank to a development credit bank. And moving on, it's in terms of how the product mix pans out, it does get about 45% of its product mix from mortgages. It's followed by agri as well as incorporating banking, that's about 25%. And then the balance comes from SME and MSME, as well as co-lending, gold loans, commercial vehicles, etc. Now, that's as far as its mix is concerned. But what we usually do with all companies that we take up on this particular show is talk about several parameters and also rate the bank, rate the particular company on these parameters with respect to a thumbs up, thumbs down, or a neutral rating. And among these factors, what we also do is, talk about the income statement, the balance sheet check, operational metrics, as well as asset quality. Moving on in terms of shareholding valuations, along with street credentials and street coverages, the other factors that we take a look at as far as this bank is concerned. But let's start off with the one which is right at the top of our list. And before I bring all these parameters in, let's get in my colleague Harsh Sata, who's also going to help us further bring in more insight with respect to what the bank has done so far. So Harsh, thanks for joining in. And as usual, let's start off by addressing the income statement. So how does it look?
Well, yes, thanks Agam. Let's start off with how the income statement is adding up. In that sense, and you'll have the net interest income number come right on your screen in a minute or so. The growth, the 3-year CAGR on the NII has just been 14% but it's a fascinating manner in which this PNL is stacking up, and that's what I want to really highlight. You look at operating profit, it's actually declined when you're looking at it FY21 versus FY24. So you've seen a decline on operating profit. That's because the OPEX within the bank has spiked and materially spiked up. It's doubled from sub 900 crore odd. It's gone to nearly 1500 crore plus in FY24. And that's where a large part of the leverage has been lost. But where has it gained leverage? With regard to provisions. Look at the provision number, 446 crore for FY21. It's come down to 142 crore in FY24. So there's been a sharp decline where provisions is concerned. And therefore, you're seeing that 17% growth on the profit after tax front. It's a completely mixed bag in that sense, because you're seeing top line growth on a low base, not going up in a material fashion, just about a mid-teens kind of growth. Profit growth also in the mid-teens, but your OPEX spike is what has led to that operating profit being absolutely flat, and then you've got credit costs which have come off. So a neutral on this one, because it's just such a mixed bag in the sense, in the way in which the income statement is playing out.
Sure. So we're going to give this a neutral rating, as Harsh, and the reason why Harsh explained, but we talk about the balance sheet as well. At least as far as the advances and deposits are concerned, we're looking at a pretty steady 17% CAGR for advances coming through, and deposits also growing mostly in tandem with the advances at around 18%, so when it comes to the 3-year CAGR. At the moment for FY24, the advances stand at a little less than 41,000 crores, and deposits stand a little over 49,300 odd crores. So on a pretty stable footing, which is why we'll give this a thumbs up. In terms of its capital adequacy as well, that stands at around 16.3%. So it pretty much adds up to what we have seen so far. But let's talk about a handful of the other key operating metrics. Harsh, so what do you have for us there?
Well, yes, again, very, very interesting the way in which it's panned out. Let's talk about yields first, yields on loans. They've crept up by just about 30 basis points in the last 3 odd years. Mind you, this is a cycle where rate hikes have started to come through, and therefore that just not enough meaningful increase in terms of yields is how I would term it. You look at cost of funds, in sharp contrast, it's gone up by 1% or thereabouts over the last 3-year period. Your margins also have largely remained steady till FY24, but after FY24, by Q3, we've seen large margin dilution. Look at your cost to income, and this is where some of the metrics which you saw in your income statement also come to light. You look at 49% was your cost to income in FY21, 64% in FY24, currently sitting at 63%. They're tapering down on their cost to income, but just by a wee bit. Therefore, ROAs, which have not gone above the 1% mark in at least the last 4 years, sit at sub 0.9%. But
what is the one positive that I take from all of these numbers is there's a steadiness to it in that sense. ROAs have not gone down materially despite OPEX spike. They've been able to manage provisioning along with the OPEX spike to some extent in this cycle, and you're seeing ROAs sitting at 0.9%, leaving very, very low margin for error where provisions is concerned, but you're still able to maintain that steadiness with regard to ROAs, and that's the key positive I take from it, and therefore largely a neutral bag again on this one when it comes to the operating metrics, Agam.
Okay, so I'm going to talk about the asset quality, and perhaps I'll also bring in Harsh to give his perspective on asset quality itself. So when you consider the gross NPA ratios, they've certainly come off from the mark of, well over 4% to around 3.19 back in FY24, and as of the third quarter that stood at around 3.11. So we are certainly seeing a decline in that gross NPA ratio. Net NPA ratios again would at the mark of around 2.29% back in FY25. This has come off substantially and halved to around 1.04 back in FY24, and at the moment again we're looking at a little bit of an inch up in the third quarter of FY25. But Harsh, the reason why we're giving this a neutral rating is because even on an absolute basis these are still relatively higher NPA ratios.
Correct, and they've not come off materially, right, Agam? You look at it, it was roughly 4% in FY21.
Yeah,
you've seen some of the banks really double down on that gross NPA ratio. DCB hasn't been able to do that, and when you're seeing FY24 versus Q3 FY25, you're seeing a bit of a spike on all of those ratios,
right,
especially on the net NPA ratio.
Yes.
And therefore not sure whether that will sustain or not, and maybe management commentary will help there, and we'll take that. But at the moment, it seems like a neutral rating is better placed for the kind of numbers we're seeing.
Fair enough. So, and that brings us to factors beyond the financial statements. So we've spoken about quite a bit in terms of the balance sheet and the operating metrics, of course the income statement as well. But in terms of your shareholding, it's perhaps normal not to have such a high promoter shareholding in any bank or NBFC for that matter. DCB Bank is no exception, so it stands at around 14.7%. The institutional holding, however, does tend to be considerably higher than what DCB Bank has seen. So for the quarter ending December, its FIR holding stood at a little less than 11%. And it's certainly come off from the quarter sequentially. And it's the same for DII holdings, that stood at around 27.9%. Usually, you tend to have a lot of these banks with a total institutional holding of well over the 50% mark. Considering that is not the case for DCB Bank is the reason why we are going to give it a neutral rating, because a large chunk of it is still with the public at large. So that's as far as shareholding is concerned. But how do valuations stack up, Harsh, given the kind of growth that we've seen?
Yeah, now I want to contextualize this a little bit. Why I'm giving this a thumbs up? Two reasons. One is you're seeing mid-teens kind of growth.
Yeah.
The growth over the last 3 years is sustained at slightly later teens, if I can call it, 17 to 18%, which is the one key positive. The other key positive is that you're seeing asset quality also hold up. Now you look at some of these banks where asset quality has been a challenge over the last 2 to 3 years, and you look at valuations and you'll see DCB Bank trading at least a 30 to 40% discount to all of them. In some cases, much more than that. And therefore, believe that at 0.64 times, DCP definitely looks like a decent-ish number in terms of where valuations is concerned, and therefore a clear thumbs up on the valuations front.
So there you have it. That's as far as your valuations go. And moving on, let's talk about street credentials. So how things are panning with respect to the stock itself and what it has done. If you just consider the last 12 months, it has come off by around 13%. If you consider the way your benchmark indices have moved, maybe if you can talk about the small cap, the mid cap indices, it'll give you a better picture, because I reckon that DCB Bank belongs to that particular group of stocks. There is still a positive return for both the mid cap and the small cap indices respectively for that period of the last 12 months, which is why we're going to give this a thumbs down, because it has underperformed at least the indices it is likely to be a part of. that brings us to the final one on what the street makes of DCB Bank. Now, Harsh has already spoken about relatively favorable valuations, and that perhaps also gives you an idea what the street may have made of it. So, Harsh, why don't you tell us that?
Well, yes, 20 buys and 2 hold calls on this one. And I'll talk about the upside, because that's really fascinating. A 32% upside from here. That would typically take the price to book closer to 1. It may not be 1, with a 32% upside. But this is again basis 1 year forward valuations of 0.64 times. A 30% odd upside would warrant around a 0.85 times price to book if that were to play out. And that's exactly what analysts on the street are also suggesting, that this definitely needs a bit of a re-rating where the valuation number is concerned, is what I'm seeing. This is, of course, as per Bloomberg analyst estimates, and therefore it's an average of all the analysts taken together. But let's talk about just a couple of factors before we wrap this. When you're looking at the way in which some of the metrics have played out, and Agam, I want to just delve on this a little bit further just to try and clarify our position here. You're looking at a mixed bag in terms of performance, and it's a very, very unique set of numbers that we've seen in the way in which DCB has played out over the last 3 years. You rarely see the kind of OPEX spike that DCB has seen. OPEX from sub 50%, cost to income has gone above 64% and thereafter tapered. We're seeing in this quarter specifically a flattening of sorts with regard to the OPEX number. Can that sustain is really the question that I would look out for. And we'll, of course, quiz the management on that as well. And the other piece which, I would be really keen to understand is how is all of this asset quality issue in the industry playing out on DCB's numbers, and what we can expect going forward, both in terms of growth as well as in terms of numbers on asset quality. Because typically smaller banks, the size of DCB, 40,000 crore odd in terms of assets, can grow at a far higher growth clip. Is there a reason why they are holding back, or can they now scale up on growth? Is a question that I would like to ask. But just some of those.
Yeah, no, actually, that's a very pertinent point, Harsh, that you made, because I was just looking at the size of the bank, and it's been around for a while. It's not, even in the listed space, it's been around for a while. And I know that it was incorporated just in 1995, but it still has had plenty of time to, consolidate and perhaps grow to perhaps a size that it may not be necessarily at this point in time. I'm just looking at the technicals here. I'm looking at the way the chart is coming through. And over the last 2 years, that is maybe a little less than 2 years, since April of 2023, the stock has continued to make, or rather take support at the mark of about 107, 108, 109 rupees per share. Currently, given the kind of market conditions that we've seen, it's not too far away from it. But I'd also like to point out that it's usually moved within a very narrow range between 100 to 130 rupees per share over the last, maybe 2 years. Notwithstanding a little bit of a sharper volatility that you see here and there. And of course, in the same period, it has moved up to about 162. But again, it's just something that, it's not seen a significant amount of appreciation. And I reckon that all the shareholders waiting by are possibly looking forward to, a jump in growth, especially, like while Harsh mentioned that you're looking at a mid-teen growth for a bank of this size, perhaps investors are expecting a slightly faster growth coming in. So that's what we're keeping an eye on. But I just want to ascertain if we do have the management of, okay, so we do have the guests with us, but before that, let's go across and take a look at the final rating on the several parameters that we have put through. So it's largely a neutral rating for the income statement. The balance sheet is again a thumbs up for sure. We have neutral to slightly positive ratings as far as the operational metrics is concerned, along with asset quality among the other set of parameters as well. out of the 8 parameters, it does not have a thumbs down on anything except for street credentials, and that is basically your returns on the stock. Well, thumbs up certainly for valuations and street coverage, so that's something that we can keep an eye on as well. So an overall rating of around 5 out of 8. But let's get in the management. We have with us Praveen Kuti, who is the MD and CEO of DCB Bank. Praveen, good afternoon, and thank you so much for taking the time out. Praveen,
Thank you for having me here.
Absolutely. Praveen, I actually wanted to start off by asking you about the expectations of growth coming in, especially when it comes to your net interest income as well as profitability. What can we expect going forward when it comes to FY26 specifically? So, more or less of what we've seen so far in the past 2 to 3 years, or can we expect an acceleration here?
So there are a few things that you'll see repetition of the past, and there are some things which you'll see change in the future. One of the things from a repetition of the past is that if you were to see the last 5 quarters, we've been growing consistently around the 19 to 20% YOY region. I would presume that that will continue in the future as well. Having said that, there are some strong headwinds on the unsecured space, plus liquidity is getting tight. But I think we have the wherewithal to grow at these kind of, to repeat these kind of performances from a growth perspective going forward. So that probably will be the continuation factor. What will change, and what we're really trying to make a change, is that earlier when the top line used to grow by 20%, the NII used to grow only in single digits. The last 4 quarters has been 4%, 5%, 7%, and now 15%. So one of the tasks before the management is to improve that and get NII growth very similar to the top line growth going forward. So there's a lot of focus going to be on that area. Plus, the kind of effort that you put on the fee line has started yielding some results. So look at the core fee income more than the total fee income. It's something which we are reasonably happy about. The cost discipline, we're tightening the belt a bit, and that is showing some signs, early signs. I mean, we're to see how the consistency of performance goes will come through. And on the credit cost, which is the 4th parameter, in these troubled times, keeping the NPA stable is something which we are okay with, we're happy with. And possibly on a go forward sense, improving the NIM would be very high on our priority list.
Okay, Mr. Kuti, Harsh also joining in. First question on the margin. Hi.
Right.
So my first question is on the margin, because if you're talking about a similar growth clip on the NII as on the advances, the only way to do that is margins. But margins for you have contracted a wee bit when you're looking at it over the last 9 months, thereabouts, quite a bit there. What's happening there? And can we see it revert back to 3.6%, where you've been for quite some time?
It's a bit of an ask, but what we are happy with is that our descending, the reduction on NIM has been arrested. We have grown NIM in the last quarter, primarily on the back of yield and advances improving by a higher percentage than the cost of funds. We'd expected the cost of funds to remain flat, but that hasn't worked out. It doesn't look like it's working out in the future also. We're seeing heightened activity happening on the deposit market. So it's a bit of an ask, but we're very happy with the fact that we have turned the direction, and work is underway to improve the NIM. I can tell you one way we will not be improving the NIM is by getting into unsecured loan. Or that's not, we would stay within the framework that we have, the strategic framework that we have, which is holding us in good stead from a NPA perspective, and that within that framework we would see the growth happening. Possibly you will see the NII growth inching up to the top line growth by the second quarter of the next financial. So like I said earlier, there has been a creeping up of the YOY. It's converging with the top line growth, and possibly the top line growth being equal to the NII growth, or the other way around. We would see that happening in Q2 of next year.
Praveen, can you give me an idea about what you can expect from maybe your gross NPA and net NPA ratios, while they have remained stable in general, there's a little bit of a sequential creeping up, at least not a sequential pardon me, but your net NPA ratios have seen a little bit of an up move when compared to the end of FY24. Your gross NPA ratios remain largely at around 3.1. What's the way forward here?
Our focus is on ensuring that we have better resolutions coming up and better slippages. For a bank which is primarily looking at secured asset, I think our slippage ratio is a bit higher than what it should be. So there is a lot of focus going into ensuring that the fresh slippage comes down. There are multiple reasons why the slippage is high. We are in the gold loan segment where discipline is not there. But frankly, all that I believe are just excuses. We have to better control our fresh slippage. So a lot of focus is going in there and on better resolutions. And frankly, considering the fact that most of the book is secured by self-occupied residential property, I believe that we have a good chance of improving our resolution rates as we go along. Having said that, the MFI, we have a small book of MFI. That doesn't augur too very well. I don't think we have seen the end of it yet. There are some pains coming from there. We can't wish it away. But since it's very small in the overall scheme of things, I still think that we should be able to keep a tight rein on the NPA ratios going forward.
Okay, I'm going to couple 2-3 questions together and put it across to you, Mr. Kuti. First one being on OPEX. OPEX has been elevated. Are you going to calibrate it back in this credit cycle? That's point number one. Point number two, do you expect this credit cycle to play out in a larger fashion over the next 2 to 3 quarters? Is it going to impact your numbers? And therefore, what should that do to ROA expectations? Would ROA take a knock for 2 to 3 quarters lower? Is Q4 that quarter where that will happen?
Let's talk about the cost to income ratio or cost to average assets. If you see, we are in the current quarter, we are at 2.59%, which is way better than the cost to average assets that we have achieved in the last 4 quarters. Definitely better than the last quarter, definitely better than each of the prior quarters leading up to the last year. There is if you were to see our staff cost, the number of staff has reduced. So there is a lot of focus on productivity, and that is giving us, improved cost to income and cost to average asset ratios. On a go-forward basis, our thrust is we are a very people-driven bank. So it's very, very essential that if you have to get the ROA formula right, productivity has to continue in the same trend, has to continue improving on the same trend. So that's a key element of keeping in the range of cost to average assets. At 259, is that where we want to be? We probably want to be below 2.55. On the credit cost, we always have mentioned ever since the abatement of COVID, that the model supports a 0.45 to 0.55% credit cost ratio. We're currently at 0.38. Why we are at 0.38? Primarily because you're getting the benefit of higher provision on restructured assets, and the restructured assets are currently running down. It's just about 2% now. It was as high as 7 or 7.5% earlier. So that benefit will kind of erode over a period of time. Every passing quarter will be less than the previous one. And I would expect it to go back to the 0.45, 0.4 kind of credit cost on a steady state basis.
Okay, Praveen, we'll leave it at that. Thank you so much for joining us here on NDTV Profit. We look forward to the next set of numbers as well. Thank you so much.
Thank you for having me here.
Likewise. Well, on that note, we are at the end of this edition of Know Your Company, but lots more lined up on the other side. Stay tuned, and we will be back in just a bit.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years,
Hello and welcome to Markets at 12. I am Puneet Zaveri, and let's quickly look at the market first because there's been a downward pressure across the days from the start of the session. And let's pull up the Nifty 50 first, and we've seen that pressure continue and just seeing some slight recovery in the last 10 to 15 minutes, but overall we have seen a lot of pressure. Let's also pull up the top constituents of the Nifty 50 as well on the advances and the decline side as well, and let's look at the key contributors. While ICICI on the back of Q3 earnings, and we'll address that in the show, has been on the positive side. We are seeing some pressure by Infi as well as TCS among other constituents on the Nifty 50 as well. Let's also quickly look at the advances as well as the decline ratio as well in this particular market, because we are seeing a constant more than 2,000 stocks declining, and it's been a one-way downtrend in the market today. Let's quickly look at the mid cap as well as the small cap 250 as well as being one of the other makers, because we are seeing a 2.5% correction on the overall mid cap 150 index, while the small cap 250 has also been affected roughly almost 3.7% down. And finally, just Nifty 500, top gainers and losers, and I'm pretty sure we're going to see a lot of other correction across stocks. Laurus Labs, we're also going to address that in the show, down almost 12% in trade today. The other ones, Gujarat Fluoro, are affected, and Tejas Networks has continued its downward momentum. Ever since this, Q3 earnings, it's not been a pretty picture for the telecom players. Welspun Corp also on the downside. On the positives, we are seeing just a 3 to 4% positive growth signs, recovering after that 23% fall post its Q3 earnings last week. DLF also putting some onward pressure on the positive side, and that's also on the back of its Q3 earnings. But the one stock that I want to talk about and start the show with is Credit Axis Grameen. Now, after its Q3 results, the guidance has again been cut in this particular quarter, and we've seen a steady recovery in the stock. It started down 15% in trade. Post that, we have seen steady recovery, and brokerages have also come out. In this case, Nomura has given a reduced rating to Credit Axis Grameen with a target price of about 800. Harsh joins us to bring in more details about what went wrong with the stock and what is Nomura actually saying.
Well, more pain, Puneet, very frankly, is what Nomura is suggesting while you're seeing a bit of a recovery on the stock. What Nomura has done is they've reduced the target price from 850 to 800, which is roughly a 13% downside before the move today. Now, just in terms of what they are seeing, they believe that it's the first ever loss, quarterly loss for credit access in a while now, and therefore that's the one big negative. Credit costs continue to mount for the company. Your net interest income is seeing income reversals, interest income reversals, which is also causing pressure on margins. Growth guidance has been reduced from 20+% to single digit, and therefore not enough comfort on what's going to happen to asset quality going forward. There's going to likely still be more pain because there are certain pockets, including that in Tamil Nadu, where there still continues to be pressure. This is, of course, basis whatever management has suggested as part of its commentary. And therefore, no respite here is what Nomura seems to be suggesting. They've not downgraded the rating because they, in any case, had a reduced rating on this one, but they've surely downgraded the target price, 850 to 800. And that's where a lot of the pressure is already being built in, both on the back of numbers as well as on the back of how brokerages are viewing the numbers.
Well, thanks for that, Harsh. But, stay with us because, ICICI Bank has also announced its Q3 earnings over the weekend. Now, we did see, some pressure on the retail slippages. And, just talk us through what worked for the company in this particular Q3 results and something to watch out for because the stock is reacting positively in a market which has seen a lot of pressure today.
No, absolutely. So Puneet, ICICI is the more fascinating one because it's a quarter where all lenders have in some form seen a little bit of pressure on provisioning and asset quality. ICICI is one of them which has given a beat or delivered a beat with regard to provisioning. We were expecting provisioning of roughly 1500 odd crore. The number has come sub 1300 crore and flat on a sequential basis. So you're not seeing any, absolutely any pressure when it comes to provisioning and asset quality on ICICI. The metrics remain robust. Your margins, in fact, have shrunk lesser than expected. Your ROAs have held up very, very well. I did mention on Friday that if an ROA number north of 2.3 or 2.35% were to come in, I would be very, very impressed. And that's exactly what ICICI seems to have delivered on that count. The only possible blip with regard to the numbers was on the growth front, where maybe growth has slightly tapered a bit. But outside of that, you're seeing extremely good set, very steady set of numbers where ICICI Bank is concerned.
Well, thanks for that, Harsh, for giving us a detailed lowdown of what the key numbers are. But in fact, here's what Sandeep Batra, the Executive Director at ICICI Bank, had to say about the retail as well as the rural slippages, which you also addressed during the company's call. Listen in to a bite of this conversation.
Gross additions that we have had within the quarter were about 6,085 crore rupees, out of which retail and rural were 5,300 and the balance was from corporate and business banking. We also had recoveries of 3,392 crore rupees, out of which retail was 2,786 crore rupees. This resulted in the net NPA additions of 2,693 crore rupees. So that is on the NPA side. Giving on the percentages, I think this is an evolving thing. We are focused on the quality of the book that we really underwrite, and we have been sort of comfortable with the approach that we have taken. So this will keep on evolving. So that's where we are. We continue to closely monitor and identify early build-up of stress, but overall the quality of the book is stable, and we are very happy with that.
Well, that's on ICICI Bank, and we've seen some positive reaction on the stock, and Harsh also mentioned that ROA figure over 2.35% is what's driving the stock today. Another stock in the banking space that's been down is IDFC First Bank, also on the back of its Q3 earnings. Now the stock has fallen roughly about 6% and it's continued its downward trajectory, now down 7% since opening. And one of the key aspect was the increase in provisions for the company as well as the margin picture as well. We spoke to, the MD and CEO, Mr. V. Vaidyanathan, on the quarter gone by. Listen in.
What has changed is basically the MFI business, which is about 5-point-something% of the bank of the total book, continues to have issues in the industry, as you might have seen, and for us also. So we have taken increased provisions on the microfinance book, and the good news is that the deposits of the bank is coming very strong, because deposits is of the raw material to do business, and that's coming very strong. The other good news is that except MFI, the rest of the book, which is the entire retail, the agri and MSME, what they call the RAM portfolio, that is doing fantastically well. We put out the numbers publicly about our SMA, gross NPA, net NPA, everything. So that portion is looking very good.
So, well, that was IDFC Bank, and you've seen, the stock take a beating, and it's been in a downward pressure ever since its Q3 update came out. But in conversation with senior research analyst from Bernstein, Mr. Pranav Gundapalli talks about how the asset quality issues are confined with MFIs and more. Let's listen into this conversation as well.
Overall, on the asset quality front, I would say not just the couple you mentioned, but also if I look at the other larger banks that have reported, I think it's safe to say that the asset quality issues are rather confined to MFI and a few pockets of consumer lending. If you look at S-Bank's limited exposure to consumer, they've not seen a broad-based deterioration in consumer asset quality. I think going into the quarter, the big concern was, will the asset quality issues spread from pockets of PL and credit cards into the broader consumer lending segments? That has not played out, and I think that's an overall positive. And for the banks with exposures to MFI and pockets of consumer, yes, we have seen deterioration, but that was largely expected. So I would say so far, the trends at an overall level aren't as bad as what was feared. And I think that's a positive for the overall sector itself.
That's the view on Bernstein.
For the safest bets remain the large two private sector banks, HDFC and ICICI. I think in a couple of quarters, we should, or maybe even within a quarter, we should be looking at opportunities to bottom fish, because a lot of the lenders have taken a big hit in anticipation of asset quality woes. For example, IndusInd is almost trading at 1x price to book due to the fears on how bad the asset quality in the MFI segment will play out. I think with the
policies that they fit. Now, one possibility is that you give them more revenue from the national kitty. The other possibility is you allow them more freedom to act. So for us, we've always thought about, we'll increase the share of taxes that go to state governments. That again is, maybe it was okay to begin with, but you need them, maybe our constitution doesn't allow it, various things. Another thing actually on the constitution, since much is talked about, take the GST taxes, and which gives states a lot of power, etc., to enact not invisible, but popcorn laws. Let's call them popcorn laws. Now, the center can issue, it need not be unanimous that everybody has to agree on, okay? So I want that states should have much more discretion in terms of, and what is happening already with the farm laws, that the states are enacting some very favorable, some states are enacting what the farm laws attempted to do in 2022. So I think, allow states much more freedom of action. Different states will proceed at different speeds, and so be it. But that is the first answer to that question. Then the other thing was?
I asked you about semiconductor, because this is the first thing you said, sir, when we started this conversation, that infra is also technology.
Yes.
And I think the one thing that India is really focusing now is to become a major player as far as semiconductor space is concerned. Your thoughts on that as we wrap this?
We are, again, there are many aspirations that we can realize if we go about it the right way. So I think the GCC, already a lot of the software development, etc., is happening, which is linked to semiconductors. And semiconductor is the next big issue. I think there again, I don't know how we can do semiconductors without FDI. Has to be a major player in there. There's a lot of very good indigenous technology, but it's the collaboration. So, why are you ruling out collaboration? And that is why major objection. They will offer foreign investors, or not foreign investors, foreign firms have something to offer, especially in the area of technology, and we have. Now, the world is fast changing. And, take, for example, I don't know if you've seen the latest news on AI, that China has developed an AI product which is open source. So, it really, I guess, my plea on whatever the issue is, recognize dunya badal gayi hai. And the same rules do not apply. And this is the same for every country. So we need to incorporate ourselves, especially with our Viksit Bharat dream, which is realizable, that we cannot do it with business as usual. We cannot, impossible.
Thank you so much.
Well, that's Sujit Bhalla talking about the future of EVs as well as what to look out for in semiconductor world as well. But another set of stocks which are on our radar is, of course, JSW Steel, which reported its Q3 earnings, over the weekend on Friday specifically. And the company did come out, while the profits were down 70%, it did beat estimates. Along with that, Tata Steel is also expected to report numbers today, and it's expected to be a slow quarter. Company is expected to report the loss. My colleague Mihika brings us a lowdown on both these stocks.
I'll start off with JSW Steel. We've seen revenues decline 1.4%. EBITDA is down 22%. Margins are at 13.5% versus 17.1% a year ago. And net profit has fallen 70% on a year-on-year basis. However, it's key to know that the EBITDA numbers have beat estimates and profits are in line. In terms of what impacted earnings, well, EBITDA was impacted by inventory changes and increase in fuel costs, while net profit was hurt by a 1,391 crore comprehensive loss and an exceptional item. One of the key negatives that we have seen in the management con call, that the management has cut their FY25 sales volumes guidance by 2% to 26.5 MT. However, Q4 outlook has some tailwinds in terms of seasonal growth of demand, softer iron core and coking coal prices, and a potential safeguard duty to protect India from steel imports, which could increase the domestic prices. And then when you come to Tata Steel, well, it's a weak quarter expected for the company as well. This is something that we've seen across the ferrous space. Revenues may fall 5% as per estimates to over 52,560 crores. EBITDA may fall 27%. Margins are expected to contract 210 basis points to 9.2%, and a net loss of 226 crores is expected versus a profit a year ago. Now, in terms of what is expected to impact earnings, well, lower steel prices are prices to lead to a decline in revenues. 8% year-on-year drop in steel prices is what we've seen in Q3 FY25. This will impact the company's realizations. Lower steel prices are also expected to, partially offset the benefit of the lower coking coal prices the company would have gotten. And in terms of losses, well as the international businesses that are expected to be in losses, the European business could have a consolidated loss. The Netherlands is expected to have an EBITDA loss, and the UK business is expected to continue to see losses. However, it's key to note that the losses at the UK and Europe operations are expected to decrease on a quarter-on-quarter basis.
Well, thanks for that. We also spoke to the joint MD and CEO of JSW Steel, Mr. Jayant Acharya, on the quarter gone by. Listen in to that chunk of the conversation.
So this quarter has shown very strong operational performance. Our volume, production and sales both have been very strong. On the volume side, we crossed 7 million tons, and that has been a very strong growth, primarily pushed by our new furnace in JVML, which has come on stream. Sales have been very good, aided by specifically India operations at 6.71 million tons. It grew by about 12% YOY. And domestic sales grew by 14%, again, the ever highest domestic sales. Although the prices did drop because of the China, I would say, dumping and cheaper imports coming in from basically different parts of the world, but we still could offset the lower realizations with a lower cost, and we were able to blend better product mix into our overall volume. So therefore, our value-added and special product sales went up, and that also created some positive realization push. And our efficiencies overall improved. So this basically played into the quarter EBITDA. On a quarterly basis, I think it's important to look at the recency factor. YOY is one part, but I think on a quarterly basis, our EBITDA on a consolidated basis went up by close to 3%, and on a quarter-on-quarter basis, PAT went up by 78%.
Well, that was the MD of JSW Steel talking about a better outlook in Q4 and at least a 10% growth. But President Donald Trump has announced a freeze on almost all new funding for foreign assistance programs, which will negatively impact on stocks like Laurus Labs. Now, Varsha will give us more details on this and how will this impact this particular stock. Varsha.
Thank you, Puneet. So yes, US has suspended new funds for 8 programs. Now this is huge negative for US antiviral medications companies like Laurus Lab, Aurobindo and Cipla, and also Strides Pharma. But let's see what the news is. So the foreign aid pause ordered by the US will actually stop funding for PEPFAR, which is President's Emergency Plan for AIDS Relief. Now this program provides life-saving antiviral medications to millions of people with HIV. Now funding may, the reports are that this is a temporary and funding may restart after a 90-day review. This program has helped 20 million plus people in 55 countries. Now why are we focusing on this? Because Laurus Lab, Aurobindo Pharma, Cipla and Stride Pharma are actually part of these programs. But if you see, the Laurus Lab is down almost 12%. Now let's see, maybe Laurus Lab won't be affected that much. Let's see why. We have Motilal Oswal's note on Laurus Lab, which says that the ARV sales for Laurus is forms almost 46% of sales, forming 9% of the consolidated sales. Now ARV business, if you see, is a relatively less profitable business compared to the other segment for Laurus, and this is the reason the maximum impact on EBITDA for Laurus may be 4 to 5% of FY26 as per the Motilal Oswal. And also the good news is that the Laurus Lab has actually stopped investment for ARV business almost a year back. Now the next leg of growth for Laurus Labs is actually the CDMO business, which they have been investing a lot. So overall, this is the news and why these stocks are under pressure.
Thanks for that, Varsha. But another stock that's beating this downward trajectory of the markets is DAM Capital. Now the company reported a 64% growth in its overall revenues, coming in at roughly 104 crores, and it's a newly listed company. So this is the first quarter of reported earnings. Net profit has zoomed almost 2 times to come in at roughly about 52 crores versus 22 crores in the same time last year. And for the 9 months as a whole, the revenue has grown more than 100%. While the stock, the reaction initially was much, positive, and it's come down to almost 3.9 to 4% right now. Intraday has moved downwards, but watch out for this stock going forward as well. The commentary on the listed IPOs, 18 more transactions expected as per the company's presentation, so another one to watch out for. But one more stock that's actually Morgan Stanley initiated coverage on International Gemological Institute of India, or IGI, but that's not helped the stock too much in terms of positive coverage. It's down. It was down about 7 to 8%. And Mahima brings us with key details of this particular report, as well as what the target price is expected by Morgan Stanley.
Right, Puneet. So as you rightly mentioned, it's initiated overweight coverage with a target price of 617. But yeah, it's not helped the stock much today. It's down about 6.5% as we speak. But long-term view of MS on this particular counter is bullish. They're saying that it's the only player in the certification business. While diamonds are forever, most of the consumers have lacked the purchasing power to acquire them, which is why lab-grown diamonds is now picking up, and the industry is also growing. And this could help, change the entire view of of perspective in terms of people viewing diamonds as, and through this proof, the concept is still a work in progress right now when it comes to the lab-grown diamonds, but IGI is an interesting way to kind of position when it comes to a potential success of LGDs. What they're saying is that the high entry barrier into this particular area of certification of diamond business is the key moat that IGI operates on, which is why they are pretty bullish on the counter.
Well, thanks for that, Mahima. But let's just pull up Balakrishna Tyres as a stock. The company just had its conference call today at 11 o'clock, and while the earnings did beat estimates, it's been a flattish quarter for all tire makers. And, we are seeing the downward pressure about 2.5%. But it's one of the tire stock that's bucking the trend across, of lower volume growth. So while the company has mentioned that they can't give any kind of guidance for fourth quarter, and that's been one of the key aspects, but their off-highway tire segment has grown pretty well. They've also reported a decent quarter in terms of, the Q3 of FY25. So stocks seeing some pressure after opening in the green, but, compared to the other tire makers, and if you can just pull up Apollo Tires, CEAT, and just see that 1 month chart, because we will see that kind of differentiation between Balakrishna and the other ones as well, because we're seeing a pressure. But also let's show the 1 month chart, because that shows the real picture of difference between something like a Balakrishna Tire as well as CEAT, which has already reported its earnings. So CEAT is almost down almost 11% in this just the past month, while Balakrishna also has been struggling almost 9.5%. It's the only one which has actually shown 11% growth in terms of sales volume in the first 9 months. So quarter 4 will be very interesting for this counter as well. The other one I just wanted to pull up was RPG Life Sciences, another stock that's been seeing very positive outlook, and that's also on the back of its numbers as well. And in a day where we are seeing a lot of pressure across the broader markets as well as the mid cap and the small caps, the stock is up almost 9.7%. On EBITDA margins for the company has come in at roughly about 28.5%, while net profit has grown 32%. And also just pull up Sagar Cement as well. The cement makers, it's going to be a dull quarter overall. Pricing action has been minimal. And while the stock actually had opened lower, it's slightly recovered towards the last hour or so. You can see that it's down 1.4% now. And revenues for the company down 15% in this particular quarter, while they did report a net loss of about 54 crores, which is much higher than what they had anticipated, and also higher than the same time last year of almost about 10 crores of loss that they reported as well. The other one, just on the realty pack as well, DLF, we did highlight at the start of the show, bucking the trend of the Nifty 500. Also pull up Macrotech as well, because the company's pre-sales guidance has been pretty strong in this particular time frame. It's almost up 32%, and we're seeing some positive reaction. We also spoke to the management in terms of the content case of versus the between the brothers right now, but stock seeing some positive reaction as well. But with that, that's all the time we have on this particular show. Stay tuned to NDTV Profit for more.
I present the budget for a historic.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMCs
Hello and welcome to Profit Buzzers. You're watching NDTV Profit and this is Hiral Datia. Let's quickly take a look how markets are panning at this hour. There is pressure which is building in, and what's interesting is it's just ahead of the budget. We're almost near the day's lowest level. Some recovery from a low of 22,826 has come, and we've still managed to go above the 23,000 mark. But how sustainable this is going to be interesting, because what the street is looking at is high amount of volatility this week. And that is the key as well, because one, you have the monthly derivative expiry, so there are shorts which are building up across the markets, and you know how the expiry behavior will impact the volatility, which is expected to be increased this week, is going to be interesting. Clearly, you had Nifty, which was consolidating in the 200 to 300 point consolidation zone. So from here on, a such smaller range cannot really hold for very long. And that's one of the reasons we might see a break that could come in on either sides, during or after the budget. So interesting space to watch out for. Let's just quickly pull up Bank Nifty on the screens as well and see what the financials are doing in trade. There you go, a recovery, and now we're nearly at the day's highest level. So a good recovery that's come in with regards to where Bank Nifty goes, 100 points on Nifty, and this is what we're seeing in terms of Bank Nifty. Broader markets, let's just pull up the mid cap and the small cap index as well. Still, again, the downtick continues. 2.5% cuts on both these sides, 3.5% in terms of the small cap index. And very quickly, in terms of individual stocks, let's just pull up Nifty 50 heat map, and you'll see where is the gain and where are the losses coming in? RIL, HDFC Bank, two biggest losers. In fact, RIL did have a target price cut today as well. A sell call coming in from one of the analysts who was tracking the technical chart. So that is one stock which is under pressure. But apart from that, Power Grid, Tech Mahindra, Wipro, HCL Tech, so it's IT, and Tata Motors, which is down in trade. What's holding up is a Britannia, ICICI Bank on the back of earnings, SBI, HUL, and M&M. In terms of broader markets as well, let's just pull up few of the individual names, because apart from that entire drag that you're seeing in the markets, there are few pockets which are holding up as well. So you have the names of a DCB Bank on the back of earnings is up. Bank of India is up in trade. Sobha Science is seeing some bit of a recovery in today's session. And you have a Laurus Labs on the back of earnings, 12.5% downtick. Anant Raj trading under pressure, NetWeb trading under pressure, Star Finance trading under pressure. So that's what the markets are looking like. But one stock which is in focus is a Mankind Pharma. Let's quickly pull up that one on the screens and see what the counter is doing in trade. Overall, if you see in terms of the revenue, the growth has mainly been driven by outperformance in the chronic business. There is strong recovery in the OTC medicine business, that is over-the-counter medicines. And there is consolidation with regards to a Bharat Serums and vaccines growth that has come into play this time around. And that is what is diluting the earnings performance. And this is data that I'm picking up basis what Varsha has pulled up as well. So Varsha, very quickly, if you look at a Mankind as well, three things that stand out for you.
Yes, Hiral, thank you for that. So one is the BSV consolidation that the company has done, and also company has taken some corrective measures which has actually reduced some of their domestic growth, but overall the domestic growth has been a double digit. Well, there's been EBITDA margin expansion also, and good growth that we have seen from a BSV integration, and the corrective measures have actually will actually help company for their EBITDA margin expansion. So overall consumer business, if you see the over-the-counter business has seen 30% growth. Also in last 5 years, Mankind had taken corrective measures in their consumer business also, from where now we are seeing that fruits. So good business when it comes to consumer OTC products, and also India business we have seen the double-digit growth. But the interesting part here, Hiral, is if you see the net profit, actually net profit decline. Now one of the reasons is the increased interest cost because of the BSV acquisition that they have done. So that was one of the negative highlight, I would say, for the company.
Right. Thanks for that, Varsha. In fact, let's also get in Rajiv Juneja, Vice Chairman and MD at Mankind Pharma, and pick it up from that. From Rajiv, firstly, good afternoon. Welcome to the show, and a pleasure to speak to you as well. My first question coming to you is, how are you reading the numbers? Because the corrective action that you've taken, that is what is leading to this kind of a performance. So do you think a hit that could come in terms of the fourth quarter as well?
And there are two kind of companies. One company is that which are concerned about their appearance from outside. The second kind of companies are those who are always concerned about their substance from inside. So we fall in the second category. We are always are happy and sad on the basis of how strong we are from inside. We are very happy that we have taken these corrective actions. And from where this idea came of correcting certain things, the idea came when we took corrective actions in our OTC side. And then we saw a lot of improvements. That gives us confidence that now onwards things will be better. Whatever corrective actions in terms of leadership, a change of leadership, improvement in our finance side, our IT side, automation, extra stock, extra discount, whatever were there, it really happens. Over the period of time, a lot of times companies hire these big four and say, let's deep dive and go and tell us where my company needs improvements. So we did this 5 years back. We have done it again, and we found that there are certain things we should correct, and we have done it. 90% has been done. Rest 10% would be over within this quarter. So hopefully this is the end. Whatever was to be done is done. We hope that next year will be much better as per our expectations. even this year, our EBITDA margin will be better than what we said on the upper side. We said 25 to 26%. This will be a bit more than 26% this year. Next year, I feel that will be even better.
Right. So, Rajiv, one quick question. When we are building in our estimates as well, what is that number that we should be considering for the fourth quarter? Because I understand there could be some bit of a rub-off effect, but the bounce back will happen in FY26 because the profit numbers don't match, right? 380 crores is what you've posted versus a street estimate of 470 crores, and where the hitch is on the back of the interest cost and the restructuring that's happening, right? So, what should you look at in terms of the fourth quarter?
Feel fourth quarter would be, better than the last year fourth quarter, as far as the EBITDA is concerned. That I can give you. I'll not give you the numbers because things are happening, things are in progress, and we hope that our growth will be better in terms of number, in terms of even top line than the last year.
Varsha this side. Your consumer healthcare business grew 30% year on year, which is quite fantastic. But what are the key drivers behind this growth, and how sustainable do you believe this growth will be? And what are the further investments that you have planned for consumer business?
We said last time that we had a lot of distributors. Once we carved out our consumer division, we stopped the supplies to those distributors. So we started working like a OTC division. Earlier, our consumer division was a mixed bag of pharma and consumer kind of a culture. New leadership came, new systems came, new style of functioning came. A lot of marketing guys from OTC companies were hired, and that basically has brought our growth to this level. 30%, I will not say will be there in future, but yes, we expect the growth will be much better. Even this quarter, we estimate around 20% growth. Fourth quarter, I'm talking about, as well, our growth will be in high teens. Next year also, we expect our growth in high teens. As far as the investments are concerned, I don't think any kind of investment, extra investment is required in our consumer division side.
Got it. Also, there were some regulatory issues which has impacted your anti-infective portfolio. Can you give some details on that?
That is not much. That is only, had those things did not happen, there would be a jump of 0.5% in our sales and growth. That's not much. These kind of challenges keep coming, and we take these challenges in our stride. I'll not give much of importance to these. Any company which is progressive company understand these things are bound to come.
Got it. Also, just sticking to the financials, the net profit was impacted because of the high interest cost. Now, Mr. Juneja, isn't the interest cost too high considering the 7 to 8% is the rate of interest?
The interest cost is more because when we took the money was taken, approximately 10,000 crore rupees. So that basically comes in account. Now we have paid back 3,000 crore rupees have come from QIP. This will be under the approximate, whatever interest cost would be around 8%.
Repaying your debt, in FY26, you'll be repaying some amount of your debt, and what that amount would be?
So we are repaying the debt, and by the end of this quarter, by the end of this year only, our debt would be in the ratio of 6,100 crore only.
Okay.
Because we are on the verge of hiving off one of our side business, which is a hospitality business. Once it is being done, this will be done in this quarter only. The net debt to Mankind would be around 6,100 crore rupees. We feel by March 25, this will happen. We are moving very fast.
Talking about your BSV portfolio, now, will the restructuring that you have taken, will this lead to flat growth in BSV in FY25?
3rd of October, we have taken BSV. Just how many days back? 1. there are two BSVs in one BSV. One BSV is original BSV, which we acquired. The second BSV is the company they acquired, TTK. So that TTK prescription company will come in the fold of Mankind side. The original BSV will keep growing, but as a whole BSV will have some kind of a growth.
Right.
So is it okay now?
Yes, please go on.
Yeah. There are two BSVs in one BSV. One BSV is original BSV. The second BSV is the TTK, which they acquired a year back. So that prescription TTK would come in the fold of Mankind. And we feel once it comes in the fold of Mankind, there would be synergy of approximately 100 CR because a lot of correction will happen over there. Efficiency will be brought in. People will be reduced. Portfolio will be, diversified in other divisions of Mankind as well. So we hope by the end of this year, as a whole, the total VSP would have some growth, but original VSP will have double-digit growth.
Right.
And next year onwards, we'll see much better things because how many days back we have taken. Once you take a company, it takes time to really understand the company.
So I think FY26 is going to be turnaround year for Mankind as well, taking into consideration the course correction that you've done. Thank you, Rajiv, so much for joining us on the show and sharing the views. So that's Mankind Pharma company that you should be watching out for from an FY26 perspective as well, with all the course correction. But let's quickly address the breaking news on the screens on the Adani Hindenburg case. The Supreme Court has gone ahead and dismissed any further appeal with regards to where hearings are concerned in the Hindenburg matter. Clearly, this has been a significant development where the appeal was filed by Vishal Tiwari regarding the Hindenburg's second report on Adani, which involves the compliance of a judgment that was passed by the court on the 3rd of January 2024, making it clear that it will not entertain any new petitions related to the Hindenburg matter. In fact, this judgment has actually directed the SEBI to complete its pending investigations and submit a report as well. Overall, a positive news coming in there where the Supreme Court has gone ahead and dismissed any appeal for further hearings with regards to where the Hindenburg matter goes. And clearly, they were seeking reconsideration of this decision where Tiwari had gone ahead and filed a fresh appeal requesting that the new Hindenburg report also be included in the investigation. In fact, his appeal was listed before a bench of Justice P.D. Pardiwala and Justice R. Mahadev. Clearly, this appeal has been dismissed. In fact, let me go across to my colleague Charu, who has further details on the same. Charu, what are you picking up? This is positive news coming in there for the Adani Group, where the Supreme Court has gone ahead and dismissed and refused further hearing.
Yeah, so a very positive news for the Adani Group, as one petitioner had approached the apex court of the country asking for inclusion of the second Hindenburg report regarding the Adani Group within the ambit of the case and bring scrutiny over it. However, the Supreme Court bench rightly and outrightly, in fact, dismissed the appeal, saying that it has already decided previously, in fact, to not entertain any more pleas regarding the Adani Group or Hindenburg case. Now, it is also to be noted that during the proceedings of the court, the bench also discussed how much of cost should be, directed to be paid by the petitioner for such a frivolous appeal. However, no cost was imposed and the appeal was dismissed. So, all in all, for now, it is a positive news.
Absolutely. Thank you, Charu, for getting us the details. So clearly, the court has also made it clear that it would not entertain any new petitions or applications related to this matter. And the court's decision has actually gone ahead and put an end to further petitions concerning the Hindenburg case. And the matter is actually considered closed, leaving SEBI's investigation process at the focal point for future development. So that's with regards to where the Adani Hindenburg case is concerned. But moving on from there, let's actually shift focus to a lot of earnings that have come in, during the weekend. To top the list, firstly, you have ICICI Bank that is in focus. Let's pull up that one on the screens. The stock, if you see in terms of trade today, is seeing gains of nearly 1%. Let's actually head across to Harsh first to understand what our analysts saying and what has worked and what has not worked for the bank. Harsh, over to you.
To talk about ICICI Bank, it's a standout set overall. You're seeing margins
shrink by just about 2 basis points. It's in a tough quarter to be able to hold on to margins is excellent, and that's what the street is also looking at. And that's point number one. The other one is the provisioning number. It's one of the few banks which has actually delivered a beat on the provisioning where expectations are concerned. Expectations were around 1500 odd crore of provisioning. It's come in at just about 1200 crore plus. It's flat sequentially, and that's what's really standing out this quarter. And that's adding up to your ROA number being at 2.36%, holding on to a very, very high base where ROA is concerned. ROA was at 2.4%. Despite the fact that your margins have shrunk a wee bit, you're seeing ROA hold up very, very well. And we did mention on Friday that anything above or anything in the band of 2.2 to 2.4% in ROA, more towards 2.4 would mean that it's a very impressive ROA number, and that's exactly how the street is also viewing it. Analysts extremely constructive across the board. There's positive coverage, and you're seeing target prices being upped in a very, very impressive quarter. The only possible negative is the growth number, which hasn't come absolutely in line, just about below. But otherwise, it's a very, very solid quarter, and the street absolutely okay with that just about slightly lower growth. And overall, analysts too seem very, very constructive.
A constructive view coming in with regards to where ICICI Bank was. In fact, also let me welcome in Sameer Natwarlal. Sameer, firstly, good afternoon and welcome to the show, and a pleasure to speak to you. How are you looking at ICICI Bank? Thumbs up coming in for this one. Similar was the case with regards to HDFC Bank as well. Do you think the tide is turning in favor of the large cap private banks?
So I don't think the tide has ever been away from the large cap private sector banks, right? I think the interest has always been there. It's just been purely the FI selling where the weightages of these kind of banks is higher than that of PSUs or the mid cap banks, which is why we've seen these stocks kind of underperform. Look, if you go back, HDFC, let's take one stock at a time. So let's talk about HDFC. HDFC has been a bit of a drag and underperformer because of the merger, post that which they have to replace some of their high cost borrowings with the CASA, which is actually not played through because of the fact that deposits are not easy to come by. So, that has been a bit of a issue, and that is why the valuation multiples have corrected. Now, on the case of ICICI Bank, yes, the results were extremely good. I'm actually positively surprised by the fact that the NPAs, not the NPAs, the provisioning has been kept slightly lower, given the fact that there is a bit of stress in the retail book. So obviously they've done something right during the quarter, and that is very clearly visible with the fact that the bank is now narrowing the gap with HDFC Bank when it comes to valuations. We believe if this kind of trend continues, it could very well be that ICICI will start trading on par or slightly, I won't say better, but at least on par with HDFC Bank, which means there is a bit of an upside left. Again, where your analysts factored in something, growth has been a bit lower. But that could be driven by two reasons. One, the fact that they want to ensure that the kind of loans that they're giving are slightly lower risk in nature. Two, we are not seeing that great of an uptake when it comes to loans for the simple reason that capital investment that we were expecting to see picking up is not picking up in the way it has. So maybe once that starts seeing an uptake, we could see the revival in the loan growth, and which would automatically drive the earnings a little further. But yes, overall positive on an ICICI Bank. We remain very constructive on an HDFC Bank also, where we think the valuation multiples compared to historical are lower. And once they finish the entire process of refinancing the high cost borrowing, which will take another year, then what I think you will see is the growth kicking in again quite fast, and the bank's valuations probably moving up by one standard deviation.
Sameer, being positive on ICICI Bank. While Harsh, you are still with us, tell us more about other BFSI counters. You have IDFC First Bank, Credit Access, and Bank of India are three such stocks in focus today.
Yeah, so when you talk about IDFC First, again, Q2's knock effect coming in Q3. You're also seeing commentary which could suggest that Q4 could continue to be a quarter where there will be a bit of pressure. Recovery is not coming through in Q3 either, and therefore you're seeing that bit of pressure with regard to where numbers are concerned. The ROA number not inching up meaningfully from 0.25%, it's gone to 0.4%, but far cry from the highs of 1% plus that it had clocked just about 2 to 3 quarters ago. And that's where all of the pressure is coming through. It's credit cost within MFI. Retail still seems okay where IDFC First is concerned. I'm going to talk about credit access. Again, MFI is where the bigger concern here is. Loss-making quarter for credit access. You're seeing a couple of downgrades, including Nomura, where the target price has been downgraded by quite a bit. You're seeing pressure on the counter on the back of the numbers. Growth guidance reduced from 20+% at the start of this year to just about single-digit, mid-single-digit kind of guidance now. Also your interest reversals starting to kick through. So across the board, you're seeing pressure not only on growth but also on the income statement, where incomes are under pressure because of interest reversals and you're seeing elevated provisioning. All of that is reflecting on the stock price today. Last off is Bank of India, where very strong performance. You're seeing very solid growth, mid-teens from a PSU bank. So therefore, you're seeing that buzz on the stock. You're seeing margins slightly lower, but now it seems like the margin bottom is here. You're seeing ROAs inching up towards 1%. You're seeing provisioning up 10%, down 10% sequentially on a slightly elevated base. When you're looking at it YOY, the base is not comparable, and therefore you're seeing good quality in terms of credit. You're seeing ROA inch up. You're seeing very good growth in a difficult environment, and therefore that reaction on the counter.
Right. Thank you, Harsh, for all the details. Well, on that, let me also welcome our second guest, who is Sneha Seth, who is the senior analyst at Angel One. Welcome, Sneha. Well, you heard Harsh. How are the charts looking for IDFC First Bank and credit access?
Talking about IDFC First Bank, counter has been weak since quite some time. It was trading around 100 zone in the month of September. And now we have seen it increase towards 60 and below. So the counter had a support around 59.60, which it has again breached. It is already trading below all the important moving averages, and the chart structure looks weak, and we may see a correction at least towards 54 would be the first target for me if any correction is there, and followed by the next support zone, which is placed around 48. So these are the support zone which I can see. So looking at the overall chart structure, the counter may continue to remain under pressure. On the upside, in case of any bounce back or any strength beyond 65, 66, that would be interesting for this counter. Until then, the chart structure will remain weak.
Thank you, Sneha, for that. Also, earlier, we spoke to IDFC First Bank's MD and CEO V. Vaidyanathan on the quarter gone by, and here's what he had to say. Listen in.
What has changed is basically the MFI business, which is about 5-point-something% of the bank of the total book, continues to have issues in the industry, as you might have seen, and for us also. So we have taken increased provisions on the microfinance book. And the good news is that the deposits of the bank is coming very strong, because deposits are as a raw material to do business, and that's coming very strong. The other good news is that except MFI, the rest of the book, which is the entire retail, the agri and MSME, what they call the RAM portfolio, that is doing fantastically well. We put out the numbers publicly about our SMA, gross NPA, net NPA, everything. So that portion is looking very good.
Right, so that's with regards to IDFC First. Let's just pull up a DAM Capital on the screens as well. That stock, if you see the revenue, that has seen a growth of around 64%. The stock is seeing gains 4.5% there. Net profits, an interesting up move, 52 crores versus a 22 crores is what you're looking at. So strong numbers coming in there. If you see a CDSL, again, strong numbers in terms of the revenue front. Profits also up around 21%. The stock has been beaten down almost 9% is the kind of downtick that you're seeing with regards to where CDSL is concerned. And you have AU Small Finance, where you have a Nomura, which has gone ahead and downgraded the counter to reduce. They have a target price of around 500 with regards to where AU Small Finance is concerned. In fact, let me go across to Samir. Samir, 3 stocks: DAM Capital, CDSL, AU Small Finance Bank, BFSI, but different spaces altogether. How are you looking at it to start off with the CDSL, which is down 9%?
Yeah, so CDSL is a great counter. It's a duopoly business. Look, we've had a great run in the last few years with the kind of accounts that have demat accounts that have been open, and CDSL has been one of the big beneficiaries of that, obviously. But we are expecting the growth numbers to start slowing down, right? You can't have exponentially continually growing numbers when it comes to demat accounts. So once the growth starts tapering down, the problem simply was the fact that the valuations had run up far ahead of expectations. I think the stock had run up closer to 2,000 rupees. At that point, the valuation were plain outright ridiculous. So what you're seeing now is the fact and the realignment of the market expectation that, look, at some point this growth will start tapering down. The operating leverages have obviously played out really well, but then the benefits of operating leverage once the growth starts slowing down will not be as phenomenal as we've seen in the past. And that is simply the reason why we are seeing a bit of a correction in the stock. It's purely a valuation correction and not to do with the fact that the numbers were bad in any which way. Coming back to the other two stocks that you talked about, DAM Capital is again a business which works. It's in investment banking. So as long as the markets are good and deals are going through where IPO funding or mergers and acquisitions and all of these activities continue to happen, they will continue to do well. But the minute you see the markets struggling the way we are right now, and if IPO starts slowing down, if fundraising starts slowing down, then obviously they're not going to be able to generate the same kind of revenue. And again, then the operating leverage works on the negative basis. So if you have 2 quarters where maybe the markets are sulking and they're not able to do as many deals, then suddenly the profits will see a huge plunge. So that, I feel, is a worrisome factor when it comes to DAM Capital. Not that the business is bad, but this is going to be very deal-based kind of thing. And AU Small Finance Bank, well, the microfinance side is struggling a bit, and guess what? Be it IDFC First Bank, be it any of these microcredit, Grameen, be it AU Small, they've all had a bit of pain, and I think that pain probably could continue for one more quarter. But I think we are closer to the end of the pain, so I wouldn't be as negative on the markets or these banks at the moment. I think once the recovery starts and the growth starts seeing an uptick, which could take maybe 2 quarters, the growth, then I think what will happen is, once the dust settles, you'll see people choosing which of these banks is the one you want to invest in.
Right, Samin. Viewers, it's a time for a short break. Do stay in.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about 3 key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to
Welcome back. You're watching Profit Buzzers. Let's pull up a Godrej consumer on the screens and see what the stock is doing in trade. It's a thumbs down. Weak set of numbers. The stock is down almost 1%. But first, let me get in Mahima to make us understand as to what's worked in this quarter, and what could be the key things we should be watching out for going ahead? Mahima, over to you.
Right, so as you rightly mentioned, it's been a weak quarter, and the kind of guidance that's been coming out from the management from the con call is also weak. So Q4 is also going to be as weak as Q3. In terms of the numbers, revenue was up 3%, EBITDA was down 10%. Margins were much below the normative range of 24 to 27% that they've generally guided for. They came down to around 20.1%, and net profit was down around 14%. In terms of what's not worked, volumes were flat this quarter year on year. The surge in palm oil costs is kind of negatively impacting on the margins. General trade is losing share. Premium products are not growing at the pace that they were expected to grow at, and this is also on account of a higher base, and urban slowdown is a cause of concern is what the management has said. Africa, US and Middle East sales declined by 8% in INR terms. Now in terms of what has worked, a couple of things. Indonesia volumes grew by 6% and sales grew by 9% in INR terms. Jefferies believes that the worst is over, but recovery will be gradual going forward, and Macquarie expects sequential uptick in volume growth in Q4 from a 0% in Q3. So this is the overall roundup of how Q3 has panned out for Godrej Consumer, and the management has said that Q4 will also remain bleak going forward.
Thank you, Mahima, for getting us the details. In fact, we did speak to Asif Malwari, the Global CFO and President, Africa, Middle East and International Markets, about the slowdown the company has been witnessing in the household segment and if the picture could improve going forward. Let's listen into a bite of that conversation.
No, so I think firstly, if I have to speak about household insecticides, I think our specific products which we've launched have done very well. Incense sticks did extremely well. It's been gaining volumes for the last couple of months. We've now actually got high single-digit share of that category, and there is still a large kind of volume to be kind of gained as we go forward. A new product which we've launched has been gaining the share, or there are early green shoots in terms of how it's performing in the entire, I would say, electric space. We are hoping that the new product, which is significantly better than all the products in the market, will again continue to do well. But yeah, I think the overall growths have partly been impacted by seasonality and partly been impacted by a bit of the urban slowdown, which everybody's kind of talked about. Yeah, I'm hoping that that's shows some sign of improvement as we go through, because I think the larger middle class urban is a large contributor to the overall consumption and GDP of the country, and yeah, we should see some kind of improvement in those trends.
Right, so that's the management of Godrej Consumers. In fact, Sneha, let me come to you. What are charts indicating with regards to a Godrej Consumer? What would you advise investors to do?
Structure over here, we have seen this counter forming lower top, lower bottom, which is not a very good indication. In fact, if we see, I believe there is a very strong resistance zone around 1200 mark. So in case this counter sees an up move beyond this, then only we may see some buying interest coming in, and we may see a sustainable move. Otherwise, there are chances that any pullback move towards this zone will be an opportunity to go short over here. At present, I believe on the support side, on the lower side, I believe 1,060, 1,100, that zone is the support zone for this counter. So in case of any, any breaching of this support won't be a very healthy sign. So I believe chart structures are weak. One should avoid taking any fresh longs in this counter unless and until it is trading below 1200 mark. If anyone wants to go ahead and long, 1200 is the zone which one should be looking at. If anyone wants to go ahead and short, yes, you can do it with a stop loss of 1200 mark.
Right, the stop loss at 1200 was you should be looking at in terms of GCPL. Samir, how are you looking at a GCPL? Because clearly, FMCG as a pack has been under pressure from a consumption perspective. The stock itself in the last 6 months is down 24%. Do you think valuations are now slightly getting better to look at buying?
So valuations are definitely better, but are they good? No, they're not. Look, I believe that when a company, I agree, B2C companies trade at premium valuations because they've captured the market, they have a brand value, and they have all of those inbuilt benefits, right? But when you are seeing a slowdown coming through on the rural side and the urban side, and you see that the microfinance industry by itself is also struggling, which means this is the money that's going to the the bottom of the pyramid. That obviously reduces the purchasing power that's there in the system, and which is very, very clearly visible in the growth numbers. The volumes have been tepid across the board, be it a lever or be it Godrej consumers or any of these people. And we believe we are going to see another couple quarters. So are we bottoming out maybe in the stocks? I would like to think so, but valuations are still not, attractive to make me say that, no, you need to stick your neck out and go out and buy, and this is a contrarian call. There's a very strong possibility that the slide continues till we actually start seeing the turnaround happening on the ground. And if you have one more quarter where the microfinance industry struggles, where loan generation from consumption starts slowing down, it could actually have a further negative slight impact, and that would be a caution I would like to say. Wait, valuations are not cheap yet. Yes, they've come off, but they were insanely expensive. They're still expensive, and another 10% correction possibility in all of these stocks, I wouldn't rule it out.
Right. So 10% correction is a possibility. Well, moving on, RPG Life Sciences is actually in focus. The stock is up almost, if you can pull up the chart, the stock is up almost 10%. Now this is on the back of earnings. If you see their earnings, so domestic formulation business continued to register profitable and healthy growth, while company has also seen EBITDA margin expansions, though other income has also increased 72%. But to speak more on the numbers and what's the growth outlook, let me invite Mr. Yugal Sikri, who's the Managing Director of RPG Life Sciences. Welcome, Mr. Sikri.
Thank you. Thank you so much for inviting me to your channel.
Well, just wanted to know the growth, the revenue growth that you are seeing, was it backed by volume growth, or you have seen any kind of price increases?
First of all, thank you once again for inviting me to the channel. Just to give you a little bit of perspective of what your question will automatically perhaps get answered, is the RPG Life Sciences growth story is not a one quarter story. It's a story which is consistently panning out for the last 5.5, 6 years, and that is basis the strategic framework which you have created. In the overall business, domestic formulation, which you're highlighting, is contributing 2/3. And 19% remaining, out of the remaining 19% comes from the international formulation and 15% comes from the API. The domestic formulation business has been consistently registering a growth in volume. The volume growth has been close to double digit consistently, year after year. It's not this year alone, this quarter alone, it has been happening year after year. Basis the 5-pillar strategy which you have identified. For want of time, I will not be able to explain that to you, but it is basis these strategic framework of 5-pillar, we are registering the growth. Now, we have the second and the third pillar with the international formulation. API also has started contributing because we have worked on modernization of the plants, and we also worked on the R&D pipeline. These are the two factors which will increase our exports, and the work is currently going on. You will see the full impact coming in FY27, but partial impact would start flowing in from FY26. So I hope it answers your question of volume growth. Yes, it is volume growth. The price growth is 2.3% or so, and volume growth will be somewhere around 9% or so, and the new introduction growth will be around 2% or so. So that's how the growth story of RPG Life Sciences across the 3 segments pans out.
Got it. Also, you had actually highlighted that your domestic formulation forms most part of your business now, but you are shaping up your international formulation and API business as well. So what are the initiatives that you have taken when it comes to these 2 segments? Will they come with a double-digit growth, and where you want to take this contribution to?
Okay. while domestic formulation business should continue to register the double-digit growth ahead of the market, the way it is 1.6 times, last year was 2 times. The international formulations and API business, as I mentioned earlier, depends upon 2 prerequisites. One is your plant should be modern and approvable by the best of the regulators in the country, like we have the UKMHRA, like we have the TGA of the kind, number one, for which the work is almost complete. The second is the R&D pipeline. We have R&D put in place. They're working on 14 to 15 new products. And, the development time is little longish in pharma. So that's why I said that the basis these 2 specific measures which the company has taken, both for international formulations and API. One is modernization of the plant and capacity expansion, and the second is R&D pipeline development. The 2 will start growing. Yes, over a period of time, they will start registering a growth even higher than the domestic formulation business. With the result, the contribution of these 2 businesses will grow.
Right.
Whether the domestic formulation business slow down, no, it's just the growth of the other 2 businesses.
So Mr. Sikri, my question coming to you is how much will international business contribute to revenues? Because currently domestic formulations is almost 60-65%. So will that change? And if so, how will it impact your margins?
Okay. I think the EBITDA margin growth which you are seeing is not a function of only domestic formulation business. All the 3 businesses are very strong EBITDA margin accretive business. And therefore, if the contribution of these 2 goes up, I don't think it will have an impact on the EBITDA margin, because both international formulation API businesses have very strong EBITDA margins.
And Mr. Sikri, with regards to acquisitions, what's the stance from here on? Because clearly with regards, after the recent monetization of the land in Thane, the clear picture that we were looking at is that with the surplus cash that you have, after clearing all the past debts, acquisitions is what you will be looking at. Where are you on it?
Okay, I think very correctly stated by you. We have the cash surplus mounting coming out of the internal accruals and the business enhancement. And second is the land sale also leaves us with good amount of cash. The whole thing was done purposefully so that we have a large kitty available which we can utilize for inorganic growth. Now, we were earlier restricting only to formulations, but now we have formulations and API, both we are very actively looking at quite in an ambitious way. And as and when it gets materialized, we will let you know. But I can only assure your viewers that there is a lot of efforts and energy being spent on
right,
the
Mr.
inorganic
Sikri,
part.
I will interrupt here. 30 seconds. Will there be an acquisition in FY26 itself? Are you looking at anything?
It's very difficult to predict, but attempts are that we should.
Okay. Thank you, Mr. Sikri, for joining us on the show. So an acquisition on the cards for our RPG in FY26, all the efforts that are being made in terms of improving business. The stock is seeing gains for almost 9 to 10% in trade as we speak. And as to be noted, 200 crores is what they got with the land acquisition in Thane. And they've paid some part of their debt, but with the other internal accruals as well, inorganic growth that could be on the cards for our RPG Life Sciences from here on. So that's the story with RPG. But moving from an RPG, let's shift focus to a Religare. Now, Florida-based businessman, that's Danny Gaikwad, actually announced that if permitted by SEBI, he would be willing to acquire a controlling stake in Religare Enterprises Limited by launching a competing open offer for 55% of the company's outstanding share capital. Firstly, let me actually get in Charu to tell us more. Charu, what are the details that you're picking up on the same? Charu, if you can hear me, What are the details that you're
As we
picking
all
up?
know, the Religare dispute is a multi-forum dispute which has been going on for the controlling stake in the financial company. On one hand, there is the Berman family of the Dabur fame that had made an open offer for 26% stake in Religare and had offered a price of rupees 235 per share. And there were several allegations also made against Rashmi Saluja, and there was a multi-forum investigation and a lot of activities going on regarding her control on her company. But now there's a new entrant into this dispute, which is Denny Gaikwande. Now he's a Florida-based businessman who is offering a 17% higher price per share for the 26% stake in Religare. Now it has been made clear by the Berman family through a media statement as well that currently the offer has not been made. He is just seeking permission from the market regulator, Securities and Exchange Board of India, to be able to make this offer. And once this is done, maybe things will follow suit and further steps can be taken, because the offer by any other competent business or individual was supposed to be made back in October within 15 days of the Berman family offer. So let's see what happens, what permission is sought, if any permission is given, and how it goes ahead.
Right. Thank you for getting us the details, Charu. But also, let me get in Danny Gaikwad himself to get us more in this. Mr. Danny Gaikwad, welcome to NDTV Profit. My first question coming to you is, why do you think Religare Enterprises makes sense as an investment to you, firstly?
So any investor, whether India or abroad, if they invest money, the always purpose is to make money. There is never a charity to invest, charity is to give. So my interest is, I saw the valuation of company is more than reasonable low. So I say, okay, let's try it. So my intent is to make me money, and in the simultaneous process, we'll make money for the shareholders, which my first offer, you look at it, is already 17% more. I'm giving them the 100 rupee to 100. There are other people are trying to give them 100 rupees to 83 rupees. So naturally, that's the intent.
Right, to make money for you and the investors. But you've missed the 15-day deadline to actually go ahead and challenge Berman's offer. How would you have to respond to that?
I have nothing to respond, brother. I send them all the regulatory compliance and a procedure, integrity. It is up to SEBI, it is up to the authorities, it is up to the whatever regulatory people, they have to decide. I can decide. I give an offer and I'm here on standby.
Right, and you changed the size of shares you're purchasing in your offer from 26% to 55%. What is the reason for that?
No, it's not that. I even said, if I need to buy even Berman share, I will. That's not a big deal. Look, you acquire company, you want majority, don't you? Do you want minority ever? When you're putting a tremendous amount of money, the wise thing is to do is just to get as much as you can. Some reporter asked me a question, sir, only 26? I said, no, I would love to have more. Why not? So that's why. So it's not that I want 52, 53, 55. Why not 76? Why not 100%? I mean, whatever regulatory people decides, we are fine. We have a checkbook, we have money, we know how to buy it.
So you're offering 275 per share. Is this the appropriate value for Religare Enterprises according to you?
I don't know the word appropriate, but I can explain you. When you see in the US, it's very, very typical when some companies are acquiring, and it's happening every day, and I'm sure you are more versed than me. So you will see customary, they try to give between 15 to 20% more than the closing. So that time, whatever I thought, I said to my team, let's offer 17% more. So I'm the friend of shareholders, they're getting more value. And I still think I have a good value. Does that make sense?
Absolutely makes sense, Danny. Do you have any existing interest in Religare Enterprises, or is this just the first time that you're entering the company?
No, brother, this is the first time. You know, we have looked through many companies, but the inherent problem in India is very crazy. I must be looking in long time. The company, I'm giving you example, I'm not putting any allegation. You know, if the company has a revenue 5 crore, they wanted 200 crore. How are you going to make your investment back? This company's revenue versus my offer, if you look at it, it makes some sense. It's very difficult to buy any company in India because I don't know what is the norm there, but it's crazy. It's at 50 times, 100 times, 200 times.
And what are your expectations from SEBI as well as the other regulatory bodies now that you've submitted this offer?
I don't have crystal ball, but I can tell you honestly that I expect transparency and a shareholder rights. I'm giving you offer.
Right. Thank you so much, Danny, for joining us on the show and sharing the views. So that's with regards to the open offer that Danny Gaikwad has made for Religare Enterprises against the Berman family at 275 per share. So let's see what the outcome is from here on, because a lot of regulatory intervention that will be coming in as well. But let's head across to two companies that will be reporting numbers now, Tata Steel and Coal India. First, Mika, please let us know what are your expectations from a Tata Steel and what are you hearing from the street?
So the expectation for Tata Steel is negative. That's the common theme across ferrous companies. Revenues may fall 5% to 52,567 crores. EBITDA may fall 27%, and margins may contract 210 basis points to 9.2%. And the key is that the street expects the company to post a net loss of 226 crores versus a net profit last year. Now, in terms of what will impact earnings, well, up versus lower steel prices, which could lead to a decline in revenues. There's been an 8% year-on-year drop in steel prices this quarter, which is going to expected to impact the company's realizations. And these lower steel prices are expected to partially offset the benefits that the company could get from the lower coking coal prices. In terms of the bottom line number, the company is expected to report a consolidated loss due to the Europe business. The Netherlands business is also expected to report a EBITDA loss, and the UK business is also expected to continue to see losses. However, it's key to note that losses at UK and Europe are expected to decrease on a quarter-on-quarter basis.
Right, Mika, thanks for that. That's with regards to where Tata Steel goes. And how about a Coal India?
Coal India, well, revenues are expected to rise 6% to over 34,900 crores. EBITDA, however, may fall 12%, and there is a margin contraction expected of 720 basis points to 32.6%, and net profit may fall 17% on a year-on-year basis. In terms of what is expected to impact the earnings, well, flat volume growth, lower realizations is expected to impact the top line. EBITDA is expected to decline due to lower e-auction prices, and the EBITDA per ton is expected to be impacted because of lower volumes, realizations, as well as a higher cost of production, which is excluding the employee costs.
To what thing? Right. So that's with regards to Coal India and Tata Steel. Samir, let me come to you first with the Tata Steel. What is your view?
Yeah, so the expectations are quite muted given the fact that steel prices have been subdued in India, and the Indian steel companies have been requesting the government for some sort of protection from the imports that are coming not directly through China but routed through different places. So if that comes through, then maybe Tata Steel or even JSW Steel or SAIL or any of these counters will show some amount of resilience, barring which, given the fact that we are expecting kind of a bit of a slowdown in Europe to persist for a little longer, especially now more policies of Donald Trump being with higher import duties that could affect the Chinese supply going there, which could mean that more supply could find its way into more of the rest of the world rather than the US, and that could again affect pricing. So at the moment, the positivity around steel, and we've been saying this for a while, that you have to focus on China, and China's steel demand is not going to increase in any which hurry, given the fact that they are having a massive slowdown when it comes to the real estate segment, which is a big consumer of steel. So we believe that the pressure will probably remain. Barring the import duty, which we hope that maybe the government could put into a small extent. I'm not saying we need massive protectionism, but maybe even a 10% or 15% import duty could help the steel companies within India. But then again, the government got to balance inflation and profitability of companies. So it's a larger picture, very difficult to say. But at the moment, I would be avoiding steel counters barring the import duty that could come through.
Right, so that's with regards to Tata Steel. Sneha, if I come to you on a Tata Steel, I think Sneha, we don't have Sneha. Samir, staying with you, very quickly, in fact, your view in terms of Coal India?
So we remain constructive on the power sector, and Coal India would obviously be able to grow. What is probably affecting them, like your analyst rightfully said, is that the e-auction prices have come off. Which is why some of the profitability, the bulk of the large part of the profitability comes from the e-auction side, given that they are able to sell at much higher rates. So unless we see more capacities being put in on the power side, and what has happened is you're getting these captive mines for a lot of these power companies and steel companies. So if that trend continues, then Coal India could be affected. But we believe as NTPC and some of these other companies put in more thermal capacities, we will see some amount of volume growth. Coal prices will move in tandem with energy prices as a general. So if we believe that crude could probably bounce back and then coal prices also move up marginally, that could lead to a growth in profitability. Valuations are relatively inexpensive and not a challenge. So any positivity could lead to a massive re-rating in Coal India, and we could see the stock run up quite a bit. We remain positive, and we would advise someone to take a buy position at this point of time with a 1-year target of about 450.
Right. So positive on Coal India. Well, thank you, Samir, for joining the conversation. Now, let's cut across to the NDTV Future Summit, wherein my colleague Vishnu Som is in conversation with Noida International Airport CEO. Do listen.
Sarai Kale Khan, so that, ideally a passenger like me, potential passenger, would like to drive just up till there, check in over there, get onto the train, and get to your airport. How soon before this? Because it involves land acquisition as well.
It's so these connectivity projects in these developments. These are much more than just ideas or thoughts or dotted lines on a piece of paper. So the main interchange from the Yamuna Expressway to the airport that will connect then the expressway 600 meters to the airport boundary, that is part of a much larger 33 kilometer expressway project that will connect the Noida airport with the Delhi-Mumbai expressway, and will bring southern Gurgaon as well to within about an hour's drive of Noida airport. The plans for the RRTS, which will connect the airports with Ghaziabad, with Delhi. Again, these are much more than ideas, but there's a lot of planning work going on. There's funding that's been committed, and the next few years we'll see the start as well as the conclusion of these projects.
What is the potential of the region, Western Uttar Pradesh itself? We've spoken about the NCR, but I suspect that there is a large captive group available, potential passengers in places like Meerut, in places like Mathura, who have been underserved typically. Do you believe that they would be substantive in terms of numbers of passengers adding to your airport?
I think some of the eminent speakers and panelists who were up on stage before me today are probably much better qualified and spoke much more eloquently about the potential for the region. But we certainly are convinced that potential is there, both in the NCR catchment as well as some of the towns further south that you've mentioned. Just to call out a few points, which is maybe first of all the touristic potential of the region. The Noida airport will be the largest major airport close to towns such as Mathura. It'll be from the airports, the Taj Mahal is a 2-hour drive. So with Noida airports operationally, the Taj Mahal becomes potentially a day trip from anywhere within India. So the airport will certainly help trigger and stimulate the touristic potential further of a region that's already very rich in potential and touristic resources.
Well, all. This is all we have on Profit Buzzers today. Stay tuned for more news.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment
Well, welcome back. You're watching NDTV Profit and this show is Top Trades and I'm your anchor Somit Sarkar. Well, if you look at the markets, the Nifty continues to be in the correction phase, declines for the second consecutive session. We are 150 points below the 23,000 levels, but the pain is much more when it comes to the broader market. If you look at the Nifty Small Cap Index, that is down more than 3.5%. The Nifty Mid Cap Index, that is down more than 2.5% in trade. Among FNO stocks, if you look at, among the few gainers that we have in trade, Bank of India firstly, and Torrent Pharma and Yes Bank, all these three stocks are gaining on the back of strong third quarter numbers, while on the other side, on the flip side, if you look at, it's Laurus Labs which is down more than 10%, but this is not purely on the back of numbers, but this is on the back of concerns that have come in on US suspending WHO funding, which could impact the ARV revenues of Laurus Labs. Apart from that is IDFC First Bank, which is down post. It reported a third quarter numbers which are a weak set of numbers. In fact, JP Morgan had also downgraded this counter in trade. And lastly, it's AU Small Finance Bank. Now this counter is down on the back of weak commentary that had come in, where the company or where the management has guided for an increased cost guidance. But as I was mentioning, that this is this will be the fourth consecutive month where Nifty could end in red. In fact, so far in the month of January, we are down around 3.6%, and this will be the longest losing streak monthly wise if you look at for the benchmark since September 2001. And much more such insights. Mihika is joining us to give us all those insights on how much the market has declined and which are the top losers in trade.
You know, if the weakness keeps going on, the Nifty 50 could end in the red for the fourth consecutive month. And this would be the first time since September 2001. The Nifty 50 is down 3.6% in Jan so far. When you look at the last 4 months, Jan 2025, we're down 3.6%. November 24, we closed flat, but with a negative bias, 0.31% lower. December 2024, cuts of 2%. And Jan 2025, we ended October 2025, we ended 6.2% lower. In terms of your benchmarks, the Nifty and Sensex is down 12 to 13% from their all-time high. The Sensex is down nearly 10,500 points, while the Nifty 50 is down nearly 3,400 points. In terms of the top Nifty 50 losers, as per their point contribution, the ones that have been dragging on top, we have HDFC Bank at 249 points, ITC, Axis and Trend between 80 to 90 points, and ICICI Bank dragging the benchmark by 79 points. If you look at the market cap erosion that has come with the Nifty 50 stocks, HDFC Bank has lost the most, 1.16 lakh crores, Trend over 58,600 crores, LIC over 54,700 crores, ITC over 52,300 crores, and HCL Tech has lost over 43,800 crores in 2025 so far. In terms of the broader markets, well, the Nifty small cap 150 is down 13% and BSE mid cap is down over 10% in 2025 itself. And in terms of the market erosion in your mid cap stocks, you have Kalyan Jewellers topping the list, over 35,000 crores of market capitalization lost, followed by an Oracle Finance, Suzlon Energy, Oberoi Realty, as well as the Godrej Properties. In terms of your small cap stocks, you have KEC International topping the list, 10,900 crores of market cap erosion so far, followed by Nusion Tech, CDSL, PG Electropass, and AB Real Estate all have lost over 7,500 crores of market cap. In terms of your sectoral indices, you have Nifty Realty, the top loser so far in 2025, down 19%. Nifty Media seeing cuts of 13%, and Nifty Pharma under pressure 8.5% lower. But I want to end on a more positive notes, and these are the outperformers in a weak market. Here are the companies in the Nifty total market that have gained the most in terms of market capitalization in 2025. Topping the list of Shriram Finance, over 76,600 market cap gain, followed by Bajaj Finance, a Maruti Suzuki, a Bajaj Finserv, and lastly ONGC.
Well, that was on how much markets have declined. Well, ACC numbers have come out. On a standalone basis, it looks like a good set of numbers. The revenues are up around 6.5%. EBITDA of the company has come in slightly lower than what the street was expecting, but the net profit, now that has jumped nearly 107% on a YY basis at close to 1,089 crore rupees. Apart from that, it was Canara Bank numbers which have also come in, and we are awaiting those numbers, but NII seems to be down by around 3% to close to 9,150 odd crore rupees, which is below the street estimate numbers. And if you look at the company's net profit, the NPA ratios have also come down on a sequential basis at around 0.89%. But sticking with ACC numbers, the EBITDA number that has jumped nearly 23% on a YY basis at close to 1,100 crore rupees. Margins have come in at close to 18.8% as against 18.4% that we had seen in the last year. And net profit, as I was mentioning, has jumped nearly 107% at close to 1,092 crore rupees as against 520 odd crore rupees in the last year. Now, EBITDA number as flashing on your screen is 1,116 crore as against 905 crore in the previous year. Well, moving on, let's also get in Gurmit Chadda, the managing partner and CIO with Complete Circle. So firstly, to start off with, sir, we are down nearly 13% from the all-time high that we had seen, and this correction phase continues in the market. How long do you expect this correction phase to continue for the market? Also, we have budget coming in this weekend. Do you expect some turnaround in the markets, at least post that?
Hi. Difficult to say and, predict the bottom of the market, but 2-3 things are playing out here. Sumit. One is, it started with the US trade, with money moving to US broadly from all emerging markets. I think what has worsened for us is the economic momentum slowdown, and our earnings have been so far very weak. In fact, if you see the so far earnings scorecard, the misses have, far outnumbered the inline numbers. And, when the sentiment turns bad, any miss because of high valuations, the reaction is always extreme. We've seen that with CDSL. We've seen that with some of the good names. Thirdly, what is also happening is that due to the state election freebies being announced, for example, Maharashtra alone has spent 21,000 crores in the women welfare, which is the Latki Bahini Yojana. The market is probably also and government is likely to undershoot the capex target of 11 lakh crores by a decent margin. The market is trying to probably reprice all the capex, which is the railways, the defense, the capital goods, the power, all those kind of things which were basically moving up more on order book because they believe that the government would like to probably be biased a little more towards the rural welfare and the women welfare more. And I think that repricing is also now playing out, and that is why few pockets of market which were expensive, which were largely because of government high capex, are seeing bigger corrections like defense, railways, energy, etc. So I think it's a combination of our weak economic indicators and global factors. I think 2-3 things I'm watching out, which is some silver lining, is the dollar index is now below 108. I think if it can come to around 105, 106, there could be a breather in terms of FI outflows. The bond yields also now are not hardening too much. In fact, our own 10-year bond is also slightly softened. The US 10-year is now around 460. So I think these are the small technical indicators, and I think the big trigger we need is something positive domestically. I think we can't control foreign factors, external factors, but if you can get a bit of a momentum back in the economy, there are chances of finding a near-term bottom.
Right. And Gurmeet, staying with this topic firstly, amid this fall, which sectors or stocks is something that you're advising your clients, and any tactical trade that you would initiate ahead of the budget?
So, I think just playing for the budget is not something which is our way of investing. But yes, a lot of good companies have corrected, where the long-term prospects look good. So we are adding some banks. The entire bank nifty is available at 13 times earnings. Players like Axis, Federal, SBI, they are just a little over book value, anywhere between 1.1 to 1.3 times book value. The private banks like ICICI, HDFC are below their. ICICI in particular has done very well. In fact, that's the only stock which has weathered the storm today a little bit on back of the numbers. So banks look good. We are adding some good auto ancillaries where corrections have been more than 30%. We believe that the vehicles in terms of transitioning to hybrid, electric, and other models is a more structural theme. A lot of auto ancillaries which are playing that theme, where cars are becoming smarter, cars are becoming more connected, cars are becoming more cleaner, more electric, more hybrid, will do well, especially like the likes of Uno, Minda, etc. We are also adding some defense names because there are a lot of defense modernization expected this year. There are a lot of orders which are pending. The government has only spent 40% of the defense budget in overall capex budget also being a miss. We expect some large back-ended orders coming in drones, in Pinaka rockets, in some of the other places. And we are adding some energy names as well. There's been a recent correction in the entire energy value chain. So wherever the fundamentals are good from a long-term perspective and the stocks have corrected 20, 30, 40%, we are trying to, not really I would say buy the dip, but staggering our way up to the budget.
Right. Gurmeet, just ACC numbers have come out, and if you look at the numbers, the revenues are up around 14% on a sequential basis. The reason why I'm taking sequential numbers is because there was a one-off gain in the revenues last year. So 14% up on sequential, EBITDA is up around 10%, net profit has come in at close to 453 crore rupees. How are you looking at this ACC numbers? Do they look strong, at least upfront, on the revenue and EBITDA basis?
Yeah, optically, I think what you said is the numbers look okay. I think also ACC is one of the more reasonable, names in cement in terms of, if you see, it trades almost at replacement cost, which is about $100 a ton, little over $100 a ton. So decent numbers. You might find some 1 or 2 day reaction, but overall, I think we are unlikely to see double-digit cement volume growth this year. And largely it's been led by a little bit of price hikes in few geographies, and some geographies haven't participated in the price hikes. So as I said, you need a broader revival in housing, a broader revival in infra, and I think that for that the budget would be a trigger. Right now the market seems to be worried that due to welfare and freebies, the spending may get compromised, and I think that's what is getting some of the stocks to derate after having a huge re-rating the last 2-3 years in the entire infra, cement, housing, capital goods space. So I think budget would be a key trigger. A structural call, should be taken once we are very clear in terms of numbers. This will be first full year budget. That's why the direction is more important, and not just the numbers overall.
Right, Gurmeet. Thank you for joining us and giving your view on the markets and on ACC numbers. Well, moving on, India's largest airline, Indigo, announced its quarterly results, which reflected an 18% rise in the company's net profit. Well, we also spoke to the CEO. In fact, our colleague Tamanna Inamdar spoke to the CEO of Indigo about the company's growth plans going forward. Let's listen into what he has to say.
Well, before we come to the fly, let's start indeed with a very solid quarter when it comes to demand. We've seen the demand in the first half of the year was probably still somewhat muted, but a very strong recovery in this third quarter, which we released today. We welcomed a record number of 31 million customers in just a quarter. For the first time in our history, in the month of November, we welcomed more than 10 million customers in the month, and in December, we touched almost 11 million customers. So that, I think, speaks to the demand. We had like 2 months in a row with load factors more than 90%. So the demand is clearly there, it's clearly back, and that has resulted into a very high number of revenues. And if we park the Forex for a moment, a profit level and an EBITDA level, which is actually very, very good. Then, of course, indeed, the Forex is there. According to some accounting rules, we need to include all future liabilities in this Forex. So you see huge swings because of the Forex there. But the underlying market and the underlying performance of the company really has been very, very strong.
Undoubtedly, if you remove that Forex number, you've hit a very robust profit number. There's no doubt about that. On the operating level, the performance of the company can be seen. Having said that, Mr. Albers, just want to understand, what is the strategy in dealing with the Forex volatility? Is there a hedging mechanism in place? Because this is an unknown and unseen, and all indications point to a strengthening dollar.
Yeah, well, we've seen this in the past, and we see it today. Actually, throughout this financial year, the first 2 quarters were rather flattish when it came to FX impact, but really in the last quarter, and more precisely, actually, the last part of the last quarter, we had that. And for the accounting reasons, we have to take the sort of year-end market-to-market rate. We have a couple of strategies in place. One of them clearly is the hedging of dollars. The other one, importantly, and that links to one of the strategic priorities, is to further increase our international footprint. And by more international footprint, obviously, we'll have more foreign currencies as part of our revenue basis. And I must say, we're glad that in this quarter, we have reached a 28% of all our available seat kilometers has moved into international operations. So that really is towards the 30%, which we put out as a sort of objective or target earlier.
Okay, and do you hit that 30% in Q4? Would that be pushed by a possible India-US sort of long-haul sector that you add on? Can you give us any sense there?
Yeah, well, we don't have any long-haul planes, so we fly sectors up to 6 hours. So we have expanded a lot in the region, and we continue to do so. Whether exactly that quarter or somewhere later we'll reach that 30% is not the most important for me. What precise time? I think the direction is very clear. We have announced new international destinations. We will be soon serving 90 domestic and 38 international destinations. And these numbers clearly are helping us to move forward on that path towards internationalization. And with the evolving needs of the Indian consumers and actually a growing desire also for foreigners to come to India for business or personal reasons, we see a growth in that international traffic as a very important part of our strategy.
Sure, but let me come back to that question about the long haul. And of course, you need to get those aircrafts in. Will they be on wet lease? And what is the plan, if any, about adding some of those long haul sectors?
Yeah, well, let me take a step back. If we look to India and we take the international traffic, really, the further you go away from India, the lower the share of Indian Airlines is as capturing that part of the traffic. So it is still within the certain ranges in the region. When you look to further away, the share of Indian Airlines really drops. So with that strategy, we've decided to go for the Airbus 350. We've placed an order of 30 firm, another 70 in options. They will be delivered by the year 27. That's one. Two, by the end of this year, we'll get the Airbus XLR. The Airbus XLR will bring us into significant parts of Europe, further into Asia. So as soon as this calendar year, towards the end of this calendar year, we'll be able to enter more into Europe. Today we fly to Istanbul, that will help us further. Despite these two elements, we still are exploring opportunities to get earlier capacity in helping us to develop that international network. That's not firm yet. We're working on that, but that's clearly something we're exploring at this point in time, encouraged by all the results we see on our international routes.
Sure. What is also encouraging is I think you have forecast a 20% capacity growth by Q4. Yeah.
Sorry, go ahead.
So where is that? Can you explain to us what is giving you that confidence? Are you looking at higher traffic keeping up? Because Q3 is the robust, seasonally great quarter, isn't it?
Yeah, it is. I must say the Q4 20% is driven to some extent by a Q4 of last year where we had to take a lot of capacity out because of supply chain challenge issues. So what we have guided the market with is a early double-digit capacity growth for the year FY25. So far, we are delivering up to that promise. We had a 12% capacity growth in the quarter three. So a 20% is somewhat inflated probably by a low number of last year, but clearly will continue to grow, and Q4 will have a higher capacity as compared to Q3. So our ambition is to keep growing and to deliver our capacity guidance for the entire year, which is in the early double-digit numbers.
Okay, so if I remove that base effect of Q4 last year because of supply issues, what is the kind of capacity growth that you're seeing in Q4?
I think it is pretty similar to if you were to sort of normalize last year for what we took out, it would be pretty similar to what we have seen in Q3, which was around that range of 12%. So we have a pretty stable sort of picture throughout the year with some variations. You know, quarter over quarter is not the most important. What is the most important for us is that we believe in the long-term growth of the Indian aviation. A early double-digit number is clearly what is our objective, and we're very confident that we'll make that. And the recovery of the demand in the third quarter, and the very strong demand in the third quarter, is in fact further fueling that confidence that our capacity plans are perfectly matching the demand in the Indian market.
I think that's an important point. I'm just going to drill down on that for a bit, because the demand question is one that is being asked of every consumer-facing business right now in the context of the Indian economy. You walk into any airport and you know that there's no lack of demand there. But if you can give us a sense of where that demand's coming from, is it restricted to your key sectors? Is it broadening? Is it deepening?
No, I think the good part for Indigo is that we serve the entire nation. We are not specified to certain regions or not specified to the metro only. We serve the entire nation. The fact that we have 90 destinations and some 450 domestic routes is sort of underlining that. So, of course, we see strong demand from the metros, but we see equally strong demand from Ahmedabad, from Pune, from a lot of other places in the country itself. So there's not a specific region or a specific area. It's basically growing everywhere. And when it comes to the different types of travelers, it's a bit a similar story. We keep attracting first-time flyers, people who used to go by train from one side of the country to the other and now take plane. And likewise, we have introduced a business class on the metros to metros, and we see very solid demand on that more corporate or small and medium enterprise driven demand. So there's no shortage of demand, clearly, as you rightfully so say. And I think Indigo is well positioned to put the capacity in the market to keep growing.
I wanted to ask you about Indigo Stretch. I'm glad you brought that up, Peter. So you're saying the initial demand has been good, giving you enough confidence to expand that service into other sectors?
Very much so. We launched the product in the middle of November on Delhi-Mumbai with just 6 flights a day. By the end of the year, we had all the 40 sectors we operate between Delhi and Mumbai. Basically, we had the product online there. It's been received very, very well by our customers. And that growth, basically, we are very confident that it continues to be there. By now, we have added Delhi-Bangalore. Soon we'll be adding Delhi-Chennai. And by the year of calendar year 25, we'll have some 45 planes in operation with this new product.
Okay, so Indigo Stretch is is definitely picking up. Just one last point before I let you go, Peter, maybe a couple of them. One is, what is the kind of delivery schedule you see for aircraft in 2025? You clocked about one aircraft a week in the last calendar year. Do you see that continuing, sustaining?
Yeah, that's, I think, one of the incredible strong foundations for Indigo. We have an order book which is, I would say, the largest in the world, with over 900 planes still to be delivered. And with that, we're in an incredible strong position to keep having these planes coming in one every week. Of course, there's some variations quarter over quarter, but it's a very strong position we're having.
And just if we can see an outlook you have on yields. You've said, I think, in your conference call that you expect yields to rise in early single digits. Can you give us a little more detail on that?
No, I think the third quarter has been very strong, and we see a lot of capacity growth. You addressed the 20% year over year. So if we look over a year comparison in yield, we should keep in mind that last year, because of all the capacity which was taken out, there was a sort of pressure on capacity, which in general sort of has some effect on yield as well. So we took a rather cautious approach in giving the yield guidance as was done in the call. But from all what we have seen now, we're confident in giving that guidance, and we see actually a continuation of the demand situation which we have seen in Q3.
All right, thank you so much, Peter, for speaking with us. Peter Elba, CEO of Indigo, talking about their third quarter numbers. The market leader has seen a robust quarter. Yes, Forex has been a niggle, and we'll be excited to see how the street views the numbers on Monday. Thank you so much, Peter.
Thank you so much.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, Budget 2025 is around the corner, and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits, and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for. No change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM eDrive and PLI can be expected. Policy initiative to drive localization of key EV related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single digit increase in cigarette taxes. Reduction in taxes for low middle class.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. It's a tough day for markets. The benchmark itself is down 1% thereabouts. And let's pull up the intraday on the benchmark. We're testing 22,800 today, in fact, as we speak. 23,000 is actually the top we've made today. 23,007 is where the index topped out at. And on the intraday, we'll see that we're not too far from the bottom for the day. We're in fact very, very close to it. 826 is the lowest point of the day, just about 30 points up from that point. Let's look at the Nifty mid cap as well as the small cap, and thereafter look at the breadth, because it's an extremely difficult day where the breadth is concerned. The Nifty mid cap also down nearly 2.5+%, again languishing very close to the day's lows. The Nifty small cap also down now nearly 4%. So the pain real within the broader market pack. Let's look at the advanced decline, and that's where you'll see that it's an extremely difficult day. On the Sensex and the Nifty as well, you're seeing a lot of pressure. 43 declines for 7 advances on the Nifty, but look at the entire market. 2,150 declines for 150 advances. Not seen a day as difficult as this in a while now, but that's what we are seeing today. Let's zoom in. Let's look at the heat map on the Nifty 50. Let's look at those 7 stocks which are gaining, maybe some bit of FMCG there, and banking. Banking, where asset quality is good, is standing out. Kotak, SBI, ICICI. SBI's numbers yet awaited, but likely the street penciling in that SBI will not be part of all the asset quality issues in the system. And therefore, those 3 standing out. Britannia, HUL are among the other ones. Maruti within the consumer space as well, and M&M. So auto also seeing some spark of green. But look at everything else. 1% lower on literally 29 or nearly 30 stocks within the Nifty 50. So the pressure is quite a bit. Let's look at the sectoral heat map as well. Try and zoom in on some sectors which are doing relatively okay. There's the Nifty PSU Bank and Private Bank, as well as the Nifty Bank, which is down just about 0.5%. So that's really outperforming the index on the back of ICICI Bank, I would presume, to a large extent. Credit goes there. You're looking at Nifty Auto, which is down nearly 1%. The Nifty FMCG as well, down nearly 1%. But let's look at some names where there is real pain. There's Nifty IT, which is down 3.25%. The Nifty Pharma is down nearly 3% as well. And Laurus part of that pack, possibly the reason as well. And you're also seeing the metal index down 2% plus. So those are some pockets where the pain is real. Market perform on a Nifty Realty, which is down 1% as well. So some good amount of pain, especially in that IT pocket. I'd want to pull out the constituents on the Nifty IT before we have our guests as well and take their views. Look at some of the names. We've seen a rally in a persistent, a rally in a Coforge, and then look at the pullback that we've seen today. Some real big moves. 4% on a HCL Tech, 4% on a Wipro, 6% on an LTI Mindtree, 4% on a Tech Mahindra. Some of these obviously are Nifty 50 names, and therefore, just the moves are very, very strong on them. And Infy is down nearly 3% as well. But we have guests. Let me also bring in Mahima. Talk about a few names within broader markets which are seeing pain. Mahima, lots of earnings, and any kind of disappointment is really being sold into.
Absolutely, and we've been discussing this for quite some time now. Valuation is also playing its role here. If the stock is overvalued and a slight miss in the earnings is kind of taking the stock really down the road. Let's pull up the broader markets, the mid cap 150 and the small cap 250, and see at where do they stand. There you go. The mid cap 150 is down 2.8%. The small cap 250 is down 4% almost as we speak. So a lot of pain. Let's pull up the BSE 500 and see where the pain actually lies in terms of the mid cap and the small cap. There you go. Tejas is down 10%, Laurus Labs down 10.5%, Kaplan Point down 10%, AB Sun Life also down by about 10%, Welspun down 8%, IDFC First, Swan Energy, Mastec, all these counters down by about 8 to 7 odd percent. But something that's bucking the trend is Sobha up 7%, BOI up 6.5%, Torrent Pharma doing well 3%, TTK Prestige up around 3%. So all of these counters, are buzzing and they're seeing the real pain in trade today. But let's bring in our guest with that. Let's welcome in Hemang Jain, who's the market expert, and let's also welcome in Nagraj Shetty on board. Welcome to both of you, gentlemen. Hemang, I'll come to you first. How are you reading the markets, and what is one supposed to do right now, considering the kind of downtick that we've seen?
Yeah, good afternoon and thanks for having me. So clearly the sentiment is dented given the way our market has behaved in the last 2 weeks or so. And more importantly, even though some of the numbers are on a positive side, it does not really help the overall sentiment to improve. The stock-specific action you're seeing, it's an ICICI Bank or a Interglobe Aviation or a Lodha, but that has failed to really revive the sentiment across the market. So I think we should let the market stabilize. I think once you have that clarity and once maybe expiry is out the way, we will have a slightly better trend available. At this point of time, though the market are looking a little oversold, and in some cases, particularly the broader market, the pain is on a higher side. But it would be extremely difficult to find where the bottom is at this point of time.
So, Hemang, what do you suggest one does? Hold on.
So I think it depends upon what kind of exposure we have on the market. Definitely, if you are an investor and if you have the holding capacity, these are not the prices or the levels where you to panic. Again, you'll have to take a very stock-specific, sector-specific view. But my sense is that if investors have the holding capacity or they have incremental funds that can be deployed, these levels are surely attractive. It would make sense to sort of go out there and start buying, not necessarily at one go, but maybe 2 parts, 3 parts. But if you're a trader, obviously, VIX has gone up by almost 7-8%, and you need to really manage your risk extremely well through options. So I definitely think that, depending upon what kind of trader or investor you are, you can have your strategy in place.
Nagaraj, let me come to you with regard to the technical viewpoint here. What's the sense like? What levels are you watching out for? We are now, testing 22,800. Yeah.
Hi, good afternoon, Mahesh.
Good afternoon.
Market has been in a strong downside, no doubt about that. Smaller upside bounces, pullback rallies are getting sold into, and I'm expecting this movement below 23,000 is a clear-cut breakdown of the consolidation pattern of the last couple of weeks. Market trend remains weak, and I'm expecting Nifty to reach down to the next support of around 22,600 odd level, where 38.2% retracement support comes in on the larger time frame chart. That is the area when I'm expecting there is a possibility of some upside bounces from the lower level. So for me, 22,600 odd level is going to be a support for the market.
What about the Bank Nifty, Nagaraj?
Yeah, Bank Nifty is looking little resilient today compared to benchmark Nifty, but still it's not out of woods. And currently placed at the support around 48,000 odd levels. I'm not expecting this support to hold for a long, and we could see eventually more weakness in banking sector as well. Around 46,500 to 46,800 is going to be the support on the head for the banking sector.
Nagraj, I'll come to you for the top picks of the day.
Yeah, I have two stock picks on the sell side. Obviously, the market has been in a ride on the downside. So I have one is Hindustan Copper. Technically, if you look at the charts of Hindustan Copper, has been in a downtrend over the last many months. Lower tops and bottoms have been formed on the daily as well as weekly charts. Whenever the stock has showed a sizable upside bounce, declined sharply from the higher levels. Recent upside bounce seems to have completed in this stock and started to come down from the higher levels. Currently trading around 230 to 50 odd levels. One can look to sell at this point of time for the short-term downside target of around 222, and one can place a stop loss at 241. Second is the stock Hudco. Hudco has been in a strong downtrend. The sharp lower tops and bottoms recently indicating that more weakness is likely for the stocks. It has recovered slightly from the lower levels, but currently placed around 210, 211 odd levels. One can look to sell at this point of time. Immediate downside target would be around 200 to 199. One can place a stop loss of around 217.
Okay, so those are the calls coming for you with regard to the calls for the day from Nagaraj. But stock of the day, clearly ICICI Bank staying resilient in an otherwise tough market. What stood out for me where numbers are concerned, first off with regard to margins, the margins have just about fallen by 2 basis points on a sequential basis from 4.27 to come to 4.25. It's a margin number that I believe most analysts would take any day of the week, just given the way in which margins for some of the other banks have moved. ICICI's has remained surprisingly resilient. So there's been strength with regard to where margins is concerned. Operating profit therefore holding up fairly well. You're looking at provisions which have come in better than expected, and that's according to me the key part of the numbers, because we've seen pretty much all banks at least meet the provision expectation, including something like an HDFC Bank. This one is a clear beat when it comes to provisions. We were expecting around the 1500 crore kind of number where provisions is concerned, but it's come in sharply better, and therefore you're seeing a slightly elevated PAT than what we were penciling in. The ROA number also has come in very, very strong, 2.36%, and holding up. That's where the key lies. The consistency with which ICICI has been delivering across metrics, not just on the ROA number, but in terms of asset quality, in terms of growth, all of it is what really gives that rounded picture to the bank in an otherwise tough couple of 2 to 3 quarters where most banks have struggled for one thing or the other, and that's what stood out. Let me go across to Hemang. Hemang, your views on ICICI at this point, and how have you viewed the numbers? How do you break down the commentary, and just give us maybe 2 or 3 things that stood out for you?
Well, I think, in the current operating environment, the way the company delivered the numbers, and it's been not just this quarter, but past many quarters, the bank has been delivering much better than the consensus numbers. What stood out for me was that you have a much better asset quality in an environment which is getting difficult for many banks, and yet on the core operating parameters, the loans, the deposit, the bank did extremely well. So I think this is surely quite remarkable, and I do think that the bank will outperform, from let's say over the next 6 months, 12 months, it should clearly be able to outperform most of the other banks, given its standout performance that it's been delivering.
Let me go across and, I'm going to come back to you, Nagaraj, on a fundamental view with regard to ICICI, but we've dialed in with Rajesh Sharma, who's the Managing Director at Capri Global Capital. Talk to us about the numbers gone and the quarter gone by. Welcome, Mr. Sharma. Always good speaking with you. I want context on the numbers. It's been a tough quarter otherwise for the entire system at large. Not reflecting on your numbers at all. What's helped you stand out? Because it's not like you don't lend to certain segments which have been under some bit of pressure also. MSME is one such segment where there has been a slight bit of pressure. What's really working for you?
Thank you. So I think what helps us is the diversification, because we are not only doing MSME, we are doing gold loan, we are doing micro lab, we are doing affordable housing, we are doing small ticket construction finance. So they're a mix of 5 products, and we have been very focused to land with the help of our data science driven this scorecard. And while MSME, we also face some little delinquency upstick, but what has helped us, the growth as well as the good asset quality across gold loan, construction finance, and affordable housing. So on the overall book, our net NPA is about 1%, and we are able to grow AUM at about 56% year-on-year basis.
Right. Yes, extremely resilient. Talk to us about whether you're tapering down on growth in MSME. Is that something that one can expect you to do?
So this year, if you see, we are not grown on MSME year-on-year basis. We are not grown on SME much. So we are not expanded our branch network. Reason being that we are more focusing last 2 years on the gold loan and adding more fee income product of car loan and expanding the insurance distribution. But next year onward, we'll be coming back, growing our MSME segment also. We believe that these segments have a very long runway available and there's a huge credit gap exists to service. So as we are growing, we will continue to grow for next 3 years. We intend to achieve AUM of 30,000 crore rupees and ROE in the mid-teen 15%.
Your margins have seen a bump up, sir, by around 40 bips or thereabouts. Any one-offs there that one is expecting to see? Or is it, what's the trend that's playing out on that number?
So margin is going to stay in the sense because high yield products are now increasing, be it gold loan, be it construction finance. So these the two products have contributed in the yield improvement. And overall, we are able to improve our yield in the housing finance segment also. So overall, we are focusing how do we improve our yield and continue to maintain asset quality robust. So with combination of this plus our technological transformation along with data science is helping us big way.
You know, the one key thing that I take away from this result this time, Mr. Sharma, is the fact that your cost to income has seen a taper. It's now sub 60%. And you've been talking about this, that when that happens, you'll likely see ROA start to inch up. That's exactly what we're seeing. Do you believe that we will be in this late 50s kind of cost to income ratio for a while, or do you expect it to come off fairly quickly?
We expect that cost to income ratio quarter on quarter basis will improve. It should settle somewhere around 45% from 12 months now on a steady state basis. So, and we are working in that direction, and you will see that quarter on after that number will reflect upon.
And therefore, where would that take your ROA if your cost to income is to go from 60+%, where your ROA was 2% plus, and now with around a 50 basis point decline in cost to income, your ROA has gone up by 50 bips. Where would your ROA go when it's down around to the 45%ish number?
So I think internally we are targeting ROA in the range of about 3.5%. and plus, and it will also depend on the mix of the product. So the more the gold loan portfolio goes up, ROI will further improve. But 3.5 minimum we are targeting to achieve.
Okay, and how do you see the mix shift? Because now gold loans is a large part of your loan mix. So would you therefore focus on other verticals of your business, or would you want to scale gold loans to a higher mix within your loan basket?
So I believe that gold loan will continue to remain in the range of about 40%, not more than that. But growth will also coming from the other segment, which are MSME, affordable housing, construction finance, and we are adding within the subset of MSME, we added the micro lab and rooftop solar financing. So we have kept on adding those products. So with mix of that, I think with the while we'll continue to grow at 30-35% plus, and our gold loan will not be over 40% of overall book.
Okay. And so what about geographic expansion? What's the plan there? And how quickly are you growing in terms of your size, given that you're going to try to control OPEX?
So I think we are growing in the UP, UK. We have expanded in Tamil Nadu, Telangana. Next year we are working. So by March we'll finalize our plan of the branch expansion. Exact number we are not firmed up yet, but we expect between 100 to 200 branches to be added in the coming year.
Okay, great. So 100 to 200 branches also to be added on top of all of this. But always a pleasure speaking with you, Mr. Sharma. Thanks so much for joining us this afternoon.
Thank you.
Okay, quick technical check. We have Brijesh Singh also joining us, Opulent Investments. Okay, maybe Brijesh yet some time away. But Hemang, if I can come to you, some of these NBFCs, right, especially within the gold loan business, where they're more focused. And then you have something like a Capri Global and some other NBFCs which are standing out in this cycle because no impact with regard to credit cost on their P&L account or on their NPA ratios either. Any which stand out for you both in terms of quality, asset quality, as well as valuations?
I think compared to some of the unsecured loan companies and microfinance companies which are going through severe pain, some of these gold financiers I definitely think that are better placed, be it Muthoot Finance, Manappuram, IIFL, so on and so forth. But what we must understand is that the operating environment is becoming more and more challenging for the NBFCs. So unless we see some clear indications of the interest rates going down and the pickup in the volume growth, the stocks may not perform. I do think that the valuations are becoming more attractive for the NBFCs as a piece, but I would certainly go with banks, at least in the near term, where the macro environment is far more challenging. So I would go with the banks which are delivering a healthy set of numbers, where there is a CASA deposit is more comfortable and where you don't see any asset quality related concerns. So NBFC is not something where I am more comfortable getting into, even though there is a steep correction across many names.
Nagraj, how are you reading the ICICI Bank chart right now?
Yeah, ICICI Bank has showing some resilience during this weaker global broader markets, and I think I'm not expecting a bigger upside momentum from here. This is going to be a pullback rally of a downtrend, and 1270, 1275 is going to be the strong resistance way ahead for the ICICI Bank, where I'm expecting to come down from the higher levels.
Right, and in terms of Reflex Industries, it is one of those stocks which has seen a significant momentum in the past 6 to 8 months. 1 year also it's up around 244%, and when the numbers came in, it did see an uptick of around 5%, but it's cooled down to around 2.5% right now. But is there more upside on the charts with respect to Reflex according to you, Nagraj?
Can you please name the stock once
Reflex
again?
Industries.
I'm not getting it. I'm not tracking it. I won't be able to comment on this.
All right, no worries. Okay, Hemang, do you have, by any chance, do you have a view on this counter? I think you're on mute, Hemang.
Yeah, I'm saying that I haven't looked at this company, so I don't have a view on it.
No worries. And what about Bank of India then? Did you get a chance to read the earnings?
Bank of India, I have not been able to look at the numbers, but by and large, I think the banks are reporting steady set of numbers. So, in terms of asset quality, in terms of the loan growth, deposit growth, no real positive surprise over there. And I do think that the PSU banks, except maybe the ones which announce numbers like Union Bank at the early stage, Canara Bank, BOI, they have announced reasonably decent set of numbers.
Okay. Within the Nifty pack, I'm just pulling out something like an M&M, which is really standing out on a day like this, 1% higher. What are you seeing on charts, Nagaraj, with regard to something like an M&M?
Yeah, M&M has bounced back from the lower levels. A zigzag kind of a movement is going on. And there is a support around 2700 odd levels, which is a 200 EMA. I think we could see some more weakness coming ahead from the higher levels. And around 2700 is going to be the support for the stocks in the next one to 2 weeks.
Okay. With that, let me also, for better context on what's happening, bring on board Dr. C.K. Narayanan, founder of NeoTrader, joining us this afternoon live on the phone. First off, good afternoon, Mr. Narayan. Just want your view on, we've seen a bit of a slide in markets over the last maybe 3 months odd. We've seen a good, decent slide of 13% on the Nifty, much more where broader markets are concerned. Where to from here in your view? Is there going to be more weakness?
Well, you see, weakness begets weakness is a standard cliche of the market. So from that token, we have been doing that for about 4 months now, and we have reached where we have reached. The question is, no trend goes on forever, and everybody is searching for that rather elusive bottom for the past several months, and various projections have been made. Now, all of us have been engaged in that pursuit, and eventually one of us will get it right. When and where is the question. Now, coming to when and where, I think I've sent you 2 pictures today. Perhaps you could put up the first one, which is status of the market today by way of breadth, where you can see everything is a washout. This is a tweet that I had made in the morning at about 9:45, where I said that the weakness is continuing. So if the weakness is continuing and we are following what the market is doing, then we should remain on the bearish side, because the trend has not yet reversed. So that is the status as of the morning, and this picture of market breadth, which was awash with red, was there at 9:30, 9:45. And it's about 2:15, 2:30 now, and the picture is hardly changed from the morning. So that means across the day, no bullish bets have really been laid. Now, coming to the second chart that I've sent, if you have it, then that is a forward-looking chart that I had made. And this chart was made way back once we finished the rally. These projections were made way back when we finished the rally that we got in mid-December. At that point of time, a price projection for about 22,825 in the futures, and for the 27th of January in time. These two were the projections that I have marked on the chart, and these two were my next levels where I had expected that there would be a price and time match. So most of the time what we do is work on the price side, but the time axis is also a very vital one, which tells us when both are in sync, and that is the position where we should be looking for some sort of reversal to appear. And it does seem that today we are on 27 Jan, and that is where, if you see on the chart, I have put some red dots, and one of the red dots in the middle is 27th of January. And today we are pulled down into that 22,825, 30 levels on the Nifty futures. We are still declining, and even as we speak, we are very much near that level. So we do have a potential for a price and time match today. Prices reaching into supports, and the time axis also met. So there is a chance that we are at a turning point as we speak today. Okay. So that, I would say, you want to consider it good news, maybe it will be good news. But having reached a price and time point, what we now require is for a reversal pattern to exhibit on the charts, and that is still not visible today. So today we have done, let's say, part A of what is required, that is reach the price levels and reach the time levels. Part B will be when the market shows us a reversal pattern, and the earliest for that could be before the end of the day, which is still an hour away. It seems a bit of a tall order, but it could happen tomorrow, and that is what we would be looking for.
Right. Just quickly, Adani Total Gas numbers have come out. We're seeing an uptick of 6% in terms of revenue. EBITDA is down 13.4%, and this is because of higher gas costs. Gas costs increased by around 15% QOQ, and this is due to volatility with respect to the regulatory environment. Margins have are at around 20.5 versus that of 25.1. You're seeing those numbers on your ticker right now. That's with respect to Adani Total Gas. The numbers are out. We'll get into more details as to how overall numbers and how quarters panned out. But as of now, the numbers, revenues uptick is around 6%. But with that, it's time to slip into a short break, but we'll be right back. Don't go anywhere at NDTV Profit.
day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three.
Right, welcome back. You're watching India Market Close here on NDTV Profit. We have with us, of course, our guests, including Mr. C.K. Narayan of NeoTrader. Mr. Narayan, one quick question. Of course, you're expecting a bounce back when it comes to markets, and you've spoken about more so the Nifty. What about the broader market? Do you expect it to move alongside the Nifty, or do you expect that to react differently?
See, I think the entire market is oversold, whether it is Nifty or small cap area or whichever area you take it. They're all into an oversold status as far as sentiment goes and as far as price action goes. So therefore, if there is a pullback from here, from oversold pops will come. Now, how large they will be is a very debatable and measurable thing later. But then the whole market should improve. Now, how much they will improve in which sphere is again something to be checked as it flows out. But I think what is lacking today is any kind of tailwind to the upside. Now, the Nifty will have to provide that tailwind first, the Nifty or the Bank Nifty. And then the rest of these small and mid caps will follow. Small and mid caps is where people are hurting, and their huge losses, at least mark-to-market losses, so willingness to participate is low. But Nifty, Bank Nifty are trading arenas, and they will set the course, and then the rest can follow. So it is imperative that the move comes first in the Nifty, Bank Nifty, and then the rest can follow if it is consistent enough.
Thank you so much, Mr. Narayan, for all of those views. At least,
thank you.
At least positive views coming through from Mr. Narayan. Himang, if I can come to you with regard to broader markets as well. It's an interesting inflection point because we've seen a correction on the index, but the correction in some of the other stock specific, is far deeper. What's your sense? Is there a possibility that people will start buying this dip, or is it a wait and watch?
I think, there are multiple things that we have to really ponder upon. First thing being that the mid-cap and the broader market has actually outperformed over a period of time, and the valuations are on the higher side. So what kind of earnings growth they are delivering this quarter, and in terms of valuations post this price correction, how are they looking like, is something that will be an important factor to watch out for. Also, indices have a large number of stocks within them. So when you look at NSE 200 or NSE 500, there are like too many stocks. So I think you will always find that some companies where the correction is, let's say, about 25-30%, or maybe beyond that, would surely provide a good entry point where the fundamentals are good, the companies are delivering. So one should surely look out for those opportunities, because things can happen very quickly. haven't seen a big sharp, cut in the last, let's say, few weeks and months.
All right, Hemang, thank you so much for taking us through that last half an hour, and thank you so much for speaking to NDTV Profit. Moving on to the next segment, Heard on the Street, let's welcome in Somit and ask him what's going on in the dealing rooms and what's buzzing and why.
Well, firstly, it's Bajaj Finance. The stocks down over 2% in trade, must be at day's lowest point. But what dealers are indicating is that there is a buying interest coming in from DIIs at this lower levels when it comes to Bajaj Finance. The company will be reporting its numbers anytime this week. Apart from that, it's Eicher Motors and M&M. Now, both these stocks, if you look at, are seeing a strong buying interest on HNI desk. Now, this is what the dealers are indicating, and they're also saying that the January sales numbers are expected to be very robust for both these companies. In fact, both these companies are expected to report the highest number in their individual segment. That is Eicher in two-wheelers and M&M in passenger vehicles is what the dealers are indicating. And lastly, it's Axis Bank. A large HNI has been accumulating this counter at lower levels. Now, what we understand that there have been a couple of block deals in Axis Bank in trade today, and this large HNI has been accumulating this counter at lower levels, and this company also reported its Q3 numbers last week, and they were pretty much a stable set of numbers. Post that, we are seeing this buying action coming in from a large HNI.
Okay, very, very interesting. Some of those names. Thanks so much, Somit, for getting us all of that. Himen, let me come to you. In fact, we also have Himen Kapadia joining us, DR Choksi FinServ. Himen, coming straight to you with regard to some of these financials, both Axis as well as Bajaj Finance, looking interesting on charts, if at all.
A very good afternoon to you, Harsh. Thank you for having me on. It's always a pleasure. Yes, I think I'd go with what you're saying, because Bajaj Finance, frankly speaking, Harsh, has been hatching eggs for 4 years, but it's hatching eggs positively because it is supported by an upward slanting trend line, Harsh, and there is a tabletop. Okay, there's no doubt about it. So it's not going above 8050, but the downward slanting line is like this. So, I mean, I'm not sure it's applicable on such a big time frame, but it actually is an ascending triangle, Harsh. So frankly speaking, if and when it takes out 8050, I'm not saying it happens today, tomorrow, we're going to go straight to 11,000. So in fact, after 4 years, if this stock gives a breakout, the next couple of years should be good. So I would say in a bad market, it seems surprisingly resilient, and the day it moves, it's not going to look turn behind and look harsh.
Got it. Heyman, how are you reading the Nifty and Bank Nifty right now?
Well, excesses were committed on the upside, so now we have to pay for it on the downside. 22,800. Currently, we were moving sideways in a range between 23,000 and 23,400 for 10 trading sessions. VIX, which was 15.75 or 16.75, obviously didn't augur well. Now we've gone above 18, so downward breakout was around the corner. That's what happened. 2200, 22,800, we're there. The next level comes in at 22,522. I think we should or could be there in this week itself. We have the credit, we have the derivative expiry, we have the FOMC meeting, we have the budget, we have the Delhi election, we have the credit policy. All time bombs as far as events are concerned. So 22,522 is what looks to be possible as far as the Nifty is concerned.
All right, and what are your top picks for the day, Heyman?
Okay. I would not want to give any, frankly speaking, on a day like this. I mean, well, equity is something which you or I can't avoid, whether it's SIP, tax saving, or whatever. I mean, you just can't, be completely bereft. So, a buy call on HUL, oversold, positive divergences, 3 rounds of positive divergences. FMCG is the only saving grace. So, buy on HUL at 2380, stop loss 2330, target 2480. Second one is 1 second from the FMCG pack, which is Dabur. And given in last week also, it hasn't moved, but it hasn't gone down either. So all the mechanical indicators on the weekly chart have turned positive. Stock has formed a rounding bottom. It's on the verge of overcoming the 55-day exponential moving average. Buy in Dabur at 520, stop loss 505, target 550.
All right. I like how you said the FMCG is the only saving grace right now. I'm happy because I track the consumption space. But keeping it, keeping up with the consumption space, we caught up with Asif Malbari, who's the global CFO and president of Africa and Middle East International, about the slowdown that the company witnessed in household segment and if the picture is going to improve going ahead. Listen in.
No, so I think firstly, if I have to speak about household insecticides, I think our specific products which we've launched have done very well. You know, Incense Sticks did extremely well. It's been gaining volumes for the last couple of months. We've now actually got high single-digit share of that category, and there is still a large kind of volume to be kind of gained as we go forward. A new product which we've launched has been gaining the share, or there are early green shoots in terms of how it's performing in the entire, I would say, electric space. We are hoping that the new product, which is significantly better than all the products in the market, will again continue to do well. But yeah, I think the overall growths have partly been impacted by seasonality and partly been impacted by a bit of the urban slowdown, which everybody's kind of talked about. Yeah, I'm hoping that that's shows some sign of improvement as we go through, because I think the larger middle class urban is a large contributor to the overall consumption and GDP of the country, and yeah, we should see some kind of improvement in those trends.
Well, expectations of improvement, possible positive commentary to read into, but of course yet to translate fully into numbers. Let's take a look at the top 3 stocks on our radar today. Puneet here to break down those numbers. Puneet, what's on your radar?
Well, trying to add some positivity and green in a dull day today. So the first one's Transport Corp of India. The company reported its Q3 earnings. Revenues were up almost 15% to come in at roughly 1147 crores, which has beat estimates. EBITDA also grew by almost 19% in this particular time frame, coming at almost at 120 crores versus about 100 crores in the same time last year, so beat there as well. Margins have been maintained at 10.3%, slightly below estimates on a percentage basis. On an absolute basis, it's beaten that, while the net profit is up 27% to come in at 101 crores, and that's why it's corrected from the day's high point today. But one of the stocks which was in the green throughout the day. The second one's RPG Life Sciences, another big beat for this particular company. It's reported a 12% growth in its revenue, roughly about 173 crores. Margins are also up 30%, but the overall margins have come in at 28.5% versus 24.7%. So a huge jump of about 375 basis points. And it's been the net profit is also up 35% in this particular time frame. In its key highlights, the company did mention that the domestic formulation business has continued to gain from strength to strength. It's also registered profitable as well as healthy growth even in the newer categories that it has entered, with the EBITDA margin expansion also leading due to lower employee costs. The stock is up almost 10%. It's maintained its positive day through. And the last one's affected also because of market condition and poor results as CDSL. Now the company reported, while a 29% jump of at 278 crores in terms of revenue, margins also have fallen by roughly 400 basis points to come in at 57.8%, and that's been one of the key triggers. Apart from that, net profit margins have slightly contracted, but it's still a growth compared to on a YOY basis. But the stock price has taken a strong beating in trade today. So 2 stocks which have gained because of Q3 results, and one which is of course CDSL on the back of numbers has been affected due to market conditions as well.
All right, thank you so much for that, Puneet. With that, let's welcome in Siddharth Khemka, Head of Research, Wealth Management at Motilal Oswal, who is joining us now. Siddharth, Puneet talked about RPG Life. We are in a market where good numbers, the stock is being rewarded. With of course low valuations, but a slight miss in terms of earnings, the stock is getting hammered, and how. But with respect to RPG specifically, if you've had the chance to see the numbers, how do you read them?
Yeah, hi, good afternoon, Mahima. So unfortunately, the stock is not under coverage, so we don't have a view, or I have not tracked the stock.
Okay, in terms of CDSL or Transport Corp, any of these, if you have view?
Yes, definitely. So if you look at CDSL, something as you rightly highlighted, in this market, even a slightest of miss is getting punished sharply from the market, and CDSL numbers were clearly below expectations. So that kind of impacted the stock. The outlook from here, I think, again, if you look at from the long-term story, the demand for businesses like CDSL, the demat number of demat accounts, the number of transactions, that would continue to go up. But at this time, I think there is a clear 20% miss in terms of PAT for Q3. And overall, I think they continue to invest in technology for future growth. However, at these valuations, I think the margin room for error is less, and hence we believe one should remain neutral given the sharp run up in the stock that has happened and the slower pace of growth. So even if we are expecting a 30% CAGR over the next 2 years, I think the valuation multiple at about 45 times on a forward earning basis does not leave much room for upside, is what we believe.
Let's also pull up Shakti Pumps. The numbers were good, Harsh. I mean, revenue up 31%, margins have improved so much. Even the net profit was, 3 times of what it was YY, but it's been locked in lower circuit since the start of trade. Siddharth, do you have a coverage on this particular counter?
No, Mahima, unfortunately, again, we don't do Shakti Pumps.
Okay, Heyman, on the chart, Shakti Pump did see a lot of momentum, but today it's locked in lower circuit.
Mahima, the way I see it, over the last, maybe in May 23, we are in Jan 25, Mahima. Stock has moved from, obviously, adjusted for bonuses and everything. Stock has moved from a low of 67 to 1387. I mean, the laws of gravity have to catch up, and that's what is happening. What we saw was a recovery from near 1000 levels to 1200, Mahima, but it was a corrective bounce, not a rally. And now we've resumed the downward journey. So I believe we could be, we seem to be entering a correction of a greater degree, and that will take some time to play out. For a quarter or so, I don't think anything spectacular looks like happening. And yeah, the swing low was at 1008, and there's 996, a low in December 31st. So I think that's where we could see support coming in, Mahima.
Okay, Siddharth, if I can, and while we are at it, we also have Indian Oil's numbers flashing at the bottom of your screen, 3.5% lower on the stock, and the stock inching more towards the red. If we pull up the intraday chart, you'll likely see that profit at 2874 crore, and we'll quickly get you better perspective on that as those numbers start to trickle through. But Siddharth, if I can come to you very quickly with regard to IT, it's been the big loser in trade today. Is this that opportunity to buy?
Yeah, Harsh, I think even we're trying to understand the reasons for the sharp fall. There could be many. I think one of the biggest reason could be what China has unveiled over the weekend. DeepSeek, the new AI, you can say, module that they have launched. That raises a lot of question whether the future spending on the IT side, where they will be divert towards China, and China, as we know, is not an open economy for Indian companies. I think there's a lot of ifs and buts, but as we see, some of the companies, they have come out with good numbers. Some of them have definitely highlighted that the exit run rate for FY25, that is Q4, could be weak. So I would suggest that it is better to wait for one more quarter. There are also a lot of challenges in terms of what Donald Trump could do in terms of the H-1B visas. There is not much clarity, and whenever that news flows comes, I think again that could be negative for the sector. So while yes, the valuations for some of the companies are good, but if you look at companies like Coforge, Persistent, which came out very strong numbers, they are strong in this market. I think there the opportunity could be much better compared to some of the large cap names where they are more prone to the global changes in terms of how things would go from here on. I think there we would wait for one more quarter for clarity to emerge and maybe then start accumulating.
Indian Oil numbers flashing on your screen. Net profit at 2874. The expectations were around 6,800 crores. So it's way below the expectations. But just to read through with respect to the numbers, I'm seeing that the base quarter, that is the last quarter, quarter 2, had an exceptional number of around 1100 odd crores, which has come down to around 600 odd crores, which is why there's a huge difference in that PAT number. But with respect to the revenues, revenue is up around 7%, no 11%, and there you go. EBITDA is up around 89% for the company at 7,117 versus that of 3,772. We're yet to see the margin numbers, I believe, Harsh, but
I believe. Yeah, so if I can quickly take over, Mahima. So EBITDA was expected around the 12,000 crore mark. It's coming at around 7,000 crores. So surely it's a margin miss. EBITDA margins were expected around the 6.5% number. My guess is it'll be closer to the 3.5% number.
You're right.
Broadly.
You're right. It's around.
And that's why there'll be a huge miss on that margin count. And versus the 2.2% base as well. There's been a bit of an improvement, but the expectations were that the improvement will be far more significant. So that's not reflecting on IOCL's numbers. I want to quickly take a view. Siddharth, any views with regard to these numbers, prima facie?
Yeah, Harsh, I think looking at the broad numbers, the miss on margins, I think that is pretty negative. The expectation from the OMCs for this quarter was a sharp improvement on a sequential basis because of the rise in GRMs, and that would have aided margins. So we clearly need to see what impacted this margins, and is there any one-offs which has led to this, or is there any other factor which is causing this margins to be lower than expectation?
Just talking about those one-off, Siddharth, there's an inventory write-back of around 6,041 crore that was there in Q2, which is why the base is lower in terms of its profit. But margins are at around 3.7% versus that of 2.2%. Heyman, quick read on the charts.
Very strong support at around 121. I don't see too much of a downside. Maybe 115 comes in or no. If I were to have a 15-month view, I would say I'd buy more than 50% right now because I am quite bullish on the stock from a longer term point of view. I see it going to 225 in the next couple of years. Maybe not this year, but 2026 onwards.
Wow, doubler there. Clearly, as per Heyman in the medium term. But time for our bull versus bear segment. Laurus Labs in focus. Stock has taken a tanking, and this is despite the fact that management has come out and clarified. So Varsha's here giving us that perspective of bull versus bear. Would you buy or sell, Varsha?
Thank you, Harsh. But you know, Harsh, there was this time when Laurus Lab had a very roller coaster ride kind of thing, and when finally the things were improving, and we even saw the stock was up 5% on Friday. There comes a news wherein the stock is tanking like 12%. But let's see what are the positives and negatives for this company. If I were to talk about the numbers, if you see the top line was supported by higher CDMO business, which grew almost 80%, and which is the next leg of growth for Laurus Lab. But on the negative side, if you see, this growth was tempered down by API business, which is weak, and according to the analysts, the growth sustainability is actually uncertain when it comes to Laurus Lab. So good show when it comes to CDMO, which is the next leg of growth, but again API business did suffer for the company. Also, the capacity expansion for the companies is in line, which is a good thing. But moving on, if I were to talk about the margins, so they actually returned to 20% of EBITDA margin. Now, this is first time in the last 7 quarters, which is actually the highlighting factor. And even management in their con call have reiterated that they're gonna have a 20% of EBITDA margin for FY25. But to do that, for Q4, they have to do 28 to 30% of EBITDA margin. If that goes well, we can see the Q4 margins will be very good. But the bear case, if you see, US a pause in foreign aid is actually bad for Laurus Lab. But company has come out with a clarification that the revenue only contributes 10%. The contribution to the US, that is the ARV business, is only 10%, and only 3 to 4% when it comes to EBITDA. So not much effect when it comes to Laurus Lab, but still if you see, the stock is down almost 10%. Moving on, lastly, if I were to say, the company has given a 20% EBITDA margin guidance, which is actually good for them, because Q4 will see 28 to 30% of margin, which is a huge jump from last year, and of course the Q3 which we have seen. But there are analysts wherein they have said that there's concerns when it comes to valuation, and we may see the profit booking going forward. So all in all, I would say, Harsh, that a pretty good set of numbers, but Q4 is the one quarter which will actually determine whether Laurus will fulfill its target of 20% EBITDA margin. We'll see that.
Right, thank you so much for breaking that down for us, Varsha. In fact, we spoke to the CEO of the company, Satya Narayana, about how the freeze of new funding for foreign assistance programs will impact Laurus Labs. Listen in to a slice of that conversation.
I think our activity picked up just before COVID and accelerated during COVID. And we see that acceleration still continuing because of the number of RFQs we are receiving, number of customer visits we are hosting. I think that is continuing.
All right. So also, in H2, the indication was that margins could be somewhere around 25%. So at this point in time, how are you looking at margins panning out? And do you think that towards the end of the fourth quarter, there could be a substantial shift in an increase in margins so as to catch up with the expectations of the markets as well as your indications?
If you look at our Q3 numbers, which we announced last week, we have achieved 20% EBITDA margin. And in the investor call, we also reaffirmed our earlier statement. By end of this financial year, we expect to have EBITDA margins for the whole year closer to 20%. And we still committed to that statement, which means that our Q4 has to be better than Q3, and which we also indicated because of the order book what we have, because of the deliveries what we're doing in Q4. Q4 will definitely take our whole year margins to closer to 20%.
All right.
Yeah.
So I also want your view on the animal health business. How are you expecting it to pan out? What kind of contribution do you think that it could start making in terms of significance as we move into the new financial year of FY26?
See, we have built a new site for animal health, and the site was inaugurated April, May last year. And we have done validations of 2 APIs, and we expect to complete another API during this quarter. We also received orders, commercial orders for the validations what we have done. And as a standalone business, animal health will do very well in FY26.
Okay, so that's of course conversation with the management of Laurus Labs. Siddharth, would you at all venture and suggest that as part of your estimates or MOSL's estimates, that Laurus will be able to clock at least a 20% plus kind of EBITDA number for full year FY25, even though that itself is looking like a tall ask? And what's the impact of this in your view, the halting of AIDS funding? Do you believe that that will also impact the company? 12% lower in trade today.
Yeah, Harsh, I think definitely, see, there is a near-term impact because of this. While the management has clearly said that, and we have the rough cut estimate that about 20% of total ARV sales of Laurus is from is being funded by the PEF AR program. So in terms of EBITDA, I think consolidated sales would be about 9% that can get impacted. Margins, EBITDA, if you see about 5% contribution, these are low margin business. So we believe that on an EBITDA level, there could be a 4 to 5% impact for FY26. And in our estimate, before taking this impact, we were expecting about 18.5% kind of margins. I think that could be again a little bit under pressure, and more so for FY26, whole of FY26, that could now come around that or just below the 20% mark. Our estimate for FY26 was at about 21.8% margin based on what the management highlighted in terms of growth. So Q3 number, if you look at after almost 6 quarters of decline, we saw strong improvement in financial performance. The company has invested considerably in the CDMO segment to build capabilities to cater to the customer's manufacturing requirement. And there are certain contracts in hands that would be executed in the medium term, which could push the margins on the higher side. And on back of this sharp improvement, even if there is some tempering down, we believe that 65% earning CAGR over the next 2 years is possible, and hence the sharp punishment from the market is definitely unwarranted, is what we believe. 5 to 10% correction is already factoring in the decline. We would anyways wait for the market to become stabilized, but we have a positive view on Laurus. We have a buy rating that we came out after the results.
That's the fundamental view coming in. Hemant, your quick take with regard to charts. Laurus 12% lower.
280, 620, Harsh. I don't see it going too much beyond 500. Okay, I think looking at the volume, it's shot through the roof. Maybe I'm jumping the gun here a little bit, Harsh, but I think a panic bottom has been made. We needed a retracement, like I said. 280, 620. I don't see too much of downside below 500. If it closes on the weekly chart only and only below 500, then I would turn a bit bearish, but otherwise, no, I think it's done.
Perfect. All right. So more positives than negatives here on Laurus Labs. Let's slip into a very short break. On the other side, we'll get you top BTST ideas, as well as talk about a little bit about some of these lenders, smaller ones, IDFC, AU Small, taking a real knock in trade. Interesting to get perspective on those.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government...
Welcome back. Bunch of these banking names in focus as well. Siddharth, what do you make of some of these numbers, and what do you make of the punishing that the street is giving to some of these stocks? Now, if I can just zoom out and give a little bit of better context as to what I'm referring to, some of these stocks have fallen 40 to 50% from their highs. They're still profitable companies, ROAs are still positive, but just some amount of near-term pain that they are saying. What they are suggesting is in 1 to 2 quarters, this pain will reverse. Then, would a 40 to 50% pounding really be fair?
You rightly pointed out, Harsh, already some of these stocks have been punished for the weak numbers that they were expected to report. And I think there is more disappointment, especially in IDFC First Bank numbers, where the net profit declined 53% and almost 30% lower than our expectation. That's a big miss. We have cut our estimates by 26% for this year and by 10% for next year. In this kind of growth, I think the punishment would continue for IDFC First until we see some improvement, while the management has highlighted that FY26 could see improvement in terms of loan book growth in the range of 20-21% and deposits growth of 24-25%. I think the overall market would wait for some of that to turn into numbers before turning positive. If you look at AU Small Finance Bank, I think they managed to report a decent number. The PAT was an 8% beat in terms of our expectation. The OPEX was much better controlled. However, provisioning was higher, and I think that was a major concern. Slippages remained elevated, and given the segments that they are present in, the SMEs and the micro SMEs, I think that is a space where the market is kind of more concerned in terms of increase in the slippages and the increase in credit cost. And hence, I think that punishment is continuing. Definitely, there is an overreaction from the market as the stocks have already seen a lot of correction, but the weak numbers are not supporting the sentiments either.
And therefore, what would you buy at this point if you were to buy this? Because you sounded more constructive in this space than some of the other spaces that we've spoken about today afternoon.
Yeah, so definitely, I think AU Small Finance, between the two, I think I can look at it a little more constructively. If you were to ask me, among banks, ICICI were much better numbers, consistently reporting very strong numbers in this volatile environment. And I think that is giving much more comfort, both in terms of size and in terms of delivery. So that is something that we like. ICICI Bank, we have a buy rating and a target price of 1550.
Okay, interesting. I'm going to quickly take a question with Hemen as well before we move on. Hemen, IDFC First, AU Small, some of the big movers, even something like a Ugro Capital, down 5%, a Capri Global also moving, not in sync with the kind of numbers that it's declared, and therefore just wanted your view with regard to technicals on some of these.
Well, if you look at IDFC First, it's frankly speaking actually disappointing, because one would have thought that this was a correction in a bull market. But now what has happened is that 65 was, at least 64 was a level for me, which I thought should have remained sacrosanct. That's not happened. So we'll probably go to 51 and maybe 44. So it's going to take some time. I don't think anything changes overnight. So probably 6 months gone. As far as AU Small Finance Bank is concerned, stock is relatively stable, but it's gone nowhere, Harsh. If you go to see for the last, 3 years, EU has been in a range between 550 on the downside, 800 on the upside, going nowhere. So it's here only. So I don't think anything spectacular looks like happening. Yes, 520 were to break in closing on the monthlies, trouble around the corner, but even that doesn't look like happening. So it's just, twiddling its thumb, so to speak, doing nothing. Capri Global, on the other hand, we walked into a correction of a greater degree. We've had a phenomenal move. Stock is obviously tired. Short term, it's oversold. A bounce could be around the corner. But my worry is that it's been in an uptrend since last 13 years or so. And that is under threat. So on the bounce, if we don't make a new high, frankly speaking, it doesn't look like. If it doesn't make a new high in the next few months, I think this is going to take time. I think the whole year would be a washout the way I see it.
DLF is the other counter which is in focus, and this is on the back of its Q3 earnings. Pre-sales was up 34%, which exceeded the annual guidance, and new sales booking was up 34% again. Net profit up 61%. Both MS and CLSA are bullish on the stock and have maintained overweight and outperformed respectively. Mihika brings in with more details on that. Mihika?
So just with the top line numbers, we've seen flat revenues, we've seen EBITDA reducing 21%, and however net profit is up on 61% on a year-on-year basis. When you talk about what stood out, well, pre-sales is up 34%, this exceeded the annual guidance, and the new sale bookings is up 33% due to super luxury offerings, and we've seen the big jump in net profit, which is why it's buzzing in trade today.
Right. Siddharth, Nifty Realty has seen some real pain, in the past few days. It's down over 20%. And some of these numbers, DLF, Macrotech, DLF did see an uptick of around 4.5% in the start of the trade, but it's cooled off. It's now it's up around 1.5%. And Macrotech is almost at its day's lows, up around 0.35%. But if you've had the chance to read these earnings, what do you make of it?
Yeah, Meek, I think if you look at the market last year, real estate was one of the top sectors in terms of returns generating in terms of the sectoral indices, and that is where the numbers continues to be very strong. We have seen definitely some slower growth in terms of new launches, and that is kind of impacting the future outlook. Nonetheless, the strong pre-sales data as well as the strong earnings delivery that continues for some of those names. For example, DLF came out with very strong numbers. The challenge is that most of these companies have done well in the premium and the luxury segment. And the market expectation is that going forward, the supply or the new launches in this segment being low, the growth from the mid-market segment has to pick up, which is a lot dependent on the interest rate cut that is yet to happen. And in the current scenario, even now that the interest rate cut is not expected in the Feb meeting, RBI meeting, I think it will be towards the mid of this year. Hence, any positive news is being met with profit booking. While we would believe that from a one-year perspective, some of these names we are very positive on in the real estate, be it a Godrej Properties, be it DLF, where we have a buy rating and a target price of 950, even a Macrotech developers, we are positive. Results were pretty strong. We have seen highest quarterly booking, and the company has achieved almost 93% of the full year's guidance in terms of the booking delivery. So I think numbers continue to be strong. Sentiment a little bit cautious. Whenever the interest rate cut happens, I think that could be a time where the interest in some of these names could revive. From a long-term investment perspective, definitely a good sector to accumulate.
Okay, let's pull up the Nifty IT constituents, and what we're seeing, 5% lower on LTI Mindtree, Coforge down 4.5%, HCL Tech down by 4.5%, Persistent down 4.5%, 4% lower on a Tech Mahindra, on a Wipro, LTTS down 3%, just so much pain across the board. Hemen, what's happening here? Would you at this point go long?
I would not be in a tearing hurry, Harsh, to go long at this point in time. Even the medium-term picture looks a bit wobbly. I'll just draw a little bit of a perspective, Harsh. We were at a low of what, 11,000 in August 20, in March 20. That's when the whole market bottomed at 7,500, Harsh. 11,000. We've gone to 46,000. So we've gone up more than 4 times in 5 years. You can't keep on running marathons in a row. So it's taken a breather, and I believe this breather is going to take longer than expected. Lower tops, lower bottoms, negative divergence, and intermediate peak has been formed without a doubt. Now, whether this converts into a longer term peak, we'll need a couple of months to confirm that. But as of now, maybe you can play with levels, but the picture has been spoiled. At least the weekly charts are shaky. One will have to wait and see if the monthly charts also fall in line, but no. time being, a top has been made. Harsh.
Right. Mankind Pharma is another stock in focus. Let's pull up the charts. It's down by about 2 odd %. In terms of numbers, the revenue growth was driven by continued outperformance in the chronic segment, strong recovery in OTC, and consolidation of the BSV segment. In terms of the numbers overall, revenue was up 24%, EBITDA up 37%, and margins took off from 23.3% to 25.7%. However, profit was down by around 16 odd %. And we also had a chance to have a conversation with Mankind Pharma's Vice President and MD, Rajiv Juneja, who talked on how they have made the change in the organization, making it the growth lever and making the growth to this level. Listen in.
We had a lot of distributors. When once we carved out our consumer division, we stopped the supplies to those distributors. So we started working like a OTC division. Earlier, our consumer division was a mixed bag of pharma and consumer kind of a culture. New leadership came, new systems came, new style of functioning came. A lot of marketing guys from OTC companies were hired, and that basically has brought our growth to this level. 30% I will not say will be there in future, but yes, we expect the growth will be much better. Even this quarter, we estimate around 20% growth. Fourth quarter I'm talking about, as well, our growth will be in high teens. Next year also we expect our growth in high teens. As far as the investments are concerned, I don't think any kind of investment, extra investment is required in our consumer division side.
Let's also pull up the Nifty Pharma and see its performance in trade today and see what are the counters which are kind of pulling down the index. If we can quickly pull up the constituents on the Nifty Pharma, there you go. The Nifty Pharma is down by about 2.5%. All counters in red except for Torrent Pharma on the back of its earnings. Laurus Labs down 11%, Gland Pharma down 7%, Nalco 6.5%, Granules another 6%. So all of these counters under pressure. Siddharth, I'll come to you. Mankind Pharma, if you had the chance to see the results, what do you make out of it?
So I think operationally the numbers are in line. There is definitely some course correction impact from the BSV integration, which would kind of led us to cut our estimates for this year by about 10%. And about 6% for next year. But what we believe is that this would only create growth prospects in the long term. And in this environment where we are seeing a lot of headwinds from the global markets being almost more than 90% revenue coming from the Indian markets, I think that's a very good positive factor which kind of supports in this volatile environment. Overall, we believe a 20% earnings growth over the next 2-3 years, that is something which is possible. The company is making consistent efforts to support the niche offerings, capital allocation towards growth levers, that is positive. And it's focus on differentiated portfolios plus the which includes the prescription products, includes the recently acquired BSV. Consumer wellness, that is something that we like. We believe that is a strong brand plus good steady growth. So overall, I think bearing the near-term impact because of the changes that the company is doing in terms of integration of BSV, I think it's a good steady stock to look at from the pharma sector.
Very interesting. I want to take a quick question with Hemen. Hemen, BSC down 7%. Now, could likely be because of CDSL's numbers, but what's it looking like on charts is what I'm interested in knowing.
Well, it's a high beta stock, Harsh.
Yeah.
At the moment, have remain volatile. Lower top, lower bottom, downward gap today. Short-term top, yes. I believe if it doesn't recover in the next couple of days, I have a feeling a medium-term top has been made. We've had a phenomenal run. So if I look at a slightly longer-term point of view, it still seems to be in a bull market. So it's a correction within an up move. So I wouldn't be too much worried. 5,000 breaking, I know that's almost 8% away. But 5,000 breaking would be cause for concern. But as of now, short-term top, I believe a medium-term top could be happening.
And what about something like some high beta names, Hemen, for you? Vodafone Idea and Paytm. You've seen a decentish correction from the highs even on Paytm. So your quick views on this will help. Maybe 30 seconds each.
Okay. Vodafone oversold, bounce over, needs to close about 10.5. Seems to be a recovery, not a rally. Has gone over in 5 years. Don't think it's going anywhere. Paytm, on the other hand, I think 1000 turned out to be a big headache. We're closer to supports at 750. Oversold, I believe in the next 10 trading sessions, the bottom would be made for a recovery. Setup spoiled on the medium term.
Siddharth, your quick take on BSE?
I think if you look at it, it's consistently delivered in terms of numbers, and in the current environment where the weekly derivatives expiry rules have been changed, I think BSE would continue to gain market share, and that's the key factor. Today, I think it's a good opportunity because of CDSL, the stock is down. Plus, I think the overall market construct that also creates a negative sentiment for capital market related stocks. Nonetheless, in terms of core fundamentals, I think pretty numbers, both in the core business, derivatives gaining market share, the Star MF platform that continues to do well. So we are very positive on the overall capital market theme, plus BSE, which is one of our preferred picks exchanges, are doing better. Yes, the sentiments are negative, but I think that is only an opportunity for people who have missed out to add gradually accumulate the stock of BSE. We have a buy rating and target price of 6,500.
Even your ideas for buy today, sell tomorrow, or sell today, buy tomorrow?
Okay, Mahima, I have a buy call on Axis Bank as a BTSD idea. So one can buy Axis Bank at 947, a stop loss of 940, target of 961, a risk reward ratio of 1:2, BTSD on Axis Bank.
Okay, so that's the BTST call also coming through. Some PSU banking names that are also doing decently well today. Let's pull up a UCO Bank, and even within the small cap universe, I'm just going to quickly look at some names. Okay, Credit Access also doing fairly well for itself, it seems. Let's pull up a Credit Access actually. This is, okay, so there's Bank of India, which is doing well. Credit Access has bounced up 4% now. And you have some PSU banks also which are doing fairly well. Siddharth, your views with regard to some of the names here within the PSU banking pack. Central Bank, for example, is also doing decently well for itself. But lots of movers here within this pocket, within the small cap index.
Yeah, I think if you look at in this current volatile environment where some of the larger banks and especially the private sector banks numbers have been weak, the PSU as a space are reporting strong numbers. Plus, they have a better, because of the low base, they are reporting stronger growth. So while not many small PSU banks are under coverage, but I would say that overall on an aggregate basis for this quarter, the expectation for from the PSU banking space is much higher growth compared to what we could see in the private sector banks, and hence likely to do well. But it would really be a mixed bag. The Bank of India numbers were pretty strong, and I think that is kind of supporting the sentiments today for some of the other small PSU banks. SBI has been consistently delivering strong numbers, which we like as a preferred pick in line with what ICICI has been doing, and I think that is something one can focus on in terms of investing in this market.
Right. Let's also focus on what to watch out for post market hours. U.S. new home sales data will come out. ECB President Lagarde's speech is also something to watch out for. A few earnings, that will come post market hours. Bajaj Auto, BHEL, Cipla, Colgate Palm Oil or Olive, Exide Industries, Hyundai Motor, JSW Energy, M&M Financial Services, MGL, SBI Cards, TVS Motors. Some corporate actions to watch out for. Tips Music is something that has record date of interim dividend of rupees 3. Wipro will also have a record date of its interim dividend of rupees 6, and Zensar Technology will also have a record date for its interim dividend of rupees 2. So all of these things to kind of watch out for. Heyman, in the previous panel I was asking about Reflex Industries, a good set of run for that counter. It's been up around over 240% in the past 1 year. The numbers were good and the counter is also doing fairly well today. But if you've had the chance to read the charts, is there more upside to that particular counter?
Mahima, yes and no. More upside, yes, but it's going to take time because 100 to 600. So we are going through a consolidation phase. And if you see in the consolidation, it's already, this is the 1, 2, 3, 4, this is the 5th month, Mahima. And frankly speaking, despite the 5th month of a correction, we're correcting a significant move. The downside has been relatively limited at 440. Yeah, if 440 breaks in terms of weekly closing, we could see a deeper correction. But yeah, it looks very clearly in a bull market. And this is a breather in a bull market. So it's a correction in a bull market. So I would be positive. But yeah, keeping in mind that the stock has gone up 5 times or so, I think it might take a quarter or two before it sort of starts perking up again and, resuming its longer term up move.
All right, Colgate Palmolive is expected to, kind of give out its earnings today. And, last time, barring the kind of home care segment, the oral and personal care segment grew very well for the counter. So we are expecting a similar uptick this quarter as well. The overall analysts suggest that revenue might see a high single digits uptick. Margins might face pressure. This is on the back of the inflationary pressure that's going on throughout the consumption space. There might be a slight uptick in the EBITDA as well. Net profit is something that will be on the watch out for because that might see a high single digit uptick. In terms of the other key things to watch out for will be the kind of slowdown in the urban consumption that's been common in both HUL as well as Godrej consumer results. Another thing that will also be in focus is that the increase of small packs in the overall product mix, because HUL came out and said that they are increasing this. They've seen that an increase in smaller packs in their overall portfolio is going up. So that I'll come to you. Any expectations as to how Colgate Palmolive will come out with its result as?
Yeah, I think the volume growth is expected to be mid single digits, so about exactly at about 5% is what our expectation is. So it would be a subdued quarter for Colgate, a 7% Y-on-Y growth. But if you look at in terms of Q1Q, it would be a subdued quarter. Margins are expected to contract. So while gross profit margins are expected to contract by 120 basis points, the EBITDA margins are likely to contract about 80 basis points on a Y-on-Y basis. As you rightly said, yes, the focus would be on expanding distribution, increasing the reach through the smaller packets, and I think low value packets, and that is something that most of the consumer companies do in times of a consumption slowdown. Rural consumption is likely to be better than urban, but I think that is again the case across the consumption space. And coming to net profit growth of just about 6.5% because of the low EBITDA growth and the pressure in margins. So not much in terms of expectation. Definitely some of the management commentaries from these consumption companies will matter a lot to see if this sector or space, how they would fare in the fourth quarter.
Okay, well, we're just about a minute from close. Thank you so much, Siddharth and Heyman, for joining us this afternoon, giving us all of that perspective. Always great chatting with you two gentlemen. Let's quickly pull up the Nifty 50 in terms of how we've gone through the day. It's been a tough day, Mahima. And we're sitting just off the low point of the day. We've clocked a new low, 22,786 in the last hour or so. And we're just about maybe 30 points from that low. So new lows being tested, and that doesn't look good at all on the benchmark itself. Let's look at the heat map as well. Some IT names are real pain points here today.
4.5% lower on HCL Tech, Tech Mahindra down 4, Wipro down 3.5 plus. Shriram Finance post the numbers which didn't look as bad, and thereafter even the Concall didn't sound bad, 3.5% lower on that one as well. But financials continue to dominate even on the green side of things. You're seeing ICICI, SBI, at least on that list. Axis also marginally in the red, but FMCG also doing or having a fairly good day. Britannia, HUL among those which are doing well. M&M, Maruti are the other ones. Bajaj Auto absolutely flat ahead of numbers, but that's on the benchmark. The breadth also looked poor, Mahima. Let's pull up the breadth of the market. Not seen such a poor breadth in a long time. 2,000 declines to just about 200 advances, even though this has improved from the bottom of the day where there were just about 50 or 60 advances. It was a very tough day at the bottom, but so slight bit of improvement as we've closed. But what about the broader markets? How are they faring?
The real pain is there actually.
Yes, absolutely.
And there you go, mid-cap 150 is down by about 3% at the close, and 500 odd points, is the kind of breadth, and it's almost the difference between the two high and the low is quite wide. And right now also we are trading at 19,129 levels, which is not near to the day's high. So clearly near the day's lows, 20 odd points near the day's lows. Let's pull up the small cap 250. Small cap 250 is down about 3.8%. There also we're seeing 600 odd points gap between the day's highs and day's lows, and currently trading around its day's low itself, 100 odd points away from its day's lows. But let's also pull up the sectoral heat map and see how the sectors have fared. Nifty IT, the real pain, there you go. Nifty Media down by about 4.8%. Nifty IT down by around 3.4%. Nifty Metals is also down by about 3%. There's Nifty Pharma, which is seeing the pain on the back of Laurus Labs, which is down about 6%. Nifty Pharma down by about 2.7%. Nothing in green at the closing. The Nifty Private Bank down by about 0.6%. Nifty Bank down by about 0.7%. Nifty FMCG also down by about 0.8%, despite the large caps, in green.
Well, one thing is in the green, the India VIX,
the India
8% higher.
Unfortunately, 8% higher.
That shows how
yes,
it's all played out.
Absolutely. Let's lastly pull up the BSE NSE 500 and see the counters. Let's start with the green. Some positivity. BOI on the back of earnings 5.7%. Sobha 3.7%. IDBI Bank 3.7%. TTK Prestige, Sumitomo Chemicals 3.3%. Adani Wilmar on the back of earnings 3% uptake, not bad.
And Torrent Pharma as well on the back of numbers.
Yes. Laurus Labs on the other hand down 11%, which is pulling down the Nifty Pharma. Kaplan Point, Tejas, Piramal Enterprises, AB Sun Life, IDFC First Bank, Swan Energy and Polyplex Corp all down within the range of 7 to 11%. But with that, we're completely out of time on India Market Close. Hopefully a better day tomorrow. Let's hope that we start in green at least and end in green. With that, stay tuned to NDTV Profit for more news and updates on the other side.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
everyone, with Budget 2025 right around the corner, there is one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook.
Good evening, you're watching Market Express and I'm your host Himakshi Bahugna. Let's get straight into the show. Now viewers, benchmarks start the week lower, ending with cuts. The Nifty ends below 23,000 mark, whereas Sensex ends above 75,300 levels. Broader market rout deepens, underperforming benchmarks. All sectoral indices end in a sea of red. Top laggard media index falls around 5% as Z, PVR, Inox drag the index to the ground. IT, metals, pharma, oil and gas follow. Here are a few stocks that lost significant market cap in January so far. The top one is HDFC Bank with 1.14 lakh crore, followed by Zomato with a market cap of 63,451 crore rupees. Trent, ITC and LIC follow. Small cap stocks that lost most market cap in 2025 so far include KEC International with 10,908.88 crore rupees, whereas Newgen Tech's market cap is currently 9,014.45 crore rupees. CDSLPG, Electroplast and AB Real Estate are the other stocks that lost market cap in 2025. Now on to the mid-cap stocks that lost most market cap in 2025 so far. Kalyan Jewellers was the top loser with 35,063.64 crore rupees. Oracle Finance follows Kalyan Jewellers with 27,057.19 crore rupees. Suzlon Energy, Oberoi Realty and Godrej Properties are the other stocks losing the market cap in 2025. Now here are some stocks that gain market cap in an under pressure market. Shriram Finance adds to 76,688.54 crore rupees. Bajaj Finance adds 26,898.49 crore rupees. This follows Maruti Suzuki, Bajaj Finserv and ONGC. Now, ICICI Bank reports its third quarter earnings in line with NDTV Profit estimates. Margins beat across each metric. The bank witnesses strength despite a tough quarter with strong operating profit. Two positives turn out to be no spike in provision and high return on assets. Now, Godrej Consumers reports flat volumes year-on-year. Factors affecting performance are increase in palm oil cost, general trade losing share and disappointed growth of premium products. Urban slowdown remains a concern. Sales decline 8% in Africa, Middle East and USA. Now, viewers, Nomura comes out with a note on credit access, retains reduced stance on the microfinance lender. Nomura cited company's first ever quarterly loss due to credit cost. Says the performance reflects challenging conditions in MFI sector. Nomura says the key challenge is accelerating write-offs and stress in Karnataka and Tamil Nadu. MOSL issues a note on Laurus Labs with regards to AIDS relief program. Funding will stop soon post orders on pausing foreign aid. President's emergency plan for AIDS relief funding or the PPFAR comprises 20% of total ARV programs globally. 20% ARV sales of Laurus comes from PEPFA, and ARV occupies 46% sales for the company. But the ARV business is relatively less profitable with maximum impact of 4 to 5% of FY26 EBITDA. So Laurus stopped investment in ARV business a year back and continues to focus on CDMO business. US DAM Capital end higher on back of stellar earnings in quarter 3. The company's quarter 3 net profits jump over 230% to 52 crore versus 22 crore quarter on quarter. On the other hand, the consolidated revenue gained 64% at 104 crore versus 63 crore quarter on quarter. The investment banking revenue up 210% at 80 crore versus 38 crore, whereas the broking revenue was down 11% to 20 crore versus 23 crores. CDSL stocks end with cuts after the company's results disappoint Street. The consolidated net profit reported jumps 21% to 130 crore versus 107 crore. CDSL's revenue was higher 30% to 278 crore versus 215 crore rupees, whereas the EBITDA moved higher as well, up to 22% to 161 crore rupees. Now let's give you key highlights of quarter 3 earnings of RPG Life Sciences. While domestic formulations continue to foster profit and growth, international formulations registers double-digit growth. Lower employee cost leads to expansion and EBITDA margin. Other income increases 72% year-on-year. Company is now shaping international formulations and API businesses. Morgan Stanley initiates overweight on Vishal Mega Mart with a target of 161 rupees. The brokerage firm believes that the company's phenomenal growth deserves attention. Vishal Mega Mart's growth strategy looks much more promising if compared to its peers, considering multiple factors like scale, market tiering, product proposition and more. Morgan Stanley's expect Vishal Mega Mart to deliver 20% revenue and 27% PAT CAGRs over FY24 and FY29. IOSL posted its quarter 3 earnings. The revenue of the company is up 11% at 9,899 rupees. On a standalone quarterly basis, the net profit of the company increased 15 times and stands at 2,873 rupees. The EBITDA is up 88% and margin is up 3.6%. The company has recorded domestic sales of 13% and export sales of 31%. Adani Wilmar posts strong quarter 3 earnings. Net profit comes in at rupees 411 crore versus 201 crore rupees in the same period last year. Revenue rises over 31% at 16,869 crore rupees. EBITDA shoots up almost 57% at 791 crore rupees, and margin increases to 4.7% as compared to 3.9% in quarter 3 last year. Reflex Industries revenue more than doubles to 717 crore rupees versus 306 crore rupees in quarter 3 last year. EBITDA rises close to 50% at 51.1 crore versus 34.2 crore rupees. Net profit up at 50 crore versus 16.9 crore rupees. Only EBITDA margin slips down a bit at 7.1% as opposed to 11.2 crore in the same period last year. ACC's quarter 3 profit is more than double. Bottom line comes in at 1,091.73 crore rupees. Revenue from operations grows over 7% at 5,207 crore rupees. But EBITDA drops by over 53% at 395 crore rupees. Margins to decline 7.59% versus 17.41%. Capri Global stock plunges despite profit doubling in quarter 3. The net interest income gains 41.63% at 347 crore versus 245 crore. Capri Global's asset quality is under control with adequate provision coverage ratio. LT Food stock loses ground after the consolidated net profit falls 5% to 143 crore versus 151 crore year-on-year. The consolidated revenue moved higher by 17% at 2,275 crore rupees versus 1,942 crore year-on-year. LT Foods reported a consolidated EBITDA gain of 4.7% to 250 crore, whereas the consolidated margins were at 11% versus 12.3% year-on-year. Now, Indigo is planning to focus on dollar hedging and international expansion to counter foreign exchange volatility as currency swings weighed on its financial performance in the third quarter. That's the word coming from the Interglobe Aviation's Chief Executive Officer, Peter Elbers, who believes managing forex risk is key given the strengthening dollar and its impact on the airline's liabilities. The comments come after the profit of India's largest airline operator fell 18.3% to 2,448.8 crore rupees over the previous year. This was primarily due to the carrier incurring a foreign exchange loss of 1,456.4 crore rupees between October and December. Viewers, in a significant development, the Supreme Court of India dismissed an appeal filed by Vishal Tiwari regarding the Hindenburg's second report on Adani, which involves the compliance of a judgment passed by the court on January 3rd, 2024, making it clear that it will not entertain any new petitions related to the Hindenburg matter. This judgment had directed the Securities and Exchange Board of India, that is SEBI, to complete its pending investigations and submit a report. Iron OS, an AI business venture that aims to target service offerings on AI as a service, data engineering and data harmonization platform, signs deal with Indonesia's Indosat. The deal aims to provide AI solutions for Indonesia's travel, education and agriculture sector. IONOS will set up a center of excellence in Indonesia to work with China's DeepSeek. Headed by CP Gurnani, IONOS is a JV between Indigo parent Indoglobe Enterprises, a Sago group. Abhishek Lodha, the MD and CEO of Macrotech Developers, in a conversation with NDTV Profit, states that the company's focus for the March quarter would be to maintain the pre-sale levels achieved in December quarter while continuing to uphold the highest standards of environmental, social and governance practices. Regarding the ongoing dispute with his younger brother Abhinandan Lodha, which is currently being heard in the Bombay High Court, he emphasized that the legal matter is related to trademark infringement and not a family dispute. Viewers, the independent directors of Relige Enterprises Limited have flagged concerns over the open offer for the company's stake by the Berman family. The ongoing open offer of 235 rupees per share is less than the closing market price of 271 rupees on September 22, 2023, a day before the announcement of the offer. The directors advise shareholders to carefully consider this offer. Now, Digvijay Danny Gaikwad, a Vadodara-born businessman based out of the United States, is the new competitor to Berman family, competing for the open offer to get a controlling stake in Relige Enterprises. The Florida-based businessman announces that if permitted by SEBI, he would be willing to acquire a controlling stake in Relige Enterprises by launching a competing open offer for 55% of the company's outstanding share capital. Aditya Birla Group's flagship company, Ultratech Cement, the biggest cement manufacturer in the country, is in advanced talks with German cement major Heidelberg to acquire its Indian-listed business, Heidelberg Heidelberg Cement India. This is as per reports. Remember, Heidelberg owns a 69.39% stake in the company, which is listed on the Indian stock exchanges. The stake was worth around 381 crore rupees. The stock closing price on January 24. Delivery partners with oil marketer Hindustan Petroleum Corporation to manage its nationwide distribution of branded lubricants. As part of the deal, the company will oversee the nationwide distribution of HPCL's branded lubricants, termed HP Lubricants, to multiple stakeholders. Yatharth Hospital shares fall to a 5-month low despite the company clarifying on the income tax matters. The hospital's net profit jumps 3.4% to 30.5 crore, whereas the revenue gained 31.4% to 219 crore. Yatharth Hospital reports a higher EBITDA of 54.8 crore rupees. On the other hand, the company's EBITDA margin was at 25% versus 27.8% on an annual basis. Royal Enfield is celebrating a new milestone as sales of the Hunter 350 crossed the 5 lakh unit mark. The Hunter 350 was introduced in August 2022. By February 2023, Royal Enfield had sold the first 1 lakh bikes. The next 1 lakh units were sold in just 5 months, and it took about 2.5 years to reach the 5 lakh unit milestone. The Royal Enfield Hunter 350 is based on the J platform. It is powered by a 349cc single-cylinder air-cooled engine that produces 20.2 bhp and 27 Nm. The engine is paired with a 5-speed gearbox. The Hunter 350 is priced between 1.50 lakh and 1.75 lakh rupees showroom, which is the ex-showroom price. Now, it is one of the best-selling models in Royal Enfield's lineup. Secretary DPIIT Shri Amardeep Singh Bhatia addressed startups on the Republic Day about pivotal role of intellectual property rights, that is the IPR, in fostering innovation and safeguarding creativity. The interaction also highlighted key government initiatives designed to promote awareness, streamline processes and enhance support in the IPR ecosystem. Startups were encouraged to leverage these resources to drive competitiveness and build resilient business in the evolving global landscape. Good news for Mumbaikars. Mumbai Coastal Road Bridge opens, cutting travel time to 15 minutes. This bridge connects Bandra to Marine Drive. The full Coastal Road project, initiated in 2018, is expected to be completed by 2026. Uttar Pradesh Chief Minister Yogi Adityanath, in a conversation with NDTV Sanjay Pugalia, says Mahakumbh, along with other initiatives, will boost the state's and the country's economy. The state's infrastructure upgrades and tourism appeal have positioned it as a hub for both. Prime Minister Shri Narendra Modi will address the annual NCC PM rally on 27th of January 2025 at around 4:30 p.m. at the Karyappa Parade Ground in Delhi. A total of 2,361 NCC cadets participated in the Republic Day camp this year, which included 917 girl cadets, which was the highest ever participation by the girl cadets. The participation of these cadets in the PM rally will mark the successful culmination of the month-long NCC Republic Day Camp 2025 at New Delhi. Aviation watchdog DGCA asked airlines to rationalize airfares for flights to Prayagraj in view of the Mahakumbh. This comes amid concerns over higher air tickets on the route. Airlines including SpiceJet are operating more flights to Prayagraj to meet increased demand for air travel. The Directorate General of Civil Aviation has approved 81 additional flights in January, increasing the air connectivity to Prayagraj to 132 flights from across the country. Home Minister Amit Shah participated in Mahakumbh celebrations by taking a holy dip at Triveni Sangam. Earlier, the Home Minister took a boat ride to reach the Arali Ghat and was accompanied by Uttar Pradesh's Chief Minister Yogi Adityanath and his deputies KP Maurya and Brajesh Pathak. A Pune-based 40-year-old patient dies after contracting GBS. This makes it Maharashtra's first suspected death from the syndrome. Total number of the cases crosses 100. The health department has surveyed 25,578 houses in the area where the patient has been found. The disease had symptoms of cold, cough, experienced breathing difficulties, and was hospitalized for the same on January 18 in a private hospital in Solapur. Aam Aadmi Party releases their manifesto for Delhi Assembly elections. They have promised 15 guarantees, which includes employment guarantee, 2,100 for women, 24 hours water supply, and a cleaner Yamuna for the residents of Delhi. Uttarakhand government implements Uniform Civil Code, Uttarakhand 2024 Act number 3 in the state UCC is a set of laws that aims to standardize personal laws across religions. UCC was one of the key election promises of the BJP in the 2022 state polls. It has become the second state after Goa to have a uniform legal framework for all the citizens. US and Colombia halts what could have been turned into a tariff war. US President Donald Trump had threatened to impose 25% tariffs on all Colombian goods entering the US along with travel bans. These threats were followed by Colombia refusing to allow 2 US military planes carrying deported Colombian migrants to land. But now, Colombia has agreed to accept the migrants and the US has put the sanctions on hold. The European Union is set to extend sanctions on Russia over its war against Ukraine, with Hungary ready to lift its opposition to the move. This is as per a Bloomberg report. Budapest had been stalling the decision since December when Prime Minister Viktor Orban told EU leaders he wanted to wait for Donald Trump's inauguration before deciding whether to agree to roll over the restrictions. EU sanctions need to be extended every 6 months, and although it's a usual routine decision, it requires the backing of all the member of states. Afghanistan's all-rounder Asmatullah Omarzai has been named ICC Men's ODI Cricketer of the Year 2024. He's also part of the ICC ODI Team of the Year alongside his country-mate Ghazanfar. The 24-year-old was the second highest run scorer for Afghanistan behind Rehmanullah Gurbaz, who scored 531 runs. Well, that's a wrap on Market Express. Stay tuned to NDTV Profit for more news and updates.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits, and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they're expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place space, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2020.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in?
Monday ends with a bloodbath on the Lal Street. Nifty Sensex settled at the lowest level in over 7 months. All sectors ended in the red, with media bleeding nearly 5%. US President Donald Trump withdraws tariff threat as Colombia backs down in the row over repatriations. Trump had threatened Colombia with 50% tariffs on Colombian imports earlier. With budget just around the corner, NDTV Profit brings your wish list from various sectors, an investor's guide to how to approach investing in the current market and what the common man is expecting from the finance ministry. Number of GBS patients in the state crosses 100, 16 of which are on ventilators. A suspected patient has died in Solapur. Out of the total patients in the state of Maharashtra, 68 are men and 33 are women. UP CM Adityanath pointed out substantial economic potential beyond the religious significance of the Mahakumbh. In an exclusive interview with NDTV editor-in-chief Sanjay Pugalia, he also highlighted the growing role of Uttar Pradesh as a key tourism and investment hub. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, it's been a bloodbath on the Dalal Street as the Nifty dropped below 22,900 levels and the Sensex slipped over 1%. All sectors closed in the red, with media and IT dragging the indices down. My colleague Harsh is joining us with more details.
The Nifty 50 fell over 1%. We made a low which broke 22,800 towards 22,700, even though we bounced back slightly, and at close we closed just above the 22,800 mark. So that 22,800 mark is now going to be critical to hold. We'll also have 5 more days of trading this week, and we have the budget at the end of it, and therefore it's going to be an interesting one. But broader markets is where a large part of the pain was. You saw the Nifty mid-cap decline nearly 3%, the Nifty small-cap seeing pain of nearly 4%. So a lot of pressure on the broader end of the spectrum. When you're looking at the advanced decline as well, it was sharp, 2,000 odd declines
for just about 150 advances. The pain was sharp at the broader end of the spectrum. Sectors across the board were in the red. In terms of couple of nifty gainers, you saw an M&M do well. You saw FMCG names of Britannia and HUL do decently. And you had an ICICI Bank stand out among the banks. Outside of that, you saw nearly 30 plus stocks literally decline 1% plus on the Nifty 50 index alone. You're looking at sectors. Now within the sectors, the Nifty IT was under pressure, metals was under pressure. Both of them were 3% plus lower, and those are two pockets of big pressure. IT, of course, dragging the index along with it because some IT names were the top losers as well, and HCL Tech, or Wipro, or Tech Mahindra amongst them. And within even the broader markets, you saw sharp falls within media as well, 4% plus lower. When you're looking at a couple of other pockets where there was a decentish move and not as bad, private banks and PSU banks were the two spots where the fall was not as bad, and this is despite the likes of an IDFC First falling in trade, despite the likes of some of the NBFCs also falling despite decentish numbers. Shriram Finance was also down 3.5%. Despite that, the Bank Nifty, Fin Nifty was one place where there was some bit of outperformance, if I can call it, on a day like this. Outside of that, it was a sea of red. Some big gainers and losers on the BSE 500, that list now showing on your screen. And there are some big movers on the back of numbers as well. Something like a Torrent Pharma, 2.5% higher as well on the back of numbers and commentary. And then you had a slew of earnings, all of which, impact of which is lying on the other side of your screen. Something like a Lotus Labs fell nearly 12% on the back of both numbers as well as a possible US withdrawal of aid on AIDS-related drugs.
Thanks, Harsh, for that market wrap. Now, US President Donald Trump has withdrawn his tariff threat as Colombia backs down in the row over repatriations. Earlier, Trump had threatened Colombia with 50% tariffs on Colombian imports. However, he has now reached an agreement to accept deportees. The resolution comes after Colombia's president initially blocked two US repatriation flights. Petro had demanded protocols ensuring dignified treatment for migrants. In response, Trump had threatened escalating tariffs starting at 25% and rising to 50% within a week. Viewers, Abhishek Lodha, Managing Director of Macrotech Developers, clarified in an exclusive interview with NDTV Profit that the legal dispute with his younger brother over the use of their surname in a brand between two corporations and should be viewed as such by the media. Listen in to that conversation.
I would first like to clarify that this is a trademark dispute, not a family dispute. Our family has separated its ownership and management more than 10 years ago, and all of that is well done, dusted, and implemented. So I want to first clarify that. The second point I want to make is that Abhinandan Lodha is my younger brother. I have always cared and loved for him and always wish him all success, including if he wants to do real estate. Therefore, it's a very, very straightforward matter of the consumer knowing with great clarity that the Lodha that they are dealing with is the well-known, well-established company which over 40 years has established a reputation and a brand for its credibility, its delivery, and its integrity. Anybody else, and it's not got to do with whether it's Abhinandan Lodha or any other third party, cannot in the real estate space, in our opinion and view, use the Lodha name because it creates confusion for the consumer. And in our view, you had a recent dispute between Indigo and Mahindra for using the term 6E in completely different industries. And 6E is probably not even the main brand for Indigo. And yet they went out and protected their brand. So that's what we are doing as a company, making sure that there is no confusion for the consumer and the brand is protected.
Viewers, global investment firm Aurea Group has recently acquired beauty brand The Body Shop. Mike Jitania, co-founder of Aurea, reveals his strategy for the Indian market in an exclusive conversation with Sesha Sen. Listen into that snippet of that conversation.
We will also be looking at locally manufactured products in India, India-specific ingredients, using the Indian culture and Indian stories on ingredients, and weaving those within the tapestry of The Body Shop.
Okay, and in the pecking order, where does India stand in terms of sales, when all the markets are taken into consideration?
Look, India is one of our top 10 countries, and we're hoping that it will move up in that ladder. Mm-hmm. We see it as a huge global opportunity, just as we see the US, China. So India is really at the heart of Body Shop's growth strategy.
Viewers, as the D-Day for Union Budget is around the corner, NDTV Profit has been on the ground asking citizens about their expectations this time around. My colleague Haripriya spoke to the members of Federation of Karnataka Chambers of Commerce and Industry about their budget expectations.
We are here in Bengaluru and we are here to understand what does the state of Karnataka expect from the central budget that's upcoming. We have multiple stakeholders in the industry and from the commerce body in the city here. We'll understand what are the requirements that they're looking for in this time's budget. Tell us what are the expectations like.
So as FKCCI, we have across about 6,000 members across the state of Karnataka. Most of them are small entrepreneurs. And if you really look at it, Government of India's Udyog Aadhar clearly states that 95% are the micro enterprises and 4% are small entrepreneurs. If that be so, the focus needs to be on the micro and the small entrepreneurs. So we have three important points that I would like to share about. One is, of course, the MSMEs. We want a separate policy for the micro and small entrepreneurs. So an MSE policy is what we are looking at with three focus areas. One is, of course, infrastructure. Infrastructure is really important both for the startup and the growth of micro to small entrepreneurs. And that means plug and play infrastructure that is needed. The state governments itself won't be able to manage it. I think there is a lot of support that is needed from the central government for this activity. The second is, what is important is, yes, there is a lot of focus on digital, but we really do not have a B2B platform for the small entrepreneurs. We do have GEM, but GEM is only linked to the PSUs as per the public procurement policy, and we have ONDC for the retail entrepreneurs. But what about all the small entrepreneurs across the country? How do we get them all connected on one single platform, and that no state can take it upon, and it has to be the Government of India. The third, and something which is very important, is also the ease of doing business for small entrepreneurs. Why do I say ease of doing business? Labor laws, PF, everything can come onto one platform so that it helps them to focus on their core business and not on compliance issues, which should be much more easier. And I would like to add additionally, the women entrepreneurs. Being a woman, particularly as an entrepreneur, I would like to say that there is a larger need of focus. Yes, there are these small schemes or subsidies. How do I get more women into the economic chain? And that means a lot of support is needed to associations and of women entrepreneurs who can help build capacity to reach out to more women entrepreneurs. Don't expect the government to do it, but is there a way in which you can help women entrepreneurs to be part of vendor development or vendor supply chains of PSUs and large corporates? So that's something which I'd like to share. Thank you.
What are your expectations, sir?
We expect from the traders' perspective, from the FKCCI, that the ease of doing business in the budget, though the union budget always speaks about ease of doing business, practically there are a lot of issues in the, say, TCS, where I remit the amount, my purchaser or the deductor will get, again, he has to claim it. But government is not getting anything from out of that, because as of now, I am no dues for the income tax. But why they should arm twist me in all these compliances, especially in the 45-day payment schedule which the government last time introduced. Industry side, manufacturing side, I do agree. But they should exclude some of the say food items like essential commodities, where the trading takes place between two buyers and sellers, where there is no manufacturing at all, because we are a trading community. So that is one. After all, it will come from a reprocessor. That is what the ease of doing business. And the third point which I stress is,
here's what co-founder of AI on OS, CP Gurnani, had to say about his expectations from the upcoming budget. Here's a snippet of my colleague Rishabh's exclusive conversation with him at the select media briefing by AI on OS and Indosat.
My only request to Government of India, number one, I think the last few budgets it has been proven and shown that the Prime Minister of India, Mr. Modi, if he can feel the priority, he is able to not wait for the financial budget only to allocate. So as a corporation, I mean, our views are the same, that India has done extremely well to encourage the startup. I think there are a few areas where we can do a little better in, encouraging startups to base themselves in India and be able to function better in India. Number two, but they are all known issues. Number two is that I think India needs to invest a lot more right from school level to college level to the upskilling in skill development for AI industry. And number third is that in terms of anticipating, I think it will help if we have a much higher allocation for semiconductors, much higher allocation for the sovereign AI policy of India, and a much higher allocation for quantum computing.
Also at NDTV Profit, we bring you key expectations from various sectors before Budget 2025. Today, we focus on the fertilizer sector, hoping for policies that will drive growth. My colleague Varsha has more on this.
The fertilizer subsidy is a crucial component of India's budget, supporting farmers and ensuring agriculture productivity. For FY26, the subsidy is expected to align closely with the current year's spending trends. ICRA estimates a subsidy requirement of Rs 1,70,000 crore for FY26, matching the expected outgo for FY25. This includes the cost of extending the DAP subsidy until December 2025. The government initially allocated Rs 1,64,000 crore for FY25, but later topped it up by Rs 6,594 crore, taking the total to Rs 1,70,000 crore. Till November, the centre's fertilizer subsidy outgo stood at Rs 1,21,000 crore. In the past, geopolitical events like the Ukraine war drove subsidy costs to Rs 2,50,000 crore in FY23, while prices for raw materials and finished fertilizers have risen recently, particularly in the P&K segment. Urea costs have remained stable due to steady gas prices. This balance has helped moderate the subsidy bill in FY24 and FY25, offering some relief to policymakers. The fertilizer subsidy accounts for about 2/5 of central subsidies, projected at Rs 4,28,000 crore for FY25. It remains the second largest subsidy after food, with Rs 2 lakh crore allocated for food and 11,925 crore for cooking gas. To promote sustainable farming, the government is expected to announce a roadmap for balanced fertilizer use, reducing dependency on specific nutrients. However, any sustained increase in the input cost or geopolitical disruption could require adjustments during FY26. In conclusion, the fertilizer subsidy continues to be a significant expenditure, supporting both farmers and the nation's food security. While current trends show moderation, challenges like rising cost and import dependency highlight the need for strategic planning and fiscal discipline.
Viewers, how should a young investor approach investing in the current market? Marcellus Investment Saurabh Mukherjee shares his top sectoral bets ahead of Budget 2025. Listen in.
The simplest way to think about that is think about sectors which have good companies, but sectors which have been out of fashion for several years, right? The whole area around non-urban India, low-income people, agri-related companies, right, has been out of fashion. And within that ecosystem, there are several good companies. We've invested in Escorts Kubota, but there are other agri-related plays which are high-quality companies. For your generation, for analysts like you, the data is widely available. The annual reports are all available. For journalists like you, you have access to the management teams as well. So there is a multitude of good companies in the agro and non-urban ecosystem. Similarly, whilst IT stocks have now run up considerably, in pharma ancillaries, the ecosystem which supplies ancillaries into pharma, there are several good companies who are waiting to be discovered. And finally, the least fashionable sector for many years was private sector banks, right? And as we discussed, some of the private sector banks are coming back into fashion because they're conservative, strong institutions. So the beauty of the stock market is, at any point in time, there'll be things which are in fashion, revved up to high heaven, and there'll be things which everybody has given up on. And as we go through the next couple of years, there'll be some of the darlings of yesterday, say the PSU CapEx plays. A lot of people will give up on them, but they will take to new darlings. The new darlings will come from, I suspect, the strata of India's economy, which caters to non-urban, rural, and people earning below 5 lakhs. So, as I said, anything around government capex, right? I'm not so sure where the money will come from, right? Given that the government wants to consolidate fiscally, which I think is the right thing to do, if you want to consolidate fiscally, you don't have that much money. So where will you find the money to spend on railways? Renewables slightly different. Renewable private sector companies are doing spending. So if the private sector keeps at it and the government gives tax incentives to the private sector to do the renewable piece, it'll be. I think that will sustain. We need to see how, given that Trump has no interest in participating in these global climate accords, if he completely says ye sab bakwas hai and forget global climate accord and we keep getting hotter year after hotter year after hotter year, we'll have to see how our corporates deal with it. Because remember, the promoters in India who are investing in renewables, the promoters who are investing in renewables are doing so with a view to make money. They're not doing charity here. And if the world's richest economy says we have no interest in renewables, the business case gets a little tougher.
Well, viewers, you can catch the whole conversation with Saurabh Mukherjee from NDTV Profit's Investor Guide at 5:30 p.m. today. Now, with that, let's move on. Chinese startup DeepSeek's AI assistant become the top-rated free application available on Apple's App Store in the United States. The artificial intelligence application has surged in popularity among US users since it was released on January 10. While the sudden surge in its downloads can be attributed to curiosity, DeepSeek has also been credited for being as good as ChatGPT in areas like coding, analytical reasoning, and more. Now, 73 cases of GBS have been reported in Pune. 14 of these patients have been admitted to ICU. The central government has sent a 3-member doctor committee who are currently examining the reason behind the sudden outbreak. Rahul Kulkarni joins with more details on this.
As of now, 73 cases reported in Pune and surrounding area. Out of 14 patients have been admitted in various private hospitals, ICU. Central government also sent a 3-member doctor committee which arrived in Pune 2 days ago. They are also examined why this sudden outbreak of GBS, which initially even reported 100 years ago. As of now, the primary report suggests this outbreak in certain pockets of Pune and surrounding like Dhairi, the Simagad Road and some part of Pimpri-Chinchwad likely to be contaminated water. Irrigation department and PMC and PCMC, all these municipal corporations are trying to provide clean water in those areas. But as of now, no one really confirmed why this GBS sudden outbreak is happened in Pune area. 3 cases also reported from Nagpur also.
Viewers, in an exclusive interview with NDTV Editor-in-Chief Sanjay Pugalia, Uttar Pradesh Chief Minister Yogi Adityanath highlighted the substantial economic potential of the Mahakumbh beyond its religious significance. Listen in from that conversation.
हमने प्रयागराज में कुंभ के आयोजन को वहां पर उस रूप में आयोजित करने का एक प्रयास किया था। उससे पहले के डॉक्यूमेंट्स और मीडिया से जुड़ी हुई तमाम ऐसी रिपोर्ट्स हम लोगों ने निकाली थी। टीम को लगाया गया इसका अध्ययन करने के लिए। क्या सोचता है आज की पीढ़ी, दुनिया क्या सोचती है भारत के इस महाआयोजन के प्रति? हम बहुत चकित थे। दुनिया की रिपोर्टिंग कुंभ के बारे में क्या होती थी? कोई कहता था कुंभ जाति भेद को बढ़ावा देता है, कोई कहता था कि यहाँ पे लिंग भेद होता है, कोई कहता था कि यहाँ पे तमाम प्रकार की सामाजिक बुराइयों को आगे बढ़ाया जाता है, कोई यहाँ की स्वच्छता को टिप्पणी करता था। अलग अलग प्रकार की टिप्पणियां हमें सुनने को मिलती थी, देखने को मिलती थी और उस प्रकार की रिपोर्टिंग भी होती थी। और इसलिए 2019 में जब इस आयोजन के साथ हमें जुड़ने का अवसर प्राप्त हुआ तो इन चुनौतियों को ध्यान में रख करके उसी प्रकार की व्यवस्था हमारी टीम ने उस समय तय की थी कि कुंभ के लिए एक तो उसका इंफ्रास्ट्रक्चर उस महाआयोजन के अनुरूप होना चाहिए। एक आयोजन केवल आयोजन नहीं होता, उस सिटी का एक सस्टेनेबल डेवलपमेंट के प्लान को भी आगे बढ़ाने का, वहां के इंफ्रास्ट्रक्चर को, वहां की कनेक्टिविटी को, इस सारी चीजों को व्यवस्थित रूप से आगे बढ़ाने का एक अवसर भी होता है। हमें उन मुद्दों पर ध्यान देना होगा जो अक्सर हमारी चूक के कारण मीडिया की और विरोधियों के आकर्षण का केंद्र बनता है, जैसे गंदगी है, जैसे भगदड़ है, जैसे नदी की अविरलता और निर्मलता पर उठने वाले प्रश्न हों, जैसे ट्रैफिक का है, पार्किंग का है, श्रद्धालुओं को बहुत लंबी दूरी तय न करना पड़े, इन सब बातों को लेकर के और इन सभी बातों को ध्यान में रख करके मेला क्षेत्र का विस्तार किया गया। प्रयागराज सिटी का एक व्यवस्थित विकास की कार्य योजना को आगे बढ़ाया गया।
Viewers, Uttarakhand government implements uniform civil code in the state. UCC is a set of laws that aims to standardize personal laws across religions. UCC was one of the most key election promise of BJP in the 2022 state polls. It has become the second state after Goa to have a uniform legal framework for citizens. Well, that's all the time we had for this edition of Profit 360. But before we leave, don't miss the return of the Kala Goda Ka Art Festival in Mumbai, celebrating its 25th year. The event is taking place in Fort until February 2nd. Take a look at the stunning craftsmanship on display.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the finance minister takes up when she presents her budget for 2025.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to KYC. In this fast-paced world of stock markets, well, investors are bombarded with information about what they often lack is deep, comprehensive understanding of the companies that they invest in. Know Your Company is a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. And today we're talking about DCB Bank. This is a relatively smaller bank that has come into focus on the back of earnings today. So let's take a look at this particular bank. Well, it was incorporated back in 1995, so it's also a relatively younger bank as compared to many others which have been around. It's into the development of cooperative banks to, or rather it has moved from a development cooperative bank to a development credit bank. And moving on, it's in terms of how the product mix pans out, it does get about 45% of its product mix from mortgages. It's followed by agri, as well as incorporating banking, that's about 25%. And then the balance comes from SME and MSME, as well as co-lending, gold loans, commercial vehicles, etc. Now, that's as far as its mix is concerned. But what we usually do with all companies that we take up on this particular show is talk about several parameters and also rate the bank, rate the particular company on these parameters with respect to a thumbs up, thumbs down, or a neutral rating. And among these factors, what we also do is, well, talk about the income statement, the balance sheet check, operational metrics, as well as asset quality. Moving on in terms of shareholding valuations along with street credentials and street coverages, the other factors that we take a look at as far as this bank is concerned. But let's start off with the one which is right at the top of our list. And before I bring all these parameters in, let's get in my colleague Harsh Sata, who's also going to help us further bring in more insight with respect to what the bank has done so far. So Harsh, thanks for joining in. And as usual, let's start off by but addressing the income statement. So how does it look?
Well, yes, thanks, Agam. Let's start off with how the income statement is adding up in that sense. And you'll have the net interest income number come right on your screen in a minute or so. The growth, the 3-year CAGR on the NII has just been 14% But it's a fascinating manner in which this PNL is stacking up. And that's what I want to really highlight. You look at operating profit, it's actually declined when you're looking at it FY21 versus FY24. So you've seen a decline on operating profit. That's because the OPEX within the bank has spiked and materially spiked up. It's doubled from sub 900 crore odd. It's gone to nearly 1500 crore plus in FY24. And that's where a large part of the leverage has been lost. But where has it gained leverage? With regard to provisions. Look at the provision number, 446 crore for FY21. It's come down to 142 crore in FY24. So there's been a sharp decline where provisions is concerned. And therefore, you're seeing that 17% growth on the profit after tax front. It's a completely mixed bag in that sense because you're seeing top line growth on a low base, not going up in a material fashion, just about a mid-teens kind of growth. Profit growth also in the mid-teens, but your OPEX spike is what has led to that operating profit being absolutely flat, and then you've got credit costs which have come off. So a neutral on this one because it's just such a mixed bag in the sense, in the way in which the income statement is playing out.
Sure. So we're going to give this a neutral rating as Harsh, and the reason why Harsh, explained, but we talk about the balance sheet as well. At least as far as the advances and deposits are concerned, we're looking at a pretty steady 17% CAGR for advances coming through, and deposits also growing, mostly in tandem with the advances at around 18%, so when it comes to the 3-year CAGR. At the moment for FY24, the advances stand at a little less than 41,000 crores and deposits stand at a little over 49,300 odd crores. So on a pretty stable footing, which is why we'll give this a thumbs up. In terms of its capital adequacy as well, that stands at around 16.3%. So it pretty much adds up to what we have seen so far. But let's talk about a handful of the other key operating metrics. Harsh, so what do you have for us there?
Well, yes, again, very, very interesting the way in which it's panned out. Let's talk about yields first, yields on loans. They've crept up by just about 30 basis points in the last 3 odd years. Mind you, this is a cycle where rate hikes have started to come through, and therefore that just not enough meaningful increase in terms of yields is how I would term it. You look at cost of funds in sharp contrast. It's gone up by 1% or thereabouts over the last 3-year period. Your margins also have largely remained steady till FY24, but after FY24, by Q3, we've seen large margin dilution. Look at your cost to income, and this is where some of the metrics which you saw in your income statement also come to light. You look at 49% was your cost to income in FY21, 64% in FY24, currently sitting at 63%. They're tapering down on their cost to income, but just by a wee bit. Therefore, ROAs, which have not gone above the 1% mark in at least the last 4 years, sit at sub 0.9%. But what is the one positive that I take from all of these numbers is there's a steadiness to it in that sense. ROAs have not gone down materially despite OPEX spike. They've been able to manage provisioning along with the OPEX spike to some extent in this cycle, and you're seeing ROAs sitting at 0.9%, leaving very, very low margin for error where provisions is concerned, but you're still able to maintain that steadiness with regard to ROAs, and that's the key positive I take from it, and therefore largely a neutral bag again on this one when it comes to the operating metrics, Agam.
Okay, so I'm going to talk about the asset quality, and perhaps I'll also bring in Harsh to give his perspective on asset quality itself. So when you consider the gross NPA ratios, they've certainly come off from the mark of well over 4% to around 3.19 back in FY24, and as of the third quarter that stood at around 3.11. So we are certainly seeing a decline in that gross NPA ratio. Net NPA ratios again would at the mark of around 2.29% back in FY25. This has come off substantially and halved
to around 1.04 back in FY24. And at the moment, again, we're looking at a little bit of an inch up in the third quarter of FY25. But Harsh, the reason why we're giving this a neutral rating is because even on an absolute basis, these are still relatively higher NPA ratios.
Correct, and they've not come off materially, right? Agam, you look at it, it was roughly 4% in FY21.
Yeah.
You've seen some of the banks really double down on that gross NPA ratio. DCB hasn't been able to do that. And when you're seeing FY24 versus Q3 FY25, you're seeing a bit of a spike on all of those ratios,
right.
Especially on the net NPA ratio.
Yes.
And therefore, not sure whether that will sustain or not, and maybe management commentary will help there, and we'll take that. But at the moment, it seems like a neutral rating is better placed for the kind of numbers we're seeing.
Fair enough. So, and that brings us to factors beyond the financial statements. So we've spoken about quite a bit in terms of the balance sheet and the operating metrics, of course the income statement as well. But in terms of your shareholding, it's perhaps normal not to have such a high promoter shareholding in any bank or NBFC for that matter. DCB Bank is no exception, so it stands at around 14.7%. The institutional holding, however, does tend to be considerably higher than what DCB Bank has seen. So for the quarter ending December, its FIR holding stood at a little less than 11%. And it's certainly come off from the quarter sequentially. And it's the same for DII holdings, that stood at around 27.9%. Usually, you tend to have a lot of these banks with a total institutional holding of well over the 50% mark. Considering that is not the case for DCB Bank is the reason why we are going to give it a neutral rating, because a large chunk of it is still with the public at large. So that's as far as shareholding is concerned. But how do valuations stack up, Harsh, given the kind of growth that we've seen?
Yeah, now I want to contextualize this a little bit. Why I'm giving this a thumbs up? Two reasons. One is you're seeing mid-teens kind of growth.
Yeah.
The growth over the last 3 years is sustained at slightly later teens, if I can call it, 17 to 18%, which is the one key positive. The other key positive is that you're seeing asset quality also hold up. Now you look at some of these banks where asset quality has been a challenge over the last 2 to 3 years, and you look at valuations and you'll see DCB Bank trading at least a 30 to 40% discount to all of them. In some cases, much more than that. And therefore, believe that at 0.64 times, DCP definitely looks like a decentish number in terms of where valuations is concerned, and therefore a clear thumbs up on the valuations front.
So there you have it. That's as far as your valuations go. And moving on, let's talk about street credentials. So how things are panning with respect to the stock itself and what it has done. If you just consider the last 12 months, it has come off by around 13%. If you consider the way your benchmark indices have moved, maybe if you can talk about the small cap, the mid cap indices, it'll give you a better picture, because I reckon that DCB Bank belongs to that particular group of stocks. There is still a positive return for both the mid cap and the small cap indices respectively for that period of the last 12 months, which is why we're going to give this a thumbs down, because it has underperformed at least the indices it is likely to be a part of. That brings us to the final one on what the street makes of DCB Bank. Now, Harsh has already spoken about relatively favorable valuations, and that perhaps also gives you an idea what the street may have made of it. So, Harsh, why don't you tell us that?
Well, yes, 20 buys and 2 hold calls on this one. And I'll talk about the upside, because that's really fascinating. A 32% upside from here. That would typically take the price to book closer to 1. It may not be 1, with a 32% upside. But this is again basis 1 year forward valuations of 0.64 times. A 30% odd upside would warrant around a 0.85 times price to book if that were to play out. And that's exactly what analysts on the street are also suggesting, that this definitely needs a bit of a re-rating where the valuation number is concerned, is what I'm seeing. This is, of course, as per Bloomberg analyst estimates, and therefore it's an average of all the analysts taken together. But let's talk about just a couple of factors before we wrap this. when you're looking at the way in which some of the metrics have played out, and Agam, I want to just delve on this a little bit further just to try and clarify our position here. You're looking at a mixed bag in terms of performance. And it's a very, very unique set of numbers that we've seen in the way in which DCB has played out over the last 3 years. You rarely see the kind of OPEX spike that DCB has seen. OPEX from sub 50%, cost to income has gone above 64% and thereafter tapered. We're seeing in this quarter specifically a flattening of sorts with regard to the OPEX number. Can that sustain is really the question that I would look out for. And we'll of course quiz the management on that as well. And the other piece which I would be really keen to understand is how is all of this asset quality issue in the industry playing out on DCB's numbers and what we can expect going forward, both in terms of growth as well as in terms of numbers on asset quality. Because typically smaller banks, the size of DCB, 40,000 crore odd in terms of assets, can grow at a far higher growth clip. Is there a reason why they are holding back, or can they now scale up on growth? Is a question that I would like to ask. But just some of those.
Yeah, no, actually, that's a very pertinent point, Harsh, that you made, because I was just looking at the size of the bank, and it's been around for a while. It's not, even in the listed space, it's been around for a while. And I know that it was incorporated just in 1995, but it still has had plenty of time to, consolidate and perhaps grow to perhaps a size that it may not be necessarily at this point in time. I'm just looking at the technicals here. I'm looking at the way the chart is coming through. And over the last 2 years, that is maybe a little less than 2 years, since April of 2023, the stock has continued to make, or rather take support at the mark of about 107, 108, 109 rupees per share. Currently, given the kind of market conditions that we've seen, it's not too far away from it. But I'd also like to point out that it's usually moved within a very narrow range between 100 to 130 rupees per share over the last, maybe 2 years. Notwithstanding a little bit of a sharper volatility that you see here and there. And of course, in the same period, it has moved up to about 162. But again, it's just something that, it's not seen a significant amount of appreciation. And I reckon that all the shareholders waiting by are possibly looking forward to, a jump in growth, especially, like while Harsh mentioned that you're looking at a mid-teen growth, for a bank of this size, perhaps investors are expecting a slightly faster growth coming in. So that's what we're keeping an eye on. But I just want to ascertain if we do have the management of, okay, so we do have the guests with us, but before that, let's go across and take a look at the final rating on the several parameters that we have put through. So it's largely a neutral rating for the income statement. The balance sheet is again a thumbs up for sure. We have neutral to slightly positive ratings as far as the operational metrics is concerned, along with asset quality, among the other set of parameters as well. Out of the 8 parameters, it does not have a thumbs down on anything except for street credentials, and that is basically your returns on the stock. Thumbs up certainly for valuations and street coverage, so that's something that we can keep an eye on as well. So an overall rating of around 5 out of 8. But let's get in the management. We have with us Praveen Kuti, who is the MD and CEO of DCB Bank. Praveen, good afternoon, and thank you so much for taking the time out. Praveen,
thank you for having me here.
Absolutely. Praveen, I actually wanted to start off by asking you about the expectations of growth coming in, especially when it comes to your net interest income as well as profitability. What can we expect going forward when it comes to FY26 specifically? So, more or less of what we've seen so far in the past 2 to 3 years, or can we expect an acceleration here?
So there are a few things that you'll see repetition of the past, and there are some things which you'll see change in the future. One of the things from a repetition of the past is that if you were to see the last 5 quarters, we've been growing consistently around the 19 to 20% YOY region. I would presume that will continue in the future as well. Having said that, there are some strong headwinds on the unsecured space. Plus, liquidity is getting tight. But I think we have the wherewithal to grow at these kind of to repeat these kind of performances from a growth perspective going forward. So that probably will be the continuation factor. What will change and what we're really trying to make change is that earlier when the top line used to grow by 20%, the NII used to grow only in single digits. The last 4 quarters has been 4%, 5%, 7%, and now 15%. So one of the tasks before the management is to improve that and get NII growth very similar to the top line growth going forward. So there's a lot of focus going to be on that area. Plus, the kind of effort that you put on the fee line has started yielding some results. So look at the core fee income more than the total fee income. It's something which we are reasonably happy about. The cost discipline, we're tightening the belt a bit, and that is showing some signs, early signs. I mean, we're to see how the consistency of performance goes will come through. And on the credit cost, which is the fourth parameter, in these troubled times, keeping the NPA stable is something which we are okay with, we're happy with. And possibly on a go forward sense, improving the NIM would be very high on our priority list.
Okay, Mr. Kuti, Harsh also joining in. First question on the margin. Hi.
Right.
So my first question is on the margin, because if you're talking about a similar growth clip on the NII as on the advances, the only way to do that is margins. But margins for you have contracted a wee bit when you're looking at it over the last 9 months, thereabouts, quite a bit there. What's happening there? And can we see it revert back to 3.6%, where you've been for quite some time?
It's a bit of an ask, but what we are happy with is that our descending, the reduction on NIM has been arrested. We have grown NIM in the last quarter, primarily on the back of yield and advances improving by a higher percentage than the cost of funds. We'd expected the cost of funds to remain flat, but that hasn't worked out. It doesn't look like it's working out in the future also. We're seeing heightened activity happening on the deposit market. So it's a bit of an ask, but we're very happy with the fact that we have turned the direction and work is underway to improve the NIM. I can tell you one way we will not be improving the NIM is by getting into unsecured loan, or that's not. We would stay within the framework that we have, the strategic framework that we have, which is holding us in good stead from a NPA perspective, and that within that framework we would see the growth happening. Possibly you will see the NII growth inching up to the top line growth by the second quarter of the next financial. So, like I said earlier, there has been a creeping up of the YOY. It's converging with the top line growth, and possibly the top line growth being equal to the NII growth, or the other way around. We would see that happening in Q2 of next year.
Praveen, can you give me an idea about what you can expect from maybe your gross NPA and net NPA ratios? While they have remained stable in general, there's a little bit of a sequential creeping up, at least not a sequential pardon me, but your net NPA ratios have seen a little bit of an up move when compared to the end of FY24. Your gross NPA ratios remain largely at around 3.1. What's the way forward here?
Our focus is on ensuring that we have better resolutions coming up and better slippages. For a bank which is primarily looking at secured asset, I think our slippage ratio is a bit higher than what it should be. So there is a lot of focus going into ensuring that the fresh slippage comes down. There are multiple reasons why the slippage is high. We are in the gold loan segment where discipline is not there. But frankly, all that I believe are just excuses. We have to better control our fresh slippage. So a lot of focus is going in there and on better resolutions. And frankly, considering the fact that most of the book is secured by self-occupied residential property, I believe that we have a good chance of improving our resolution rates as we go along. Having said that, the MFI, we have a small book of MFI. That doesn't augur too very well. I don't think we have seen the end of it yet. There are some pains coming from there. We can't wish it away. But since it's very small in the overall scheme of things, I still think that we should be able to keep a tight rein on the NPA ratios going forward.
Okay, I'm going to couple 2-3 questions together and put it across to you, Mr. Kuti. First one being on OPEX. OPEX has been elevated. Are you going to calibrate it back in this credit cycle? That's point number one. Point number two, do you expect this credit cycle to play out in a larger fashion over the next 2 to 3 quarters? Is it going to impact your numbers? And therefore, what should that do to ROA expectations? Would ROA take a knock for 2 to 3 quarters lower? Is Q4 that quarter where that will happen?
Let's talk about the cost to income ratio or cost to average assets. If you see, we are in the current quarter, we are at 2.59%, which is way better than the cost to average assets that we have achieved in the last 4 quarters. Definitely better than the last quarter, definitely better than each of the prior quarters leading up to the last year. There is if you were to see our staff cost, the number of staff has reduced. So there is a lot of focus on productivity, and that is giving us, improved cost to income and cost to average asset ratios. On a go-forward basis, our thrust is we are a very people-driven bank. So it's very, very essential that if you have to get the ROA formula right, productivity has to continue in the same trend, has to continue improving on the same trend. So that's a key element of keeping in the range of cost to average assets. At 259, is that where we want to be? We probably want to be below 2.55. On the credit cost, we always have mentioned ever since the abatement of COVID, that the model supports a 0.45 to 0.55% credit cost ratio. We're currently at 0.38. Why we are at 0.38? Primarily because you're getting the benefit of higher provision on restructured assets, and the restructured assets are currently running down. It's just about 2% now. It was as high as 7 or 7.5% earlier. So that benefit will kind of erode over a period of time. Every passing quarter will be less than the previous one. And I would expect it to go back to the 0.45, 0.4 kind of credit cost on a steady state basis.
Okay, Praveen, we'll leave it at that. Thank you so much for joining us here on NDTV Profit. We look forward to the next set of numbers as well. Thank you so much.
Thank you for having me here.
Likewise. Well, on that note, we are at the end of this edition of Know Your Company, but lots more lined up on the other side. Stay tuned, and we will be back in just a bit.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
नमस्कार। गणतंत्र दिवस और महाकुंभ के विषय पर बात करने के लिए उत्तर प्रदेश के माननीय लोकप्रिय बहुचर्चित मुख्यमंत्री योगी आदित्यनाथ जी ने हमारे लिए समय निकाला। आपका बहुत धन्यवाद और आप सबों का भी बहुत धन्यवाद। महाकुंभ के साथ के बारे में बात करने में समस्या ये है कि ये पृथ्वी का एक ऐसा अनूठा इवेंट है, एक ऐसी घटना है जिसके बारे में इसकी विराटता जो है उसमें कितने विशेषण आप इस्तेमाल कर लें, कुछ भी कह दें, तो भी इसको आप कैप्चर नहीं कर सकते कि इंसानी समाज पर, मानव सभ्यता पर इसका क्या असर है और ये भारत को किस तरीके से अपनी नई ऊर्जा से आलोकित करता है। जाहिर है कि इस बार का महाकुंभ विरला है, 144 साल वाला। मोदी जी का विजन और योगी जी का एग्जीक्यूशन उसको दुनिया का एक सबसे बड़ा, कई तरह के रिकॉर्ड तोड़ने वाला इवेंट बनाने जा रहा है। सर, इसी से मैं शुरू करना चाहूँगा। आप कई दौरे कर चुके हैं और मैक्रो से लेके माइक्रो मैनेजमेंट पर आपकी नज़र है। अभी आपका इम्प्रेशन क्या है इस महाकुंभ के बारे में?
संजय जी, सबसे पहले तो मैं आपको और आपकी पूरी टीम को महाकुंभ के बारे में सटीक रिपोर्टिंग के लिए हृदय से धन्यवाद देता हूं। एनडीटीवी के जितने भी दर्शक हैं उन सब का अभिनंदन करता हूं कि भारत के सनातन धर्म की आस्था और श्रद्धा के प्रतीक इस महा आयोजन को उसके अनुरूप एक सटीक रिपोर्टिंग मीडिया के द्वारा जनता जनार्दन तक पहुंचाने का कार्य हो रहा है। ये भारत की ताकत का और आस्था की ताकत का एहसास कराने वाला एक ऐसा आयोजन है जो दुनिया के लिए अकल्पनीय है और वर्तमान पीढ़ी के लिए अविस्मरणीय भी। 13 जनवरी से 26 फरवरी के बीच 45 दिनों के अंदर इस सदी का ये महाकुंभ आने वाली पीढ़ियों के लिए अविस्मरणीय होगा। और इसको लेकर के प्रधानमंत्री मोदी जी ने जो विजन दिया था उसको पूरी प्रतिबद्धता के साथ जमीनी धरातल पर उतार करके आज वहाँ पर इस प्रकार की व्यवस्थाएं दी गई हैं। और मुझे प्रसन्नता है कि अब तक 12 करोड़ से अधिक श्रद्धालु पूज्य संतों के सानिध्य में माँ गंगा, माँ यमुना और माँ सरस्वती की पावन त्रिवेणी में डुबकी लगा करके पुण्य के भागीदार बने हैं और एकता का एक संदेश पूरे देश को लेकर के भी गए हैं। और मुझे लगता है कि जहां आस्था है वहां सर्वांगीण विकास की आधारशिला उसकी तह में स्वयं छुपी हुई है।
जी, कुंभ के बारे में जो आपकी बहुत सारी बातें सामने आई उनको सुन करके कुछ लोग तो ये कहते हैं कि योगी जी कंसिस्टेंट हैं, वो हमेशा यही कहते हैं। कुछ लोगों को कुछ नई बात, एक नई ध्वनि सुनने में आई है, वो मैं आपसे बताना चाहता हूँ। वो ये है कि इस बार आपके जो शब्द हैं वो हैं भारत की सभ्यता और आध्यात्मिक और सांस्कृतिक ऐक्य जो है देश का। आपने सनातन परंपरा की बात कही है और आपने कहा ये किसी कुंभ जो है वो किसी एक पंथ, एक जाति या एक संप्रदाय तक सीमित नहीं है। लोगों को लगता है कि आपके इस नरेशन में, आपके इस बनावट में एक नया फर्क है और आप शब्दों को बहुत अलग तरीके से सामने रख रहे हैं। ये रीडिंग सही है?
देखिए, मैं पहले भी यही शब्द रखता था। अब जिसकी समझ न हो तो उसके लिए मैं कहां से दोषी हूं। मैं तो पहले भी यही मानता हूं और आज भी यही मानता हूं, पहले भी यही मानता था, आज भी यही मानता हूं कि सनातन धर्म भारत का राष्ट्रीय धर्म है। सनातन धर्म मानव मात्र का धर्म है। उपासना विधियां अलग अलग हो सकती हैं, पंथ संप्रदाय अलग अलग हो सकते हैं, जाति अलग अलग हो सकती है, लेकिन धर्म एक है और वह धर्म सनातन धर्म है। कुंभ उस सनातन धर्म का एक महापर्व है। हमारे जितने भी पर्व हैं, कुंभ का महत्व उसमें अलग इसलिए है। देखिए, 2019 में ये डबल इंजन की जो भारतीय जनता पार्टी की सरकार है, इसको पहली बार अवसर मिला कि वह कुंभ के आयोजन के साथ जुड़े। हमने प्रयागराज में कुंभ के आयोजन को वहां पर उस रूप में आयोजित करने का एक प्रयास किया था। उससे पहले के डॉक्यूमेंट्स मीडिया से जुड़े हुए तमाम ऐसे रिपोर्ट्स हम लोगों ने निकाली थी। टीम को लगाया गया इसका अध्ययन करने के लिए। क्या सोचता है आज की पीढ़ी, दुनिया क्या सोचती है भारत के इस महाआयोजन के प्रति? हम भौचक थे। दुनिया की रिपोर्टिंग कुंभ के बारे में क्या होती थी? कोई कहता था कुंभ जाति भेद को बढ़ावा देता है, कोई कहता था कि यहाँ पे लिंग भेद होता है, कोई कहता था कि यहाँ पे तमाम प्रकार की सामाजिक बुराइयों को आगे बढ़ाया जाता है, कोई यहाँ की स्वच्छता को टिप्पणी करता था। अलग अलग प्रकार की टिप्पणियां हमें सुनने को मिलती थी, देखने को मिलती थी और उस प्रकार की रिपोर्टिंग भी होती थी। और इसलिए 2019 में जब इस आयोजन के साथ हमें जुड़ने का अवसर प्राप्त हुआ तो इन चुनौतियों को ध्यान में रख करके उसी प्रकार की व्यवस्था हमारी टीम ने उस समय तय की थी कि कुंभ के लिए एक तो उसका इंफ्रास्ट्रक्चर उस महाआयोजन के अनुरूप होना चाहिए। एक आयोजन केवल आयोजन नहीं होता, उस सिटी का एक सस्टेनेबल डेवलपमेंट के प्लान को भी आगे बढ़ाने का, वहां के इंफ्रास्ट्रक्चर को, वहां की कनेक्टिविटी को, इस सारी चीजों को व्यवस्थित रूप से आगे बढ़ाने का एक अवसर भी होता है। हमें उन मुद्दों पर ध्यान देना होगा जो अक्सर हमारी चूक के कारण मीडिया की और विरोधियों के आकर्षण का केंद्र बनता है। जैसे गंदगी है, जैसे भगदड़ है, जैसे नदी की अविरलता और निर्मलता पर उठने वाले प्रश्न हों, जैसे ट्रैफिक का है, पार्किंग का है, श्रद्धालुओं को बहुत लंबी दूरी तय न करना पड़े, इन सब बातों को लेकर के और इन सभी बातों को ध्यान में रख करके मेला क्षेत्र का विस्तार किया गया। प्रयागराज सिटी का एक व्यवस्थित विकास की कार्य योजना को आगे बढ़ाया गया। वहाँ की रोड्स को, वहाँ पे रेलवे की कनेक्टिविटी को, वहाँ पे एयर कनेक्टिविटी को, आप अनुमान करिए हजारों वर्ष पहले मर्यादा पुरुषोत्तम प्रभु श्री राम पुष्पक विमान से लंका पर विजय प्राप्त करने के उपरांत प्रयागराज में महर्षि भारद्वाज का दर्शन करने के लिए उतरे थे और उन हजारों वर्षों में एक सिविल टर्मिनल यह देश प्रयागराज को नहीं दे पाया। 2019 में पहली बार सिविल टर्मिनल प्रयागराज में बना और उसे भी मात्र 11 महीनों के अंदर बना करके तैयार किया गया। वहां की रोड्स को लगभग 150 से अधिक सड़कें ऐसी थी जिन्हें सिंगल लेन से डबल लेन में, डबल लेन को 4 लेन में बदलने का काम हुआ। वहां पे फ्लाईओवर कैसे होने चाहिए, अंडरपास जो बने हुए थे सिंगल लेन के थे उन्हें डबल लेन के कैसे बनाए जाने चाहिए। नदी की अविरलता और निर्मलता को बनाए रखना है क्योंकि सारा प्राण तो उसमें है, श्रद्धालु उसी के लिए आएगा, इसके लिए टीम काम की। वहां पे शौचालय इससे पहले बनाए जाते थे, सीट को ऐसे बालू में धंसा दिया जाता था, पूरा का पूरा सीवर बह करके वापस नदी में जाता था, उसी में लोग स्नान करते थे, बदबू रहती थी पूरे मेले में। आपने 19 में भी देखा होगा, अब 25 में भी आप देख रहे होंगे, कहीं गंदगी नहीं, 0 लिक्विड डिस्चार्ज है, नदी अविरल भी है, निर्मल भी है, मेले को विस्तार दिया गया है। इस वर्ष भी हम लोगों ने 14 फ्लाईओवर और अंडरपास बनाए हैं, एयरपोर्ट का सिविल टर्मिनल का विस्तार किया है, कनेक्टिविटी को बेहतर किया है, 200 से अधिक मार्गों को 2 लेन से 4 लेन किया गया है, हर ओर की कनेक्टिविटी को 4 लेन में बदलने का कार्य किया है और मेले को 4000 हेक्टेयर यानी 10,000 एकड़ के विस्तृत क्षेत्रफल में देने के साथ ही 5000 एकड़ का अतिरिक्त पार्किंग की व्यवस्था भी वहां पर दी है। मेले से जो संगम स्थल से मात्र 5 किलोमीटर के दायरे में हो, ये सब कुछ देने के साथ साथ सुविधाओं का विस्तार वहां पे किया गया है और इन सुविधाओं को ध्यान में रख करके व्यवस्था की गई है कि अब कोई टिप्पणी नहीं करेगा। फिर हमने चैलेंज किया इस बात को लेके, देश को भी दुनिया को भी कहा, जो टिप्पणी करते थे सनातन धर्म पर, हमने कहा देखो आपके बगल में कौन स्नान कर रहा है, आप स्वयं नहीं जानते किस जाति का है, किस मत का है, किस मजहब का है, क्यों टिप्पणी करते हो भाई, अपने मुंह को खराब क्यों करते हो, अपनी जवान को खराब क्यों करते हो इस प्रकार की टिप्पणी करके। ये तो महापर्व है, महायोजन है, जाति भेद से हट करके है, न जाति का भेद है, न पंथ का भेद है, न संप्रदाय का भेद है, न भाषा का भेद है। और आपने देखा होगा जब 13 पौष पूर्णिमा को 13 जनवरी को और मकर संक्रांति 14 जनवरी को लगभग 6 करोड़ से अधिक श्रद्धालुओं ने मात्र इन 2 दिनों में पूज्य संतों के सानिध्य में त्रिवेणी में संगम में स्नान किया, तो उसके साथ अपने साथ जो सबसे बड़ा संदेश लेकर के गए कि त्रिवेणी से संदेश एकता से अखंड रहेगा ये देश, और एकता का ये संदेश त्रिवेणी ने दे दिया, महाकुंभ ने दे दिया। न जाति का भेद, न छुआछूत का भेद, न पांथिक भेद, न भाषा का भेद, और हम उसी पर प्रहार कर रहे थे कि जो लोग हमें बदनाम करते थे, सनातन धर्म को बदनाम करते थे, वे आकर के इन आयोजनों के साथ जुड़ करके देखें, दूर से मत देखें, दूर से मत देखें, धृतराष्ट्र न बनो, किसी संजय की आंखों से मत देखो, स्वयं आकर के इसका दर्शन करो। दर्शन करोगे तो पुण्य के भागीदार बनोगे, और डुबकी लगाओगे तो पुण्य जन्म जन्मांतर के साथ आगे भी बढ़ेंगे। और मुझे अच्छा लगा कि न केवल देश के लोग श्रद्धालु तो आते ही थे, विदेशी श्रद्धालु भी बहुतायत आए, उन्होंने इस पे बहुत अच्छी, बहुत सटीक कमेंट की हैं कि अद्भुत है, अकल्पनीय है।
बिल्कुल, आपने बहुत अच्छी बात कही, लेकिन एक बात पर दिक्कत है। आपने कहा कि किसी संजय, जिसका मतलब होता है जर्नलिज्म, के नजर से मत देखो, तो आप हमारा काम बंद करा देंगे।
नहीं, मैं काम बंद नहीं करा रहा हूं। मेरा ये कहना है मौके पे जाकर के सभी लोग देखें, और लोग देख रहे हैं, और मुझे लगता है कि मीडिया ने बहुत सकारात्मक रूप से इस आयोजन को वैश्विक मंच तक पहुंचाने का काम किया। यही इसी का परिणाम है। मीडिया के द्वारा एक सकारात्मक और सटीक रिपोर्टिंग का ही परिणाम है कि भारत की 140 करोड़ की आबादी में हर दृष्टि महाकुंभ की ओर लगी है।
बिल्कुल,
हर रास्ता प्रयागराज की ओर जा रहा है। हर एक की एक ही तमन्ना है कि मैं भी त्रिवेणी में इस महाकुंभ में डुबकी लगा लूं। और यही प्रयास, यही कारण है कि प्रतिदिन 1.5 करोड़, 2 करोड़, यानी 1 करोड़ लोअर लिमिट है प्रयागराज में आज के दिन पर।
गजब का नंबर है।
यानी जहां जिस सिटी के अंदर कुल आबादी 15 से 20 लाख की है, उस सिटी और एक अस्थाई सिटी में मिलकर के 1 करोड़ श्रद्धालु आ रहे हों। प्रयागराज का कोई घर नहीं है, कोई घर ऐसा नहीं होगा प्रयागराज का जिसने अपने घर में नए बिस्तर न खरीदे हों मेहमानों के आने की ध्यान में रखते हुए।
बिल्कुल,
नई तैयारी न की हो।
बिल्कुल बिल्कुल, पूरा शहर ही मेजबान बना हुआ है और सारे मेहमानों का स्वागत कर रहा है,
पूरा प्रयागराज।
बिल्कुल, हम लोग बहुत ज्यादा विस्मित हैं, और जाहिर है कि इस पर बहुत टिप्पणियां हुई हैं, देश विदेश का मीडिया और अकादमिक संस्थान भी इसको रिसर्च करेंगे। वो ये है कि इन अ लाइटर वेन, यूपी की पुलिस तो दूसरे कारणों से जानी जाती है, लेकिन यहाँ आपकी पुलिस, आपका प्रशासन, उसका सहयोग वाला रवैया और इतने बड़े आयोजन का जो मैनेजमेंट है, ये मतलब माइंड बॉगलिंग है, समझ में नहीं आता। तो उस पर अगर आप कुछ और रोशनी डालना चाहें कि क्या क्या वो क्रिटिकल एरियाज हैं जिस पर आप ध्यान रखते हैं कि दुनिया में इसका कोई मिसाल ही नहीं है इस तरह के आयोजन का।
देखिए संजय जी, यूपी पुलिस जैसी शासन की दृष्टि होगी, सुरक्षा बल और पूरी मसनदी उसके अनुरूप कार्य करती है। हम प्रभु राम के भक्त हैं। उन्होंने एक बात कही थी, सज्जनों को संरक्षण देना और दुर्जनों का संहार करना। यूपी पुलिस शासन की इस मंशा के अनुरूप ही कार्य करती है। हर सज्जन को सुरक्षा प्रदान करना, बहन हो, बेटी हो, व्यापारी हो, आम नागरिक हो, प्रत्येक को सुरक्षा प्रदान करना, और जो कानून को नहीं मानता उसको कानून के दायरे में ला करके उसको भी सही रास्ते पे लेके जाना। तो यूपी पुलिस अपना काम वहां पे कर रही है। पुलिस के बिहेवियर को लेकर के लोगों ने प्रशंसा की है। वहां के स्वच्छता के जो कार्मिक लगे हैं उनके कार्यों की, नाविकों के कार्यों की, वहां पे जो हमारे कर्मचारी और अधिकारी लगे हैं उनके प्रयासों की सबने प्रशंसा की है। और सचमुच इतना बड़ा आयोजन एक साथ, दुनिया के अंदर इतना बड़ा समागम एक साथ हो, यह अद्भुत है, लोगों के लिए कौतूहल का विषय है। और मुझे लगता है कि ये न केवल क्राउड मैनेजमेंट का बल्कि यह सिक्योरिटी का भी एक बहुत बड़ा लोगों के लिए एक नई दिशा देने वाला एक इवेंट भी है।
बिल्कुल। महाकुंभ के अराउंड जाहिर है कि नेता पार्टियां सब अपना काम करते हैं, और आपने जिक्र किया कि पहले किस तरह का भेदभाव और किस नज़र से चीज़ों को देखा जाता था। तो आपकी इजाज़त से थोड़ा पॉलिटिक्स की बात तो करना ही चाहिए, और वो ये है कि यूपी के एक लड़के हैं जो राम मंदिर नहीं गए लेकिन यहाँ डुबकी लगा आए हैं, तो धुल गया उनका।
देखिए, मैं तो कहूँगा कि यह अवसर है, जो भी प्रयागराज जाएगा पुण्य का भागीदार बनेगा। जो नहीं भी जा रहा है तो कम से कम अच्छी सोच तो रख रहा है। और मैं इस बात के लिए देश और दुनिया में रहने वाले सनातन धर्मावलंबियों को और भारत के प्रति सद्भाव रखने वाले उन सभी महानुभावों का इसके लिए हृदय से अभिनंदन करता हूं, उनको धन्यवाद भी देता हूं। मुझे लगता है कि प्रयागराज तो सबका है, सबको आना चाहिए, डुबकी लगाना चाहिए। जो डुबकी लगाएगा पुण्य का भागीदार बनेगा। और हम लोग तो यही कह रहे हैं कि सभी को आना चाहिए, और अच्छा है लोग जाएं प्रयागराज में।
उसमें कुछ लोगों ने विवाद कराने की कोशिश की कि आपने ऐसे तो सभी को बुलाया है, पूरी दुनिया के लोगों को, लेकिन कुछ लोगों को बाकायदा निमंत्रण दे करके आपने बुलाया और कुछ इंडिविजुअल्स को आपने नहीं भी बुलाया है।
देखिए, हमने आमंत्रण सबको दिया है। यह आयोजन भारत का आयोजन है। यह हमारा सौभाग्य है कि उत्तर प्रदेश के प्रयागराज में यह आयोजन हो रहा है। तो स्वाभाविक रूप से उत्तर प्रदेश तो इस पूरे आयोजन का होस्ट है। हर उत्तर प्रदेश वासी को इस आयोजन के साथ स्वयं जुड़ना है, और जुड़े हैं लोग। अब जो लोग भेदभाव करने वाले हैं, जिनकी दृष्टि हमेशा बांटने में लगी रहती है, तो उन लोगों को हमेशा इस प्रकार की टिप्पणी करनी है। ये वही लोग हैं जो हर सकारात्मक पहल को उत्तर प्रदेश या देश के हित में जो है उसमें ये लोग नकारात्मक टिप्पणी के माध्यम से उसमें बैरियर बनने का काम करते हैं। याद करिए, जब इस सदी की महामारी के दौरान कोविड प्रबंधन के बेहतर उपाय डबल इंजन की भारतीय जनता पार्टी की सरकार आदरणीय प्रधानमंत्री जी के नेतृत्व में कर रही थी, उसके बहुत सारे मॉडल उत्तर प्रदेश ने भी उस दौरान प्रस्तुत किए। प्रारंभिक समय में ये सभी नेतागण जो उसके बाद नकारात्मक टिप्पणी के लिए प्रस्तुत हुए थे, ये लोग प्रारंभिक चरणों में पहले 2 फेज में गायब थे। जब प्रबंधन के बेहतर प्रयास आगे बढ़े और वैक्सीनेशन की प्रक्रिया के साथ जुड़ने की कार्रवाई प्रारंभ हुई तो इन्होंने विरोध करना शुरू कर दिया। अचानक ये लोग प्रकट हुए और इन्होंने नकारात्मक टिप्पणी करनी शुरू कर दी। वैक्सीनेशन के खिलाफ लोगों को तमाम प्रकार से गुमराह करना प्रारंभ किया था। याद करिए, जब 500 वर्षों का इंतजार समाप्त करके अयोध्या में मर्यादा पुरुषोत्तम प्रभु श्री राम लला के भव्य मंदिर में प्राण प्रतिष्ठा का कार्यक्रम संपन्न होना था, तब भी सबको आमंत्रित किया गया था, राजनीतिक दलों के रूप में भी और दलीय नेता के रूप में भी। वे लोग तब भी नहीं गए, तब भी नकारात्मक टिप्पणी करते रहे। और स्वाभाविक रूप से किस मुंह से जाते? प्रयागराज के लिए भी सबका आह्वान किया गया था, सब लोग जाइए, स्नान करिए, पुण्य के भागीदार बनिए।
जी,
अच्छा है, जो जाएगा पुण्य का भागीदार बनेगा। नहीं जाएगा, उनकी मर्जी है।
बिल्कुल।
सनातन धर्म किसी पर अपनी मर्जी थोपता नहीं।
बिल्कुल। आपने आज हमको समय दिया अपनी इस व्यस्तता के बीच में, उसके लिए आपका बहुत धन्यवाद एक बार फिर से। और जाहिर है कि यूपी अब उस मुकाम पर है कि ये जब छलांग मारेगा तो भारत छलांग मारेगा, और महाकुंभ के जरिए आपने एक नई ऊर्जा संचालित करने का प्रयास किया है। हम सबकी तरफ से आपको बहुत बहुत बधाई और शुभकामनाएं।
संजय जी, मैं आपको, एनडीटीवी की पूरी टीम को हृदय से धन्यवाद देता हूं, और मैं आपके माध्यम से एनडीटीवी के जितने भी दर्शक हैं उनको भी बताना चाहता हूं कि उत्तर प्रदेश आज के दिन पे बीमारू राज्य नहीं, अब ये भारत का ग्रोथ इंजन बन चुका है। नए उत्तर प्रदेश का दर्शन महाकुंभ के माध्यम से भी आप देखिए, सबको आनंद की अनुभूति होगी।
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
I present the budget for a historic
This is the day that shapes the future of a billion dreams.
The Fertilizer subsidy is a crucial component of India's budget, supporting farmers and ensuring agriculture productivity. For FY26, the subsidy is expected to align closely with the current year's spending trends. ICRA estimates a subsidy requirement of Rs 1,70,000 crore for FY26, matching the expected outgo for FY25. This includes the cost of extending the DAP subsidy until December 2025. The government initially allocated Rs 1,64,000 crore for FY25, but later topped it up by Rs 6,594 crore, taking the total to Rs 1,70,000 crore. Till November, the centre's fertilizer subsidy outgo stood at Rs 1,21,000 crore. In the past, geopolitical events like the Ukraine war drove subsidy costs to Rs 2,50,000 crore in FY23, while prices for raw materials and finished fertilizers have risen recently, particularly in the P&K segment. Urea costs have remained stable due to steady gas prices. This balance has helped moderate the subsidy bill in FY24 and FY25, offering some relief to policymakers. The fertilizer subsidy accounts for about 2/5 of central subsidies, projected at Rs 4,28,000 crore for FY25. It remains the second largest subsidy after food, with Rs 2 lakh crore allocated for food and 11,925 crore for cooking gas. To promote sustainable farming, the government is expected to announce a roadmap for balanced fertilizer use, reducing dependency on specific nutrients. However, any sustained increase in the input cost or geopolitical disruption could require adjustments during FY26. In conclusion, the fertilizer subsidy continues to be a significant expenditure, supporting both farmers and the nation's food security. While current trends show moderation, challenges like rising cost and import dependency highlight the need for strategic planning and fiscal discipline.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025.
Hello and welcome to Investor Guide Budget 2025 special. This is going to be an interesting one because not only our speaker is interesting, but our audience is also absolutely interesting, who's actually wanting to know what should we do from here on. Welcome Saurabh Mukherjee, founder and CIO at Marcellus Investment Managers. Along with him, we also have the students of NMIMS Students College in Mumbai and our very own researchers at NDTV Profit. Guys, you're getting a great opportunity to be a part of this conversation with Saurabh, because he himself has started his journey without knowing anything about equities, and this was in his 20s as well. So I'm sure you're going to be able to connect with him very quickly. Saurabh, first thing, we are just around the budget. The key that everyone wants to know is, how is investing ahead of the budget different from regular investing?
I think, look, all event-based investing, whether it's monsoons, budgets, elections, all event-based investing is inherently risky because you've got a certain take on the event. So some people watching this might say that I feel the budget will be expansionary, right? And that sort of investing is very risky because making a right call on a specific event, whether it's monsoons, elections or budget, is very tough. So I would urge those watching to use the budget to understand the state of the country. For youngsters like this, it's a great opportunity to learn about how the economy actually functions, but wouldn't recommend trading around the budget, shorting the market, buying stocks, selling stocks around the budget. That's sort of, if you want to do that as a hobby. Don't do that with an expectation of making money.
But with everything said and done, when you say that, do it as a hobby as well, do you think it could be a learning experience where a new time trader, a new time investor, I would say, would be able to limit their losses to an extent when they know, okay, this is the money that I'm going to allocate, this is what I'm going to learn out of it, and probably if I lose this, I shouldn't be crying over spilt milk then.
So the only challenge with trying to learn investing through through events like the budget is there are so many moving parts inside the budget. Even if you make money on the back of it, you've got no idea whether you made money because you read the budget right or because something else happened in the world that day to make you go right. So I stress again, event-based investing is difficult, it's risky. If you want to do it as a hobby, consider doing it, but as making money out of specific events like the budget or the monsoons, in my 20 years of being in markets, I haven't seen too many people do it. But that said, it's a great opportunity to learn about the country and about the economy.
So what should an investor do, and to make the most of the budget, how should he or she navigate from here on? Because clearly when you talk about not looking at investing, taking specific events into consideration, but all of these events hold a lot of importance when it comes to markets, right?
Sure.
So to look at an event, take for example, you're talking about the budget now. You had Trump 2.0, which has come at play as well. You've spoken about Modi 3.0 as well, but everyone has been looking at these events very closely. So what should be that perspective be then?
So I'll give a very simple framework to think about long-term investing and the budget being one of the items in a long-term investing framework. So one of the most rudimentary things we learn when we begin our investing career is जब economy down cycle में जाती है, when the going gets tough for the economy, think about defensive in inverted commas sectors like IT, pharma, FMCG, right? That's kind of investing 101 in any country. In a down cycle, think about IT, pharma, FMCG. Now, either basis you're reading of the newspapers or watching NDTV, a viewer might have formed an impression that the economy indeed, after three good years, F22, 23, 24, the Indian economy has entered a cyclical downturn, right? So that's a mental model you build. If you tell yourself you've entered a cyclical downturn, it makes sense to buy IT stocks, pharma stocks, FMCG, even I'm not 100% sure, but high quality banks would be my third area, IT, pharma, high quality banks. Now, so my hypothesis is economy thandi ho rahi hai, down cycle mein ja rahi hai. The budget is an occasion for me, is an event for me where I can either get my thesis validated. The FM will talk about both tax collections and her hope for tax collections for the year ahead. She'll have to give some economic commentary. There will be the economic survey published the day before the budget. All of that gives me information on, is my perception that the economy is in a down cycle, is that perception correct? If it is, it gives me greater confidence that I'm on the right track by buying IT stocks, high quality banks and pharma stocks in bulk over the last 3-4 months, right? I'm not expecting to make a ton of money on the back of the budget, but I have a mental model of the economy and the budget gives me information on, is my mental model correct, or have I got my thinking awry about where India is going?
Right. So that's the way you should be looking at the markets whilst reading the budget. Ahead of the budget now, with what's happening in the markets, you've seen a significant correction that's already coming in after the upcycle of the last 4 years. And this is something which is warranted, right? You cannot avoid a down cycle in the markets. How do you tread from these kind of events? And do you think these opportunities should be used to invest in markets and pick pockets of growth or pick pockets of value?
Right. So I think economic upcycle and down cycle are like summer and winter. You don't get worked up because the economy is going down, just like you don't get worked up because summer is ending and winter is coming, right? What you try to do is make money through the cycle. And as we were discussing, a simple framework is, as we go into tougher economic circumstances, which could last for 1.5 years, you load up on sectors which are more export-oriented. IT being a classic export-oriented sector, pharma being an export-oriented sector, and in my case, I've chosen high-quality banks because high-quality banks had a rough time in the post-COVID rally, and I think their time has now come. Now, over and above that, there's another way to think about this, right? India and America are the world's best performing markets over the last 10 and 20 years. These are the only two markets which have given double-digit dollar returns over 10 and 20 years. But the even better news is not only are these the world's two best markets, these markets have very little correlation with each other, right? So when India struggles, America does well. When America struggles, India does well. And therefore, if you're able to build a portfolio, which is say half India, half America, it actually gives you much better chance of generating superior long-term returns, right? Just to use 2024 as an example, calendar 24, our market struggled, the Americans did well. I think over the next couple of years, the Indian market is likely to have a tougher time. Over the next couple of years, the American market is likely to have a happier time. So as we go into an economic down cycle, other than buying export-oriented sectors like IT and pharma, it's also worth figuring out how can I invest abroad. In our case, 2 years ago, we started investing abroad through a portfolio that we opened in Gift City. Our team in Gift City invests into a team in Gift City, invests into America and Europe. And we think that's a great opportunity to consider, right? The rupee is giving up value to the dollar at roughly 3 to 4% per annum since 91.
Correct.
And that naturally means that if you earn, say, 15% in dollars, it becomes more like 18-19% in rupees, right?
Terms.
So beyond looking at export-oriented sectors, in the Indian stock market itself, consider taking a sort of mental flight into America and look at companies, not just the Magnificent Seven, not just Amazon, Microsoft, but go down the batting order and look at high-quality American manufacturing companies. Gift City makes that very easy for all of us to do.
And I think with Trump 2.0 as well, where he's clearly indicating that he wants to make US the manufacturing hub, and is talking about tariffs that either you're manufacturing in the US or look at tariffs. That's going to be interesting. But let's also get in all our students who might have questions on this aspect of the budget as well as Trump 2.0. Let's go with who has the mic over here? Yes, you can take the first one. Introduce yourself and you can take the first question.
So I'm Harish Sarda and I'm an MBA student at MIMS Mumbai. So, crude oil is one of the largest imports in India. So, in the vision of Viksit Bharat, so how would replacing a significant portion of oil imports with renewable energy or with domestically produced ethanol contribute to the balance of payment equation or the economic growth?
Yeah. So look, lovely question. I think one of the beauties of our country is because services is 60% of GDP and services grows much faster than the broader economy. Okay? Services is the largest part of the economy and it grows much faster than the economy. And because services is not particularly energy consumptive, right? To run an IT services company, you don't need a lot of oil, right? That's meant that India's oil import bill, as a percentage of GDP has actually steadily come down over the last decade. I remember 10-15 years ago, it was around 13% of GDP. It's now 7-8% of GDP. So my reckoning is, given that it's highly likely that services will be the leading part of our economy and highly likely that the services sector will grow faster than the broader economy, I think as it is, this is a natural construct of the economy, will reduce the energy bill as a percentage of GDP. So I'm not in that camp which aggressively wants the government to give subsidies and do chillana baji to promote alternative fuels. I think the natural construct of our economy actually is one that reduces the importance of fossil fuels because we are largely a services-oriented economy and our services sector is actually very competitive, world-class. All of you probably would have heard about global capability centers, right? So Microsoft, Google, Wells Fargo, JP Morgan, all of these firms employ lakhs of people in India. So every week, 3 new global capability centers are opening, creating 30,000, 40,000 jobs, right? So the entire world's office work is coming to India, which is great news because that sort of office work is lucrative work, अच्छे salaries हैं, good salaries, and it doesn't need a lot of energy consumption. So I think there's plenty for the government to do. It's a very tight, tough fiscal situation for the government. I think the tax dollars are better spent in stimulating the economy in other means rather than worrying about the energy transition. Not least because Trump himself has said, immortal words from the US president, drill baby drill, right? So the US president is saying drill baby drill and we are here jumping up and down about methanol, थोड़ा सा odd लगेगा.
Yeah.
Hi sir, I'm Juisha Gandhi.
Hi there.
So what you said about drilling down, using that only, the agriculture is other basis of rural consumption in India is one of the key drivers, right? So sir, how do you think this budget will focus on increasing financial access to rural communities or in general credit access to most of MSMEs or marginalized communities?
Superb question. So this is let's now use this to contextualize why the budget is so good. So if you read India's income tax data, right? It's freely available, income tax data. I would strongly recommend everybody goes to the government websites and understands how the income tax data works. those earning between 5 lakhs per annum to a crore per annum, right? They pay 75% of India's income taxes. But that's only 4 crore people, right? Just 4 crore people pay 75% of the income taxes. And where do those income taxes go? They go to those who earn less than 5 crores. 80% of India's population earns less than 5 crores, the folks you mentioned. They are the big vote banks for our political class, right? And I think the message that the political class has taken on board over the last 12 months is that that percentage of the population, those people who are below 5 crores, are really the only politically relevant people, right? We have 64 crore voters in India, out of which 4 crore are in that middle class segment. So you can see politically it's really irrelevant. The income tax paying population, they pay taxes, people like us, but politically we really don't matter. The people who matter are the people you mentioned. So my reading is the next 4 or 5 years, across political parties, there'll be a rush to give goodies, freebies, rebates, subsidies, doles to people below 5 lakhs. I think this budget will have some of it. Obviously, as we approach the 2029 general elections, that will ramp up. And as an investor, and this is why budgets are useful to learn, right? Not because of you want to trade on the budget. As an investor, you start building a mental model कि सरकार गरीब को पैसा बांटेगी, and what stocks can I buy? कहाँ पे निवेश करूँ जिससे मेरी कमाई हो, that I can earn on the back of the government being generous to the poor, because they are the only people who politically matter, right? So lovely thing. That's exactly how you need to start strategizing around the budget. हाँ जी, आप चूज कीजिए.
I'm Muskan. I'm from NMIS Mumbai. My question is that government has a goal of Viksit Bharat by 2047, and infrastructure investment plays a major role in that. Last year we saw in budget there was an investment of 11 lakh crores going into the budget. What are your expectation out of the budget this year, and what do you think is an ideal amount that is required for India given the roadmap ahead?
Right. By the way, I should say in Marcellus we are big NMIMS fans. We've got several NRC1G people in
yes, our... NMIMS. Yes, yeah. It's a tongue twister.
So I think you have to be practiced on that, yes. Right? So we have several NRC1G people in our office, and you guys are clearly very well prepared for this, and I'm happy that historically Marcellus has recruited from NRC1G. But coming to your question, right? I think infrastructure investing के लिए पैसा निकालना will be really tough for the government. So let's again do some basic math. Nominal GDP, right? This is real GDP plus inflation, is going to grow at max at 10-11%. Okay? So nominal GDP will grow at 10-11%. The government has been very clear. They want to reduce the budget deficit. अभी 4.9 इस F25 में 4.9 के आसपास आएगा. They're probably going to try to get it down to 4.4, 4.5. Now, if they want to reduce the budget deficit, total government spending will be growing less than 10%, right? If your GDP is going to grow at 10 and you want to reduce the ratio, तो जाहिर है आपका total government spending is going to grow less than 10. Now, if it's going to go less than 10, will you really be killing yourself to spend on infrastructure, or will you look after core vote banks, which is the 80% of the population? I think the lesson that has been learned at the general election, the 24 general election, was look after vote banks. Infrastructure spending, I think, increasingly becomes secondary. And all those in the stock market who have loaded up on infrastructure stocks, I think really need to rethink their obsession about government capex-oriented stocks, because I simply can't see, given the political realities of India, I simply can't see where the government will find the money to spend on infra, given that critical vote banks have clearly shown that if you do Ladki Behan, you get immediate political dividends, right?
But Saurabh, to this point, I'll come in over here is, as much as the vote bank is important, I think the money-making process for your population is also important, right? And a lot of people are becoming dependent on the stock markets for the same. To that, if we are talking about, okay, an infrastructure spend does not mean it's only one avenue. There are multiple avenues where the government has to look at in terms of infrastructure spend. This financial year itself, there has been a delay. They've not been able to meet that number because of elections. They've not met the guidance at all, right? The ambition is, or probably the expectation is, that FY26 में आएगा.
I think paisa nahi hai. So wo soch, I mean, I agree with you. People are thinking like that, but those are the people who don't understand the fiscal and political process. Paisa nahi hai, and that's why I turn to the youngsters again and say, if you do the fiscal math, 10% nominal GDP growth, government wants to fiscally consolidate. Remember, they have to fiscally consolidate in the 2 years immediately after the general election. नहीं तो जब approach करेंगे 2029, पैसा नहीं होगा, right? So जाहिर है, it has to be the case that the first 2 budgets after the general election, July 2024 and Feb 25, these are bound to be consolidating budgets. तो अगर आपकी total tax rate 10% से grow करेगी, right? This year, remember, it's growing at 8. Assume कीजिए अगले साल the tax rate grows at 10, and you want to reduce the deficit, your overall spending can grow at say 5. In that context, where will you find money to spend on infrastructure, right? And again, reflecting back on election results, right? Remember, politicians are incredibly smart people, right? They look at election results like, say, we look at our portfolio performance and they say, where did we screw up? What can we course correct? I think the big course correction will be on infra. I think there'll be a far greater focus on benefits for the poor. With regards to the point about the stock market is a big source of earnings, right? It feels like that, right? But again, आप RBI का data देखिए, the RBI has published several times said in the last 6 months, the RBI has said several times in the last 6 months that net household savings, net matlab household savings less household borrowing is at its lowest level since 1977, right? So it's not even evident that stock market में चिल्लाना बाजी से a lot of money has been made for the middle class. The poor obviously are not going to be the big participants. The middle class are the big participants. But given that the RBI data is so emphatic that net household savings are at the lowest rate since 77, the benefits of the stock market boom, I think, are more likely gone to a concentrated economic elite. In fact, 3 days ago, the Unilever CEO said that in urban areas, debt levels are so high in urban areas that people are having trouble buying FMCG items, right? So it's relatively clear that the middle class is in a tough financial position. But as I said, that's not the core vote bank. The core vote bank are people below 5 lakhs. And recent elections in multiple states have shown that there is a recipe to win votes from them. And I think our politicians are smart people. They'll follow that recipe.
Right. So I think the strategy with regards to investing clearly needs to change from what is expected versus what people are looking at.
That's exactly what the economic cycle does, right? As the economic cycle changes, you go away from, say, public sector capex plays. When the economy is thriving, government has plenty of money, public sector capex plays work, right? We at Marcellus missed out because we don't invest in public sector companies. But as the economy slows down, naturally the government has less money. Usually economic slowdowns also make the going tough for politicians. And naturally, when the going is tough for politicians, they turn to gratifying their vote banks. And therefore, if you change your tack and say that in a slowing economy, I'll focus on export wala investing, IT, pharma, and then within domestic investing, I'll focus on stuff that the poor buy. So in our case, over the last 12 months, we have bought companies which make tractors, we've bought companies which make fertilizers and pesticides because we think the big focus will be revving up non-urban India. That's where the power and the votes lie.
Absolutely, power in the hands of rural India, and how the shift in mindset is going to happen from here on, probably to get a developed nation status by 2047 is what we need to talk about next. But let's quickly slip into a short break. Up next, we will be discussing lots more with Saurabh and a lot of interesting questions coming in from the NMIMS students. Stay tuned.
My question is to Mr. Prashant Khemka and also Mr. Damani. We have been hearing as a retail investor that, we should invest in large cap companies or mutual funds. But all the investors or experienced investors like you have made money investing through small cap. So your advice to retail investors, what one should do?
Excellent question.
I know. I thought I said no tough questions. Okay, I'll start. I'll take a stab at that first. First, thank you very much. And I'm very encouraged by the fact that more Indians and more young Indians opening demat accounts and entering the market. They're entering it perhaps the wrong way, in my view, through F&O trading. Please don't do that. That's my humble request to all of you. But look at it from my perspective. I came to India, I started my business in India when the index was 800. Today it's 80,000, okay? So we've had a great run. Is the run likely to continue? Yes, it's likely to continue. What should an individual investor do? You know, there are a lot of people who don't have time for the stock market. If you're a lawyer, you're a real estate agent, you're a hairdresser, whatever, you don't have time. My advice is very simple. Invest in an index fund. Just put it in an index fund that tracks the Sensex or the Nifty or any mid-cap index that you like and invest in that. But if you're ambitious, you want to become rich, you want to, parlay compounding over the next 20, 30 years, you need to invest directly in stocks. Now, it's very hard to buy a large cap stocks that will become 10, 20x. It'll probably give you a market return. But if you want to really try and make benefit from the Indian economy, you need to, you're right, pick small cap and mid cap stocks that are small cap and mid cap today, but you see the potential of them becoming large cap stocks. And over time, that's a very rewarding journey. But that requires a full-time concentration. So you can't be done on a part-time basis, sitting on the weekend or listening to a friend's tip. You need to do some work, some thought process, some real strong effort to do that. So if you're willing to give that commitment in terms of time and resources, by all means look at the small cap, mid cap. But if you don't have the time, you're busy in your job, which is fine, and doing other things in life, my submission to you, the best way to do it is to perhaps buy an index tracking fund. So the index doubles in the next 5 years, you would have doubled your money. And that's not a bad place to be because equity returns are significantly higher than returns in fixed deposits, gold, real estate over a 20, 30-year period of time.
Prashant?
Pretty much the same thing. I think Ramesh put it very well. If you have the time, if you have the passion to research and invest, and you think of it as a hobby and a sport, and are willing to give that effort to this, then please, certainly do take up equity investing in small caps. It can be highly rewarding, and all of the people that you see on TV, on business news channels and NDTV Profit, who talk about and who made money in small cap stocks, including Ramesh ji here and Nilesh here, they have given tremendous amount of time. It's been their passion, right? And it takes a lot of hard work. They don't do it as a part-time activity over the weekend for an hour or two. If they were to do that and invest in small caps, they would have lost all their money and they would not be sitting here with us today. So that's what Ramesh ji is saying. If you are going to dedicate the time and effort, then try and pick those small caps that Ramesh ji said can have the potential to be the large cap and the big, huge winners. But if you don't have that time, then save yourself a lot of pain and just invest in either large caps, which are effectively, a piece of the index. But even better so, maybe pick index fund and save the risk of investing in individual large cap, which also can be risky if not managed properly.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about 3 key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the finance minister takes up when she presents her budget for 2025.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
We have Union Minister Hardeep Puri with us this morning at a time when I think very clearly everyone wants to hear what he has to say. So much happening on the global stage as far as crude is concerned, India's energy needs, and of course, coming at a time of bumper numbers, quarterly numbers coming in from HPCL and BPCL. So much to unpack, sir. First of all, thank you so much for your time on NDTV Profit and speaking to us today.
Thank you for having me.
Let's start with whether, like us in newsrooms, there is now a Trump tracker. Seeing what the US president is saying, and in his latest at Davos, talking about how he wants OPEC Plus to reduce prices, sanctions on Russia. Just your views on that as at the outset.
I can share my views and try and comment on what's happening in the world. But I want to start a little differently. You know, all of us, we have minds which are wired in a particular way. My mind is always wired to smell and detect the good news. So when you talk about Trump and tracking, I can tell you when he says that the US administration, and this was talk even before the celebration of democracy there, that US is going to remove all remaining restrictions, all the temporary halts that were put on production of gas and oil, etc., will be spoken or referred to in the past tense, and that he's calling on the other players, the major stakeholders in the global system, to lower oil prices. So that to me is good news. And I can also tell you that this fits into a pattern of analysis which we have for a long time believed in. It stems essentially from the fact that there is more than enough crude oil available in the world. Today, you cannot, in fact, talk about shortages. Today, you are talking about availability. There is a fundamental difference between availability. Now, availability was artificially reduced from 102 million barrels a day to about 97 or so. Okay? But meanwhile, what has happened after that artificial circumscribing of availability by you-know-who? There's more oil coming on it from the Western Hemisphere. Yeah. I mean, I hear every day reports of first Brazil, they produce 3 million barrels, another 140,000 barrels is coming on stream. Canada, Guyana, Suriname, and now the United States.
No,
so there's more oil than is required. Now, will that bring price down or not? My submission to you is that even without this kind of heavy intervention, price of oil has to come down, because it's ultimately a question of demand and supply. The demand is not growing up that much. Those who are on the supply side of the game will tell you, demand bahut badh raha hai, you know, you better buy now, but buy long term. I don't think, where is the demand increase taking place? If you look at the state of the global economy, if you look at the levels of saturation, say in natural gas, take Europe as a case in point. The United States wants to sell more natural gas. There's more being sold by Qatar and the United Arab Emirates. By Mozambique, gas is coming on the market. So I think insofar as natural gas is concerned, come 2026, and I'm always being a little more cautious. It could happen even in 2025 towards the end. More than enough crude available, more than enough natural gas available. And what is the president saying? One must stop calling him president-elect, but he's now in office.
He's saying drill, baby, drill.
Well, drill, baby, drill is a catchy way of messaging that if you were held back by certain concerns, I'm not saying they were not valid. I mean, if you believe that fracking has major environmental concerns, that's your lookout, all right. But he's saying, whatever it is, we will produce more and we'll put more on the market. We want the international price of oil comes down, because that is a major cause of the economic woes that the world is facing. And then, you know, interest rate, taxes, all that. So to me, these are positive developments. They are positive developments because I am more than sure. I mean, I sometimes try to persuade myself that, you know, let's stop being so sure. Our consumption is going to grow up. Yeah. In the 3.5 years, or even not even 3.5 years exact, that I've been associated with the Petroleum and Natural Gas Ministry, madam, our consumption of crude oil per day has gone up from 5 million to 5.5 million barrels. 500,000 barrel increase in 3 years. Now, somebody asked me this question, one of the S&P, one of the financial groups outside, asked me, when do you think India's demand will peak? And I gave an answer which in retrospect was the correct answer. I said, listen, if you look at international estimates, I didn't tell him that, I'm telling you, so I'm giving you something on my... All of them say at least for 20 years. Even the most conservative analysis say that your oil demand will continue to grow till 2040. Many say it will go until 2050. So I saw a reading of 5 estimates yesterday. All Western estimates. Yeah. Now, if your demand is going to grow up, you need that, because energy is the lifeline of an economy, and you have a situation where your demand is going up, you've got availability, your E&P is going to grow in a very big way. I think this figure. Your companies are doing very well. Yesterday, BPCL, by the way, BPCL I always take special pride in. And even if their results hadn't been so good, 20%, well, this is a company some people wanted to sell earlier.
Yeah.
And 20% profit
So
on year on year, quarter on quarter.
So may I pose a question? And in connection with BPCL and what they overall, yes, drill baby drill, good, more supply, less prices, good for India. But specifically, as bumper as BPCL results were, no doubt about it.
HPCL is even better.
Is it
300% profit.
The one query that the street has is now what happens when we reduce our import of Russian crude, which came in at better margins. What happens to gross refining margin?
No, hold on. I would worry about gross refining margins. It's very legitimate. Because, look, it's, there are fascinating challenges. Within my 4 or 5 companies, some of them are very happy when oil prices go up. They're very happy because they extract and export.
Of course.
Others have to import. So I think they've all learned that over a period of time, you rejoice in the success that you have now, but also prepare for another day. So that green transition is a very major element of them repositioning themselves. They're not the only ones doing it. The global companies are doing it too. If you look at the names have changed. Okay? Total is now Total Green. Doesn't mean that Total stops traditional fossil fuel or gas. Look, it's not just refining margins. There is also another very, very important development taking place. Your refining capacity is really growing. And growing, look at the figures. You have today about 260, 270 million metric tons per annum capacity. Madam, you're going to have 310, 320 in a short, because this is all contracted for. We're talking about a 80,000 crore investment in one of the southern states, which will have about 20 million metric tons per annum or thereabout. I'm saying your consumption is going up, your E&P is going up, your ability to navigate and access availability is on the increase because you've diversified your sources. Why have I given you this long-winded answer to your Russian thing?
Yes.
No, if I was sitting in your place and you were sitting here, I'd also be needling. Look, the Russian imports were never a part of the Indian oil import scene. It only started in 2022.
Yes.
And why did it start in 2022? Because there was geopolitical turbulence, I'm choosing. It was followed by Russia-Ukraine, was followed by trouble in the Red Sea, the Houthis attacking people. So suddenly we found that a country which produced 13 million barrels a day decided that it was going to make energy available at some discount. Now, those discounts are also not what appears in the market, but a new source came on to being. A new source came on. Like Argentina's come on the scene as a new source.
So
Can I just complete?
Of course.
Madam, what happens is when our people, they have diversified there from 27 to 39. Now with Argentina coming, it will be 40. So when February 22 happened, they suddenly found that there was another source which was available for import of crude. This is all that happened. Why is it easier for us? It's easier because we issue tenders for import at the point of importation. The point of importation, when I want crude delivered in Mumbai or in Dahej or in Visakhapatnam. I'm just giving you a random name. And so much quantity desired at such and such price. And people will float a tender. Now the issue is, who will respond to the tender? Somebody will quote a lesser price. Then they say, oh, hame shipping pe lag gaya, ye lag gaya. Arey bhai, they have to deliver at the point of this thing. Jis pe bhi lag gaya. And I can tell you, this is my reading after 3.5 years of experience, that the world is going to fundamentally change in terms of energy. We have a situation today, Guyana is supposed to be the big find. But what happened? You drill 16 times. By the way, drilling offshore is very expensive. I think it should cost several $100 million to drill a well offshore. They did 16, no success. 17th time, they struck gold as it were, oil and gas. I think, and I'm very confident about that the actual Guyana, many Guyanas are waiting to be discovered even in the Andaman Sea, number one. Number two, look, it's not as if there is a switch. right, that I walk into this room and that light of yours, which is making this conversation possible, it's switched on and off. Everything has a wind-in period and it has a wind-out period. We are today on the 24th of January. These sanctions, which you call, first of all, they don't hit all the entities. There's no sanction on no Russian oil. But these have to wind down or wind in or kick in or whatever expression you want to do by 31st March, if I remember correctly. So, my answer to your question is, no need for any panic. I would say, I wouldn't even characterize this as anxiety. This is the world we live in. You sign term contracts, which means over an extended, long, predictable period of time. You also buy spot. This is a fascinating place. Sometimes the price in one market goes higher or lower than the other. I think India is very comfortably positioned. I saw some interviews by one of my colleagues, the oil company chairman, I think it was IOCL chairman in Davos, and he's saying the right thing, that we can navigate this.
Yeah.
Now what happens? If Russian oil, let us first of all, look, there's also a bit of leveraging going on the other end, between President Trump and this thing. He wants to bring the conflict to an end.
Yeah.
If the conflict comes to an end, in any case, the problem is solved. If the conflict doesn't come to an end, we'll see what is happening. Who will sell?
Do you think he can end the conflict?
Oh, I am very sure.
Yeah?
I've always said that a conflict like this cannot be frozen in time. I mean, how long can you look at the enormous damage which is being done, the cost of it.
So let me specify, and you've explained this very well, sir, that India has a lot of sources. I think, and let me laser point it, the only quote-unquote concern, if at all, is that we had a source of relatively discounted crude for a certain period of time.
Not always.
Do we now have to pay more?
No, not at all. I see the international price coming down. I mean, I don't know. I don't predict. I'm not in the oil prediction business, and a lot of the oil prediction business is also people who you try to influence within quote the oil price. I mean, if there's a news item somewhere, suddenly Brent will shoot up or something else will shoot up. I am confident that there is more than enough oil available in the world, number one. New sources are coming on the market, and even the existing sources, sometimes they give you more, sometimes they give you less discount. When the 22 February started, initially there was a spurt of imports from Russia. Then the Iraqis, if I remember correctly, turned around and said, no, we can supply. So it went up and down. Look, on an average, you buy, say, 5 million barrels a day. And my sense then, when I just joined, was that it is about 800,000 barrels a day each from Saudi Arabia, UAE, Kuwait, Iraq, and about another 800,000 from the rest. Then Russia came on the scene as a new player. Today we've got other people coming on the scene as a new player. Now, can I change the term of your analysis? We have an advantage. Today you don't have many buyers like India.
That is true.
That is absolutely true.
That is
now, so what happened? You are holding stocks.
This is a buyer's market.
It is. I wouldn't go to that extent as saying. I would say that if you have there are a lot of buyers who don't have liquidity, who can't pay. Who there's a lot of demand for energy available in economies which have to take loans or are borrowing for their.
We have demand and we can pay.
Absolutely, and you have a fantastic track record. Not that LCs are being opened and then money is being paid 1 month later, then people are cribbing. No, you deliver at the point of importation, your payment straight away. So we have two advantages very clearly. The economic activity has shifted here. So I'll tell you, and if you know those people who are in the international business also are very conscious of this factor. Why do you think companies are, Petrobras is collaborating with Oil India in offshore seismic surveys in the Andaman Sea. BP is helping ONGC in Bombay High into rejuvenating those wells, which are some of them are very old. Because this oil business is not a business of philanthropy or altruism. No. It's a money-making business, okay? And a country like India, which is growing well, which has confidence, today, when you have India Energy Week, and I hope you'll be there, you will find that the number of people coming in at international prices to participate, that is an opportunity. So whether it is, first of all, conflicts don't continue forever. You've just seen that in the Middle East. Secondly, even if conflicts have to continue, you have to navigate around them. But I'm positive on all fronts. I think conflicts will wind down. The availability there, then you're dealing with particular grades of crude. I must compare. If you supply one grade of crude, 2-3 other people supply a grade of crude, sometimes you have to a little navigation.
So just one point of clarification, and for our understanding, because you have said that American crude is now also, an option that...
We're already buying $20 billion.
Does it cost more to transport from America? Is it a pricier option? Can you just give us some clarity?
For instance, American gas is certainly cheaper, from what I can remember of it. But whoever is selling you the stuff, they will price it in such a way as to make it competitive. How is energy typically priced? There's a cost of the barrel at the point of production. You add insurance and freight, you add the exchange rate, then you add the refining margin, dealers' commission, etc., etc. It's a very complex thing. But if you want to sell energy, you will price your source, in a way that the price at the point of delivery is that. After all, he has to sell. Now, you can have two competing philosophies. One is, I see in some of my friends who are traditional exporter, हम एक्सट्रैक्ट नहीं करेंगे, बेचेंगे नहीं, बिकॉज ये पड़ा रहेगा, हमें पता और 20 साल इस्तेमाल होगा. That is a dangerous philosophy also. Because it may so happen, and I've been telling some of the newer things, I said, your oil is coming on the market now. All right, you have tie-ups, etc. But, also be careful in another 20 years' time or another 15 years' time. People they may already be locked into long-term term deals with others. So, I would say on all fronts, whether it is what is likely to happen as a result of decisions in the United States, I certainly see, I can't predict. I have been quoted to say that in addition to the 13 million barrels a day they're producing, they'll send another 1.5 million barrels onto the market. By when they will do it, I don't know. It could be 4 months, it could be 6 months. Some of those executive orders are taking shape and with global consequences. But more and more oil is coming on the market. Right. What will happen in the case of Russia? I personally believe some form of settlement will ultimately take place. The settlement will not be energy-centric, but energy will be majorly impacted by that. If you can find an end to the major conflict, and I think it's in everybody's interest. Yeah. But if you don't, then what happens? You should look at that scenario. Either case, we are cushioned.
I just want to come back, sir, to HPCL and BPCL, because like you said, and right now we're speaking live in the middle of markets as well. One query which is there is what happens to the LPG subsidies and the under-recoveries there for all of these companies.
No, thank you. I'm glad you pointed this out. First of all, you see these profits in spite of the under-recovery. That's one. Secondly, if you look at I mentioned to you BPCL, 20% quarter on quarter and year on year. In the case of HPCL, it's even higher. It's about 300%. I think, depending on whether you look at the consolidated or everything, so these are very good results. Look, when you are dealing with the profitability of companies like this, you will always have to factor in sometimes things like you're carrying inventory. For instance, I want to go away from LPG for a minute. And I'll then come to LPG. The issue is that if you acquire the raw material at 80 and tomorrow the price goes to 70, then your books will reflect that negative differential. Okay. Insofar as LPG is concerned, look, the fact of the matter is we are supplying clean cooking gas to the entire population now. We had 14 crore connections in 2014. Today we have 33 crore connections. If you say that one connection is one family, and let's say the family size is 4, then you have a situation that the 1.4 crores are covered. If 1.4 billion are covered, yeah. Okay. In addition to that, from within that, you've got this Ujjwala scheme, which is 10.16%. What is happening? Today you are supplying clean cooking gas to a family of beneficiaries or labharthis for as little as 5 rupees in a day. The cylinder costs 500 rupees. That's a commendable achievement. There are large parts of the world, including some countries which are very rich in energy, where they are still using, at least for 30% of their rural population, they are still using firewood, coal for their domestic cooking, resulting in all kinds of health hazards and so on. Yes, there is a government intervention, and this government intervention is for a good cause. And I say full marks to my boss, the Modi era, amongst many other things, that it is, it has its achievements inscribed in gold. This clean cooking gas, it's a worldwide phenomena. For instance, and we are now also going one step further. This is LPG, which is a product of refineries, okay? But we're also laying pipelines. I think the whole country has been 100% saturated on pipelines. It's not effective. Some section of the pipeline I'm having to agonize. Where the natural gas supplied would be 25% cheaper than that. Just imagine what a revolutionary change this is. Now, this has happened in the past. If I remember correctly, I think a year or two ago, the companies ran a loss of about 28,000 crores. They came to us and we negotiated so-and-so. Ultimately, we were able to compensate them for 22,000 crores out of 28,000 crores. Secondly, and this is more interesting, there was also some under-recovery on petrol. We even got some provisioning, I think about 15,000 crores. Yeah. But by the way, they were doing so well, they forgot about it, and we also forgot about it. So don't remind them through your show. So that 15,000. So whenever there is an under-recovery, yeah, sure, we are there. Because it's for a good cause. It's not that somebody's getting rich as a result.
No, obviously. But this under-recovery, do you see this being solved sooner than later?
The country is going to become rich, Viksit Bharat, then you won't need to give this kind
subsidies.
of support. Yeah.
And I suppose it would be fair to say that windfall taxes are now a thing of the past?
I don't think it's there anymore. If I went
last
long back,
2 months is gone.
No, that's precisely the point. And look, I can share with you something on your channel. There was a lot of agonizing when it was imposed. Yeah. I mean, a small group of people, ministers, you will guess. And one of us said that, the problem with these things is once you impose it, it stays forever. It entrenches itself, if I can use such a term. But the point is, those are very special circumstances you are facing. There's complete turbulence. It was a situation where some people were, raking it in, and others were suffering. And those guys who were raking it in sometimes were not even making the basics available to the other. So then they turned around and say that, look, we have to do it because it was the imperative of the time, but we'll get rid of it. And I think that is the beauty of the Modi government decision making, that they imposed the windfall tax and slowly got wound down, became a little, now it's gone. And so let's not talk too much about it, but tomorrow there's turbulence. I don't want somebody coming around and saying, windfall tax. I don't think it should be done.
Okay. Just one point I wanted to get on, because you talked about piped gas. And that's important as well, the work that city gas distributors are doing. Now the tweaks on allocation of APM gas, administered price gas to them, and the cutting down of those allocations has...
Cutting down and restoring also. I think we had this discussion 2 months ago, it was cutting down. In the last round, we restored some also.
Restored some. So just wanted to get your sense of the direction there.
You will always, in a system which is characterized by competing demands. By competing demands, I mean the consumer through the CGD network. Some core sectors like fertilizer, XYZ, power and so on. The government will have to step in. But again, I think this is a transient issue. There's more and more gas coming onto the market. I have been actively encouraging my oil companies, jahan se long term milta, sign karo. Qatar के साथ हमारी डील कितनी 28 साल के लिए or something? No, 28 के लिए, it's for 20 years or even beyond. So we already have the deal in 28 and more. I see whenever I go travel, which is not very often, I talk to people and people are wanting to give you gas. And there's a lot of interest from the United States to give us gas. This is a business where if you have the capacity or you can give them the confidence that over a period of time you will be a steady buyer. They can even make fresh investments to get you the gas. But there's more gas being produced even in Africa and other places. I also think that some of the issues that you are influenced by will be resolved. And I think there's an intent and a decision to go down that road, bring this under GST.
That was actually, you've led me perfectly, sir, to my next question.
Well, I anticipate, I can read where your inquisitioning is going, so I can quite happily either offered it up front. Yeah.
No, but it was also, now, do we see this segment under GST? Until that happens, do we see an excise duty cut?
No, wait a minute. You got both. Let me just first tell you. In order to ensure affordability, three, availability, we spoke. To ensure affordability, if I remember correctly, there were three occasions. One is November 2021, and the other was May 2022, and then in between. The November 21 and May 22 decisions resulted in 13 and 16 rupees cut, lowering, because of excise duty cuts. And the BJP states, of course, also added. Insofar as other factors are concerned, look, they will come.
Can we hope for more excise duty cuts?
I can't. GST decisions are taken by the
excise duty
states.
cuts, sir.
But the central government, I think, most important thing is my senior colleague Nirmala ji is on board. But I cannot sit here in an interview with NDTV Profit and say GST, the GST Council decision making is unanimous. But I see movement in that direction.
नहीं सर, excise duty cut होना चाहिए कि नहीं?
हमने तो कर दिया already, but I can't say that. Excise
more is required. Prices have come off since then.
Come where?
Come off since then.
Oh, wait a minute. They also went up. I mean, the last excise duty cut was, I think, May 2022. After that, prices have gone up. Look, that's somebody else has to agonize about that and worry about it. As far as I'm concerned, being the line minister, what I look at is how much is there availability? There's no shortage. Is it affordable? It's cheaper than anywhere in the world. It's the only country in the world where it's come down. Is the green transitioning taking place? Absolutely, it's taking place. Biofuels, green hydrogen and everything.
So a lot to unpack there. Thank you so much for your time, Mr. Puri. And I think that one big message, there is nothing really to worry about Russian imports coming down. There are enough sources as far as India is concerned. This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Services for the mining, mineral beneficiation, bulk material handling and slurry transportation sectors. And today we are joined by a dynamic personality, the visionary founder behind Tega Industries. He's a global leader when it comes to mineral processing solutions. So let's welcome on this special show on NDTV Profit, Mr. Madan Mohan Mohanka, the chairman of Tega Industries. Thank you so much, sir, for joining us today. To begin with, before we get into this interesting conversation where I think I'm going to be learning a lot from you, if you can tell us what really is Tega Industries about, what are its core offerings?
Tega is a product which is made out of assimilating 3 different technologies. Mechanical engineering, mineral processing and tribology. There is no other product which assimilates 3 technologies.
Challenges are between the year 2011 to 2017, to people who want to start like...
Everything was a problem and we lost a lot of money. But then since we believed in the product, we never gave up.
And you learn from your mistakes?
or we learn from mistake from the day one.
So I guess that these are the lessons.
All my life is built on the mistakes, learning from the mistakes. I think that the first lesson in life is to learn from your mistakes and not crib about it or don't hide it.
You know, you said something very interesting, believing in your people, and Tega Industries has always been, had this approach of employees first. If you can tell us, I mean, how has that been a core of Tega Industries?
You see, we have two things. Professionalism and employee first is a religion in the company. It was a religion, it is a religion, it will remain a religion. It has become so strong. Even if a man joins us for one day and he falls sick, we take care of him. We had an employee who worked with us for 5 months at the age of 29, and he developed cancer. So my people in HR told, he is not confirmed, so he is not entitled to many things. I said, no, we will do everything possible as if he's our old employee, confirmed employee. And we took care of him. We found that he will die. He did die. So we met his wife. We asked, what can you do? We got her trained in the single sewing machine center, got her a tailoring shop opened, got her daughter trained till BSc, got her married, and then we gave her.
So you took full responsibility.
We took the complete responsibility because she had worked with us for 3 to 4 months time. So anybody who joins us in a global company, we wanted to be number 1 or number 2 in the world. We can't become number 1 or number 2 in the world unless we go and capture the global market. So we started diversifying. The first start which we had an agent, we opened a marketing office, but then that was not enough. No customer will buy unless you can supply in 24 hours time in case there is a failure. So we had to manufacture locally to capture a bigger segment of the market. So there were 3 big markets: South America, Chile, Australia, and South Africa. So we acquired our competitors there and modified the company to suit our product and expand it. South Africa, we had a great success from the day one. Australia also, we had a great success because we kept the owner with us, from whom we bought the company. They were part of the operation with us.
So they knew the working and how to,
with them, handover, introduced to customer. But in Chile, we acquired the company 100%. And also the language.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place
space, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how it may impact these sectors.
Do you really know the
Welcome back after that interesting and enriching conversation with Mr. Madan Mohan Mohanka. Joining us now is the Managing Director and Group CEO of Tega Industries, Mr. Mehul Mohanka. Mehul, thank you so much for speaking with us and joining us on NDTV Profit. We were having this really interesting as well as inspiring conversation with your father, and he had something. He told us how he trained you. But if I could ask you, what you think are the most important things in your life which he's taught you and what you really imbibe today when you're looking at and you're taking on Tega Industry under your leadership?
Well, to begin with, thank you for having me on the show. I think my formidable years, have had a very strong influence from my father's, learnings, and one of them that he was very insistent about was discipline. And self-discipline is something that I took away as one of the largest, contributions that he has had on my career. Mm. And early on, it was, a time when, of course, as youngsters coming into the business, we were a bit more, I would say, not as, invested into the business or not as passionate about the business because we didn't know much about it other than that we needed to be at work.
It grows.
Yeah, and he was a stickler for discipline. So it was always about if you can manage your time, you can be successful in life, but if you don't know how to manage your time, no matter how brilliant you are at work, you will never be successful. And that's something that stayed with me for the longest time.
What transformation do you see, when we look at the global economy, the global market? What is the difference and how are you dealing with it? Because, the number of countries are growing, the nationalities you all are dealing with. Tell us about that.
So we're one of the very few companies, I think, in the country which has done acquisitions overseas in countries as remote as Chile and made it successful. And I think our mantra has always been about how we allow the local culture and the local flavor of that particular country to supersede our own, whims and fancies as the owners of the business. So we've been able to allow the local employees to drive the business with just giving a strategic input and having a very hands-off kind of approach because we don't know everything about that country. If someone was to ask me how to run a business in India, I could do that in my sleep. But how I am to manage a business as remote as Chile or South Africa, you have to trust your local team to be able to drive that business. And that's something that's worked for us.
Just coming again onto when we're looking at the future, AI, ML, how is Tega using that? Because innovation has been an integral part of Tega Industries. We were talking to Mr. Mohanka as well. But, looking at the new generation, looking at you, how are you using AI?
So I'll begin with IoT and Industry 4.0. So that's something that we commissioned as a project in our plant in Gujarat. So that's it's a model plant for us. And we went live with an IoT initiative or Industry 4.0 initiative in March of this year. And we're still in the settling down phase of the entire project. And we are hoping to, once we see the benefits and the gains from that, roll it out across all our plants globally. So that's one area. Second is we very early adopted, using 4D printing, 3D printing into our R&D and innovation initiatives. So now we can model new products and new designs for the customer in our lab. And as far as machine learning is concerned, of course, with IoT sensors now available, we're looking at how we can read real-time data from the equipment and make our plants more efficient and superior in quality.
Talking about efficiency, the company's also said the compound annual growth at 15%. How are you planning to achieve that since you've set it? And what is your vision for the next 5 years of the company, if I can ask?
Yeah, so if you look at the mining industry in general, it's not growing beyond about 2% in general. And for us, we've been growing at almost 15% if you look at our past historical data as well. And the reason for that is that we're driving a lot of our new products and innovations coming out of our own stable into the market. And those are the products which are receiving a lot of traction in the market. So that's where we've been able to deliver superior performance compared to our peers in the mining industry. And we continue to do that as we churn out more products into the marketplace.
Mehul, I just want to ask about sustainability. Today when we look at the surroundings, when we look at our environment, we're living climate change, and sustainability, of course, is a core aspect for each one of us when we look at the future generations. Where does it stand when it comes to Tega industry? What are you all doing for that?
So for us, sustainability is not part of legislation. I think it's a conscious call, to leave a greener planet as we trudge ahead in our growth plans. So we've been working on several initiatives. I mean, on the energy side, of course, we have solar projects now in place. We're using more renewable energy for our manufacturing. Most of our facilities today are zero discharge facilities, so we consume all the water that we generate, whether it be in gardening or in different aspects of the green economy. As well as on our product side, we've now developed products which are 100% recyclable. So earlier, our products used to be landfilled, but now we've developed products that now we can completely recycle.
Yeah.
And that's one of the initiatives that's been very, very close to our heart.
So clearly, in the beginning when we were talking to your father, he said that, it's not Tega Industries is not just a company, it's a child for him. And, before we ended, we said it's a sibling for you. So closing remarks about that for our viewers.
I would say more than a sibling. I think he's passed on the child to me. So it's almost like, it's become a child for me as well. So,
wow.
So growing up, I would see it as a sibling, but I think it's now I've taken on the mantle of parenting the company as well. So
I think that's really well put and clearly put from the heart. I'm sure your dad would be really proud to hear that as well.
I hope so.
Yeah. Thank you, Mehul. It's been a pleasure to have you with us, and also Mr. Mohanka was with us. So thank you so much for joining us.
Pleasure. Thank you.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about 3 key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold, into the mutual fund industry over the past couple of years, will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income.
Hello and welcome. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna. Along with me is my co-host Malika Mishra, and together we'll be taking up all your stock-related queries. So you can WhatsApp us or you can directly call us. Both the numbers are flashing on your screens right now, viewers. And on the show, we are being joined by Mahesh M. Ojha of Hensex Securities on the fundamentals and Vikas Jain of Reliance Securities on the technicals. Welcome to the show, gentlemen.
Good evening.
Good evening.
Good evening.
Okay, so with that, let's go across to the first query on the show. So, Sundarajan has written to us from Chennai, and he says that he's holding All Cargo Logistics shares, 1200 shares at 31.74 rupees. So, should he hold or sell the counter? The time horizon is 1 year. So, I can see that the stock was down over 1% today, and Sundarajan is sitting on a profit of 11,000 there. Now, coming straight to you, Mahesh, how are the fundamentals of All Cargo Logistics looking like for 1 year?
So from 1 year horizon, if we see the slightly upside moment can be come in stock, so he can hold further, and 48 to 54 range could come there. He can book some profit. That profit booking should be advisable in that area.
All right. And if looking at the short-term view on it, Vikas, what do you have to say? How is All Cargo Logistics faring on the charts?
If you look at the stock has witnessed some amount of corrective action, and we believe there should be some amount of rebound near to those 44.5, 45 levels. That would be again a good opportunity to exit the stock.
Right. Let's go across to our second query. Jaya has written to us from Bengaluru. She holds 60 shares of Orion Technologies at 331 a piece. That's her average price, and she is currently sitting on a profit of around 10,000 rupees. Now, she also mentioned in our chat that it started hitting lower circuits. The stock has been hitting lower circuits quite often, and she's asking if she should hold on to this counter till March results or book profits at the moment. And therefore, Mahesh, I would pose this question to you. What do you think about this particular counter? And as she asked, should she hold on to this particular stock till March?
From my perspective, it still is a profit booking area, and earlier we have also discussed in in the range of 600 range. I have already suggested the book profit on that level also. From here on onwards also we can see 460 to 470 range. So I think if he's getting above 500 levels and she can book profit and re-enter at lower level, that could be a 440, 460 range. So profit booking is advisable on these level also.
All right, so that's the view coming in by Mahesh on Orient Tech. she can book her profits right now. With that, we have a query. Siju has written to us from Qatar, and he says that he's bought 50 shares of IRCTC at a price of 965 a piece. Currently, the stock is trading at 746, and he is sitting on a loss of almost 11,000 there. So he's asking whether he should hold this for another 3 to 6 months. And should he buy more like at these levels? So Vikas, coming straight to you, is it